Peter, we're back.
We are back, my friend.
Thursday morning,
How about show number 4?
show number 4. I keep thinking it's Friday. It's not Friday. You and I have a full slate Thursday meetings and everything else, and thankfully a lot of trading to do. What's been going on? What
I'm a little more concerned about that right now.
the hair?
I mean, do we have to?
I rode my bike in,
Aha.
and so my hair is maybe looking a little bit wilder, and yet more voluminous, I would say, than usual.
Look at you go. Look at that
Silver li-
Michigan
silver
education.
lining.
Voluminous.
Voluminous.
Wow.
You like that one, huh?
Wow. Look at you.
Yeah.
With
Does
the
it
major
look
in
bad?
small
I'm trying to
animal
look
animal management from Michigan. To use big words like that is very impressive.
Yeah, every once
So-
in a while I can put a 3-syllable word out there. Voluminous 4, actually. And I can
Bonus
count.
time.
Yeah.
Now you get a cookie.
But yeah, rode my bike in. It's beautiful this week in Chicago. Going to try to take advantage of it and do a little lakefront bike ride after work. If
Oh,
I can
really?
get
Very
get
nice.
out of here while the sun's still up.
No, you get no passes to leave early, my friend.
But yeah, what's going on with you? You've had a busy morning.
Yeah,
You're
it has
already
been
on
busy.
calls.
It's great. Again, I'm up early. I love knocking stuff out early. So before I came to tastylive, we used to manage a prop firm, and I would trade FX. We'd break the shift up into 3 shifts. I had 2 partners, and I'd always trade the London shift. So even though I did this 15 years ago, I'd be up at 1 in the morning and run the desk till maybe 8:30 or 9. Now the odd thing is, it's 15 years later, and I still get up at 3:05 in the morning every
Yeah.
day. So it's good, but it gives you a lot of time to trade, a lot of opportunity in the markets to trade. So everything's good. It's a nice way to kick off the day. So this is kind of exciting. We're going into got non-farm payrolls today. We just had, I believe, Challenger layoffs came out. Didn't do anything to the markets. Bonds selling off a little bit. Dollar continuing to be strong, especially against the yen. Do we see a quiet day ahead of non-farm payrolls, or are we starting to get to some points in dollar strength that are, if you had been fading this, if you had been long euro or long Aussie, you've had 2 very different outcomes recently. What are your thoughts as to what we're seeing a little bit? Pound got hit hard, a little bit of that 134 we talked about. It was an inflection point. It didn't hold, and when they've released hard. It seems like everybody's in a race not to see their currency appreciate too fast. And whether it be the new head of the government in Japan or the BOJ governor today, the BOE governor, the Bank of England governor, all walking back a little bit. We're going to, I think the upper bounds of these, it's interesting to see that they're willing to walk back a little bit of this dollar softness. Does it persist today, do you think, a little bit, or what are we going to see? And we've got so many different pairs to choose from, and we've talked about the majors, dollar yen. And guys, again, this is spot FX. So Tasty FX offers spot FX products. It's a different type of product than what a Tasty customer is trading right now, whether that be futures or options. It's another product to add into your arsenal. Tasty FX requires you to open an account with Tasty FX. It's a leverage product. Leverage, as you know, carries risk. So we're mindful of that. One of the things we do is we want to adopt product, we want to understand what we're trading, and we want to look for unique, uncorrelated opportunities. FX provides that. And in the world, having traded institutional FX, running a high-speed trade desk, trading a lot of futures in my life. I started my life as a futures trader. Adding mixes of products. Now, some of the pairs we talk about, can you create them in the futures world? It's difficult. They're expensive. You get margin on both ends. They're hard to do. So some of these pairs that we're looking at, whether it be like Aussie Canada, we're going to take a look at that today, are a little bit easier to construct in the OTCFX space because you're trading a single unit. You're not having to sell 2.5 of these and buy 1 of those. A little bit simpler format to do, which is kind of exciting to be able to get at an idea for me, it's always getting at a new idea. I always say traders are like sharks. If you're not moving forward, you're dying. And part of moving forward is that ability to add new products that provide interesting opportunities, and being able to find ways to adopt product. So one of the things you want to do is when you do find an opportunity, what's the most efficient way for me to express an opinion on it?
Sure.
And part of that, when I talk about efficient, it's just like capital. Capital is always important, except for a precious few of us, like the Grand Maha.
Doesn't have to worry so much.
Capital's a constraint. So God bless him. So I like to, when I look at this exercise and I talk about efficient, it's not only just the leverage or the capital efficiency, which OTC has like futures, SpotFX has like futures. And again, that leverage brings risk. But am I able to construct that trade idea easily? And I think that's an important piece. And one thing we'll continue to walk everybody through, because it's an interesting way to find new extremes. And it's whether you're trading the extremes, you're trading momentum, the product that works for you is kind of unique to you. And our mission is to kind of get you exposure into this world, into this product set, and a little bit more familiar trading them or looking to trade them.
Absolutely. Well said. And with that, let's get into the platform here just to take a look at some of the price action, because, yeah, Pete, to your point, in a little bit of what we would have thought was a quiet period going into non-farm, it's funny, I feel like we're in these perpetual quiet periods going into this friggin' election, which I wish would just end sooner rather than later, because even all the Fed events have been like, oh, we're in a quiet period going into the Fed event, but also the Fed and everybody's in a quiet period going into the election. And it's like, if we better get through this election and start seeing some big dollar moves, enough of these quiet periods. But sterling, definitely not quiet ahead of tomorrow's non-farm. Like you said, Bank of England head comes out and says that maybe not going to be as hawkish as everybody thought. They're into the rate cut game as well, especially if they see inflation continue to move lower. And we saw, obviously, Euro area is different than the UK, but Euro inflation right there next to the UK print under 2% this week. And so I think, and it's funny, you and I talked about this exact topic earlier this week. We're going to talk about it a lot because it is, I think, native to the Forex market, which is we get in these lines of thinking of like this currency is going to be the strong one. You know, these guys are not cutting rates, or they're hiking rates or whatever, and so you need to sell all those other currencies and buy this currency. And what we find more often than not, Pete, is that these major central banks tend to move in the same direction as each other. We have such a global economy at this point that rarely do you see, you know, the Fed, the ECB, every major central bank, the Australians, Canadians, everybody cutting rates. And in the UK, oh, actually, we're holding tight. Our economy is siloed off from everybody else's economy. Very rarely the case, and you're seeing a little bit of that here today. This is actually euro sterling, to your point, Pete, hitting lows in the last couple of sessions here that we haven't seen in I believe, more than a year of trading. Let me get more data. More than a year of trading, go all the way back to really the middle part of 2022. And you're seeing a huge move today. What is it? Over 100 pips of upside in the euro, downside in sterling, coming off of just these comments. They didn't come out and cut rates. They just came out and said, hey, we might not be as hawkish as you guys think moving forward. So huge move lower in sterling, not only in that euro sterling cross, but holy smokes. I mean, this is becoming a bloodbath for the pound here this week, down 300 pips off of last week's highs.
Yeah, absolutely. And, you know, 130, I mean, we spent the bulk of the year at an average of 126. So a move up to 134 is a pretty big move.
Yeah.
Now, currencies are very interesting because there's an elastic nature to them. And now there's this $7 trillion a day marketplace, and the ebbs and flows within it, are both speculators and, again, like every real product that has a lot of end users. And one of the things you see is when currencies tend to move out of their range, large companies that, again, have to fund in currency every day, hedging's a cost. And if I don't have to bear the cost as a company, I won't. If currencies are flat, I got nothing to hedge. I know that 6 months when I sell my products in the UK, I'm going to get this amount.
Sure.
Currencies start to move. There's more of an inclination. Okay, now I've got risk because I have uncertainty as to where in 6 months I'm going to be selling my product. That tends to amplify moves when we get to extremes. Now we were at an inflection point, well clear of 132, up in the 134s. Could we have seen that expansion a little bit? Sometimes you do see that feeding rally. Here we talked about this. It needs to either move or chances are it's going to settle back into the range.
Yeah.
It didn't move. It kind of just sat there. It danced around that 134 level and gave back an appreciable amount of ground. Now, does this coincide with the fact that we're seeing U.S. Treasury rates higher today and yesterday?
They've been,
Yes.
creeping higher.
Right. And, again, we're mindful of that. We don't paint a picture solely on, well, rates are higher, so I want to be long the dollar. That's not
They
going to...
got rates in the UK, and they got rates in Germany, and they got rates...
Absolutely. And that's what makes this a really interesting trade, I think, is that dynamic nature of there's a lot of moving parts, and we're not trying to guess all of them. What we're trying to do is take advantage of a different set of markets that provide a different set of extremes and different tape action that fits our interests and our success as a trader. And I've talked about this before. One of my old business partners was the best momentum trader I'd ever seen, and always, if a market was trending, he was following that trend. I never traded that way. We tend not to trade that way. We tend to like to trade extremes. Whether you're either one of those buckets doesn't make you better or worse, but identifying where you tend to find success and then finding a product set that fits that within these products. And we talk about TastyFX offers 80 FX pairs. Now that's everything from the majors we're talking about to Turkish lira to Chinese currency,
Israeli shekel, yeah.
Singapore dollar. We're not going down the rabbit hole of those pairs right
Yeah.
now. If you got an interest, hey, knock yourself out. There's some interesting, again,
There's some nice there's one-off stories.
there's some
every
carry
once in a
trades and
while.
stuff within
Yeah.
that. It's a different animal. We're sticking to where the liquidity is and where we want to find some tradable opportunity.
Well, and it's funny you raise a great point with this market in particular, because a lot of people will say, Pete, well, I'm used to trading the S&P. I'm used to trading Apple stock and all these things, and I feel like I know those things a lot better than I've never been to the UK. I don't know anything about the pound, or maybe I have, but the only time I've ever interacted with this exchange rate has been to just get some pounds while I was on vacation or work trip or what have you. But it's funny, if you get that idea that I know what's happening in Apple or I know what's happening in the S&P, you're going to be behind a lot of the time. And we talk about this of like, if you are thinking that you're going to trade based off the news, it's probably going to be a tough go for you.
Absolutely.
Because there are firms that do that for a living that and you and I have
still
visited
don't get it right.
You and I have visited them. Yeah, and they still are probably operating in a 54-46
Right.
split between being right and wrong. And you and I have visited these firms. They're dissecting every tweet, every news item. And I don't say that to be like, oh, you shouldn't be active with your money. You should just try to get the 6% in the S&P, or if treasuries are trading at a level where you can get 4% or 5%, you should just take that passive income. I mean, do what you want to do at the end of the day. But with that in mind, that should empower you to be like, oh, I don't really have an edge in terms of like predicting what the Bank of England governor is going to say here today. But statistically, if I use stats and I use numbers and data and historical data, and of course the trade is never the same, but you can maybe get close to that 54, 46 edge that market makers and huge institutions have. On a little bit longer time frame, they're trading, microseconds to seconds. We maybe trade, I mean, of course, we want every trade to be a minute or 2 minutes if it goes in our direction. And of course, if it goes against us, then we might take a loss in a minute or two. But we're maybe looking at 30 minutes, an hour, a couple hours, maybe a day or two with these trades. But I love what you hit on here, because it's an idea that I think a lot of people see in the S&P, and it happens in almost every market, Pete, where you hit an extreme with the equity market moving lower. And we've done so much research on this, where if the S&P sells off, 1%, 2%, 3% or more, a big move to the downside, there might be another move to the downside after that. Those big moves tend to cluster. And I think it's exactly your point of when the ball gets rolling in a direction where firms, big institutions, have to hedge. Right. And with equities, it's the downside. With FX, it's interesting because it's both directions. With gold and crude, it can be both directions, right. Which is really fun that you have both directions in that trade. But I think we saw the same thing here as we see with stocks a lot of times to the downside, where maybe there was a correction that was called for in the market, the AI space, for example, so blown out to the upside over the course of the last several months. Maybe it needs a 5%, 10% correction, but it gets pushed down 15 or 20% because people, huge institutions and individual people, are scrambling to hedge that risk or get out of some of their positions, take some profits that they could have taken up here, but now they want to take them down here because they bought down here. And I think we saw some of that here in this pound, where it was like, okay, we had another run up to 132. And if I bring some more historical data in here, you'll see that since the craziness of the pandemic and then inflation and the U.S. hiking, this 128 to 132 range, we've hit plenty of times. People got worried. I mean, we were talking about, is this the long-term mean reversion that people have been looking for in this sterling market? They ran it up to 134. And to your point earlier this week, because the Bank of England governor only came out today, Pete, right, and said that they're looking at cutting rates. He didn't come out earlier this week and say that. This market was probably looking for a reason to give back some of those exacerbated gains, just like the equity market. It might sell off, like I say, 3%, 5%, might have another couple percentage points, but the buy the dippers or whatever are historically well-founded that the equity market doesn't tend to sell off 4 days in a row, 5 days in a row. Statistically, historically, very low odds of that happening. And similar, when you get a move like this through an extreme, of course it could have gone to 135. It could have gone anywhere. But when you take that rubber band and you expand it, right, it's either going to snap, which it hasn't since 2021 or 2022, or it's going to come back in. And we've seen this come back in time and time again, which isn't a guarantee of the future. But yeah, I think you're exactly spot on that they pushed this market higher. People were like, oh, we need to hedge some of this risk. If this pound gets back above 135, push it higher. But at the end of the day, these central banks tend to move in the same direction. And we're not going to have, I mean, I can't, again, guarantee anything.
We don't know what the next
Fed is not likely to push our rates down below 3%, and the Bank of England stays above 5. It's just not likely to happen.
No, and the context too is, so you had mentioned the Bank of England guys speaking. Now, we had a 100-point break. Was it because of him, or was it because we were at the upper end of the range? And this is where don't get trapped in, well, how do I digest what he just said? Don't worry about what he said. It doesn't.
Exactly.
What he said doesn't matter. It's like we talk about non-farm payrolls tomorrow. After that number comes out at 7:30 in the morning, it's usually a pretty bad trading day for the most part. It's a hard, choppy day. But the event itself, I don't care what that number is. I just want it to be different than what people are expecting, so we get movement. Then I can look at, okay, do we get a run back up to the highs? Or are we sub 130? And is that an interesting pullback after 5 days? That's all I care about. I want that number to serve me opportunity. I don't want to guess it, and then I don't want to like, oh, the economy's really slowing down because the number was 94 instead of 140.
Yeah.
It means nothing. So what it gives us is an opportunity to find extremes to trade product.
It's so funny how many times you and I are trading or looking at markets, and I might be, because we trade the way that we do. First of all, plenty of losers. I got plenty of losers on my board. But the China thing, for example.
Oh my God!
I know it's.
Yes.
I'm not going to ever. I'm going to be dining off.
You.
No, but I mean, also China's down. I think 3% here today, and Aussie's getting hit. But I just love that point because you don't know how many times, no matter what asset class or what trade, whether it's long-term investing or swing trading or day trading, someone will come up to me and be like, "Oh yeah, like did you see that? Like that's what moved that market." And I'll be like, "I have no clue what you're talking about."
Right.
Because like if you're trying to follow these news items, like I say, you're at best 60 seconds, a couple minutes behind the move. Whereas if you're watching the market and trading these moves with mechanics and with stats to back you up, I mean, of course you do your strategy at the end of the day, but you just have to be better served than trying to follow some news item that quickly gets priced into the market. And at the end of the day, I'm honestly just not interested in it. Maybe it's because I studied math or whatever. I don't really care that much about. I don't even know what the Bank of England governor's name is. Like I couldn't tell you what his name was.
Math at the University of Michigan, is that like flashcard based math? How does that work? Do you go from the plus and minuses to the times tables, or now is a PhD program when you can use your toes?
6, 7. Yeah, that's
Okay.
we get to
Very
toes junior or senior year. But yeah, just I love the conversation there because I don't know. I'm always obsessed with more the idea of like, has this market efficiently priced in what the circumstances are of the economy, and as opposed to like this person said this and this person said that, you're just going to get whiplash from that. And so you and I talked about it earlier this week, and I guarantee you we're almost never right, but we talked about the fact that like these central bankers in the global economy of the last 10, 20 years, whatever you want to say, they have moved in the same direction almost every time. And we're sitting here joking with ourselves that like, oh, this pound is just going to take off. It's going to whoop everybody's ass because, the Bank of England is for some reason going to hold above 5 and everybody's going to cut down to 0. It's just kind of goofy. But you can do the economic dynamics, Pete, or you can just, to your point, look at the price action.
Right.
Like this was a crazy move.
And we're seeing, let's take a.
What do you want to do?
I'm going to bring up dollar yen and dollar Swiss really quick because we're seeing the two safe haven flows with very different direction today. Again, dollar yen continuing to bounce off those 140 lows. 146.12. We're sitting right up near the highs again. So we've gotten through the drama of the sell-off in dollar yen from the new guy getting elected prime minister to a little bit of normalization from those 160 plus highs, where we're seeing here's a case where Swiss is still continuing to hold a little bit of ground.
Yeah, it's pretty wild. I mean, similar to that, we've been looking at Aussie strength relative to euro and sterling over the course of the last couple of days, and maybe that gives back some ground today.
Now,
but
yen and Swiss both traditionally, and again, when we say traditionally, it doesn't always hold the case, safe haven currencies. So they tend to have a high correlation. They tend to move along with one another.
And what's
seeing
funny,
a little bit of divergence today in that story.
What's funny is you're seeing the correlation, like you're seeing the dollar bounce back in both, but you're just not seeing the magnitude of move because you've got this dollar Swissy, Pete, that's less than 100 pips off of its lows, pretty much still a rounding error from those lows of 84. And you've got a dollar yen market here that is 500 pips, 660 pips from those lows of 140. So it'll be interesting. I mean, a lot of really interesting dynamics on today. We'll continue to watch sterling because
This
listen,
has been
man,
a great week to start the show because we've had some great extremes, and we're seeing them trade the other side of that weekly range really aggressively. So a lot of tradable opportunity here. Let's wrap up this segment.
Sure.
I'll be back tomorrow, and we'll do a little dissection of non-farm payrolls before they come out. But coming up next is who you're tuning in for, Tom and Tony. Stay tuned.
Peace.
Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. I got my apps
So
all
you're
done.
outside and you're pulling
Yes.
Can you see it from the hot tub?
Yes,
Wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to go. There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
And Tom, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't
a
want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle, rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton,
Hey, when you-
if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, excuse me, which does work. It's the greatest feature we have because it makes nice ice cubes and it
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice and then I get water, which we
You
do
got
have a water
ice.
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
Yeah, he learned that on
That,
TikTok.
I learned that yesterday. That was my whole
Mid.
lecture. I got lectured.
Mids,
I
like
said-
average, mids, like
Hey,
mediocre.
the ice, it ain't bussin', I'll tell you that much.
I said,
Mickey,
I said we have ghetto ice here, and I got
Yeah.
lectured. And I go,
You
we
should
have
get lectured.
we have
Yeah.
mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a
we
cup
got
right now. Wait.
Hey, it's not a cup, it's a mug. It's
No,
a
that's right. We have a ceramic mug that chips off on the ice that you can use. But Tom's already used his hand in all the ice.
and that mug, it's
Nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
it's one of the old mugs from like 12 years ago.
Oh my God! Has anybody died here recently?
It's a dome mug.
Has anybody died?
The ice is so old; it has like that like old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold, Nick. It's called
Yeah,
mold.
like it has like kind of that stale smell to
freezer
it.
burn.
Yeah.
Freezer burn.
Yeah,
Yeah,
exactly.
the ice is freezer burnt. Yeah.
That just means it's colder.
Little cantankerous, but
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
you want to
dictionary.
know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
Not
Perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan. Yeah,
Argumentative.
that's
Right, Costco.
not empirical ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
No, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com.
you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hello.
Oh, look who decided to put in a half day today.
Get used to it, biatches.
First of all, let me just say Mike and Nikki crushed it last call last night. It was really good. It was topical. It was relevant. It was fresh. And then what were you boomers doing? How come you
I
guys?
was probably looking in the woods for a ball.
I was playing in the Rosh Hashanah Open.
The Rosh Hashanah Open, the Rosh Hashanah Invitational. No, wait, why were you guys playing golf on a random Wednesday?
Because we had decided we were trying to play.
Shana Tova. Happy New Year.
We were trying to play a couple of weeks ago, and our schedules got all messed up. So the only day we had free was yesterday afternoon.
You told me to live my life on my own time.
That's good advice.
Yeah, and that does not include playing golf at noon on a Wednesday. Now, where'd you guys play?
It was a business lunch.
It was a business lunch?
It was a business outing. Yes.
Okay. Where'd you guys play?
We're discussing your future.
Where'd you guys play?
We played at Scott's place.
Oh, you went to the country club. You went to the club.
Yeah, it was good. It was fun.
We went where our money's no good.
So wait, who was the fourth then? Slappy?
Slappy.
Oh, that's nice. Yeah, he doesn't need to work either. Jules was here yesterday, which is also weird.
Yeah, it was a weird day.
Yeah.
Upside down.
Yeah. What were the pairings?
Me and Slappy.
Oh, you and Slappy, and then you and Scott. Interesting. Who?
Notice who's quiet right now, right?
We slapped him.
Oh, no.
It was.
How could you let him?
And
He can't even walk.
He wouldn't let me pay him yesterday.
No, if it was they should have stopped it. It would,
They should have
wasn't
stopped
that
it.
It was.
He was on. I gotta give him credit. I thought by far. What do I owe you? 2,000.
Whoa!
I thought by far, fifth, sixth hole tops. He'd be breaking down. He wasn't hitting the ball particularly great, but he scored good. Everything was good.
Yeah.
He was.
Interesting.
I gotta give him credit. He got touch around the green, of which I have none. Like short game and stuff like that.
Wow. Yeah, wad it up, throw it at him.
Yeah, compared to these jamokes, but whatever,
Yeah. You know what? You could use it for the bake sale. Give that money to charity today.
You can't even keep money in your pocket anymore. Look at you.
It was a beautiful, perfect, just
It was a
perfect
beautiful
day. Yeah, it was real nice.
Beautiful day. It was great company. It was a lot of fun.
Congratulations on your winnings, me lord. Now look what you did. Look what you did. This is just
You wanted to pay me last night. I said, no, you pay me on air.
It's true.
wow. That sucks. You used to be somebody.
I gotta give him credit. I gotta give him credit. He hit the ball very, very good. Very, very good.
You have a
Say
backyard.
something nice about me now.
You have a backyard. Why don't you practice? Why don't you?
I have.
You should do something.
I mean, your outfit looked quite spectacular.
Why aren't there no pictures, you boomers?
I forgot.
Yeah, I did too. We forgot, or we would have. I forgot.
Oh man.
Yeah.
Man.
I wasn't crazy about the way I hit the ball yesterday. I hit the ball way better last time out, but yeah.
I heard you're not long, but it's straight.
He's got a senior game going.
Yeah,
Definitely has
that's
a
the
senior
best way.
game going.
You play with those old ladies that get on the course and they just hit it dead straight, but 90 yards.
I'm not dead. I was not dead straight yesterday.
But you have 90 yards.
I hit it further than all three of those other guys.
No.
Yeah.
Wow.
Yeah.
No.
I mean,
That's not true. I'd say the truth. He's not saying the truth right
pretty close. I think I'm
now.
longer.
You were there with us. You weren't far.
Yeah. I think I'm longer than.
What gave out first, the shoulder or the leg?
Yeah, it was fine. I was fine.
Yeah.
I played 36.
You could not. Get out of here.
Listen, I didn't lose a ball until a water hole. So, I mean, when you have a caddy, it makes it a lot easier. And
Yeah.
It's a lot easier to score, too. Because a lot of those balls I would never look for. I mean,
Yeah.
it's gone.
I
Whatever.
didn't lose a golf ball yesterday.
The caddies don't fluff it up for you. They're like, "Oh, sir, I found your balls right here."
No.
When we were caddies, when I was caddying when I was younger, we had to.
Yeah, that's what I thought. I thought that was just.
Yeah, the whole thing was we had to tee the ball up for
Yeah.
if you didn't get a tip if the ball wasn't teed up.
Yeah.
Like whenever the member got there.
What kind of tip? What did you guys give them? What kind of tips?
Oh, tips were nothing. It was like $1 or whatever. But we had to tee every single ball up, and that was expected. So the first time I played in my entire life with a caddy was when I came to Chicago and I was trading.
Yeah.
And my ball was like sitting in a clump of grass. I couldn't see it. And I go to the caddy. I go, "What the hell?
What the hell, man?"
I mean, like I've spent half my life doing this. What are you doing? And he's like, "We'll get fired if we touch the ball." I go, "You're not going to get fired by me." I go, "My ball needs to be teed up every time I come out here."
And you need to tell me I'm pretty.
As caddies, we were brutal. The caddies today are actually really nice, and they're
Sure.
and they're helpful and stuff like that.
Mostly good kids, just trying to earn some extra money.
We were brutal as caddies. I mean, we were good caddies because we understood. I knew every rock on this golf course. Walked it 1,000 times, but we carried extra balls in our pockets, so when they hit it out of bounds, we just
Sure, yeah.
Oh, he's safe,
Oh, look at this! As a beautiful, beautiful gambit, sir.
We didn't like the guy because that we were caddying for, on the par threes because they were all blind on this course. We'd kick the ball off the green. If we liked him, we'd take it out of the trap and throw it on the green just to drive people crazy.
Man, oh man. Why do you...
The rake. Can you believe your ball hit the rake and now it's on the green?
Do you think you'd ever join?
Scott almost killed us. Well, by us, I mean...
In the cart?
Yeah, no. With one of his shots, he was in the middle of the fairway. Not really in the middle of the fairway. He was under some trees and stuff. One tree about 15, 20 yards in front of us. He hit a branch of it. He really hit it nicely, but he hit a branch of it so hard that we missed the ball, and the caddy pointed. He was pointing behind us. The ball had to have whizzed by us to
Oh,
get
it ricocheted.
that it was in. Like
you guys survived? It's a miracle.
We lived.
Are you gonna be selling merch of yourself, being like, fight, yeah, you dodged the ball, you did it, yay, congratulations.
It's a miracle.
Yeah.
It's a miracle.
Yes, I'm glad.
It's a miracle.
Do you think you'd ever join a club? No? But I thought it seems like a nice perk that you could just...
It's a nice, I guess I don't like country club life.
Yeah, I mean, you like food. You like golf.
I do like to play golf. I like...
We didn't stay for the whitefish, though.
I like some of that. We didn't stay for...
We didn't stay for the whitefish or the...
We went out to dinner.
Ooh, where'd you go for dinner?
A night of immediate seating, we went to EJ's. So,
Oh,
yeah, you don't even need a
beautiful. Look at this.
On New Year's, no way.
But she joined us and we went out and we...
Special guest appearance by Butchie.
Uh-huh.
Hi, Ira. But that's awesome.
Butchie Slappy.
Butchie, Slappy. Wow.
Beautiful dinner.
It was a beautiful dinner.
Beautiful dinner.
Good. Very nice. Very nice.
Well, I'm glad that you guys had fun while the rest of us were keeping the lights on.
Yeah. Oh, speaking of keeping lights on, every Tuesday and Thursday, lucky you, today's Thursday. Option trades today. We'll get to keep the lights on again one more time.
Hey, I got something for you guys. Do you want it? Look at this.
Sure.
It's my new business endeavor. I'm going rogue. Here you go.
What is it?
Look at this.
Thank you, Sherry, much.
So we're having a bake sale today, and because I'm extra, I packaged my own cookies. On Amazon, you can get like 100 bags for like $4 and like little stickers.
Thank you, Cherry Much.
Yeah, because that's our logo. That's our branding. So it's a chai snickerdoodle.
Okie dokie.
So look at his face.
He's going in there.
Chai Snickerdoodle?
Could be a coffee shop.
Smell it.
giveaway.
Smell it.
Yeah, why don't you just buy her out of all of her cookies and give them away at bad coffee?
Yeah.
You made...
And it's, they're soft in the middle. I like a very soft cookie.
What are you looking at?
Your reaction.
This is good.
Yeah. Yeah.
Quite professional.
Thank you. I got the idea from your son, Nikki, because Nikki says once he and Mikey, they were doing a tailgate at the Bears game, and Nikki stayed up all night, and he made like 100 cookies. And his plan was, because there were some ladies. Yeah, your son did
the
this.
cookies, Nikki?
Nikki did. The plans were, because there's so many ladies, he's like, hey, you guys like those cookies? I made them. I was like, Nikki, that's clutch.
Boy's desperate.
Yeah, so I'm writing my number on the back of all the bags, and but yeah, she bakes. right?
Pretty damn good.
Thank you very much.
What are you going to sell these for?
For the bake sale, the money goes to charity.
I know. What are you going to sell them for?
We have a thing. It's just $10, and you get like a brown paper bag, and you can put in whatever you want that's on offer, except for the larger items like your pie. So $10 minimum donation.
Oh, so for $10,
you get a bag, and then so I made cookies.
It's like Menards.
Right. I made cookies. Tracy made banana bread.
Menards is a men's people go to.
Camille, one of our developers, she's making like pumpkin cheesecake brownies, I think. There's a bunch. There's a whole list. There's a whole bunch of stuff. So $10, you get a brown paper bag, and then you can put your stuff in.
Hey, I'll buy you your paper bag with my winnings.
But it's so fun. We have
my money and buy me a bag with my money. I don't need that thing.
But yeah, we're supporting Gilda's club today, so that's it'll start.
Had them on the show once.
Yeah. It's
A long time ago. A lot of people
wonderful-
don't remember Gilda Radner.
Wonderful charity.
We had Gilda on the show?
We did not have Gilda.
We did not.
We had her.
It was Dana.
So, I'll give you all the money back right now. If you can tell me.
Ooh.
Okay, because this goes back to New York City.
He's making it tough right now. He's going to make it very easy now.
No, this goes back to New York City in the 80s.
Uh-huh.
I think it's in the 80s. Maybe it's the 90s. But this goes back to a classic, only somebody that grew up in New York that would know the answer to this trivia. But Rosanna Dana.
Yeah. Oh, who did she portray?
She was the character that Gilda Radner played on Saturday Night Live.
Mm-hmm.
Right.
And she
I don't know the woman's name. It was a newscaster.
She was a newscaster in New York. For $20.
Oh, who the character was based off of.
I'll give it
20. I gave you 40, you cheap SOB.
For 40.
I just told you I don't remember the person's name.
40, but you have to think, dig deep.
Ooh, interesting.
Channel 7, back in the day. I'm sure we have some viewers that remember this. I don't know if it was I don't remember if it was the 80s or 90s. I'm not sure how old,
Rosanna. No, I don't know.
It is.
I know, I'm sure. I don't know.
It was Roseanne Scarmadella.
Oh.
Scarmandella. That's a strong last name.
She was a local reporter.
Yes.
And she was funny. She had her little shtick.
Yeah.
And Roseanne Scarmadella. And then she would always say, this is Roseanne. And then Gilda Radner did the takeoff on her. And
I didn't know it was based on an actual person.
Yeah.
That's cool.
It was Rosanna Dana.
I have a potential suitor. He's very interested that you bake. Do you clean too? He wants.
I do. I clean.
Cleans too.
And I cook. And I cook.
Cleans and bakes.
Mm-hmm.
There you go.
Mm-hmm.
Unlike my son, who only bakes.
I mean, it's. I mean, things are happening over here, on levels, man. Yeah. That was just funny. But there's.
Get me started.
We have there's some very nice ladies that work on our security desk downstairs. And so I gave them cookies and I was like, we are having a bake sale. I told them, well, you guys can come on up later. And they're like, oh, we going to be up there. They were so excited. And they were like, thank you so much. They were like, that's very nice. So, because sometimes when we have extra food, Tori and Alyssa invite the security guards to come up we got extra food. And so they love us.
We feed them all the time.
I know. It's just nice. So that's all. But
security guard's heart is through their stomach.
I know. Whatever. I'm going to go work the construction site across the street. I'll see you guys later.
All right. Good work.
Right? That's a strong play.
It's going to be a nice day out.
I'm out here fighting for my life.
Go work.
Not bad.
You know how much iron workers make?
Not bad.
It's good living, yeah.
Yeah, you can go out there, just parade around.
Yeah.
Wear a sign.
Yeah, I am. I'm going to.
Hey, you should bring cookies to those guys.
That's what I don't have enough. It's gotta go for charity. But good times.
Okay.
Anyway, hey, we got a great show for you today. I don't want to dawdle too much longer. It is a thrilling Thursday here on Tasty Live, and that means at the top of the 8 o'clock hour, trades from the research team, the world's greatest financial think tank, is going to present their trade ideas to Tom and Bat today. A little bit of a down market to start, this morning. So we'll see
Last night we had a little bit of weakness. We've rallied back.
Yeah, but we'll see. We'll see what's percolating. But the challenge for everyone on the research team today is what to do in lieu of earnings, because now earnings are going to start again in earnest. So what
In a week
trade?
or so, yeah.
Right, yeah. But any trade that they would put on would probably be impacted by earnings. So, but they are smart. They're innovative. We'll see what they come up with. And then at 8:40, Victor Jones, hear me out. What are you talking about with Victor today?
Ooh, he's been on a rant lately. He's been on a text.
A little bit of tilt.
He's on a little bit of a text tilt.
Yeah.
I don't know where he's going to go today.
Okay. Well,
I don't. He's not happy with me for any of my responses on anything right now.
Or lack of responses.
tell him to take a number. Tell him to take a number. No one's happy with you.
I'm not less happy or unhappy with you. Like, it's not like, somebody's happy.
Well, I got some good news stories that might be kernels of stuff that you can then, expound upon further with Victor. But Victor's going to be in at 8:40. At 9 o'clock, we got a market measures. Which asset leads the pack? I don't really know what that means, but 9 o'clock,
You'll find out at 9.
Which asset leads the pack? And then my personal favorite around 9:30, live from the trade desk, big boy Scotty S. Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And tomorrow is hashtag Fast Market. So we would love to have your trade ideas. If you would like to provide a trade idea to Tom or Bat, we'd love to hear from you. You can submit at the top of our website. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. All right. Hit me with my theme music. Let's go.
Our leading story. Breaking news. Coming across the wire. Our
This
leading story.
just in.
Top story. Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today's a thrilling Thursday. It's October the 3rd. This is part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Ready for the news. Goldman Sachs analyst worries his 6,000 year-end S&P target is too low. As we've turned the corner, though, and we are officially in Q4, the contest is over, I do want to talk about seasonality. I want to talk about maybe the election, and I want to talk about your guys' own year-end target. I know you guys submitted your guesses from December last year, but revised. What are you guys feeling as we head into the end of the year? And like I said, there's an election. There's October surprises every day.
We'd like to revise our numbers too.
I mean, our numbers are too low, but we're not. We don't.
I know, but like I'm saying, if you could revise, I'm giving you a do-over right now.
We don't revise.
What are you saying for the year, and like how much?
We don't revise. We just suck it up and say how wrong we were.
How much higher or lower from where we currently are right now? Do you think?
I think we're going to close lower than we currently are.
Lower than we currently are.
Yeah, so we're at 58. We're at 57.50.
Mm-hmm.
I think we're going to close below 57.50.
How about you, Bat?
I mean, you're saying lower just to support your.
No, I'm not just to support my
thesis.
I think the fourth quarter. I think post.
We gotta flirt with 6,000.
I think post election. We're going lower.
Okay.
So I think that
due to just buy the rumor, sell the news, or like okay.
I mean, we're pretty rich right now. I don't see this market.
I've been fighting it.
I don't see this market going down before the election. I think it doesn't matter who wins. I think the market's going to go down once the election's over.
I do want to talk about volatility as we almost are done with the week because there's a lot going on.
With the cookies, I'm being asked.
Free shipping with the cookies. That's funny. No, I don't want to talk about volatility this week because it's been.
I mean, it's
doing something.
It's rich, but it hasn't really come in yet.
It hasn't come in at all. Matter of fact, it's up 40 cents right now. 20.45 on /.
It hasn't come in at all. The scary thing about volatility here is the scary thing about it feels like a lot of risk is priced into this market right now.
Mm-hmm. Okay.
That's all.
Then that's it. Hey, this is the good news. Bless you.
You can talk about skew for a minute too, from us.
I mean, if you missed Jacob's piece yesterday,
it's actually very good. I mean,
it was really good because most of us have been explaining skew, myself included.
Mm-hmm.
Have been explaining it what we thought was the correct way to explain it, but as Jacob pointed out yesterday, we've probably been explaining it wrong.
Oh, interesting.
And it's really a measure of the level of protection that's being bought as opposed to, risk. It's kind of the
Well,
opposite.
it's the opposite side of the same coin. The way to look at it. I mean,
Yeah, it's the opposite side of the
I
same.
think it's the way he
The way he presented it
was really good.
on the skinny yesterday. He did a skinny on skew yesterday. Jacob Coleman.
Yeah,
it was really good.
Did you check it out on our website? I missed that, but I will
was great.
re-watch that.
It's heavy, but it was great.
Maybe you can talk about this with Victor, but betting on U.S. elections can resume after a legal freeze and appeals. The court rules. Federal Appeals Court refused to block a lower court ruling allowing Americans to bet on the outcome of the 2024 congressional elections. It was basically between the CFTC and Kalshi, but they were like, "Yeah, we're gonna just let this go forth." What are your thoughts? What does this mean?
Well, my thoughts are, I'm ecstatic that Kalshi beat CFTC. I actually texted their CEO yesterday and congratulated him.
You're like, "Way to go, Tiger."
I did. I texted him and I said, amazing, great job.
Yeah.
Because so that should tell you what I think. We don't do any business with Kalshi, but I love the fact that they took on the CFTC, and I love the fact that they won, and I'm quite impressed with, the fact that they took on this case. And so I did text their CEO last night, and because I'm friends with them, and I said, hey, you know what? Congrats, this is awesome.
What are the odds of this ever in the future getting integrated into a company like ours?
Very high.
Oh, interesting.
Extremely high. This is the first time. We've been looking at Predicted for almost 5 or 7. Well, if you remember, John Phillips was supposed to be on our last election special, and he's the CEO and founder of Predicted. So I've been friends with him for probably 6 or 7 years, and
yeah, I know Chris Vecchio and Jeff Joseph have done podcasts with him and stuff.
So Predicted is the largest betting site. It's university sponsored, so it has an $800 limit. And which is ridiculous. So they can ride the coattails of this and go live as an exchange, and then Kalshi the same thing. And there's there's crypto based decentralized exchanges outside of the U.S.
Yes.
Like Polymarket.
Like Polymarket, yeah.
But those are much harder because you have to use crypto, and it's not U.S. based.
Right.
So this Kalshi will be, obviously they're based in New York. So they'll offer binary markets, but we own an exchange, the small exchange, and this opens up a lot of potential avenues for us in the future.
Okay.
For things that we can do ourselves. So we hope to be able to offer our customers the ability to trade on elections anywhere in the world, just like everybody else. I don't think there's going to be a massive market for it. This is not going to change the business at all, but
sure.
At least being able.
It's not like the sports gambling ruling of
sports gambling. Sports gambling sucks because it's not exchange based, so it's you can't win at sports gambling. Sports gambling's fun.
You tell that to Mike and Nikki; they have a system.
You can't win at sports gambling because it's mathematically impossible.
Sure.
Election betting is completely different, and election markets, when they go exchange based, are going to be very efficient.
All right.
Not in a binary sense, in exchange sense, I think.
Hey, shifting gears to currency, yen closes out its worst day since 2022 as rate hike hopes dim. That's hard to say. The yen suffered its biggest drop in more than 2 years after Japan's new prime minister jolted currency markets by saying the economy wasn't ready for another interest rate hike. I think the markets have moved slightly higher since I, made these slides. But I do want to talk about the yen and the dollar.
The yen has been in a little bit of a free fall.
Yeah. After its rally back in the beginning of August there, yeah, sure. We're rallied about 6 cents. It's a big move. It's now down by about...
Dropped off about 4... Well, it dropped from 71 and
to
change.
69, $3 from top to bottom. Yeah, if you want to.
Yeah, I'm staying long the yen.
Okay.
3 cents. Sorry.
Now it's just... Yeah, we're short. We're long yen and short the 68.5 calls. And that position lost a little money back, but... Generally speaking, we've been sucking a lot of premium out of the yen, and we're going to continue to suck more out. I mean, that's what my game plan is. Just
What I learned.
Euro's acting the same way. Most currencies act the same way.
to be short puts in there for as long as I possibly can.
What I learned from Mike and Nikki yesterday, I think someone had written in on the YouTube chat, because you guys don't even know how to check the YouTube chat while we're doing the show, which is fine. But what I learned
Gotta
from
let
Mike,
people think
what
they can hide.
what I learned from Mike and Nikki though, someone had written in about I think 2 ETFs, which first of all, love the names, love the branding, Yin and Yang. I don't know if you guys had heard about them or it also looked. They're triple levered ETFs, which first of all, red flag, but it was just an interesting way to play, I believe, China and Japan, and I just like the name. But Mike and Nikki had talked about it, and I hadn't heard about it. I just thought it was interesting.
Yeah, I think the cleanest way to play the yen is /6J.
Sure.
I think they have M6J if you want to do the micro, but I like the
Yeah,
option.
but I want to be triple levered.
Just kidding.
I'm just kidding. I want to lose my money 3 times as fast.
The options trade, they're liquid. I would say the yen options are more liquid than more than
How much does it cost though to carry a 6J position though?
a 6J position.
Yeah, like on average, like what does that contract cost? Like
The futures contract itself is $3,400.
I gotta sell a lot of cookies.
You gotta get to work on it, lady. Keep baking.
The overnight requirement is $3,400, but
Okay.
but the options trade for significantly less.
Sure.
By half that.
Okay. I was just curious. Hey, keeping it moving, the SEC is appealing a $125 million judgment in the Ripple Labs XRP lawsuit. The SEC appealed the court decision ordering Ripple to pay $125 million civil penalty for improperly selling its XRP token, a fraction of the $2 billion the regulator sought. It was kind of a split decision, basically.
So the SEC is appealing the $125 million judgment because they don't think it's enough.
Right, and they still want XRP to be classified as a security. But the rule, if you look at the ruling, like it really did sort of provide like, hey, is this going to be a precedent? Like because the ruling said that XRP wasn't a security. Like it's so confusing.
I despise the SEC.
I know you do.
I despise them.
I know you.
I mean, they can't even.
Say it too loud, they might hear us.
You know, the $125 million judgment. That's not even good enough for them. It's unbelievable.
So last year, a judge found XRP was covered by securities law only when it was sold to institutional investors. And so then that's kind of like how some firms were like, hey, we have this ruling. It says that we are fine as long as, okay, we're not not going in. And so now the SEC is like, hey, that's not fair. We still want to penalize you in a bunch of ways.
I do love the name Ripple.
So good, because my next story, going to the next one, Beth, Bitwise has filed for an XRP ETF, that's a lot of letters, trust registered in Delaware.
That is not going to happen.
Okay, no, okay.
That's a ballsy move, but
They tried. I mean, they tried.
They're not going to get.
Why won't that happen?
Because it's way too much litigation right now.
Sure, it's too hot. The heat is on.
It's too hot.
Back, can we look at Bitcoin?
We could if you want to.
Yes,
Trading around
please.
60,000 and a half. The Bitcoin been going a little bit lower the last 4 or 5 days.
Yes.
Off its highs around 65,000. I mean, listen, I'll call its most recent lows around 55,000. So
I mean, Tom, it's almost getting to the number that Tom wanted, right?
to buy some more,
No.
yeah, it's got a $10,000 to it before it gets down there.
Well, it's closer than it was.
That's one way to look at it, and that's a very nice way of looking at it. Sure.
Speaking of someone else that's also faced SEC litigation, can we look at Coinbase? Haha.
Oh, you got me on this one again.
did get you on that
Let's
one.
take a look at Coin, because I know some of the Chinese stocks were lower. Coin is unchanged at 164.5.
Okay.
A little bit more beaten up than Bitcoin itself, the stock, I think.
There's no question
Yeah,
that
you rank a 50.
Bitcoin has remained high when some of the Bitcoin ETFs like BITO and Coinbase seem to be a little bit lower on a relative basis.
Big mover yesterday, which was Tesla. As Tesla announced their delivery numbers, and the stock slipped after they missed estimates on deliveries. The stock price has jumped 32% in the quarter, but Tesla's discontinuing its most affordable Model 3 variant in the U.S. If you look for it on the website, she gone.
Tesla's down another $4 today.
Is it? After selling off a little bit yesterday, right? By the rumor, sell the news kind of thing. Tesla 45, you are correct. Down around $4, $3.50. You are correct.
What can you do? Because Tesla had a great August and September. What can you do in Tesla now?
I mean, this is the first 2 downticks Tesla's had since it was a $190 stock. Went from 190 to 260, really without a downtick. Now trading just under 245 or just at 245. So good Ivy ranker there at 91 for those who like earnings. October 16th, a few days away.
Mm-hmm.
We're tiny short now, tiny.
Okay. Hey, in other news, did you hear this, Tom? OpenAI closed a $6.6 billion with a B funding round. They are now worth $157 billion. Girl, what? They had investment from Microsoft and NVIDIA. Apple did not participate in that funding round, but the funding is in convertible debt. Also, Fidelity, SoftBank, Thrive Capital. It's a who's who of people who just have tons of money. What do you think of this funding round, of this valuation, and what does OpenAI do from here?
The funding round seems ridiculously high to me, but
$6 billion. Have you ever heard of a funding round that was $6 billion?
no, but you're talking about companies like Microsoft and NVIDIA where $6 billion, I mean, they're multi-trillion-dollar companies.
Sure.
So $6 billion it would be like us spending $100,000.
You guys would never spend $100,000.
That's not fair.
No, okay, well.
But when it would be like us investing.
Sure, no, I get that. Okay. What are you doing? Let's talk Microsoft, NVIDIA, whatever, because you can't trade OpenAI.
NVIDIA's trading 121. It's actually
up $2.50.
Was that?
Up $2.50.
Yes, you are correct. Up $2.50. You're good. You're good.
Well, speaking of NVIDIA is teaming up with Accenture. You love consultants to boost corporate AI use. NVIDIA's expanded a partnership in an effort to drive adoption of AI within businesses to boost orders for the chipmaker products. Accenture has trained 30,000 experts on the use of NVIDIA's technology to help in a corporate rollout strategy.
God bless.
Jobless claims just came out also. Didn't really move the market too much. Even the S&Ps were down around 8. They're down around 2.5. Bonds are down 9, sitting steady. Maybe catching a little bit of a bid here. Certainly off of the lows by about 30 handles on the E-mini S&Ps they made last night. That's all I got.
Hey, the EU, the European Commission, has requested information on Wednesday from YouTube, Snapchat, and TikTok on the parameters used by their algorithms to recommend content to users. These are notoriously opaque algorithms. None of us knows how we get served the videos of women eating burritos in cars. But the EU wants
I don't know, but they're really good
EU
about
wants some
picking the right women.
transparency. No, just I know. But the EU wants some transparency because we should kind of know how these models work and how they're using our own information.
Wouldn't that be like a?
I'm saying transparency. I'm not saying shut it down.
I'm not saying shut it down either, but wouldn't it?
Well, I know you are not, fanboy.
My point is, like, why would TikTok give up their algorithm? That's their whole business.
But why should they be allowed to operate with impunity within a whole continent without? Well, I'm just.
They wrote an unbelievable model. I mean, that's their business. Why should they give up?
Sure, but it has not been without harm, without fault, without detriment. Yes, really.
With happiness and gain also. I mean, that's the most ridiculous thing.
I'm just because again, the systems can spread illegal content. They can promote illegal drugs, hate speech.
Could, but they also. How would I know about Eat, Drink, and Be Mandy?
Okay. Okay, sweetie.
You're really not watching The Golden Bachelor? Because I think you might be. You sure?
I'm definitely not watching.
Ooh, can I tell you? Secret Lives of Mormon Wives got renewed for season 2.
Got what?
I meant to tell you, Beth.
Amazing.
Secret Lives of Mormon Wives has now been renewed for season 2 by Hulu. So excited.
I have not watched 1 minute of that either.
So dumb.
Tom, let's watch later today. I'm gonna cue it up on my laptop.
I don't even have Hulu, so
I'll cue it up on my laptop for you. It's great. I'll give you my login because I want you. Secret Lives of Mormon Wives. Get into it.
Secret Lives of Mormon Wives.
Secret Lives of Mormon Wives. A+. It's the greatest thing that's ever been produced.
No.
Hey, Facebook, Meta, says they paid content creators $2 billion this year through the Facebook Content Monetization Hub. And yeah, they said the Reels payouts for Reels and other short videos has grown over 80%. What are you doing in Meta?
Meta down about $1.20.
Also, I make banger Reels for Tasty Live, and I made $0.
October 30th earnings.
With Tom's stellar acting skills.
I will be in Europe having bangers and mash.
Yes.
Just for the record.
Right.
Yes.
Time.
Nothing better than
in Europe.
English sausage.
I could say something, but I won't. What are you doing in Meta, Tom?
Good Ivy rank of 58, earnings October 30th.
How do they get their sausage so good? I don't understand how sausages can be so good in the UK.
I can't.
You gotta get yourself.
I know. I'm being so good. I'm being so good today. Hey,
Because they're smaller, easier for you to eat.
That's all the fresh country air, pastoral.
Yeah, no preservatives and crap like that.
That is true.
Probably is true.
Yeah. Hey, more ads.
We didn't have sausage last night at that place, and there's.
I know, and it is excellent, but I thought the lamb
the sausage
chops
and
that we
peppers?
ordered, by the way, we ordered some lamb chops. Those lamb chops were out of this world. Greek style.
They're great.
Lamb chops, they were amazing.
They were great.
Some clams.
It's not good. None of that food is good for you.
Little veal
Shellfish,
chop,
lamb, veal, none of that is good for you.
Hold it.
Strip steak.
You're not going to be able to walk.
Tell me a lamb chop's not good for me?
Well, I'm not. Your doctor is. You got the gout. You got the gout. You can't.
Oh, baked clams? Their baked clams are really good too.
Baked clams are great.
You can't be eating like that, sweetie.
You're right, their sausage is excellent.
Hey.
Right, and their peppers. How do they do peppers?
Yentas.
I don't know, man.
Hey, Yentas.
I think it's the oil. I
just
just
don't
don't
know
know
how.
the waiter. I asked him.
I know, but how have they mastered the art of peppers like that? I can't do that.
I know it's great.
Yeah,
And
no, what?
And in quantity. I mean,
I make peppers all the time. I can't make peppers like they do.
You guys want me to leave? I can leave. I could set up my little.
This place makes the best grilled peppers in like an olive oil. I don't know how they do it.
You should go and ask them. You should invest, and then they'll give you the secrets, I guess.
They don't need our money.
Hey, just real fast.
They need anything from
This is the funniest story ever. More ads are coming to Amazon
How about those
Prime.
peppers, Tom?
Oh my God. More ads are coming to Amazon Prime Video because executives at Amazon say, so you have to pay for Amazon Prime. Like it's $140 a year. I pay for Amazon Prime. But what they started doing is even though you pay for Amazon Prime, they put ads in the videos and they're like, hey, if you want these ads to go away, you give us an extra $3.99 a month. So Amazon then in a statement said, look, we thought people were going to cancel their subscription, but we realized they were addicted to buying stuff late at night. And they were like, so now we're going to show you even more ads. They said the quiet part out loud, but it's kind of true. I kind of hate it because the user experience is not great. Like in my mind, if you're paying for a service, you shouldn't have ads.
I agree. I don't pay for Prime Video, but I agree.
No, but if your family has an Amazon Prime subscription, you get Prime Video.
I don't know what my family has. They
won't talk to you. No, I get that. Bat, what's Amazon doing?
Ooh, Amazon, we should take a look at that.
Yes.
I actually have deliveries from Amazon just about every day. I think I'm going to give coffee for the guy. Amazon looks like it's down small by about $1 or so, 183 and change. Earnings are October 24th. Stocks off its highs at 200. Mid-price, maybe a little bit more than most.
And Amazon's fall Prime Days, bit mini.
Not the big bump that it used to do.
What it is,
annoy the crap out of me when
it is
you
the 8th and the 9th.
about Amazon Prime Day. The stock would go up $3.
So excited. Eli Lilly, LLY, is building a $4.5 billion research and manufacturing center to propel its drug pipeline after it has hit after hit with like blockbuster weight loss drugs. Obviously, demand is exceeding supply, and so they need to build more because it takes a while to make all these drugs. Lilly, I know it's not super great as a trading vehicle, but I thought I would mention it.
Finally had a couple of downticks trading at 891. I think it's up about $3.
I have no position there.
Okay. Hey, Costco, post earnings, and I think TP wrote about it in the Cherry Bomb, still a little bit.
Yeah, it's a little platinum bars.
Yeah, they're adding platinum to their precious metal lineup.
Why not? They sell gold and silver.
Yeah, they sell gold as a line item in their earnings. They sell so many gold. So Costco launched platinum bars on their website for $1,000 $89.99, in addition to the precious metal selection of gold bars and silver coins.
Huzzah.
Man, I haven't traded platinum in a while. What is the price of platinum? I forgot the symbol. What is it? PL?
I don't know.
I only know of like.
I don't think we have.
I'm gonna go get
I got
Pete.
PLG, which is like a.
No. I can't. We don't have it. I don't know if we have it on our platform anymore. We had it for a while. We took it off because the options didn't trade. I thought it was PL. Maybe I could be wrong.
I don't know. Pete would know.
Good look. I'm looking.
Pete?
Pete's the best.
Yeah, he would know for sure, but we don't want to give Pete.
It's not
He's
PL.
here. I saw him. He's wearing a sassy sweater. Check out Forex Focus at 6:30 with Pete and Frank every morning.
Taking a quick look around the futures. I don't see it, Tom.
I don't like that name. I want to change that name.
Forex Focus?
Yeah.
Well, that would require you going to an actual production meeting.
Oof.
No. We're good.
Thank you, Beth.
That's gonna be tough.
I mean, you do whatever
No,
you
Can we
want.
just get it done some other way?
Yeah, Beth, who came up with the name Forex Focus?
We'll talk about it later.
Compliance, it was your daughter.
We need a new name.
Are you going to do anything in Costco? Can you do anything in Costco?
You could trade Costco. Costco's tradable.
Yeah,
IV rank at 38. It's okay, not great.
but the earnings doesn't. So
Fine.
I might have did something.
Beth?
You might have
Beth.
done did something.
Yeah,
You're
yes,
100%
Tom,
correct.
yes.
Ask one of those. Can you ask one of those guys out there what the symbol is for platinum?
Sure.
She's like, I'll get right on that.
Thanks. I just don't know. I don't.
Costco doesn't have earnings till December, so you're right. You may have did something.
I'm trying.
Yeah, you are. You're
I'm
doing.
trying.
It looks
Trying to.
unchanged.
Yes.
I don't-
this morning. Costco really hasn't had a downtick till the last 2 or 3 days. Prior to that, it's been every day up, onward and upward.
Hey, the FAA has ended its enhanced oversight of United Airlines after it has concluded a safety review. The FAA said it found no
We don't have it on our platform.
safety issues.
We don't have platinum.
It had no significant safety issues in a review of United Airlines. The FAA opened a review to ensure the Chicago-based carrier's compliance with safety regulations after a series of safety incidents. It prevented United from expanding some of its routes, but now they've passed the FAA safety review. So UAL and Boeing, what are you doing?
Boeing, we're a little bit long.
Boeing finally unchanged, maybe only down 50 cents. That's a major.
UAL, no position.
Okay. All right, good to know.
UAL unchanged also, maybe down 10, 15 cents.
In a scourge of our modern legal environment, I hate the whole, hey, if you just visit our website or if you use our service once, you have implicitly accepted all of our terms of service, basically.
Welcome to the world.
I know, but it's having weird repercussions where like Disney was like, yeah, sorry we killed your wife, but because you watched Moana once, you can't sue us. So like,
You and your nut. Your
right.
problem.
So Uber, a couple was in a severe Uber crash, but they can't sue because they ordered food on Uber Eats, thereby accepting the terms of service. So they were in an Uber in a serious car wreck, but then Uber lawyers were
You
like,
said
hold
they
on.
ordered Uber Eats.
Right, but they ordered
There you
Uber
go.
Eats, not at the same time or same day, but in the past they'd
They will never win that. They'll never.
well, they tried taking Uber to court for a jury trial, and the appellate court ruled that they can't because the couple had previously agreed to Uber's updated terms and services requiring arbitration. This is what I'm saying. This keeps happening, and I don't like it. Like,
I don't like it either.
it's also not great PR for the company either. So Disney actually walked back its whole thing because they were getting flamed on social media. But what are you doing in Uber?
Uber, $72 and change, basically unchanged. Earnings November.
Uber, no position.
Hey, one of the top stocks in the S&P 500 yesterday was Caesars, Hail Caesars Entertainment. Stock was up almost 7%, CZR, because the company announced a notes offering and share buybacks. It was one of the best performers in the S&P 500. They're going to offer $1 billion an aggregate principal amount of senior notes that will be due in 2032, if that
I
means
will
anything.
say Boomer Spring Break was mentioned.
Oh, you guys are getting
at
ready.
dinner.
Are you going to make shirts? You going to make shirts?
Caesars was not mentioned in the discussion. Now take that what you want.
Ooh, where would you stay? Like World Resorts, or where you stay at
Resorts
the Wynn?
World.
Resorts World, whatever. I don't.
Mountain Blue, maybe one of the newer casinos.
Okay, girl.
Haven't tested yet.
Yes.
Boomer Spring Break, but we're
We haven't pissed on that tree yet. That's right.
You guys should go to the Sphere. I'm telling you, it's cool.
We might,
but we don't really.
No chance.
We might rent it out. How about that, Beth?
Hey, in other news, the Miami Dolphins owner Stephen Ross is in advanced talks with private equity firm Ares Management and billionaire Joe Tsai to sell his stake in the NFL team. What do you value the Dolphins at?
4.8 billion.
Okay, what do you say, Bat?
4.8 billion. You think, huh?
I just made up a number.
2.5 billion.
No, $8.1 billion.
Wow.
I'd sell it too.
Wow.
These prices are. If the Miami Dolphins are worth 8.1 billion, the Bears are probably worth 10 billion.
Even with a losing record every year.
Yeah.
I don't.
Because the Dolphins, they barely have fans.
They got Mike McDaniel. He's gotten flashy.
What are you talking about? They got Dr. Jim.
They got Dr. Jim.
Like I said, they barely have fans. They don't have fans that pay. I mean, yeah, I would think.
The potential deal could become the NFL's first private equity transaction after the NFL changed league ownership rules. What are your thoughts on private equity in sports?
I'm all for private equity getting involved.
Yeah, because private equity has never ruined an industry. It'll be fine.
Let me tell you, having sports in the hands of a bunch of rich billionaires just Chicago's a perfect example. The private equity firm will do whatever it takes to make that.
No one could make the Bears
They
good.
want to play, yeah.
Nobody wants to have some old owner that's been around for 100 years that can't turn the team into a winning team. Forget it. I'm tired of the Reinsdorfs of the world, the McCaskies, and the crappy losing teams they put on the field. So yeah, I want private equity to take over.
Okay. Hey, I'm going to finish on time today. For my viral video of the day, I follow lots of accounts, and this is just like why women live longer. But as we say goodbye to the last golden rays of summer, just got to give a slow clap to this homemade redneck water slide ramp and these two dudes just holding on for dear life. Watch this. It's pretty good. I love men.
That'd be the end of me right there.
That hurts so when you land on your back like that.
Oh my God.
Oh man. Anyway, thank you, Beth. I thought that was pretty good.
I pay you to do that. I pay you to do that.
I wouldn't survive. I could not survive that.
Good one out of you, V. We'll take a quick 90-second break. We'll come back. We got more Take the Live, a little bit of confirm and send, then trades from the research team. After that, we'll be back in 90 seconds.
I don't think I could. I don't think I could make it.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was but when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Let's just take a quick look at the market because I know we've got trades from the research team. Got a bunch of researchers coming in. We'll do this kind of quick. Even the S&P down 12 and change. Leader in the clubhouse at the downside is actually the Russell down 12 by about half a percentage point. Everything else, like the NASDAQ down 64, is down around a quarter to a third of a percentage point. Dow down 138. Volatility up by 56 cents. Odd enough. Kind of a big move in volatility on top of two other large moves in volatility. Bond down 11. A couple of movers here. You mentioned Tesla earlier in the show. Tesla down a couple of bucks, and then some of the other like Chinese stocks like Baidu. Baidu now down around $6 after having this.
Finally, those stocks were, crazy and
in the stratosphere. Ivy ranks in the hundreds. Yeah.
I thought they were ridiculous yesterday.
I did too, but the stock goes from, if you were in it for the last week or so, it went from 90 to 115 or 100 to 115. Hard to hang in there.
I know, but it's over now. Now they're going to normalize.
Yep.
Thursday, October 3rd. Let's do it. Emails that came into us overnight. Lots of good stuff. What is your target theta to net lick ratio? I have a $25,000 account, and I'm wondering what my theta should be. Also, as my account grows, should I change that target?
Theta to net lick. So I don't know if I don't remember our formula.
So our theta to net lick ratios is no problem. I do this all the time. What is your theta to net lick ratio? So mine is about between 0.1 and 0.2%. So if you have a $25,000 account, just to break this down, okay? If you have a $25,000 account, 1% would be $250, right? So let's see, 10% would be $2,500. Yeah, 1% would be $250. So 1/10 of 1% would be $25. And so if I had a $25,000 account, I'd be between 1/10 and 2/10. If volatility is higher, you can get up to 3/10. But for the most part, I'd be sitting between $25 and $50 a day in theta. That's between 1/10 and 2/10, with a max of 3/10 or $75 a day. So my range would be 25 to 75, but I'd probably be in that 25 to $50 a day, which is, again, 1/10 to 2/10 of 1%, which is theta to net lick. Now, as your account grows, should that number change? Yeah, that number is actually going to go down a little tiny bit. It's not going to get larger. It's actually going to get a little tiny bit smaller, but not much. It's fractional. So it's still going to be in that 1 to 2%. I'm sorry, that 1/10 of 1% to 3/10 of 1% range, but probably it's going to be in that, average somewhere between 1/10 to 2/10 of 1%. So again, on a $25,000 account, your theta to net lick ratio should be somewhere between $25 and $75 a day, and maybe it averages, somewhere between 25 and 50. Okay.
Very good. Very good. Now that's going to also slide a little bit as time goes by.
Sure, but that's just ballparking it. That's where you are. And as your account grows, that number doesn't really change. Maybe it goes down a tiny little bit. Let's go next slide. So say you have a strangle on with multiple contracts, same strikes, but you legged in at different times and different prices. So how do you go about determining your profit target?
I add up all the credits and go from 50% of that would be a home run for me. That's my easiest way to say it.
Yeah, this is a tough one because if you have a strangle on with multiple contracts, same strikes, but you legged in at different times and different prices, it's not very easy to figure that out. I don't care who you are. I don't care if
I have a 1/3 ratio spread in Baidu that I have on that I have to figure out because I've got too many people asking me what my net credit is. I thought it'd be pretty easy to go through it. I can't because I will, but it's not easy just to look at it and add up all the credits.
But when you do multiple contracts at different times and different prices, and you leg in same strikes, it's almost impossible. So what I do is I look at my, I look on my option chains, and I go to my net P&L to make sure that I'm up money if I'm going to close it out, or I stay in the trade till 21 DT. So I'm more likely to base my profit target based on DTE and the fact that I'm up money. So I might look at my P&L, or I base it on DTE. I'm not really basing it on a percent of I'm not basing it on a traditional profit target of 50% of max profit. I'm basing it on days to expiration and am I up or down money? Let's go to the next slide. Near the end of the day, Tony sometimes says something about how many cars or cards traded. What is he talking about?
Just the number of futures that trade. They were always called cards in the parentheses that you have there. That's just what they were called on the exchanges. So I should say volume, I guess. I don't know. Or futures traded. I don't know. But they're cards.
Yeah, used to be back in the day.
There was a card. You actually had a card that you would, if you made a trade, you would write it down on a card. You'd stick it in the belt. So there was how many cards were traded.
Back in the day, you would, when everything was done by hand, you would write down all the trades on what they called a trading card. And it was all done manually. And you would then turn your cards in, and there was somebody at one of the different clearing firms who would then they would just type in, they would key punch in everything that was on the cards, and those would be the trades that would attempt to clear overnight. And so they were always called trading cards, and that's what he says is cards.
Yep.
And so he's just talking about the number of trades. So why don't you guys ever trade stocks after it's been announced that the company is a takeover target? Sometimes the buyout price is well above where the underlying is currently trading, but you guys stay away. Why wouldn't you just buy those stocks?
There, we really feel like you're picking up pennies in front of a steamroller. People use that expression on us or me for the trades that we put on that don't have defined risk to them. But here is really where you are. Remember something, after this deal is done, you got billions of dollars looking at this product taking into consideration was an all cash deal, stock deal, when you get the stock, the cost to carry. There's so many more factors of it with people who have much better interest rates than you have, or anything else like that. This, and if the deal falls apart, you end up losing big. And if the deal does go through the way it is, you make pennies. It's not a good. For me, it's not a good way to move forward with trading.
Usually, when the buyout price is well above where the underlying is trading, the discount is very measured, and it's theoretically accurate because it accounts for the risk of the deal not going through for regulatory reasons or for corporate reasons, whatever it is. The reason that we stay away from it is because all the excess premium is generally immediately sucked out of that deal, and all you're doing is trading the difference between the buyout price and where it's currently trading, which to us is not a game we want to play because there's not a lot of edge in that game.
Mm-hmm.
So we don't trade deal stocks because I don't like the risk reward. And we, like Tony said, we can't compete on interest rates, borrow costs, and carry costs. So I don't like that.
Yep.
We definitely stay away. Ooh. I watched yesterday's Truth or Skepticism, and it got me thinking, will AI eventually replace market makers?
This is what you guys spoke about? I'm sorry.
No.
Okay.
We talked about AI replacing jobs.
I'm not as gung-ho on AI as maybe some of the other people in the world are. I don't think it's going to replace much of anything, to be quite honest with you. It's going to make some of the jobs a little bit easier. I mean, I watch my son do his English homework sometimes. It makes it a little bit easier that way. But I don't see how it's going to replace jobs personally.
So Dylan and I had a conversation yesterday on Truth or Skepticism about, will AI replace market makers? I'm sorry, will AI replace jobs? Forget market makers. Will AI replace jobs? And we had this discussion about, we went lots of different directions on this. I'm actually one that believes that AI will create way more jobs than it takes away, and it will create better jobs. So I'm actually thinking it's a very positive thing. Any kind of advancement in technology, to me, I always interpret as positive, and it will create.
I mean, they're throwing enough money at it.
It will create tons and tons of new jobs, but way better jobs than will be replaced. Will AI replace market makers? Well, the answer is technology has already replaced market makers. There are no market makers.
Yeah, right.
Anymore.
It's all service.
So there were market makers 25 years ago. Now there's like a handful of market makers left, and everything.
You could see them when Liz and Jenny are on the floor. If you think they're so good.
And Liz and Jenny broadcast yesterday from the floor of the SPX pit. You can see a handful of market makers left, but the reality is, we've gone from 10,000 market makers in Chicago down to about 200. And will they replace the last 200? Probably not. But did they replace market makers? It's not even AI. It's just, it's new and better technology. It's called high frequency technology and high frequency trading, high frequency technology, and it has replaced market makers already. We don't need to wait for AI. Let's go to the last slide. Do you have a daily profit goal? You know what? Somebody asked me this in a podcast the other day, but go ahead. Do you have a daily profit goal?
Yeah, to make as much as possible. I mean, no, I honestly do not. I mean, there are days when I have a lot on and I expect to do, a lot better than days when I have a minimal amount of trades on and I know I'm not going to do as well as I want to on that day because I just don't have enough exposure. So I don't have a daily profit goal. I have an expectation that I'm going to make X, but not a goal. And certainly if I make that goal, if I did have a goal, I would not close everything just because I made that goal.
Do I have a daily?
I underperform more than I overperform every.
Do you have a daily profit goal? And the answer here is that when I was a floor trader and I was just working for myself, yeah, I had a daily profit goal because
30 years ago.
Yes. Long time ago.
I mean, I had expectations 30 years ago when I walked outside too. I don't have those anymore. I'm just glad I open my eyes in the morning sometimes.
I had a daily profit goal when I was a floor trader. And not even that tight one, but I had one. Do I have a daily profit goal now? The answer is no, not at all. But I do.
The profit goal was to take everybody's money that you had in the pit to stand around you.
I do have an expectation
I do have an expectation of like what
If I have short delta, the market goes lower, I have an expectation of what my P&L is supposed to be. If I have short delta, the market's going higher, I have an expectation of how much I'm going to lose, right? I want to lose less. I mean, come on.
I have an expectation of what I want to make on an annual basis. And inside of that, you know, every 6 months, every quarter, every month, whatever it is, I definitely have an expectation of what I want to make, but I don't have a daily profit goal. My expectation of what I want to make is some multiple of risk-free rates. And I talk about this in a lot of different speaking things that I do, but whatever risk-free rates are, if they're 5% right now, I want to make some multiple of that. Usually, you know, usually at least 4x, sometimes more than that, but that's my annual objective, I don't break it down to a daily basis.
Let's take a quick 90-second break and come back. We got more Tasty Live with trades from the research team next. We'll be back in 90 seconds.
If you missed the live show, here's our cherry on top weekly recap.
We also went to Universal Studios, which was really fun in Hollywood. So we drove to LA with our rental car. You can't do that if you don't have a rental car, can you? No, you can't.
Drove from Vegas to LA.
Well, actually, my wife drove because I had food poisoning. So
I have heard it all. I am done. I am done here.
You live in Florida.
Yeah.
Don't they have Universal by Disney? I know they do.
That place sucks. No. They don't have Super Mario World, and they don't have the trolley tour. They don't. So can you just listen? They don't have the trolley tour, which was my favorite. That was pretty cool.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Now don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing.
We played softball on the same
16
team.
inch?
12 inch.
With gloves, because
Gloves.
we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Tomas, we are back, my friend. So enough out of you. Let's get to trades from the research team. Who is our first researcher?
Baby shark, baby shark, baby shark,
Baby shark. Hey, have you called your parents lately?
Yes, I have.
Okay.
Yes.
You call your mom, but you don't call your dad as often, right?
Yeah, that's a bit of a thing.
Oh, your mom, she worries.
Smart.
Yeah.
My mom used to have a little picture in the house that said, "Call your mom, she worries."
It's true. It's true. Moms do worry. Let's get back to your dad for a quick second, because I know your mom, but I'm more friendly with your dad. I mean, that's the way it should be. Otherwise, your mom.
Why don't you leave the poor kid alone? Okay. Don't ask him. Start asking questions about your dad. Okay.
What's the limit on calling your dad? Because it has to be. I know your dad quite well. I mean, I allow him to DM me. I don't allow him to talk to me via phone or anything like that. So what? My market's 1.5.
What do you mean?
Like a week, like 1.5 times a week. Like he can call you one time, but if he called him 2 times a week, it would be too much.
Your limit
Because I know they're already busting your chops.
Well, with my deadbeat son, once a week would be a lot.
It's very similar to mine. It's probably also once a week.
That's it. Well, once a week.
He used up all his chops.
Twice a week. It's
during
too much.
college, you know.
Yeah. It's
every
like an
single day.
alcoholic with liquor. Like one's not enough, 2 is too many kind of thing. Yeah. I get it.
Every single day during college, it's like, oh, how's it going? Studying going? You're gonna pass. You're gonna do this, you know.
Yep. All right. Beautiful. What trade you got for us? See, he is alive. He's well. He's good.
Yeah. You don't need to worry.
Yep. No need to worry.
CELH Celsius energy drinks.
Do you know what? I don't like them.
Yeah.
He doesn't like to drink. He doesn't mind.
No, I don't like to drink. Do you like to drink?
It's okay. I don't like energy drinks too much.
All the young kids, all the cool kids are doing
The Celsius, it's too sweet for me.
That's the problem with energy drinks nowadays.
They're really sweet.
Too much sugar. Yeah.
Yeah. Have you had Celsius?
No, I don't drink them.
I don't drink them either. I'm just
Red Bull and vodka every once in a while. That's just if I'm tired.
I had a Celsius because I bought it. I made a mistake at Costco and bought a case.
Do they have it in diet like Diet Red Bull?
I'm sure they have these things and everything.
I think they do, but I have a case of it and I just don't like it.
Well, this stock was once a high flyer, trading close to $100,
and then it's fallen all the way down.
30 now. It's lost like 70% of its market. What do you think here, Sadnov? Could have you?
I think that we've traded it one time, probably. I don't. Let me see. What is it?
CELH.
Because the IVR is pretty high, and then you're getting a nice credit to BPR ratio. So
I'm going to see if we've traded it this year. Year to date, CELH. Yes. Ooh, and we have quite a nice P&L. All right, now we can go back to the stock. It's been good to us. I don't even remember trading it. But we did make money, so that's good.
I found the one stock where Tom did not say, "Oh, this."
Yeah. So what do you want to do in here?
25-40 strangle to make it
November.
delta neutral. There's a fair amount of call scoop.
25.40.
Yeah.
About $2, a little over.
$2, yeah.
203. What's the stock doing? It's about unchanged.
Unchanged. Maybe slightly.
You got it. I like it. Something different.
Look at you. Good job out of you, my friend.
Look at you.
Is our next researcher. Wingman. That's right, Gad. How are you, my friend?
I'm good. How are you?
I'm doing good.
At the little, what do you call those things that hold your tie down?
Do you have all the of the things you need to put it together? What would you think it would be called?
Forgot what those things are.
Tie tack.
A what?
A tie tack?
Tie clip.
Or tie clip, yes.
Yeah.
Tie clip. Nice.
Okay.
Yeah.
I got one question for you.
I have one question for you. Do you think Tom can button the top of that shirt without choking himself?
This shirt?
Yeah.
Yeah, sure.
I think so.
Okay, that's the second button.
Oh, the top button?
Yeah.
I don't own a shirt I can button because my neck is too muscular.
What do you got for us? You had a question?
Yeah, one question for
Go
you.
ahead.
You have been friends for 41 years, right? 4 years.
Say it again?
You have been friends for 40 years.
40 years, yes.
What's one secret to be?
What is what?
What's the secret for
What's
you?
the secret?
Yeah.
Pictures. I have pictures of him that he would not like to get out in the public, and he keeps me as his friend. That is the secret. That is definitely the secret.
I pay him. I pay him to be my friend. I just need people that's all.
Good. Got you.
He pays me not to release the pictures. That's what he's trying to say.
Oh,
yes.
I
yes,
see.
Yes, that is the secret. That is the secret. Okay. No, being tolerable of one's faults and I am very tolerable of shortcomings, and it keeps him sane. That's what I do. What trade you got for us, Gad?
Does anybody have pictures of you?
In compromising positions?
Yes.
Not that I know of. Not that anybody's tried to blackmail me with. Well, you have some?
What? No.
It could have only been from the first wife. Couldn't be from the second wife. So,
okay.
Hey there. I already paid that due. Okay? I paid that bill.
So I got IWM. It's been a while since we traded. So
I do have a bunch of IWM positions on right now.
Good IV rank. Although there's a lot of good IV ranks around, but IWM doesn't have earnings, which is nice.
IWM. We are currently in the.
You have expiration in November. Position which has.
I do have a position in November. I have the 209, 228 strangle.
Oh, okay.
Pretty wide. Not, yeah. 30.
Crazy wide.
30 deltas basically.
Mm-hmm.
A little bit rich this morning. But sure, go ahead.
Yeah.
What do you have?
I'm doing
Iron Condor.
Yeah. 197, 202 for put side, 231, 236 for call side. So IV rank is 32, which is somehow great, and the GP right now, that price is like 217 or 18. So the credit will be $1.76. So.
Okay. What is it? 176. 1/3 the width of strikes.
Yeah.
Sure.
More than that. Yeah.
Sure. I like it.
You sure about this?
Yeah. I already have strangles on, but yeah, I'm fine.
All right. Beautiful. Who's our next researcher? Sans tie clip.
Yes. Yes. I don't like the tie tightened up.
No, you're kind of more like
loose.
I've been working all night.
Yeah. I got my sleeves rolled up.
I'm
looking like a presidential candidate.
Right, Gad's just coming in for the day. He's fresh. He's clean. He's looking handsome.
About to go to the club.
You've been worked over by the boss.
Yeah. There you go.
I understand. All right, what you got for me?
Okay, so I got PDD. This is Temu. Temu is the company that sells the cheap stuff online.
A little bit today, right?
It has. It's actually moved down a little bit. So this one here, I want to do a 125, 120 put spread, 510, 410 call spread. And Iron Condor here on this, bringing in about $1.75. Not a ton of credit on this, but it's got a high probability of success. Stock can move up about 17%. I can still make money on this thing.
175, 180.
Yep.
175, 180. What's the put side? 125, 120. Now you're selling very far out of the money put.
I am.
Mm-hmm.
You're
just in case.
You're $20 away on the put side. You're $30 away on the call side. Wow, what kind of skew do they have in here?
Yep. There's quite a bit of call skew in this one.
Put the stock down a bunch.
Yeah. But this stock can easily move around on the day. So.
What kind of crazy call skew is that?
Yeah.
Okay.
Kind of cool though.
You got it. I entered it.
Excellent.
Kind of like that trade.
Beautiful. Who is our next researcher?
Thank you, Data.
Oh, that was pretty abrupt. Kai! What's up, my man?
Not much.
How's things?
To present another Chinese stock.
Okay, give it to me. What are you going to do?
All right, FXI.
Oh, okay. Well, let's see what you say.
I can't believe how much this stock has rallied. I held this stock for a freaking year, $25, $26, and now it's up to, goes up to 35, almost like parabolic.
Oh yeah, 5 trading days all the way up, like more than 50% or so, right? Definitely more than 50%. Yeah.
Yeah, it's down about $1.30 this morning.
Yeah, so I just put aside $1 down from 31 to 30. So right now I have 30.40.
So you're doing 30.40.
That is correct.
Yes. What do you think?
I mean, there's crazy call skew in here too.
Yeah, all the Chinese stocks has strong call skew right now. Every single one.
It's a cheapie. I think it's gonna be
underlying only $35. Yeah.
I know. I think it's gonna be hard to fill on the opening because the calls are gonna get killed and the puts aren't gonna go anywhere.
Mm-hmm.
But sure, I like it.
Okay.
Kind of wanted to get short FXI yesterday, and I missed it by that much.
All right. You're good?
I'm good. Thank you, Kai.
Thank you, Kai. Quick and easy. Like Tom likes it. We'll go to Antude is next.
Wakes me up in the morning, guys.
Wow, nothing says Thursday like seeing Anton. How's everything, my friend?
It's good. I'm so excited. When we land at the airport, I have like a few places that I want to take you guys. There's this Katsu place in Vegas. Oh, you didn't get the news, right? Beth told me I could go.
All right.
You get the news of what?
Say it again.
Beth told me I could go.
Beth told you to go for what?
Boom spring break.
A boomer spring break? Yeah, but you're gonna have to leave, somebody, something at home. And so I don't know, you're still like in your newlywed stage. I don't know if you can get away with that.
We will figure it out. But in the meantime,
she's in the room.
Yeah, she can hear.
You guys are professionals, aren't you? In more ways than one. So let's take a look at the trade, okay?
Okay, USO.
You guys see it. Yeah, USO. We got short iron condor here. Obviously, Ivy rank closing in on 100 here. So wanted to sell some premium in oil. Oil tends to stay put. Tends to move around on a day-to-day basis, but it tends to stick around after 30 or 45 days. So when the volatility is high, I tend to sell iron condors almost exclusively. So we got the 67 short put, 80 short call, capping it with $5 wide wings, collecting exactly a third of the width of the strikes here, $166 in credit, putting up $334 in buying power.
Sosnoff, what say you?
I'm totally fine with it.
Anton, you live.
Totally fine. What price do you have this at? 166?
166. It's up a little bit today, so you may get a little bit better price.
Okay. I like it. Thank you very much.
Trading us almost $72, up $1.81. Big move in oil. Thank you, Anton. Yep. Appreciate your time. Excellent
Talk
find.
to you soon.
Yes, you will. Who's our last one?
Can I tell you something about yesterday?
Don't ever talk over Jajun's music again. Jajun, do you want me to give him the back of my hand?
Huh? It's fine. It's fine.
It's fine? It's fine? What? Excuse me, Jajun, for just a quick second. What were you going to say, Tom, before you interrupted it?
Yesterday, my favorite trade of what's your assumption was, if you remember, was K-Web.
we did 4 tranches of it because the IV rank was 120.
Yes.
Okay, so we sold that strangle in there yesterday at 171. Do you know where it closed?
I do not.
135.
That's a good trade.
Came in 20% yesterday.
That's nice.
That's
Taking it off.
That's the 120. Yeah, I mean it's.
I know. I'm just teasing.
It's crazy.
Jajun, what do you got for us, my man? You're looking handsome today.
Thank you, thank you. So today we have a United Airline. We are a little bit bearish on the airline.
Mm-hmm.
We do a short call spread. We sell the 55 and buy the 62.5 for November 15th.
He's selling the 62.5, buying the 55. I'm sorry, selling the 55.
55, yeah.
Except the only thing here, Jajun, is that we don't like to sell in the money. So I'm just going to move the short strike to 1 strike out of the money. It's just a probability thing. Okay.
Yeah.
I want my probability of success to be.
Stock is 55.70. Give the guy a little bit of.
I know. I'm moving
70 cents in the money. He's a good friend. He's a loyal employee. He's a nice guy. He's done nothing wrong. He gets dressed up for you before he goes to school, for crying out loud. And you're gonna bust his chops. Now the stock's down 20 cents. You're gonna bust his chops over 50 cents. I'll give you the $50 if that's what you need.
Jajun, I'm going to move it, always shorting the out of the money strike. It's just the tasty mechanics. So I'm going to move my short strike to 57.5 into the 57.5, 62.
That's great. That's great.
It looks like the stock is pretty much unchanged, down a couple of pennies. And this thing, we'll put it in at 1.
You will get a third of the width of the strikes. I know you wanted more delta and be a little bit more bullish, a little bit more bearish to collect a little bit more credit. I get what you did, Jajun. I would have no problem.
I still move the strikes.
Sadnov is just being, it's like good cop, bad cop. He's just being a bad cop, Jajun. Don't let it bother you.
I think Tom's teaching me. I'm learning. So and the liquidity are very good in every strike.
Yeah, no, everything's fine. The trade's fine. I don't care about what your rationale is in there. Everything just, I like the short strike to be out of the money. That's all it is.
Mm-hmm.
But thank you. Good stuff, man. Appreciate it.
Awesome, my friend. Thank you very much. Thank you very much. We're going to come back with more Tasty Live with the opening bell next. Back in 90 seconds.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. The opening bell is imminent, Sadnov. What do you make of this day so far? We were a little weaker last night. Even the S&P is traded down to 26, which is about $20 or 20 handles lower than where we are right now. Even the S&P down 15. We've had about a $5 range on the E-mini S&Ps all morning. Volatility still up by 58 cents, trading 20.65. We got some movers. Chinese to the downside, Tesla to the downside. Not too many to the upside that I've seen yet this morning, but the opening bell is in about 15 or 20 seconds. You can see all that. What's your thinking here? Volatility seems to be percolating.
I know, vol's percolating. I thought they were going to rally up a little bit this morning, and they turned and sent them back south. I mean, let's see. They seem to.
We test the lows before we test the highs of last night's range.
I mean, it seems like absolutely impossible for them ever to go down.
I think we test the lows today before we test the highs of the day. That would be my guess. I mean, we're basically mid-range for the day right now.
It's entirely possible.
50-50 shot, Saz, because they're both inside the expected move.
Yeah, let me just turn on my sound here, and let's take a look and see where we're at. Trades from the research team and everything else. You know, I mentioned that K-Web.
The opening bell, I didn't hear it, but I think
I didn't hear it either. Beth, what happened? I didn't hear the opening bell.
I think we had it. We did. I don't know if I see things moving.
It sounded very faint.
Like Saznoff last weekend for foliage weekend. Yes, very faint.
Don't listen to him.
Let's see what's moving in the market here. Even the S&P is down 13, but what's moving to the downside? Baidu down 6 and change. Finally a sell-off after being up around $30 in the last week or so. Netflix down $6 and change. Adobe down 5.5. PDD, the Chinese stock that you wanted to do for trades from the research team, down $4.40. Tesla down $4.30. Baba down 4. Amazon and Meta both down around 3.5. Let's see what's helping us to the upside. Nvidia up $1. Any volatility product obviously going to be higher. Dell up by $1. That's really about it. Let's see what the beloved Apple is doing. Apple down $1.59.
I'm looking at all the different trades from the research team. Celsius, nothing done yet. IWM, nothing done yet. PDD, why is this market? That market's really wide. Something's wrong in there. I have the wrong price or something. USO, ooh, that market's way away too. What's going on there? Oh, filled.
Markets move, Saznoff.
Filled. Maybe it's a little early. Celsius filled. All right. So just a little recap here. USO trades to the research team.
Okie-dokie.
USO filled the Iron Condor. 163. Celsius filled the short strangle. 202.
Okie-dokie.
UAL filled the short strangle. 158.
I think that's it.
Yeah, 3 fills so far. PDD, I am
working it, boss. I'm working it.
I'm really far away from the market. I don't understand why. Maybe there's a bad quote or something. And I'm filled in IWM as well. Okay.
Yep.
Now,
how about you? What was your favorite trade of those today, Saznoff?
None of them.
That's fair.
I'll let you know.
That's fair.
PDD, I'm not even close on. I'm going to look at K-Web from yesterday.
Sure. Let's take a look at K-Web right here on the screen if we can.
We put this trade on yesterday at 171. It's already trading for 126.
K-Web down $1.50.
I know. Can you
take that type of trade off? You sell something for under $2. You can't. I mean, you'll have to wait.
I covered it. I did 4 tranches yesterday from what's your assumption? Somebody gave us that trade, and I liked it.
And I think you really had to be aggressive with your pricing too.
I did.
K-Web wasn't the most.
It wasn't the most aggressive, and I did 4 tranches.
It wasn't the most liquid. You were aggressive.
Yeah, it wasn't the most liquid. We took almost 50 cents out of that.
Is that a scalp, Saznoff? 33%.
It's the 120 IV rank.
3%.
Don't get that 120 IV rank too often.
No.
And so I jumped all over that sucker.
Ringtail Lima.
Jumped all over it. Let's see what else we got here. Taking a quick look at different stocks. Stocks that we may need to do.
Look at this, Saznoff. You mean the S&P is only down 9 now? Look at you, Tony. You look dumb.
Dumb.
Volatility.
You and your
56 cents.
You and your stinky.
You and your stinking bearish call.
Yeah. So I am going to make a very minor adjustment here in.
Still down 9. I haven't talked about some of the other commodities. Oil up $1.76. Oil Ivy rank 105. I think oil is going to be on option trades today. That's right, every Tuesday and Thursday. Lucky for you. Today's Thursday. Maybe we'll find a trade in oil today. I think we might have to use the oil futures options.
I'm looking around to see if there is something that needs to be.
Gold up $1.10. Silver up 10 cents. Bigger move on a percentage basis. Net gas up 8 cents.
Bills are really good so far this morning, which is a little bit weird. I didn't think they'd be this strong.
Yep.
What'd you say? Natural gas?
Yep. Up 8 cents.
Yeah, we have a problem.
Gas has had a nice run all the way up to almost $3 now.
Nat
Around
gas.
2.5.
We have a little bit of a position in there. We'll just roll up some putties.
A little bit of a predicament.
We'll roll up some puts. The biggest loser in the commodity world this morning is hands down crude oil, up $1.73. I'm not sure how to adjust that position yet.
Are we eating soybeans anymore? Soybeans down a full percentage point, 11 cents, 11.5 cents.
Soybeans. Our soybean position is a little tiny bit long here. I think we're okay. Let's take a look through everything else. Everything's open now. Any other problem children? That's my main thing is, are there problem children?
I don't see them right yet. You have basically an unchanged market.
Yeah, you basically
have a BABA position. It looks like volatility. I know oh yeah, there it is. Ivy rank was 120. It's now come down to 90.
I have a BABA and a Baidu position, and in both of them, we are making.
Doing well. That looks like they're killing premium in there.
In both of them, we are.
They've been pumping it up for days.
Yes, BABA, we're tiny short. Baidu, we are minuscule.
BABA's got a lot of call skew, so an equal distance and an equal distance away call is going to have a higher delta than an equal distance away put. If a stock is 100 and you're short the 90, 110, you're going to have short delta on that, even though you're the same distance away, $10 on both sides.
You know, sometimes the fills are really good, and sometimes they're. Yesterday morning, the fills were tough because for some reason the market wasn't just. It felt like markets were a little wider. This morning, everything's been tight.
Beautiful. Well, you have 67 cents too.
Yeah. Well, anyway.
Anywho.
I'm good.
All right. And he's done. We're going to take a quick 90-second break. Come back. We got more Tasty Live with Hear Me Out, Victor Jones. Next, we'll be back in 90 seconds.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know
Every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, it's hot as hell in here. I'm like sweating, like it smells.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
from the smart mouths at Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
If you have any questions, feel free to toss them in the chat.
So, Mas, we are back, my friend. But you know what? My man Victor Jones is here, and hear me out. So enough out of you. Talk to me, Victor.
Oh, yeah. Tom, Tony, Tasty Nation, how you doing? Tony, it's great to see you.
It's good to see you, Vic, and I enjoy our little DMs together when we talk. I appreciate it, my man. Thank
Yeah,
you for
we're in a
including
group.
me.
We're in a group chat. Tom is in it. You're in it, and Tom has stopped responding to me for the last 72 hours or something.
I know,
something like that.
I know. I was once trying to get into this cocktail waitress's better graces, and she would do the same thing to me. No DM back. You know what I mean? Drive me nuts. I'd have to go there for lunch, dinner, after dinner drinks, everything.
I don't think that's where he was going with this, your cocktail waitress history. But it depends where I think you're going, like what your motive is.
You always think I have a
No
motive.
bigger dig than no response.
I think
You
sometimes
always think I have a motive. I just want to. You guys are like my best friends.
There you
I
go.
just want to talk to my friends.
Holy, he's got nothing.
I just feel like, sometimes you're just trying to poke the bear type thing. And
No, not at all. All I did, I asked you an honest question. Hey, Tom, who do you think won the Who do you think won the vice presidential debate?
and I said
thought
to
it
you, I
a
was on
fair
an
and honest
airplane.
question.
I was on an airplane flying back to Chicago.
First of all, you just said that just now before we came on air after ignoring me for 48 hours.
Oh my God, you sound
Personal grievances.
you
Personal
sound
grievances
like
aside.
you sound like other people in my life.
Don't say that. Don't
Why
do
are you
that.
ignoring me?
All right.
Hey, just for the record, no guy says to another guy, "Why are you ignoring me?"
I knew you were gonna.
No guy ever said that to another
I
guy.
brought this on myself.
Nah. It's a little of a power trip for you. I've texted you stuff, and you don't answer me back. It's a little bit of a power trick.
By the way, I thought it was you watched the debate, you knew who won, and you just didn't want to admit it. So I was
he
kind of.
just goes whatever team he is favored for. That's who won the debate. You don't know.
For the 100th time, I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
If you want to stay,
I think it's hilarious.
if you don't want to
I
be
think
informed,
hold
don't
on.
be informed.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
see it later?
VHS tape to spare for the debate.
Okay, record it, whatever. But I
No,
wasn't.
man, you can watch anytime you want.
Just go to YouTube, bro.
Yeah.
Go to
I
YouTube
know,
and
I
you can
know.
watch it.
I'm not watching it. I don't care. I don't care.
All right, let's get going because the market just opened here. Nasdaq's looking like it wants to go unched. I was thinking like you, Tony, as well. So, anyways, I want to talk price versus value first. Okay, price versus value first. I want to play a little guessing game. Tom, I know you like guessing games. Tony, you too. Sure. So I'm going to ask you. There's about 270 U.S. listed Chinese equities. I'm not including the ETFs here, okay? I'm just including the U.S. listed equities, ADRs, whatever the case may be. There's about 270, maybe plus or minus 10, maybe 260, 280. I think it's right in that ballpark. My question to you two gentlemen, let's see if you can get this, see if you can nail this. What do you think the total market cap is of all 280, 270-ish names of U.S. listed Chinese stocks?
I'm surprised there's 280. I thought there was less, but I'm going to say
I only know
and
like 8.
And I'm going to give you, let me give you just a little bit of a hint, okay? Alibaba, I believe, has a market cap in the 200 billion range.
Okay.
260 billion. So that's your hint.
Okay. So if I'm going to take them all, and assuming you're not using ETFs like FXI, right? You're just using the companies.
Correct. And I think FXI is like 12, 13 billion. Just another hint.
Okay. Anyway,
but no, not using those.
Yeah. Okay. If I was just picking the stocks, because they're most of them are garbage, I would say that outside of I don't know what Baba is. You said 200. Let's say Baidu is another
270.
What?
It's Alibaba's about 260, 270.
And then Baidu's probably another 200.
No, Baidu's only 40.
It's only 40?
Yeah.
Okay. So in that case,
I have no idea what it is.
The whole thing is probably about 500 or 600 billion. That's it. It's a fraction. I'm guessing that. I mean, most Chinese companies are complete garbage. They're penny stocks, and I'm guessing that the whole thing outside of the top 20 is probably less than like 50 billion. Everything else is probably 450, 500. I'm going to say I'm going to go just ballpark at 500 billion.
Tony, you want to take a guess?
I'm going to abstain. I have no idea.
I'm going to say 500 is probably high.
I'm going to abstain. I don't play your reindeer games, okay? So you can make your point.
Yeah, but go ahead, make your point. What's your point? It's garbage, right?
I'm not a sucker like Sadnov.
You guys always think I'm setting you up. I am not.
No. I don't think you're setting me up. It's a reasonable question. I think the number is going to be crap, and you're going to say it's like 1/6 of the size of Nvidia.
I could probably go that route. That's actually in the ballpark of being close. It's 790 billion. It's about 800 billion.
Okay.
Which is approximately the market cap of Tesla. I think Tesla's right in that same ballpark.
Okay.
A couple of weeks ago, Tom, you would have been right on. So before this 20 to 50% move off the lows on a lot of these individual stocks, you would have been in the 500 to 600 billion dollar ballpark. So my question to you is price versus value on these Chinese stocks. Obviously, a lot of them are taking a bit of a haircut between 2 and 5% this morning. Vol's contracting, which makes a lot of sense. These things had dumb high individual implied volatility, and all the IV ranks were near 100. So the contraction of volatility shouldn't surprise anybody. My question, though, I think for many people is going to be now that you're starting to get a price discount, these things aren't going a straight one-way train. If people aren't invested or they don't have some upside exposure, the question is, where's a fair and reasonable price to look to participate to the upside? And so my question would be to you guys, knowing that the total market cap of all U.S. Chinese equity exposure is only in the ballpark of $700 or $800 billion, does that feel super cheap to you? Even after we've gotten a 20% move in a couple of weeks, it seems like this isn't necessarily a big short squeeze. It's the fact that the market was completely offsides towards a normal or more fair valuation on a lot of these underlyings. At least that's my read. And so
what I find interesting is the fact of
how late you are to the party. Because
oh my God. First of all,
we've been sitting here talking about Chinese stocks with you because you're basically
Scott,
part Chinese.
Tom, I've been long.
What?
He's been lost. He's been lost.
I've been long.
I understand, but I've been talking
you,
to
you aren't a part of this run. You dumped them with a 4% upside move. They're now up 25%.
I understand.
I'm still holding them.
I know, but what I'm saying to you is that we've been talking about this, how undervalued they were for 2 years. And the fact that they just ran, all of a sudden that becomes a story.
No, my point to you is I still think they're trading at value. That's my point. That the price versus value, that the price has run, but I'm trying to articulate a case that on a value basis, and my value case is the total market cap of all the exposure on U.S. listed Chinese stocks is only 800 billion, which is the price of one U.S. company like Tesla. I'm trying to articulate to you a case for value even after a running price, and I want to see you interact with that.
Yeah, I understand that. And my argument is the difference is that if Tesla was a Chinese stock, because I just have to point this out. If Tesla was a Chinese company, okay, it would be trading at a fraction of its current market cap. And the reason for that is because in China, there are unwritten caps, and you can't have a company that's too successful or too big. And you can't have a true free market where it allows these things to go what their value is. So yes, I would agree with you that Chinese stocks are still probably undervalued relative to US stocks, but you can never expect to achieve full value for Chinese stocks because that's not how they work. And that's not what the Chinese government wants to happen. That market is too controlled, too manipulated, and it is not a free market. So that the whole issue with Chinese stocks is in the US, the market can determine price. In China, that's not how it works. And so, I think the more interesting question would be if Baba was a US company, would it be double or triple its value? If Baidu was a US company, would it be worth 5 times what it's trading for today? And the answer is probably both those cases. And that's what's so hard about pricing Chinese stocks. And that's why you had to wait for 2 years for these things to have a short squeeze, because the Chinese government has ruined their marketplace. Who in their right mind would ever invest in China anymore?
Me.
Like, who in their right mind? Because you have no idea, if your investment is protected, if you're going to have a liquidation event, if you could ever get what fair value is. It's not possible to know. So China has already done, there's so much damage over there. The whole economy and the whole free market structure is so damaged that I'm not sure that they can recover to full value.
Let me ask you this. I
just want the vol to go lower in Baidu, if that can happen. If anybody can help me there, that's all I really care about. I'm short premium.
So you're short premium there?
Finally getting paid today. It's been expanding. Ivy rank is now 100 again. I just want volatility to go lower in there. That's all I need. I don't care where China goes, where they go, whatever they do.
So there's no opportunity. So Tom Sosnoff there's no opportunity of selling puts in these names with decent IV rank, and if these things are peeling off 15% or taking off the excess, there's no interest.
We took a decent amount of money from yesterday to today on Chinese stocks because we're short premium, and yesterday we sold more and it worked out nicely. But so I'm not saying for 1 second that I'm not trading it. What I'm saying is that in general, if you want to sell puts in Chinese stocks today, I'd be totally fine with it. I think they have a little bit more to come back, but given how strong they've been, there's probably not that much pullback going to happen before they go back up. So sure, it's a good opportunity to sell puts. But what I'm saying about China is that it's very difficult to compare, the entire 200 Chinese stocks that trade in the US to one stock like Tesla, because again, if Tesla was trading in China, it would be, probably a $200 billion stock. And if all those Chinese stocks were trading in the US, it would probably be, instead of 800 billion, it'd probably be like 2 or 3 trillion. So it's just a very difficult, comparison. You're never going to get full value in China. China trades at a huge discount.
I totally agree with that, and there are very valid reasons for that, right?
Yeah.
Like the accounting issues, government intervention issues, economic issues, the fact that you could have a RSX delisting or escalating conflict between U.S. and China. There are all of those issues, but those risks are in the price. That's why you get the cheap valuation to begin with. I guess my point here is I don't see these moves, these hockey stick moves in a lot of these Chinese stocks the same way I saw GME. I do think it would be perfectly reasonable to see some reversion here or a pullback, but I see the case for these stocks as very, very I don't see this as like a meme stock move in these Chinese underlyings. I see them getting closer to a reasonable valuation given the monetary and fiscal stimulus and the relative cheap valuations in the market. Do you see it the same way, or do you see this as basically a GME, AMC type short squeeze across all these names? I don't see it that way.
I do not see that as a short squeeze. I think your articulation is perfect.
All right, I'm going to move on to the next one. Price versus value, Tom. I wonder if you think this way. So we've been talking about sort of like the energy complex, so energy stocks as well as nuclear stocks, which are going sort of parabolic to the upside as well. CCJ is one of the read-throughs in this underlying. There was another case here today that Google's looking to do something in nuclear. So you've seen Microsoft buy utility companies, 3 Mile Island reopen. There's this continual drumbeat around nuclear energy, or just energy in general, and the need to fuel this AI turn. My question to you is, Tom, when I look at the S&P 500, everybody knows that tech makes up 30% of the S&P, but energy has gone from like 5% a few years ago, which I thought was low, down to 3.5% of total exposure in the S&P 500. So I move away from price and I'm just looking at value, and I say that it seems like we've over allocated capital towards tech and we've under allocated towards things like utilities and energy, which would be needed if those technology valuations are in fact real. Do you see the market through those types of lenses, that there's potentially under invested areas in the marketplace, and then invest or trade based on those types of themes, or no?
I think the answer is sure. What would make you think that I don't think that?
It was an honest question. You always think I have a motive with this. It's just an open-ended question, man. Do you see the world through that lens?
I do.
Only 3.5% of the S&P is allocated towards energy stocks in a world where we need energy to power this whole revolution that everybody's hyped up to begin with. To me, that seems like it doesn't make sense, and it seems like it would need to normalize. And the fact that the market is almost saying, if you don't buy these companies, then Microsoft's going to buy it. They bought CEG. If you don't buy these companies, then Google's going to go buy it, because the valuations are cheap enough for them to just internalize or vertically integrate these companies and bring in energy. And if investors don't buy them up, then they're left with cheap valuations for these tech companies to buy up. And that sort of seems like the world that we're in right now.
Yeah, I hate to put a box around energy, because I think it's such a difficult place to trade. But it's the challenge with energy is that it's so uninteresting from an investor standpoint that you're never going to get any kind of a premium in energy, and you're never going to be able to build an index that people want to trade. Remember how indexes make money because people, pay fees to use their benchmark and their name and everything else. If you build any kind of an energy index, it's basically a dead money product that has no value. So the reason that energy is so low, and the reason that most indexes that used to, be heavily weighted towards energy are no longer in play, is because there's no sex appeal to energy. It's one of the few areas left that's considered to be manipulated. It's highly regulated, and it has basically no asymmetric upside, because it's a cyclical marketplace. So the reason that energy trades in that minuscule amount of percentage, that minuscule percentage of total assets, is because it has no real value. So like I'm just saying that your argument, although it's interesting, it's easily justifiable. If I was building an index tomorrow, energy would be virtually zero.
Wouldn't that be based on yesterday's economy though? And aren't we moving to an adjusted economy where energy becomes a much more necessary part? And we just haven't. It's possible we just haven't allocated capital towards that direction yet. We're first level thinking around AI and data centers, and those types of needs.
It hasn't been proven yet that they used to say the same thing about digital assets. Okay, the same exact argument that they're making now for AI, they were making about digital assets, and it didn't prove to be the disaster or the problem that it was. I just feel like you got to be careful when you go down the energy rabbit hole. It's not, that demand's not proven yet.
Okay, fair enough. I've bless you.
Sorry.
I've come up with a new formula. So I give you 2 market-related topics, and then I give you 1 political-related topic, just to get you to wake you back up. So the political-related topic was last Wednesday. John Kerry gave a speech he participated in a panel at the World Economic Forum. And one of the things that he said was he was talking about social media. He was talking about disinformation and misinformation on social media. And he said that the First Amendment is a major block towards hammering out those points of views and being able to get people towards, some sort of centralized or trusted distribution centers or trusted information sources. And one of the conversations you and I have had is I've talked about this sort of growing drumbeat. Obama said something about the First Amendment. Hillary Clinton said something about the First Amendment. Now John Kerry at the World Economic Forum said something about the First Amendment. And by the way, John Kerry, let's not forget, he served in Vietnam. He came back. His rise to political prominence came from speaking out, becoming a critic of the Vietnam War. Not only did he testify in front of Congress, he participated in anti-war rallies, so on and so forth. So he himself has utilized and exercised his First Amendment rights, and now it seems like he's seeking to move the Overton window on First Amendment. So Tom, we've sort of had this conversation before, and I'm guessing you got a bunch of feedback on your point of view, and I wonder, have you changed or shifted your position in any way? Do you believe that the First Amendment needs to be modified in some way for a digital future, or do we instead need to figure out how to extend our current freedoms, our current rights, and our current values into the digital future?
It would be ridiculous for me to say that everything doesn't. Markets move. I mean, one thing we've learned, Victor, is that markets move. And as markets move, sometimes you have to move the fences a little bit. I'll give you a golf analogy, all right? Because I know how much you love golf. When the first golf courses were built, okay, because of the equipment that players had, the holes, even though the golf courses like, old, beautiful golf courses like St. Andrews and Troon and all those places, the first golf courses ever built, a long hole might have been, a long par 5 might have been 500 yards because of the type of balls they had, the equipment, everything else. And these are for pros. Today, because they have better equipment, better technology and everything else, that same hole is going to be 660 yards long. Did they change the game of golf? It's still a par 5. Okay, and it's still played the same way essentially. But the equipment's better, so they made the hole longer. They modified the hole to take into account the changes in technology and things like that. I think what John Kerry, Obama, Clinton, and everybody else is talking about is not changing the game at all, but modifying the fences and modifying the circumstances. Misinformation is something that was easily removed from in past. Okay, if you provided misinformation, you know, you essentially you got shut down. You lost all credibility. In the current year we're in, misinformation can be completely anonymous. Misinformation can be from somebody running for president that can't tell the truth. I mean, you can have misinformation now. It's very different than it ever was before. So should you move the fences? Of course. I mean, you modify it. You're not taking away anybody's First Amendment rights. You're just modifying it.
So I think what you're saying, I mostly agree with, which is you shouldn't take people's First Amendment rights. What I do think is very interesting about the time that we're in is it does seem like there's a resurgence of people thinking deeply about the value of our democracy and the value of our Constitution, the value of the Bill of Rights, and the value and the structure of our system. And I think, if anything, I know we don't necessarily agree on many different things, but for the first time in a long time, it feels like there's sort of this political consciousness. Maybe this is just me personally, but it does feel like it's a bit broad. Maybe it's because it's an election year. For all the young people out there, I would encourage all of you not to take these things for granted, no matter what side of the aisle you're on. I feel like I waited too long to become more involved in political consciousness. So I would just invite all the young people to understand the values that you have as an American. With that, gentlemen, I will peace out.
Good job
That's my
out
stump
of you.
speech.
Good job out of you, Victor, taking one of my.
Hey, we call that a clean break.
And we need a lot more clean breaks. We're going to take one right now. We'll be back in 90 seconds. We got a market measure next. Good job out of you.
Peace, guys.
Clean break.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and tastylive in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter retweets. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there. Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you missed the live show, here's our cherry on top weekly recap.
We also went to Universal Studios, which was really fun in Hollywood. So we drove to LA with our rental car. You can't do that if you don't have a rental car, can you? No, you can't.
Drove from Vegas to LA.
Well, actually, my wife drove because I had food poisoning. So
I have heard it all. Heard it all. I am done. I am done here.
You live in Florida.
Yeah.
Don't they have Universal by Disney? I know they do.
That place sucks. No, they don't have Super Mario World, and they don't have the trolley tour. They don't. So can you just listen? They don't have the trolley tour, which was my favorite. That was pretty cool.
What happens when two titans of trading come together to harness the power of their prowess? You get a massive display of whatever this is. Oh, thought he had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to tastylive Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Life. Boom! Even the S&P down 7. They just moved about $14.
Were they just up to 8 2 seconds ago?
Yes, they were. Now they're down 11. Yes, volatility hanging in there. Volatility actually trading up 88 cents, sounding off as foretold.
NASDAQ was just up 100.
As foretold.
Literally, the NASDAQ was just up
You have
100.
to wait. Eventually, you're right sometime.
NASDAQ was just up 100. S&Ps were just up 8. Now they're down 15.
What a difference a day makes. Maybe
wow.
I don't know. Final U.S. services of PMI. I don't know. Initial jobless claims already came out. I don't know.
Well, I mean, it's a weird time.
Nasdaq up 11. Yeah.
It's a weird time for something to come out at 9:10.
Yeah. I don't know. 9:13. I mean, it really was. I mean, I really did look just before we came back from break, and even the S&Ps were up 6 or 7, and Nasdaq was up almost.
They're just down 15, now down 6. They're moving around.
Yep. Yep.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending the morning with us. This is our market measures coming up, sponsored by the CBOE. And the CBO also sponsors our live events. Next live event in the U.S. is 2 weeks from Saturday. And it is going to be in LA on October 19th. Saturday morning, we're going to be at the Fonda Theater. Supposed to be a spectacular old venue. My son...
I've never been.
I've never been either. My son's been there to see a couple concerts. He said it's great.
Oh, cool.
So Fonda Theater.
Type thing here in Chicago.
What?
Maybe it's like the Vic type.
Could be.
Type here in Chicago.
I'm not sure where it is. I think it's in Hollywood, but I'm not sure. But anyway, the Fonda Theater in LA. We'll be there October 19th. Doors open at 8. We've got a huge crowd. We're really looking forward to doing the show in LA. And if you want to sign up, go to tastylive.com/events. 2 weeks after that LA event, we'll be in Dallas, Texas for our last Building a Complex portfolio of the year. And in Dallas, we'll be there on Saturday morning, November 2nd. Same thing. Doors open at 8. Show starts at 9. That one will be the original cast. Nikki, Mike, Katie, Pete, Jamal, and myself. And in LA, the only difference is going to be that Mikey Butler will not be there, but Julia Spino will be sitting in. So we'll have our full contingent of Nikki, Katie, Julia, Pete, Jamal, and myself. So it's going to be a great event in LA. After LA, here's where things get crazy. We are launching Tasty in the UK. And anybody that's out in the UK, we have, we're going to be in 5 cities in 5 nights. Edinburgh, Monday, November 11th. We're starting a 5-day tour there in Edinburgh. We'll be at the Caves. Plenty of room in Edinburgh. Then we'll be in Manchester at a place called The Impossible. These are all kind of small venues with it's very intimate, just doing live trading. Wednesday night in Birmingham at the Zoomhof. No idea about any of these places. Haven't been to any of them. In London, we're going to be at the Neon 194, but London officially today is all filled up. So London is... London...
I'm sorry that people might be pressed.
If you haven't signed up for London yet, you can sign up for a wait list if somebody cancels. But right now...
People always do, so you should sign up.
Yeah, you should still sign up because people definitely cancel. But we'll be in London on Thursday night, November 14th. But that event is full, but you can sign up for a wait list there. Or I don't know how far Birmingham or Manchester are. Do you know how far they are from London? I'm not sure exactly how far they are from London, but a couple hours on a train. And then we'll be in Dublin on Friday the 15th. And Dublin is wide open too. So Dublin, Birmingham, Manchester, and Edinburgh are wide open, plenty of space. London's full, and it's wait list only. Okay?
Very good.
So, and all these venues are small. The smallest crowds will be in Manchester, Birmingham, probably. And so, more personal in both those places. So if you want to get out there, it's going to be a lot of fun. It's just, I'm flying solo on this one. I'm traveling with Britt, and the two of us we'll have different people from the UK meeting us at each show, helping us out. But we'll have some fun. There's going to be, Angie and Rich will be at different events, and they do our show from over in the UK. Mm-hmm. And so, can't wait to have those guys there too. So there's gonna be a bunch of people there.
Awesome.
All right. And if you haven't, so Angie, this is, Angie and Rich start the show at 1:30 in the morning Central Time, and they go till 4 a.m. Central Time. And then Pete and Frank take over at 6:30 in the morning from Chicago. And the show goes all the way till 6:30 at night, finishes up with Victor Jones at 6:30 at night. So we go 12 hours a day from Chicago, and then 5 hours from London.
Love it when a plan comes together.
There you go. Oh, one last thing. We also are in the process of filming these 2 events, and we're going to push them out in digital format. The first one's going out November 16th. The second one's going out December 14th. From one single sign up at tastylive.com/events. And Tony and I both went through the process because it only took 15 seconds.
Less.
Yeah.
It really is a click of the button if you want each one.
Yeah. I mean, it literally took us 15 seconds to sign up for both. And you will own both the shows that we're doing now. So the portfolio show, we call it the 6 must-know skills for active traders, and then 7 different option strategies that every trader needs to know. 6 of us have been on the road, but since we're filming this here in Chicago, we added the bat to it.
Yay!
We got him for nothing. We got him for free. We gave him lunch.
Not even lunch.
Yeah.
I'm gonna miss lunch.
So there's gonna be 7 option strategies there. So we're filming both of them. And if you missed any of the live shows this year, you can catch both these. Just sign up at tastylive.com/events. Everything's on tastylive.com/events.
Awesome.
All right?
Sure.
Let's do it.
All right.
A little market measure.
Market measure sponsored by the CBOE.
Yeah. All right. So which asset leads the pack? We're going to take a look here at some fun little...
Let's take a look.
Let's see. Which asset leads the pack?
Next slide, please.
So right now, the price correlations between major asset classes are all trading near zero. And we've talked about this every which way. This means there are no positive or inverse relationships between any asset, which is kind of crazy when you think of it. And to be fair, there are still some inverse relationships, like, for example, the VIX and S&Ps. That's an inverse relationship. But for years, like bonds and S&Ps had this, inverse relationship. S&Ps went up, bonds went down, S&Ps went up, that kind of thing.
Sure.
And now you can see the relationship is 0.09 negative. It's nothing. A lot of people always say gold and S&Ps have this, positive correlation. Well, the reality is it's 0.31. That doesn't count for much. Right. And so when you look at these, soybeans, euro, crude oil, gold, bonds, and S&Ps, none of these have, they're all what we call non-correlated. Okay. This is 3-month correlation, but it doesn't matter. Let's go next slide. Not going to go back 30 years, but 3 months, 6 months, a year, same. On any given day, is there a certain asset class that can lead or drag the others, even if the correlation itself is really small? What do you think? Which asset exhibits the greatest pull to the others?
Even if the correlation itself is very small. There's the list. I'm going to say bonds, but I'm really taking a shot in the dark.
I'm going to say S&Ps.
Oh, that would have been I threw that out because that's the one that that's the one that everything is correlated to. I thought they were talking about another one that might be smaller than even the S&Ps.
I have to think that of these.
Well, this is what everybody's judged by. It's like me being judged by you if I'm a good trader.
Since 2010, if you look at S&Ps, bonds, gold, crude oil, euro, and soybeans, it's not going to be soybeans or euro. I don't think it's going to be gold.
For sure, it's ES. It's a no-brainer.
Okay, fine.
What about outside of ES? If we can take a look, what would you think? I don't think it's going to be soybeans. I don't think it's going to be the euro. I don't think it's going to be gold. I don't think it's going to be oil. So my choice was bonds or gold. That was my 2, and I went with bonds.
My choice would be the biggest asset class there would be bonds.
Yeah.
It'd be bonds or crude oil, in my opinion. But I don't know.
Mm-hmm.
It has to be yes. All right, let's go next slide. Of course, we're wrong. Surprisingly, gold and euro have had the highest probabilities of seeing 3 or more asset classes go up alongside them, whereas equity and bonds had the least pull.
Unbelievable.
Completely the
Never
opposite.
would have gotten that right on the test. Could never have gotten that right.
No, not only did we not get it right.
Matter of fact, I'm disputing those results right now. I'm going to say that these results are false. I won.
Not only would you not get that right, but everything you said was exactly wrong.
Yep, exactly the opposite.
So, and mine the same, because I thought S&Ps.
Yep.
there is roughly a 50 to 60% chance that at least 3 other asset classes will move the same direction as the one you're looking at. There was a 7% chance that all asset classes were up at the same time. That's why you spread the wealth around, because there's only a 7% chance that all 5. But there is a 50% chance that 3, which makes sense if you have 6. Okay, right? There's nothing surprising here. If you have 4 more, 31. Yeah.
And it is surprisingly. I mean, I think that's the right way to put it when
Yep.
you said it. Yep.
Okay, that's good. That's a really interesting page. So then the same trend continues when calculating down days. Gold and euro have the strongest pull. There was roughly a 50% chance 3 other asset classes, and the probability that all were down on the same day is only 5%. This is the reason that we diversify. A 5% chance that everything's down on the same day.
Nice. I mean,
the numbers look about the same. Crazy weird. Yeah, crazy weird. I would have thought, well, I wouldn't trade based on euro or gold, but what I really like on this slide and the other one was that the chances of 5 different assets all being down the same day is 5%. The chances of all of them being up is 7%. That's really pretty good diversification. Let's go next slide.
It is, and I'm trying to look back, like why it would be the way they said it. It's kind of weird too, because the euro has not rallied like with the rest of the market. When you look at gold has rallied. It's at all-time highs. Markets rallied. It's at all-time highs. So from the study, I could see where that would be. But the euro, I guess, enough time. I don't know. It's a weird one for me.
Yeah, it's a weird one across the board, no question.
Yeah.
I'm just looking. Vol is up more than I thought today.
I told you that from the beginning. Yeah, it traded over 21 to 21.20. It's up 78 cents right now.
Yeah, it's weird.
I'm surprised the market's not down more.
Let's go next slide. So when the VIX is elevated, the probabilities of seeing more than half the assets move together increases to 68%. Still, gold and euro retain the highest probability of seeing the assets follow, 75% of the time in high implied volatility environments. The downside probabilities were around the same. So this is when the VIX is over 20, and they're just showing you that the chances of everything moving together is a little bit greater when the VIX is higher, but the numbers don't change that dramatically, okay? Let's go to the next slide.
Takeaways.
Some of the takeaways here. Out of the 6 main asset classes listed in the futures watch list on the Tasty platform, gold and the euro saw the highest probability that at least 3 others moved in the same direction. The approximate probability of at least 3 assets will move in with a specific one is roughly 50%. It drops to 25% when you're looking at 4. That's why diversifying across asset classes is important. And high volatility makes the probabilities, that's spelled wrong, it makes the probabilities rise across the board, meaning that everything has a greater chance of moving together.
Bump. You know what else moves together? This little break we're going to take. We're going to take a quick 90-second break and come back. We got more Tasty Live. Even the S&Ps trading near the lows of the session since we've been open. That was earlier this morning at 8:30. Down 18. NASDAQ down 45. Russell down 19. That's the weakest of the group. And the Dow down 250. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Joy, your friend and mine, Mr. Scott Sheridan. Next, Tasty Trade World Headquarters.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5, 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what? This is English. You should watch him read.
From the smart mouths at tastylive.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tomas, we are back, my friend. You know what that means? You know what that means, don't you?
Not really.
Means enough out of you. That's right, ladies and gentlemen. Tasty Trade World Headquarters, your friend of mine, the ever-popular Mr. Scott Sheridan from the Scott Sheridan Studios. How are you, my friend?
Wow.
And my golf partner. I don't want to interrupt you. My golf partner, you carried me. It was too much for you to carry, but you carried me. You carried me eloquently.
You need a wheelbarrow to carry you.
This is what I wanted to ask.
Sure.
How much trash talking was there done? Had to be a lot.
He's a little hurting today. Okay, so he's not quite
hurting. There was no trash talk.
We walked in together today.
I'm just saying there was no trash. I didn't trash talk him. I just wanted him to pay me.
Hey, Daddy, pay you on air.
I just wanted him to pay me on air. Like, that's all.
I took his best blow, and I'm still standing.
I mean, I didn't say kiss the ring. I didn't make him carry the clubs in from my car. I didn't make him do any of that. Didn't make him.
Because you had a caddy to do that for you.
Didn't make
Otherwise
him.
You would have made me.
I didn't make him eat chicken last night.
I will say, it was impressive that, truth be told, this is, I call it the way I see it. Tony did give me one of these. Listen, we just got to hang into what the 5th hole.
Yes.
He's going to for sure break down after 5. His market was a solid 5. It wasn't a 4-6, 4-7. It was 5.
You could set your clock to it.
Why? When have I ever broken down after 5 holes?
Always.
How many times? Well, yeah, always. Like, what are we talking about?
No.
First of all, I would like to shout out. First
I've
time
broken
we
down on the
played
turn
at Bryn
before.
Mawr,
What?
It didn't rain, which is monumental because it always rains when you go out to play.
I know.
And we go do what we do well, which is eat. But I think the golf gods knew we couldn't eat because Rosh Hashanah things were shutting down a little early. So they got us. They gave us beautiful weather. I mean, it could not have been a nicer day. Now, there is one concern that we had. So there's limited use products, like, you get a couple uses, whatever it is. Your back bending over to put a ball down and the tee is limited use. Okay.
And around the 8th or 9th hole, he wasted 2 of those bendovers to move his tee. And I figured for sure he breaks down now.
And Tony said to you, in fairness, you might want to save those. You don't get those back. Now, I then said, for a price, I'm happy to do it. For a couple points, we're losing. I'm happy to put the ball in, but you didn't take me up on it.
I should have just to give up a couple points just to watch you bend down and put the tee down. That would have been worth it. But I didn't want to embarrass you. It's your home course,
Well, I do have to give a shout out. Your pooch, your new swing, it's good. You hit the ball further than I thought you'd hit it.
Honestly,
didn't I? I said that on the show. I said
honestly, I swear to you, I did not hit the ball good yesterday. I hit the ball great my last time out, not yesterday.
No. I know you could hit the ball better, but the results when you did hit it, I got to say, for somebody, golf is, I thought golf was a sport you need to actually turn. For somebody who just gets their arms on a half swing, you hit the ball and actually straight down the middle, good distance.
And then he's got touch and feel. His short game was on. He doesn't touch, I flubbed one, then I put it on the green. I put
you guys. I mean, watching the 3 of you guys, your short games, it's painful.
What's wrong with my short game? I putted well.
Yeah, you putted well. You're a good putter. But watching Tony and Steve and then your wedge game. I mean, my God, I watched 3 of you. I'm like, oh my God.
Yeah, but now that I've taken the Tom Sosnoff approach of going to an 8-iron, I'm going to be unstoppable. Unstoppable.
Well, I couldn't watch it anymore. I had
the range.
I had to say something.
You got to get the range. Just hit that a few times. Just understand the distance on the 8-iron. Maybe go to a 9-iron if I'm a little closer. Can't imagine I'm gonna do that with 7-iron.
Nicky just wrote into me. He goes, the 9-iron bump and run. I'll give that to Tom. He does do that. I'm telling you. He does that. Now, he used to be able to do other things like, I'm going to draw this around and, and pull this that way. I mean, he was...
No, I don't have that game.
What was your handicap back in the day? 5, 6?
Yeah.
What would you say you are now? 15?
No, wait a minute. Now here's the real question. When people say, I'm a whatever handicap, if you want to know if it's a real handicap, you say, well, you play the money for that. And they'll go, oh, no, I don't gamble. Then you know that they're not or whatever they say there.
Yeah.
Now, when you say to Tom, were you a 5-6? And then you say, would you play for money for that? You go, oh, yeah. Well, as much as you want. Because he was really probably a 1-2.
It's true.
But I would play.
Okay. In fairness, you did say 20, 30 years ago, our little scotch game, which was $40, would have been at least a few hundred. So you were disappointed.
Well, I mean, you become a very...
Yeah, people are writing in, short game needs soft hands. And if anybody has soft hands,
my hands are never...
You haven't done a freaking day's worth of work in your entire life, 100%. 100%. And you've...
And if I had to carry Tony yesterday,
I would... over there for crying out loud.
If I had to carry him all day yesterday either, I wouldn't have pressed any of those bets either.
Yeah, woof.
Yeah, it's woof.
But I was surprised.
I've played on a true course.
I was surprised
one time this year, yesterday. So.
I was surprised that you didn't ask for a little help, a couple strokes here or there, because I would have.
You know what? I played you like a man. I took it like a man. I tried to be a role model for you, Sosnoff. You don't always have to win. You know what? You can outperform to win. And I played the way I should have played. Actually, I think I played a little bit better than I should have played. And I lost
My
because
mistake.
you played better, and that's the way it should be.
I mean, my mistake
I don't need
out of the
advantage to
gate
play you.
was saying that we're even.
That's right.
But
right.
what are you gonna do? I made a mistake. I lived with it.
That's right. That's right.
Right?
I just
and
wish-
I had fun riding with Tony. We
Gracefully, I
had
might
nice
add.
music. Wait a minute. I do have to say this.
Steve
Greatest
hit the
line
ball
of the
good.
day.
You got to give Steve credit. Steve played well.
No, he didn't.
On the 18th hole.
Yeah, on the 18th hole, he stuck it. No,
Stuck
he
it.
missed. I mean, his wedges were beyond horrible.
No,
But
he did
hit-
not
He didn't
play,
hit the ball
for
well
him. He did not play good yesterday. He played way
No,
better.
he did not.
He played way better the last time he played.
He had a great shot in 16, the par 3.
Yeah, I know, but
Great
he
shot.
didn't play good for
But
him.
that was-
He's a better player.
No, he did not. But the line of the day. Now, some people, purists, probably won't appreciate me saying this, but I have a speaker in my bag. Pull it out. We play music while we're playing. It's nice to have music.
Yeah, can you
Right?
bring some good music next time?
Right.
No, that music
First-
was like I don't even know what you were playing.
You're gonna love this. First hole, I've got my music on. Now, Beth, you will appreciate this because it's my Peloton download. So every time you like a song, if you're on
Yeah,
Peloton,
it
you
felt
just-
like
okay.
we were like in a jazzercise class. Like, I'm like,
okay,
where
how
do you
about
get this
You're not
music?
you're not getting out of this one. Okay, so the first hole, my music's on, and he's like, "Who is that? What are you listening to?"
No,
I
what are
said,
you listening
"That would
to?"
be the-" He said, "What are you listening to?" I said, "That would be the Beatles."
So good.
Yeah, but he had
Even the
like
caddy-
this tape.
even
like
the caddy laughed at that.
It was like
First of
almost
all,
like
it's
a
not a tape,
disco tape
it's a
from the '90s. I'm like, what is this?
Tony, did you like my music?
I liked your music. It was at times it got a little eclectic, and I said that to you. I go, wow.
You did.
Yeah, I mean, you had a great rendition of some old classics, and then you had some like Taylor
At one
Swift
point-
or
So
something like that. I mean,
Yeah,
it was
at one
a little,
point, I
got a
thought-
little. Got a little took me
No,
off my
no.
game for a hole or two, but
No,
that was all right. That was all right.
No Swifties. Go ahead, what?
It was a little elevator-ish for me. Like it was like a little AM
How
radio.
about this? How about this? Next time we play,
Yeah.
We'll go to
I'll let you
your
pick the music.
playlist that you have in
I'll
your
let-
Spotify. He doesn't have one.
I don't mind.
I'll let you.
I don't
I will
mind
let you
music.
pick the music.
I don't mind music. I can handle noise. I don't care about noise. Doesn't bother me.
That is true.
Yeah,
Although
I don't
will
mind.
say, now
when
that
people-
the round's over, I will say, you might be one of the slowest golfers I've ever seen.
Me?
Yes. You are so slow. It's unbelievable. Tommy said, she's like, look, you should go out with Brad and Tom sometime. Brad's the fastest golfer I've ever seen. He seriously gets out of the car, drops the ball, and just hits it. Doesn't make a difference. He just whacks the ball. You're really slow. You analyze your tee shots. I'm going, oh my God, he's taking forever again. So if this is, I apologize if this is how I used to be. So if
Oh
you had
my
to suffer
God.
through that, I apologize.
I don't analyze
bad.
any. How do you say I analyze it? At that, the guy didn't have any He didn't know the yardage.
He knew
Our
the yardage
guy?
perfectly.
Our guy
Every single
yesterday?
time.
He was
He
great.
knew the yardage perfect with
John.
John?
He didn't have.
Great.
He didn't have a yardage thing with him.
But he knew the
A
yardage.
yardage thing with him?
It's called a distance, a gun. But anyway, so he'd say it's 173. I'd look 173.
Yeah,
every time. Perfect.
multiple
He knew
times.
exact-
121.
every time.
It was 121.
Yeah.
Maybe he was just trying to help us a little bit. Really wasn't trying to help you. You ever think about
Something's a
that?
little
Maybe you
off.
should treat him a little nicer. Don't be so condescending. Don't talk to him like you talk to me.
Nice guy. Just couldn't read a green.
Wow.
John, if you're watching up, if
Wow.
you're watching
How
up, I'll go.
ungrateful can one man be? Oof.
Distances were.
Right.
Man.
I was a professional caddy. Okay, I know how this works.
Yeah, by the way, I wanted to ask, I wasn't going to get into it, but now you talk about being a professional caddy. Was the 8-iron or the 9-iron run up, was that a Rocco trick? Has to be. Had to be. Rocco definitely taught you that one.
No, this is.
Oh, no, that's golf 101. Go ahead, say it.
It's golf 101. I mean, back in the day, my chipping was. It's all from chipping into buckets.
Oh my
Back in the
God.
day, I could chip in any bucket.
Wow.
Used to play catch with just chipping. You know, like one guy chips, one guy catches, throw it back, boom, boom.
Yeah, like I said, you got 40 years of experience over me. Yes, I got it. I got it.
You guys, Calls me slow. Nobody's ever said I was a slow golfer ever.
No, you were no.
You don't move.
You don't realize. No, you don't move.
Right.
It takes a little while. Get
You don't
up
realize
there.
it because
gotta
you were
get
with
the tee in.
Steve. That's why you didn't
Yeah,
realize.
and you got to get like it takes you about 20, 30 seconds just to bend over to get the tee in the ground, make sure that's right. God forbid you have to move it like you're not standing correctly. That's another 20, 30 seconds.
Right.
Then you got the waggle. I don't know where the waggle came from, but you got the little waggle thing now, which Tony did say. I knew that wasn't going to be a good shot because you got the hitch in the waggle one time.
Mm-hmm.
Hey,
How come there's no documentation?
You know what?
You know what?
I'm Italian, but we don't cameras and stuff like that. We don't take kindly to that kind of crap. If you know what I mean. Deny the pictures.
evidence.
Let's not have any pictures.
Yeah, you don't want evidence.
Yeah.
Next time.
Next
I'll
time.
get some pictures.
Next time.
Although, I need one more call, then we're going to move on. He claims that he didn't just buy these, but Tom has a new pair of Crocs, the ugliest color I've ever seen. So
they are baby poop brown. I mean, they are horrible.
Ew.
Horrible. So I asked, I said, when did you get the new Crocs? These have to, like, were they on sale? Were they giving these away? He's like, no, these aren't new. I've had them for a while. No, wait, they were brand new. There wasn't a mark on them.
Are they furry?
I haven't.
Are they furry?
No.
No, furry would be good for you.
Those Crocs are like 10 years old.
I would pony up for a new color and just give those away to somebody. Just leave them out on the street
100%.
somewhere. I don't even think anybody would take them out. And you might want to look. There's a new one. I got to give Pete Clean, the credit for this one. But Canes, K-A-N-E, they're great. You'll never go back to Crocs.
I think it was obnoxious that he didn't have them in sport mode. Like he was like playing, but he wasn't playing in sport mode. Like we weren't good enough or needed sport mode. I thought that was a little obnoxious.
You guys, I could have played bare feet.
Uh-huh.
Because
I thought that was obnoxious.
he doesn't twist anymore. You don't need sport
he
mode.
doesn't twist.
You don't move. He doesn't twist. It's just all
Last
arms.
time he twisted was on was a foliage weekend. He hurt himself. Came back. He was hurt.
I have a torn rotator cuff, and I still play. With you guys.
From
That's your bicep, allegedly.
Whatever.
What it's supposed to be. Rotator cuff. From putting, he never told you the story he was trying to tell you. You know how he hurt his arm, don't you? Trying to get out of the garage, trying to use his card.
He did say that. Oh, he said a garage thing. Oh, that's what it was?
Yes. Trying to wave his garage card like you just don't care.
Yeah, be careful.
So he can get out.
Yeah,
Wait a minute. I thought you got the.
Yeah.
I thought you have the barless card now where you just do this. You don't have to lean out. That's dangerous for you, leaning out the window.
It only works in one of my cars. The Tesla, the waves from the Tesla.
There's a force field in the Tesla?
Yeah, it doesn't work.
Sold.
It works in my other car. It's unbelievable. It's the craziest thing ever.
Sold.
Did you tell Scott about the peppers?
He wouldn't understand. He doesn't eat that kind of food. He's
Where did you go to dinner, Scott? I forgot to ask you, and I was sad that I didn't.
This six and I had a lovely dinner. Thank you. We were home.
Oh, very nice.
Yeah, thank you. Yeah, thank
what was she wearing?
The boy, what?
My man.
It's
my
easy.
man. Happy New Year! Happy New Year!
He's got a leg cramp.
Got a leg cramp. He got a leg cramp.
No, Scott. Scott does not understand grilled peppers. It's out of his. He's not
I made beautiful I sauteed peppers and onions, put it on a piece of grilled chicken the other night. It was unbelievable. So what do I not understand?
I can't even tell you. They do something.
I love when people say they can't say anything because that means you don't understand what you're trying to explain.
No, I
if
do
you
actually.
Understood it, you could explain it. What part
Tony
of
and I
peppers-
actually talked about this last night, and we can't figure out how they do it.
I don't know
how they do what?
How they saute peppers at this place.
All right, I got to go with you. I got at EJ's.
Yeah.
Yeah, it's got to be the oil they use because their dressing is amazing too.
There's some kind of oil they use. We can't figure it out, and how they get
Oh
the
my
peppers.
God, you guys are having a love letter to EJ's. This is beautiful.
It's been
Well,
all
I
morning.
asked the
all
waiter.
morning.
We had the best waiter, and I asked him, and he was spot on with everything. He goes, "I've tried it home myself a million times. It's got to be the oil." He doesn't know.
BS. He doesn't know.
Oh my God.
No,
It's how they keep you coming. It's how they keep you coming back.
I mean, I really don't think he knows.
Not get the sausage, but we got.
Wait, chicken a la Joe is with sausage or without?
You order it with. And
So what
then
happened
it's
to you?
unbelievable.
In honor of Rosh Hashanah, no sausage?
Yeah, that's correct. We went with.
I had pork chops instead.
Lamb chops and pork chops he had instead, and clams.
See, good juice. I like it. You didn't have one. Everything was tray.
There were a lot of good Jews there last night. The whole place was good Jews.
I like that. All right, should we get to some business?
Sure.
All right, ready for this?
I'm ready.
Top 15 syllables going through the system first 40 minutes of the day. No broad-based indices or futures. Tom, for you, number 15, EVGO at a 20. For everybody else, NVIDIA at a 33, Tesla at an 87, AMD at a 68, PLTR at a 22, USO at a 105, Amazon at a 62, Meta at a 57, SMCI at a 43, BABA at an 86, Microsoft at a 57, Apple at a 49, MU at a 40, CELH at a 52, GLD at a 69, and number 15 for Tom, EVGO at a 20. Rounding out the next 10, KWEB at a 98, Intel at a 103, FXI at a 97, TQQQ at a 45, MSTR at a 44, Coin at a 47, TSM at a 62, and SOXL at a 50, and PDD at a 61.
Sounds enough. What say you?
I'm not happy today because this volatility expansion is hurting.
It is up by 82 cents, trading 20.89.
I know.
The 4% move in vol.
It's hurting my P&L.
All about you.
It is all about him, isn't it, Scott? Yes, it is. Hey, even my son wrote in and said at least when he had the respect, you played with one croc in sport mode, one croc not in sport mode. At least with him, you had the respect to do that. Like, it's going to be a little bit of a challenge.
Well, he can hit the ball further.
He hit his ball further?
Yeah.
At these young kids.
You don't know where it's going, but he hits it far.
He doesn't know where it's going.
But he swings hard.
Always got to be a zinger in there, right?
No, he swings hard.
Oh.
Him and Mike both swing hard. Really hard.
Mike's a big guy. I mean,
yeah, but he swing. It's like you could be a
really
big
hard.
guy and not swing that hard. You know, you could be like Ernie Els. Ernie Els is a big guy. He doesn't swing very hard. But
no, he's smooth.
I don't know how many people know Ernie Els is watching us right now.
Oof.
Sure.
Oof.
Sure.
Mikey and Nikki, they both swing hard.
They like, press the ladies. You know how it goes.
No ladies.
No, I'm sorry, you don't know. Never mind. You would have no idea.
Oh yeah, you're gonna impress a lot of ladies with your golf swing.
Never mind.
They're gonna be running out of the stands after you.
I need Tony.
Wow, look at that guy's golf swing.
Oh,
yeah.
Steve just glared into the screen here. Nice.
That's bad if Steve's walking over.
All right, my friend.
Hey, my pleasure. But you have a good lunch today.
Oh, we got the best. Yeah.
Do you like it better than Dave's?
Fly to Coop. Give him a shout out.
Do you like it? You like it better than Dave's? You like it better than Dave's? They're different.
They're very
Fly to Coop is going to do a
fry, not fly. Fry.
Fly to Coop is going to do a collab.
Fry.
Yeah, fry, whatever. Going to do a collab.
He can hear you.
Going to do a collab.
The birds after they fly. Although I don't think chickens fly. So, yeah. Anyway, go
With
ahead.
Jimmy Bread, they're going to do a collab one day, and then he'll have the perfect sandwich.
How's the Jimmy Bread? How's that big loaf working out? I haven't seen it.
Ooh.
Beautiful.
I'll take a picture of the challah bread.
Beautiful.
We got the challah bread.
It's
challah. See, now challah bread, challah. So what we could do with that, I would take some leftover because stale
Now you
challah
wouldn't.
bread
Tom
makes
touched it.
great
French toast.
It makes great French toast.
Tom touched
the
it.
Best.
The key
It's
to
the
that
best.
is
You
you got to
gotta
cut
get
it. You got to
stale.
cut it in triangles.
Oh, like you know.
Jewish? Is that wait? Is that a Jewish
I do
thing?
know.
Like
You gotta cut it.
Hamantashen?
Yeah, you got to cut the challah bread in triangles, because this way,
Why?
when so it's a lot softer in the middle. If you just cut it in slices, the slices get too thick. You cut it in triangles. Trust me.
What do you mean triangles?
Triangles. You cut them in big triangles, like 2-inch triangles. Like
You hacked the loaf up?
Yes, exactly.
You're hacking the loaf up.
You're hacking the loaf up. What's wrong with you? Yes, in triangles. I'm telling you. It's the way we used to do it. The Floridian Diner was our best seller.
Hollow French
Floridian
toast cut in
Diner?
triangles.
Yes, in triangles.
Don't say we.
try.
We said it for Floridian Diner. You were a busboy. Okay. For 2 weeks.
Well, right. Then the guy beat me up, and then it wasn't the diner anymore.
You were a 2-week busboy. Okay. We used to make this.
That is true. That is true.
Hey, kid, clean up the water.
Ice cream.
Oh,
Look
that's
at the
bad.
ice cream. Yeah.
Where exactly was the Floridian
Flatbush
Diner in
Avenue and
Brooklyn?
Avenue UT.
Is it still there?
I don't know. Could be. I believe so. Probably. I could look.
Huh?
Yeah.
All right.
Yeah.
Maybe we'll make a pilgrimage next time we're in New York.
Yeah.
So-
It'd be nice. Yeah.
We'll do like the Peterman tour, but we'll do like the Tony Batista tour.
Yep. Floridian Diner still there. Flatbush Avenue. Yep. 2300.
Go to the menu, see if they still have the hollow French toast.
Go get the
In
hollow French
triangles.
toast. You'll like it.
Oh, go check the menu.
You want me to check the menu too?
But how do you cook it if it's a triangle so that like one side doesn't get overdone and the other side's
deep
raw?
fry it.
Oh, I don't like deep fried French toast.
They deep
Yeah,
fry it.
no, you
They
didn't
deep
see. You
fry
didn't
it.
give that detail.
I don't like deep fried French toast.
Me either. Not good for you.
Okay, well then you saved me. I don't have to look it up. Very good then.
I
Thank
want to
you
know
very
what it costs today.
What's that?
I want to know what it costs at the Floridian Diner. Deep fried French toast.
Calorie menu.
$15.95.
Menu, smoothies, beverages.
$11.95. My call.
No,
Yeah,
prices.
they still
prices
they
gone
got
up.
Italian cuisine because of that day, that fateful day. They still got the Greek stuff. Let's see. Let's
Going $11.95.
I'm $15.95 bid.
California omelets $15.95.
See? There we go.
Pancakes. Here we go. Waffles, French toast, jumbo wedges of home style challah.
I'm sticking with my $11.95.
Dipped in a rich egg batter. $10.95.
deep
So
fried.
I don't know if you're too good.
Oof.
$10.95. I said $11.95.
Good.
Up
I
by
want
$1.
to prove just because you think I lie all the time. You think I lie? It's right there. Jumbo wedges of home style challah.
What do you get? A cosmopolitan with your challah?
Hey, they got to mark it up somewhere. They mark it up on the liquor. See, I told
we
you,
go.
giant wedges. I told you, I didn't lie.
Market maker.
Market maker. I can't stand him sometimes. I really can't. I can't.
Scott's not a man of the people. He doesn't know what prices are. He
That's
doesn't,
right. I'm with you, Scott. I don't know either.
Thank you. Appreciate that.
Yeah.
Go enjoy your lunch. Goodbye.
Thank you. We're going to take a quick 90-second break and come back. Even the S&P's down 12, surprisingly only 12, but they've been fluctuating around with volatility up 78 cents. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny. Peace.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Don't die like squirrel.
Hi, my name is Liz Deerking. The beautiful brunette next to me is. What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny, that beautiful blonde in red, gearing up for her camping trip is Liz. Are you ready?
We will not be outside at all. It's an indoor experience.
Well, we'll show everybody. We can show everyone. You know, I'm gonna go to Twitter here, and we can show everybody what it looks like, where you're going.
Indoor. There is nothing outside about this. We're all wearing matching pajamas. It's going to be a little fun. We're going on a Thursday night because everybody's got to be home for football the next day. Yeah, it's going to be fun. I'm excited.
And it's all the football moms. Is that correct?
All the football moms. I'm like their mascot. JD played football freshman year, and for some odd reason, I'm still invited to all the parties. But so it's got 12 tents in there, and each tent has like twin beds. Some have 3 twin beds. Some have like 2, and I think there's only 2 of them that have like a queen size bed. So it's meant for girls' trips.
I love that you say for some odd reason you're still invited. For those of you who've ever been out with Liz, she's the life of the party. So for some odd reason, they invited you.
I'm still their mascot, and I appreciate that, so it's going to be fun. But yeah, so it's
Tell me what's in your trunk. Tell me how many cases of Prosecco are in your trunk?
I only have, it's for one night, Jenny. One night only. So I do have 1 full case. That is correct. Yes, I do have 1 full case. Jenny had a great idea to bring gifts for the girls where you label them, but nonetheless. So this is what I'm doing tomorrow. Jenny's going to have Anton on. You guys have a big jobs report. So you got 2 shoes to fill. Yeah,
big day with Anton. Speaking of Anton, I did the on the open and the SPX Iron Condor this morning on the heels of the study we looked at yesterday.
Awesome. How's it working?
Okay, so let me go to the platform, and I'm curious. I want to see. I kind of made it more baby and took less risk because I didn't want to lose too much.
Okay. Where did the VIX close yesterday?
So yesterday the close was 14.29.
But I mean, you can see just from that bar, because if it's between 10 and 15. So, I mean, It's always been kind of within there recently.
Right. So, So 14, what did I say it was? Close was 14. Man, yes, yesterday the 3rd, or is today the 3rd? No, yesterday.
The 3rd. Today's the 3rd.
Oh, yes.
Yesterday's the 2nd.
1429. So towards the top of that range. So this morning on the open, I thought if I want to risk less, I need to make it the tighter one, $10 up, $10 down. So I did $10 up, $10 down. I'm going to go to prices now just to see, I want to see what it's trading for now. So if we're trading 85 and I go 75, 75, so 85, 75, 95. And to risk less, I made it only $15 wide instead of $20 wide.
Oh, look at you making it your own trade, Jenny Andrews. Good job.
Well, I didn't want to risk too much. Okay, it's almost the same. I sold on the open this morning. It was $9.30. It was $9.30 on the open. $10 down, $10 up, $15 wide, and I didn't mind it because I was only risking about $5 or $600. So
where did SPX open? I just want to see where it opened. Hold on.
It was down 15. I'm already out of it.
Oh, okay, good.
So because then I put in an order to just take I only took like $90. I didn't even take $100 because I thought that if I am making this tighter and only risking 600, I can't wait for 20%. I can't wait for 25%. So I felt like 10% was all I could hope for. And
yeah.
And so I just put in an order and it filled maybe an hour later. Like if at 9:30.
I do think when you do them in the morning, and this is just opinion, when you do them in the morning, it's going to be different than when you're looking for just that pop, because you do need some time to come out.
No, but it's trading, like the same trade is trading for the same price now. I think what happened between 8:30 and now is that vol actually went up.
Well, it's different. It's a different strikes right now, because if we were only down, now we're down what, 16, 15? Oh, I guess right where it was. But so these strikes would be different.
Oh, well, I didn't put in my strikes. I did exactly what I did this morning, like $10 down, $10 up, $15 wide, sold it for $9.30. You would think at 10 o'clock, so an hour and a half later, you would think the same setup would be less. Typically it would if time's just passing, but vol has actually ticked up because the market was kind of all over the place. It was down 15, then it was up, then it was down, now it's down, then it was down 20. I do think like vol's ticking up, which is why it's about the same price it was at 8:30. Well, and again, it's not the same exact trade at the same strikes, but the same setup.
Yeah, the same setup. And vol is ticking up. I think it was pushing the elusive 20 level, wasn't it, in VIX? Take a look at it.
Let's see. So yeah, we're up $1.33.
Yeah, we're about 20. That's just some weird level. Like once it goes over 20, it's when people kind of assume that fear is kind of here to stay. Maybe I have no idea.
Yeah, and okay. Speaking of VIX, yesterday we never really looked at it. One of the most actively traded options was it November? Was it the November 18 put? No, October.
Yeah. No, it was November. It was pretty far.
No, because it wasn't that. The November put was too expensive.
Okay, so maybe it was October.
I think it was the October 18 put, which was one of the most actively traded options yesterday.
So I actually went today to that same thing, the SIBO most active, and both the calls and the puts are VIX.
Really?
Are most active right now. Yes, listen to this one, Jenny. December 18th, that strike, December 18th, 2024, the 17 strike, 50,000 puts have traded.
Of the 17 puts in December.
Yeah, well, listen to this. The October 16, so that's the 16th, which is regular expiration. The 27, 29 calls, which clearly is probably a spread. 175,000 and 165,000.
27, 29.
The 27, 29 and the October 16 put. Those are the calls.
Oh, well, what? So you said the puts?
No. Those are the calls I said.
Yeah, that's what I was looking at. The call.
No, but when I'm looking at that, I can't look at you, so I don't know what you're doing.
Oh. Yeah, that's what I had. I pulled up a spread, the 27-29 call spread. I'm assuming it was a spread.
Yeah, 165,000 contracts traded.
If you had to do this 27-29 call spread, would you buy it or sell it?
It's in October. How many days are left? 12?
Yes.
Honestly, I'd sell it, but
That's what I mean.
but it's 13 cents. Honest, Jenny, buy one. Put it in. I want to keep an eye on it. Can we?
But you said you'd sell it. I said I'd sell it. We both
but
said
I'm not
we'd
gonna
sell
risk.
it.
I'm not gonna risk that much. Let's risk 11 cents. Buy one of those bad boys. Let's keep an eye on this. Most active. Do it. Do it. Do it.
Can we sell it instead of buy it?
No, for 13 cents. No.
Hey, it's $13. You know what that's going to cover? The commissions on a few trades. I don't know.
All I'm saying is I'm willing to risk $12. I'm not willing to risk 188.
Okay, Mom. I'll buy it.
And you're only following me because I wanted to close. I told you I wasn't going to tease you, but I wanted to close the M2K MES yesterday, but we didn't. Oh, wait.
I wish I would have recorded myself. I wish I would have recorded myself after yesterday's show. I said, go ahead and close it, Liz. Go ahead and close it. And you're like, no. And I said, close it. Go ahead.
No, you say it off air. It's got to be said on air.
So I will say,
on air, it doesn't count.
So our M2K MES, one's down 243, one's up 100. Net, it's down 140. Mine's $250 worse than ours is because when we put this on, I said, well, I'm down like $250, so you can get in now. Yeah. Let's look at it. Let's look at. I like to look at the chart and see if I have any hope. Sometimes looking at the pairs chart gives me a little hope. MES.
Crazy.
M2K, MES.
That's the way we have it in. That's not the closing order. It doesn't look that crazy.
So we need it to move this way, and it's going this way. How much pain will we feel if it gets right back down here? Oof.
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 Oof. Oof.
And it does carry a little short delta. So why is the Russell taking such a hit? Who can tell me on Twitter? Like, why is the Russell taking the bigger hit lately?
Hold on, I just want to see something. I'm going to go into our account. It carries very slightly short delta. So if you go, do you have the delta centers or is it just my platform? It's long 45, short 51. So it's going to give us 6 short deltas.
Yeah. Yeah, just a little bit. But, so I don't know. I don't know what to say about it. What we need are the spoos to get whacked. They've been keeping it the same pace, like Russell down 22, spoos down 22. Usually you would see more movement from the spoos than the Russell.
Well, in down moves, everything becomes correlated. I'm not saying this is a major down move by any stretch.
No, but what I'm saying is like the Russell's 2,000. It's percentage wise. The Russell's been going down at a bigger percent. We got Russell down almost 1% and spoos down 0.3%, a third of a percent. So, did you lose me?
No, hold on. I'm just zooming in so I can see better. There we go. Got you zoomed in.
Oh, I was just showing you percentage. Spoos down a third of a percent. Russell down 1%.
Yeah, those still aren't that crazy. It's not like it's that big of a veer away. 150 bucks is not crazy.
No, but so we're still in it. We still have it. We said if we need buying power back, that's the first thing we'll close.
Yeah, I mean we have enough buying power. There's really not that much to manage today. Kind of taking this. PLTR was up. That was the one thing that kind of I looked at. Now it's up 90. It was up $1.50 earlier. Not our position. The stock was up $1.50, so I noticed that. But that's the only thing we put in 3 days ago. But
we usually, when I have a diagonal, I as long as that column short is still out of the money and there's still value, I keep it on until it would at least be through that.
Yeah, I kind of agree. There's no adjusting this, but it was up quite a bit earlier. Here's my question: is PLTR a position that we want to maintain, or do you want to take our 20% in 3 days?
Well, you look at this, and I'm tempted to take the $40.
Yeah, well, that's what I'm saying. And then you can get it back on it. You could get back in on a pullback. They're low. This is a low debit trade, but it's from percentage wise, it's 20% in 3 days. That's not bad.
No, it's not bad. Okay, I put that order in. That's working. I did hear that the Chinese stocks were taking a little bit of a hit today. A little bit.
They pulled back slightly.
So we did not get back into Pinduoduo. We're out of that. I wanted to see. I'm waiting for a pullback in Pinduoduo to get back in, and I need more than $1.80.
Okay.
Okay, what?
Yeah, I get it. No, yeah, you do. I know we need more than $1.80.
Well, I'm trying to get back in, but I want more than $1.80 of a pullback to get back in. How about $18? Come on, $18.
I'm happy with 10. I'm happy with 10.
Yeah. All right. $10 and then back into PDD.
I'm happy with 10. Oh, Jenny, it is 10:14. You know what that means?
Trade of the day. The 10:15 trade of the day.
Jenny, paint the bottom. We're going to see if we're going to put it on today.
All right, yeah, I'll look at it. It's this came from this is from a study saying that oftentimes the bottom is hit at 10:15, where SPOOs are down 17.50. What we could do would be buy a call spread. What do you think?
No, you and I, kind of very much like your Iron Condor, our bar for these 0 DTE trades is so low that if you would get this for 280, we're out at 330. I want $50.
It's already getting away from me. How much do we want to pay for this? 285?
Yeah, sure. I mean, 280, 285, 290, that's all the same price to me. And then make sure you just get a real quick GTC in there. What'd you pay?
So I paid 280, I believe. Let me check my fill price. 285. So I'm going to put in an order to sell it for close position 15.35. So if I sell it for 335, that's $50.
Yeah, perfect.
$50, 335. And it will tell me here. It should tell me. Oh, you know what? I'm so used to trading on my phone. It'll say your profit if you close it at that price is $50.
Oh, really?
Yeah, I do like that feature. I think that gives you a little more information when you're pushing something through on your phone, just so you can make sure you're doing it right. Because
it's true. I believe that.
I know. Because this morning when I sold my Iron Condor and SPX on the open, I was actually sitting in the hot tub.
Good job.
And I did it. Sold it from the hot tub. Then put in the order to buy it back from my phone. All from my phone. I thought you'd be impressed with that.
I am impressed with that. Your phone navigation skills are gold star, Jenny. I'm sure it's gold star. Mine are subpar. I'm bringing my computer with me glamping.
I'm sure all the moms will all. I hope you have fun with the moms and don't just trade all afternoon.
No, I'm going to trade pretty quickly, but I will be looking at the markets, and I'm going to be in the car for an hour and a half. So whoever's driving me, because I'm blind as a bat, is going to be trading with me.
Well, you'll have a good time. Okay, so that's in. The order is in to close that. We'll see. We will see what happens. It's only down 15 now. And that's not one of those that decays. It's not going to decay.
No, this is what Frank the Great, who is the man on our YouTube chat, this is his, you buy wrapped around the at the monies, and if it doesn't move, you don't lose.
You don't lose. And what did he call it?
I can't remember. Frank, you have to tell us 10 times before it. But Frank, what is the name of the trade where you're wrapped around the at the money debit spread? He's going to let us know. I know he will.
Okay, so I'm back into Twitter. Just want to let people know we are taking live tweets. We'll take a look at more futures because today's Thursday, and we do look at futures more on Thursday. Anything else you want to add, Liz?
No, I just wanted to see, because if you refresh, you can go top down. We've got Mikey and MKSA that are asking questions.
Okay. Oh, look, Mikey did. What did Mikey do? Happy Retro Thursday, ladies. Jumped the gun a little, but I am in with you on the Liz and Jenny show me the money long call spread. 5,700, 5,705. And what was ours? 56.90, 56.95. Hey, Mikey, there's time.
Time is on your side.
Mm-hmm. Yeah.
I like it.
And I kind of like you only paid $2 for it. I know it's probably a little bit out of the money, but risking a little less.
I think he did it a little bit before us too.
But we know if you're paying 205, you're putting it like just out of the money instead of just wrapped around.
Yeah.
But then you're risking less. If the market tanks, you've got less at risk. If the market tanks, Mikey's only out 205 and we're out 285.
That is true. That's true.
Yeah.
Okay, so let's go to MTSA. No, go above the glamping. There's another question. Above the glamping, MTSA. What's your profit target on the Baba Iron Fly from yesterday? So let's jump in there. We did a Baba, I think it was a reverse big lizard. Yeah.
Reverse big lizard. So reverse big lizards, honestly, 10 to 20%. So if we collected 612, when you're starting with the straddle, okay, here there are a couple. This is a little bit different because if we were only collecting $5 and we had a $5 spread, it would be 10%. But because we collected 612 and we have a $5 spread, I think our profit target could be that overage, that $112 overage.
So that's still only 25% if you're collecting.
Right.
I mean,
yeah.
So yeah, let's put a GTC in for that. So
yeah,
that's
put a GTC for 100 or 20%, right?
Yeah, for sure. So that's all we're looking for when you're selling. And I know this goes in as an iron fly. I get that, but this is technically a big lizard. Oh, Frank Walsh, Frank the Great coming in. It's called an in and out vertical.
Oh,
oh my God. All right, so Jenny, have you ever seen, and I don't know what movie this is from, but have you ever seen Chris Rock? Not Chris Rock. Who's the little, it's The Rock. And the little comedian where he's like, are you in? Are you out? Have you ever seen this clip? I got to post this. That's why I love it. Frank, I'm posting this clip, the are you in or out with The Rock?
With the in and out, with the in and out trade.
Yeah, with the in and out vertical.
Okay, so Baba, I put in a GTC for that. Let's take a look at some futures. Let's take a look. Okay, we don't have to worry about M2K MES. Our CL, we have a Jade Lizard in MCL. And look at the move MCL has had. You would think our Jade Lizard would be more profitable. We're short.
I think the vol has gone through the roof in this.
Yes. 114 rank.
Yeah. So that's what's happening. And you might have some wide markets in there too, because we should be winning on that put and we're not.
With the move it's had, we should be.
Yeah. So this volatility is fighting us. You've got 114 rank in MCL. That's pretty crazy.
Mm-hmm. Okay. And ZW, that is a newer trade. We took off our October wheat trade, put on a new iron condor in November. I don't know if you heard them talking this morning about when they were talking about gold and bonds and euro and just like what has most correlation or which products have, more products correlated to it. Were you listening this morning?
No, just give me the answer.
I believe the answer was literally like gold and the euro or something like that.
Are the most
something crazy? Not to each other, but have the most products correlated to it. So yes, like Tony and Tom both guessed SPY, but the answer wasn't SPY. I'm pretty sure the answer was I think it was like the euro and gold, honestly.
Wow.
I could be wrong. It could have been bonds and the euro, but I think it was.
That's like a little outside.
It could have been.
It might have been a giraffe. It might have been gold. It could have been a giraffe, but I think it was an elephant. But it could have been an ape.
But it wasn't the SPY.
That's funny. It's funny. Oh my God.
Anyway, let's take a look at what gold is doing.
Gold.
I heard Tim Knight yesterday bullish on silver.
Ooh.
Oh, SPY's only down 11. Why aren't we filled yet? Come on.
Well, where are we?
How low were we when we put it on? I think we were down 16, and we said we need an 8-point move to get out of it.
Well, can we look at that? Can we see where it's trading?
Sure.
And then we'll go back to gold. If you could just go to the SPX, you can see where it's trading because you have a GTC in for it.
Here. Oh, okay. I have a GTC to close it at 335 and it was just trading 315. Come on, big money. Big money, no whammies. We need a couple more points.
That's all you need is a couple more. That's all you need is a little bit of a move. If your bar is set so low for your profit target, all you need is a little bit of a move and you can get out. So
I need like one of those confetti, those, they sell them around 4th of July. It's like you pull the string and the confetti shoots out.
Wait, we're filled in VIX.
Oh, I thought that was our SPX trade.
I thought it was too, but look, it's trading right there. It was trading 335 for a second.
I know. So mine, when it was trading at this morning, my Iron Condor, when it was trading at my price, I watched it so many times hit my price, hit my price, hit my price, and it took a good couple minutes to fill.
What are we out of?
What was that?
What was that?
I
PLTR.
don't know.
It was PLTR.
Okay. So
Yeah,
this hasn't hit yet.
it does take a bit. I think it does need to sit there or maybe go through that price a little bit before you get filled. I will give you that, Jenny. That's a good observation.
So then the question becomes, at what point do you say, oh, I'm just going to take $40 instead of 50? Like, I think I did that this morning. If 10% was 90, I dropped mine down and took 80.
Yeah. No, there's nothing wrong with that either.
You know,
I'm good if you want to get out. Hey.
Let's see. What are we up? $25, $30.
Well, you can look down and you can see where it's trading. So we have it in for 335. It's trading 320. If you want to just take it, cancel replacement, you can.
We'll hope for the best. We'll leave it for a couple minutes. And then we'll root for Mikey. Then we're rooting for Mikey too, because he needs a little more movement, because his is just like a couple strikes up.
Yeah, he needs a little bit of a boost. A wee bit of a boost. Okay, if you want to pop back into Twitter too, Jenny, we do have. Oh, I'm sorry. You want to finish your gold thing? Go to gold.
Oh, I heard Tim Knight bullish on silver yesterday. I wanted to look at GC after the boys' discussion this morning. Nothing too crazy going on this week in gold. It's just kind of been hanging around this area.
Yeah. I mean, gold has been just hanging around this area. If you go back 20 years, the S&P and gold, I think gold has outperformed the S&P.
I'm sure you. I believe you.
I believe I've heard it somewhere.
I believe you because I believe you because I believe you probably heard it. I don't think you spent your night going back 20 years and adding them up and figuring out the percentage.
How do you know that I did not spend my night doing that? Maybe, just maybe, that's what I did.
All right. So I want to.
Oh my gosh!
What?
Uncle B2 in Twitter, you gotta go. I love it. You actually made my day because I couldn't figure out how to tweet this.
Okay, hang on. I hope he's glamping too. I hope it's glamping pictures from Uncle B2.
It is not. It is not glamping pictures. Uncle B2.
Oh, are you in or are you out? Oh, yeah. What's that guy's name? Kevin Hart.
Kevin Hart and Chris Rock. It's so funny. And he's like, are you in or you out? He's like, then I'm out then. He's like, I'm sorry, Bob. You're already in. He's like, it's so funny. This is why I love that trade. The in or out. You're already in, Jenny. You're already in.
Hopefully we'll get out soon. Hopefully we'll get out soon of our SPX vertical. Alan Miller. Alan, good to hear from you. I'm always happy to hear from Alan. Good morning, ladies. What would you think of a zebra in SLV as it's at the highs, November 8th expiration, long the 30.5, 28.5 for a 330 debit. So,
Alan, I think you're going to get two sets of thoughts here. Zebra, because it's at the top of its range. I'm in. Jenny might be out.
No, but I think I don't know if he's looking at a put zebra, because if he's long the 30.5.
Let's look at
I think he's looking at a put zebra. Well, Ellen, are you bullish or bearish? Is this a put zebra or call zebra?
Well, you can look at the strikes, and because Alan's very good at this. You can look at the strikes, and we will know if it's a bullish or a bearish.
I kind of think he's doing a put zebra.
He might. There's a possibility. And I'm bullish gold. Me and Tim Knight, we go arm in arm. I'm sorry, we're bullish silver.
Yeah, he's bearish. It's a put zebra. So in Nov.
Yeah, he's bearish. Because it's the 30 and a half, 28 and a half, which means he's bearish.
Yeah, but I'm trying to see what cycle. Nov 8th, because the other ones didn't have the half point strikes.
Nov 8th, yeah, he's bearish. You're right. So like I said, two different answers. I would be bullish. I was like, heck yeah, I'm in for a silver zebra. I actually have some zebras that I've ratcheted up.
And what was his second strike? 30 and a half?
So he was the 30 and a half, 28 and a half.
Okay. So you buy two, sell one. So if you're buying two 30 and a half, giving up about 80 cents twice, giving up about $1.60, I'd probably bring this up.
Yeah, he said it's about a 330 debit. So I would bring it up as well. It just kind of 50 delta, 70 delta. I mean, you're as close as you can.
Yeah. If you want, so this is just because Tim Knight, I think yesterday was bullish silver. Just because he might be bullish silver and just because Liz is bullish silver doesn't mean that everyone could win. Like,
no,
if you put on this put zebra and silver is down some point between now and the next 36 days, you could take this off for a win and it could pop back up, and Liz could be right too. Like, that's the nice thing about options.
Jenny, I wrote my talk for that thing that we're doing and I literally get on my high horse and talk about this. Trading is not a zero-sum game. You can make money. I can make money. You don't actually cancel each other out, even if you have opposing forces on a trade.
So you could put in this put zebra is only risking $307. I don't think that's bad. And in solidarity with Alan, can I put this in?
You can, I love Alan for sure. But I got a question for you though, Jenny. I usually don't put zebras in unless I'm already in them with an 80 rank. I'll do something that's selling premium. So zebras, in my mind, and I'm not saying it matters, but in my mind, you can make a bearish trade in SLV where you're getting that premium, meaning that it doesn't have to go down and you can still make money, but you will make more money if it goes down.
Right.
So what do you think about doing something with the extrinsic value?
Can I just look at something for a second? So we're at 29 in SLV. Now, we've been there before, right?
I don't know. I think everything's at all-time highs.
Okay, so yeah, I don't.
Oh yeah, I guess we have been there.
Okay, so look, we've been into the 30s. So that's what because isn't gold at all-time highs?
I don't know, Jenny. I mean, probably. I think so.
So this is way, way, way back in 2012. That's SLV. Let me just look at GLD and see, because so gold at 245. Let me go back to when silver used to be higher. That was way, way back in 2012. Let's see what gold was like then. 136 and it's 245.
Yeah.
See, here, 175 in 2012 and it's 245. So gold is like way above that, where silver still has a ways to go, which maybe that's why, even though silver's at its highs, there are still so many people now trying to jump on the bullish silver. Oh, dun, 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 dun.
I like that trade. We're 3 for 3.
Yeah, maybe that's why there's people who are still bullish silver, thinking it's got still ways to run.
Yeah, and I mean, I'm not talking my book, but there is, I will say that I trade silver and gold totally differently. I feel like, and I just have Tony from Mexico in my head. He didn't say this, but just asset gathering. It's an asset. Gold and silver are an asset. I don't think of it like the stock market. I don't think of it like Chewy or CrowdStrike. I think of it more like, okay, I'm just going to be bullish. I'm going to be bullish silver and do something instead of just sitting on it. Do you know what I mean?
Mm-hmm.
So, and right now, silver has a huge IVR.
A huge IVR.
Yeah.
That's true. That's true.
So like I said, I have no problem being bearish silver at all, even though I'm bullish silver. But I would just use the extrinsic value instead of just making the bearish play.
But just for, I'm not trying to plug the zebra. But if you look at this, yeah, the 32 call is 60 cents. What are you going to make, $30 on that? Or the 31 call is 82 cents. Even with the 77 rank and 37 IV, the implied volatility, you're not getting that much, as opposed to, and how long are you going to be in it? You could be in it a while. You put on the zebra, it's down 60 cents. You make 60 cents in a day, rather than sell this call for 60 cents and you're waiting a while to make $30.
Oh, that's true. That is absolutely true. And I do talk about the zebra, and people say it's got to be a low implied volatility. And I think from the start, it usually is. But if you have a strong directional assumption, you put the zebra in. I'm just saying sometimes there is, even if you did the big, like the 30 big lizard, or even the 29 big lizard, like we did in Baba, because you're going to get a lot of premium. Go to the 29 because he's bearish. Go to the 29. Yeah. And then buy there. I mean, they're going to make you can make $1 to the downside, and it can go all the way up to 31. That's all I'm saying.
Right. That there is a high rank and a lot of premium.
Now, that being said, Jenny, I freaking love wrapping jade lizards around zebras.
It's for some extra premium. So if you did have, again, sell the 50 delta, buy 270 deltas, if you did have the zebra on, and I thought it was about $3.
It was $3.
And now it's $3.80?
Well, no, because I think you're the 29.32. Or you had the 29. No, you're in the wrong cycle. He was in the he was in the November 8th.
Okay.
Yeah, he was in the November 8th. So there's less time.
Okay, but so what Liz is talking about, if you have a zebra, to try to get some premium around it, a put zebra, it would work a little differently. You would be selling the call and a put spread. I can't put all the legs in, but
yeah. Then you don't lose to the downside if you're bearish, but you do have room. You have a little bit of room to be wrong because you're taking in, close to whatever.
I am a little leery of the naked options right now in silver.
Naked calls in silver? Yeah, I'm a little leery. All I'm saying is that when I'm bullish silver, I put that in because it's going to be, it takes some risk. Okay. It just gives me a little bit of extrinsic value.
So I think I'll hold off on silver because we've got Alan bearish, Liz and Tim Knight bullish. Maybe we'll hold off on silver. Or
I have no problem trading silver. I really don't. I mean, it's defined risk. At the end of the day, Jenny, I would rather, this is what I'm going to tell you right now. I would rather put in that put zebra than ever sell a call in silver. How about that? Like if you made me choose, your bearish silver, what would you do? The most we can lose is $300. If silver gaps up to 40, all we can lose is the $3.
Here, all I did was sell premium, both sides.
Yeah, there you go.
Both sides, and
to your point, if it goes up here, we're gonna lose about the same amount as we would with the zebra, but we have all the way up until 32 before we start losing money.
This is like the problem here again is like it's 43 days. It's November. We're gonna be waiting forever to make any money out of this.
Oh, I know.
I can't do it. I can't do it.
Okay. If you are in charge, you don't have to do anything you don't want to do. But do you want to pop back into Twitter too? We've got a couple things that came in before the glamping as well. So if you go top down first.
Okay. Okay. Got it.
Yeah, just because I saw
Fibonacci baby. Love when my days allow me to watch that's sweet. That's
sweet. Fibonacci baby. I would love to learn about the Fibonacci. Well, who does the Fibonacci? Is that Slim?
I think Slim was he did it all. Bollinger Bands, Fibonacci, he did it all.
Now you're just saying words. Yeah, I think it was Slim.
Alan, and so Alan is bearish. So yeah. Alan, I just didn't put the trade on because we've got too many silver bulls around. So but
in an ironic turn of events, I was like, it's defined risk. It is what it is. You know what I mean? If you're bearish. So would you ever? Okay, never mind. We don't have to go back to silver. We put that to bed. Let's go underneath.
Even with the high rank, there's just not a lot in there for going out so far in time. There's not a ton of premium in there. So I get the zebra if you want a directional.
Sure.
Yeah. Okay, moving along. Bob on fire comes in with earnings. How is Nike shaking it out now?
Not good.
Well, I know it was bad on earnings, but I didn't know if it kind of leveled off. Yeah, it didn't have another big red bar.
Yeah, it didn't have another big red bar. That's true. And considering the market is down, I mean, we're only down 7 right now. So Mikey should be winning too.
I hope so.
Mikey should be out as well. That trade, Jenny, is kind of fun. I mean, honestly, it's really not. It's kind of fun to do because of the time frame of our show.
5,700, 5,705, and he paid 205. 5,700. 5,700, 5,705. So he's up. I mean, you're up $60, Mikey, if you want $60.
Get out. But some people hold these. I know, we were talking to Fauzia, great trader, and she says that closing things early cuts into your profit. Now, whilst I agree with you,
wasn't her, but that was from she had someone come do a Zoom call with them, someone who does trade the 0DTs, and so that wasn't from her mouth. I think that was from something he had said.
No, but just like us, we hear something and make it our own. When it's painting the bottom, so some people might leave it and just be like, hey, I'm not going to put a GTC in for this. I'm just going to let it go. And you can make $250 or whatever it is. If it doesn't go anywhere, it's a wash.
I mean, you could see $2 for this trade, $2 plus $1.50. So you're looking at $3.50. But on the way out, I think you're only paying this $1.50. So let's say $5 in commissions for that trade. Well, we made 50. So after the $5, we made 45.
Yeah, okay. And I know that, but that's great. You made it in 20 minutes. I will, and what is that, Wimpy? I will happily pay those commissions in order to lock, you know what I'm saying?
Oh, yes. Now, when people do studies and they're looking at over time, you've got to figure out if you're going to have losses too, which there is a fine line. There's a fine line between, taking too little, because when you have your loss, if your loss is too great, small profit won't add up enough to cover a full loss. But these, I think, are different. We're not risking that much. We're not risking that much. We're trying to get in and out very quickly. This isn't like a 45-day trade.
That's what I was going to say. I think those studies are based on durational trades, not these zero DTEs. These zero DTEs are like the little wild west. There are no rules, right? I mean, because every rule that you think you had, it's kind of like, oh, we're buying this. Like, would you ever go buy a 45-day wrapped around at the money depth spread?
No, and also when you hear those those rules of, on a spread, collect a third of the width, manage it at 50%. Those are, looking at durational trades. Those aren't looking at the zero DTEs. So I do kind of think, you can make up your own rules with the zero DTEs. And there's not a lot of time. We don't have a lot. We only have a year of having these to really have studies on them.
Yeah, I know. We did that. We had a great study yesterday from the SIBO, and it was 52 weeks of data collected every 10 minutes for the first 2 hours. That's it.
Right. Well, yeah, they've only been around a year, and it's been a pretty bullish year. So
yeah, for sure.
Mikey should be out. Well, for sure. He could have been out before, but look, Spoo's only down 5, and Russell down 11. Come on, just Russell, give me something. I need a big day for the Russell tomorrow. You're going to be gone. Maybe when I'm on with Anton, I'll have the Russell have its shining moment.
It's going to have a Whitney Houston moment.
One moment in time. I should watch The Bodyguard. I haven't watched that movie in a long time.
The Bodyguard? Of course you haven't, because it came out 39 years ago. It's so funny. Generational movies are so funny. Like if you said The Bodyguard, our kids would have no idea what we're talking about. They don't even know who
I may make my daughter watch it this weekend. I've made my son watch all of my old favorite movies like Urban Cowboy and St. Elmo's Fire. Yeah. And he made his college roommates watch them. So the other night they watched Saturday Night Fever. That's how the disco party started. They all watched Saturday Night Fever. Then they had the disco party. Then after the disco party, he had them all watch Urban Cowboy. Next party is going to be a Western themed party.
Sounds fantastic. Although Saturday Night Fever was before our time, by the way. So I don't know, how was your favorite movie?
No, that Urban Cowboy is not. It's just on my list. If it's late at night and I want to watch a movie and there's nothing good to watch, I'll put on St. Elmo's Fire, Urban Cowboy. I don't know. I've got a list.
What are you popping in? A VHS and watching Urban Cowboy?
Hey, go watch that this weekend. It's pretty good.
It's so funny.
If you have nothing to watch, what's your go-to movie that you've seen before?
Well, this used to be a question because it's the one that was on, TBS all the time, would be Overboard. That's the one that I always put on with Kurt.
Oh yeah, you like that.
But like I said, it's about kidnapping. Like you watch these movies now, it's like a heartfelt story about kidnapping.
Well, like The Bodyguard, he had that locker. Didn't he have that locker full of all of her pictures?
Yes.
Yeah.
The other movie is the greatest thing is Pretty Woman, and we all watched it, and our parents were like, "Go watch this movie about hookers. It's fantastic." Right?
I know. I mean, somehow my parents wouldn't let me watch Karate Kid, but I could watch Pretty Woman.
I know. You couldn't watch Karate Kid because it was too violent.
Because he got beat up in the bathroom. I don't know. I don't know what the reasoning was.
But this movie about hookers is going to be fantastic, Jenny. Why don't
All right, hang on. I'm just Oh, just Fazia did let us know. She's talking about some back testing that was done and how much the closing costs can affect returns. So yeah, there are some people who place trades and leave them. They don't want to pay the closing costs. And the SPX, you do have that small fee. If you're in certain products, things are zero to close.
Yeah, things are zero to close. And like I said, we've talked before on the show. We are both over traders. I'd rather be in and out. I'm sorry, Bob, you're already in, because I would rather be an overtrader just because I'm very active.
Yeah, no, I was sweating it being in that iron condor for an hour. I was like, why isn't this thing out? Why am I not out of this yet?
Do you think the hot tub was turned up too high and that's why you were sweating?
Maybe. Because in the summer I keep it much cooler, but for the fall I cranked up the heat hotter. And it's hot outside.
You're sitting in a vat of boiling water. That's why you're sweating.
Let's see what's going on. All right, let's see what we didn't get to. So Bob on Fire earnings, none today. None today. What does he write? What does he write here? $20 on the day. What is this? Weekly's liquid. What do you think this means? Weekly's liquid greater than $20 on the day to trade.
Oh, I think it's weekly options that are great. Oh, I'm going to totally be a Bob translator. Weekly options that are greater than a 20 IVR on the day if you trade it. That's what liquid to him means, and I love it.
Okay.
If you and I love that. And can you please go to the top? Oh, wait, we have one thing too. I think this is pretty.
Oh
funny.
yeah, Pablo, look at this. Look at him on the roller coaster. What roller coaster is that, Liz?
I don't care. But look at this guy's face. The face I make when selling 0DT options on high vol stocks, and that guy's Stone Cold Steve Austin. Like, it's crazy. That's the craziest face I've ever seen, which I love.
Is that the eagle?
No.
It looks like a wooden roller coaster to me.
Yeah, but you would see the surrounding area being Great America and not a cornfield like they just saw. And then if you go top down, I love this.
You are out in the L&J SMT diamond hands. Oh, because we're out already. Mikey's holding it. He's holding it for more money.
I like it. And he's probably doing better than we are.
Hey, you know what? The world's doing better than we are. I'm pretty sure, because what do I have? What took me down this year? My biggest loser on the year is still Rivian. I don't know how that happened.
Yeah, that means Jenny, that means your size was a wee bit too big.
Well,
but SPOOs are only down 2.5. It's fascinating that we are getting that study. That's one of my favorites. That's one of my favorite market measures. I think we got to have him on. Would he come
on? Maybe.
Right? Because that would be cool.
Yeah, sure. We can ask for him to come on.
Yeah. And then what are you doing?
We should have him explain the study. Just make sure we are understanding it correctly. And we're going to tell him how we've done it every day. Except, did we do it yesterday?
No, because you didn't want to. You kept being like, I don't want to.
Well, we were moving around a lot. We were moving around.
No, but it's okay. And it's okay. So I will tell you too, and you got Anton coming on tomorrow, and Anton is going to recap the research for the week. So this is what we're doing going forward with Anton, and hopefully he's listening too. Because our whole goal with him is to have a researcher on to give us the highlights. And that's why I like our show. We are a little bit high level. Just like that study, it's very in-depth. If you go back and watch that market measures, very in-depth. But all we want is give me one takeaway. I want to see the takeaways of all the research that was done this week, right?
Now,
that's kind of what
Did you talk to Anton about bringing in a weekly recap?
Yes. And you talked to him with us. We did it via Zoom. He was on the show when we talked about a weekly recap. And he's
I don't know what he's bringing tomorrow. I don't know what he's bringing tomorrow, but I'll have Anton for the full hour while Liz is going crazy, glamping.
Well, tomorrow I'll be already on my way home. It's one night only. That's all I'm doing. That's the extent of my partying. One night only.
Because everyone has to be home back for the football game.
Yeah, all their boys have an away football game. So they have a football game to go to because it's an away game. I'm not going to the away game.
I'm going to the lake. I'm taking advantage of this weather. I'm going to the lake for the weekend. It's going to be sunny, 70s.
I know. I can't even believe it. So it's going to be almost 80 today. It's going to be almost 80 here. The pool is still open, and it's October.
I know. It's crazy.
Yeah.
My mom always wanted to keep her pool open till October, have an Oktoberfest pool party. And I would say, you're crazy. You're crazy. Just close that pool. And now
No,
it's 80s
now
in
you-
October.
Yeah, 80s in October. The 1 year, I will never forget this. 1 year. My birthday is November 2nd, just so FYI for anybody out there. But my birthday is November 2nd. The 1 year, it was 80
I
degrees.
better put that on my calendar.
Put that on your calendar.
Here's the first.
The 1 year, it was 80 on November 2nd.
Was it?
Hmm. The very first year we got a pool.
But you know, it's so nice.
And I bribed Clark to leave it open until my birthday.
My parents were married on November 11th, and I want to say it like snowed back then on November. So November, first week of November, yeah, you can get snow, you can get 80. You never know in Chicago.
Yeah, it can go either way.
Mm-hmm.
It can go
Right.
either way.
Right. Spoo's only down 3. Cancel crash.
I cannot decipher this text. Hold on.
Who's it from?
From Frank. And I'm going to read it to you verbatim, Jenny, and you're going to tell me. Maybe YouTube. You need to send a follow up, Frank. It goes like this: pre-SIBO, if Bill bought from Bob, then he'd have to go back to sell to Bob to sell them.
What?
Oh, I know. Let me translate, because we were talking about how options are not a zero-sum game. And so, yes, I got it. I'm a little slow there, Frank the Great, but I finally caught up to what you were doing. And Frank, what I love about this is that I texted you the picture of our stand-ins yesterday, which was your amazing nephew and one of our good friends, Ed Barry. And he's like, do not post that. Do not post that. I was like, I promise I'm not posting anything. I'm just going to send it to your uncle.
To Frank to post it. Oh my gosh. And they were great.
I didn't tell Frank to post it. I just said, look at these handsome stunt doubles. And then boom, loved it.
Ed and Jeff did a wonderful job as our stand-ins yesterday. Okay. I know. Is there anything we need to do before you're gone?
Let's take a look at the account. So I'm going to, while you're doing that, I'm going to open up all of it and see if there's anything we need to go to. So you can kind of maneuver around.
I'm glancing at big movers. Oh, Crowd is up $6 today, which is annoying because we have this spread. We've been watching it. This could turn.
Bad.
This could turn ugly. But
that could turn on us. So I would like to take a look at CCJ.
We have.
Oh no, never mind. This is a zebra, and we sold a call against it, but we're up $91. That's the only reason I'm looking at it.
I think we see that. As long as our call, if I sell a call against something, as long as that call's out of the money and still has value, I just leave it.
Yeah, that's something we
all of those. So CCJ, Cameco has been up. That OKLO.
Yes, all of those have been up, which is nice.
Is up, but it doesn't quite look like CCJ, but that was up. So today it was up to 1040 and now it's down to 950. OKLO. And a viewer had told us about you. I
want to talk about number one. Oh, mommy, right. That's the country song, right?
Yes, and that had and that had a run up in the last couple weeks too.
But we don't have you in, right?
We used to.
Yeah, we did used to.
Oh no, it's not there. Yeah, so I mean, I'll glance at any big movers, but we don't really have any big movers today. I don't think.
Jenny, I just want you to look at something, and I don't think we're going to manage it. I really, really, truly don't, but we might. Take a look at Disney. Disney, we're up $160 on a diagonal. So what we can do is reestablish that diagonal using the same cycles.
Okay, so I'm going to take a look, close this position. And so what your point would be to give us more.
So we're up. I'm going to see what we're up. So if you're just going to reestablish using the same cycles, the 15-day, 45-day, we're up $158 right now. We should be able to take $150 in risk off the table.
We can. I had to move it. I had to move our long strike $1 out of the money because.
Yeah. And then you're taking in a $2 credit. That makes sense.
We're taking a $2 credit, but then our spread now is $5 wide. Then our spread is only $2 wide, 95.97.
But the strike selection is a little bit wonky. You are taking risk off the table. Mm-hmm. It is still bullish. And so you can make a little bit less money. We might as well take 220 off the table.
Sure, yeah. I'll take 220 off the table. I'll move this down to like 217. just to get filled.
Yep. Perfect.
Okay.
And then you might want to, do we want to sell premium? Well, I know that's Diagonal is using premium in it too, but I didn't know if we wanted to add anything at Disney.
No, we've got earnings on the horizon. We can keep that on for now. I don't know.
Sure, we do have earnings on the horizon.
I don't know what to do in Disney.
Well, I like when there's dollar red stripes. It makes me mad when you open it and there's not.
Mm-hmm.
Makes me very mad. Okay.
Do you see all the cryptos have not been looking good?
No, they haven't been.
Where are they?
Oh,
I gotta go to trade page. No. Oh yeah. Crypto. So Ethereum down to 2,300, Bitcoin down to 60,000.
Yeah, that's low.
Mm-hmm.
They've taken a hit.
Yeah, they definitely have. It's not been a good week for the cryptos.
No, it has not, which is frustrating me because I like my cryptos. But once again, that to me, those cryptos are very similar to, and things are going to go up and things are going to go down. I treat those cryptos, and I know Tom calls it dead money because you can't really scalp in and out of it. I mean, you can scalp in and out of it, but it's dead money, meaning that I just buy it. Like most people are just buying cryptos, and when it goes down, I buy a little bit more.
I used to add an extra. So let's say someone wanted one Ethereum coin, then I would try to add another one and buy one, sell one, buy one, sell one. But then if you're trying to do that and it gets away from you and really falls, then you're just stuck with double.
That's why I have double, because I used to have one that I would scalp in and out of as well. And now I'm just left with it. But that's fine.
And that's I just have what I have because it's fallen so much. My extra scalping vehicle is now just permanent for now.
Extra scalping mechanism. I know what you mean.
It's just a permanent position. Okay, I know I don't want to make you late because I know you've got someone picking you up at your house. The glamping ride is probably in your driveway.
Yep. The express will be coming here very shortly. But can you just do me a favor? Go back to Twitter real quick. There's 2 last tweets that I want to get to before we wrap this up. Top down. There you go.
Oh, once bitten, twice shy. Who doesn't love is that Whitesnake? Who's
once again, Jenny, disconnecting my brain.
Once bitten, twice shy.
I can sing you the song, but it's once bitten, twice spy. But I love.
Oh, once bitten. Jump the gun on MCL and consistently selling strangles as IV creeps higher. 60 puts, 90 calls at 43 days, down about $3 by averaging in and rolling up. I mean, the vol did jump in crude, but what can you do?
It's hard because it's going up. That's what's hard with these commodities. It's going up, but that vol is spiking. So even when you have that, you're fighting the implied volatility.
And Carol says, you ladies are pretty comical today. Very relatable conversation. Yeah, sure. I'm glad we're comical today. Yesterday was a rough day. Yesterday, it was just stressful. My daughter had the thing that connects your lip to your gums removed.
Sliced off just a little. I can't even.
Lasered.
Oh.
It's called a frenectomy. And honestly, the girl almost did it wrong because the one nurse comes in and she's like, "You're here for the lower frenectomy," which would have been what connects your tongue to your bottom of your mouth. She was ready to slice the bottom off.
That's what Annabelle had when she was a baby. They took a big scissors out, just went like this. I was like, ah! I'm still.
And so she was going in her mouth, "You're here for the lower frenectomy." I'm like, "No, it's the upper. Please don't cut under her tongue too." But as she woke up today, looked like she'd been punched in the face.
Yeah, but it'll all get better from here. It'll all get better from here.
I have a wonderful time glamping, Liz. Wonderful. Anyway, thanks for the laughs. Have a wonderful time glamping.
Okay, and I need a full report on the entire week recap from Anton tomorrow. I can't wait.
I'll let you know what he brings in. I will text you. I will text you while you're glamping. I'll let you know what he brings in. Everybody, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you.
Anton and I will see you tomorrow. Have fun, Liz. Goodbye, everybody.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at tastylive.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was
Okay.
right there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it. Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway, and that's kind of just the overarching principle I follow.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
Oh, yeah. Tasty Nation, good morning.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler, and of course, Katie McCarrigle in the house with us today for our 3 trade ideas. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Katie. Katie, how are you?
I'm good.
Busy?
Busy, but also a little hopped up on sugar.
Ooh.
The ladies of Tasty and IG threw a autumnal bake sale.
Autumnal.
Did you guys partake?
Not yet, but
Not yet.
I've decided I'm going to partake after the show and see what's left.
Yeah.
And then test the waters of what's left.
Yeah, nice. Yeah.
I heard that there's shortbread from Ted Lasso.
Mm-hmm. There's shortbread. There's I just had Maureen made these salted caramel macaroons. So good.
Sounds really good.
Yeah, and I'm not I'll pick salty every day over something sweet, but yeah. And speaking of baking though, I heard you had a little baking endeavor.
This is me going around the office. Mike has I do make very nice cookie that I enjoy baking.
Okay, but tell me the story. What happened? I literally got snippets.
This was a whole thing. I baked cookies for a tailgate. There was a whole plan behind it.
Okay.
The plan is the best part. The plan is the best part.
Well, I made literally 200 cookies. I spent 6 hours.
Damn.
Just flipping cookies, doing it on
Yeah.
Saturday,
sheet pan back to back to back
to back, because you can't overload the oven because then they don't cook right. And, you got to let them sit, so you got to have multiple.
So you made all these cookies, brought them to the tailgate.
You want me to go on? You want me to continue?
But it was a whole thing, it was a whole thing. There were lots of ladies there. I had this whole plan with the cookies.
Spit some game.
Yeah.
Use it as a talking point.
It was a genius plan.
Yeah, it's a genius. You
see the girl eating the cookie.
Yeah.
You made the cookie. You walk up to the girl. You say, "How's the cookie?"
Yeah.
And you say, "Oh, I made the cookie. My name's Nick." Blah blah. And I was "That's amazing. Perfect."
Yeah.
But then he texts me the next day, and he's like, "The
Dude Fest."
Yeah. He's like, my friend way overhyped this on how many single girls would be here, but it's still fun.
Well, it came into play because my friend's little brother is in his mid-20s.
Okay.
And so, when you're in your mid-20s, when you have little
couple extra
parties,
single
there's
biddies
usually
floating
like-
around.
Yeah, there's usually...
Yeah. Yeah.
But the
it
cookies were still a
worked.
success.
It wasn't like it was all dudes. It worked.
Yeah.
It was...
Wasn't a slam
It was
dunk.
fruitful was not a slam dunk.
Okay.
On paper, though.
On paper.
It was a slam dunk.
Yes.
And then...
Yeah. And then it was kind of an air ball.
No,
I'm just
not
kidding.
an air ball.
Well, hey, I learned
Fantastic
something new, and I look forward to having some cookies, some Nick Batista originals.
I was not. I wasn't in the first wave of invitations for the bake off. I didn't know it was, it was a quick turnaround. I really only saw. I wasn't.
Yeah.
In the know.
Well, originally it was like meant to be kind of just something that the women of Tasty and IG were doing
Oh, so
together.
I'm not
The only man that contributed, and I don't even think you can call it contributing, but Bob Groves just threw some peeps on the table.
Nice.
Some Halloween themed prepackaged marshmallows.
From like
with the table where the cider's on.
Yeah,
we moved that table over there.
Congratulations.
From this side of the office to there. So that's our contribution.
Hey, every hand counts, every sleeve. Anyways, I digress. Yeah, it was fun, but I'm excited.
What'd you make?
So we've had the Londoners in town. It was my fiance's birthday. I had to go to dinner last night. Tiny violin.
Tiny violin
No, I know.
here for you.
I know, but I didn't get home till like 9 o'clock last night. So the thought of throwing something in the oven at 10 p.m. when I am in bed at like 8:45 most evenings was not appealing to me.
Could be dangerous too. Fall asleep on the couch.
Yeah.
Next thing you know,
Fire
your
department's
kitchen's
here.
on fire. Yeah.
Whole apartment building is evacuating.
Yep.
Yeah. So I contributed in terms of dollars, which will go to a local Chicago philanthropy.
Beautiful.
Yeah.
Fantastic.
Anyways, I've heard that today is the beginning of 55 consecutive days of football.
In theory.
Oh, with college, yeah.
I guess there's college games on like Tuesdays and Wednesdays now.
Yeah. So congratulations to you.
Thank you. Thank you. It's a big, it's a good time for us.
What's the move? What's the bet?
I'm not sure yet.
Still in research mode?
Yeah.
Okay.
In theory, the Atlanta wide receivers should really outperform tonight, but
it's got to be a shootout.
It's going to be a shootout, I think.
Got to be a shootout.
We'll see.
And we'll tell.
But we will be gallivanting around the city with our marketing teams.
Yes. I think that I am off the hook for the evening.
Ooh.
Wow.
Yeah, but
You're Xing out.
well, I'm
She's
not
scared
I'm
of
not,
the Malort.
I'm not technically part of the team that is gallivanting about town. So we'll see. Maybe I'll make a guest appearance.
There you go.
Depends on where you guys wind up. But anywho, okay, what else is going on?
Markets are flat. Nothing's happening.
Chop Fest.
Chopfest.
Another one. E-mini S&P 500 futures unchanged right now. They're down like a point. NASDAQ down up 27, I'm sorry. The Dow down 120 and the Russell down 7. Everything very, very muted here. You do have some jobs numbers coming tomorrow. Maybe that moves some stuff, but who knows. Oil, the big move of the day. Mikey and I both got caught this morning. It's at 73.30, up $3.20, about 4.5%, the high of the day pretty much right now. Volatility futures have been sticky and have been rising throughout the day. /VX 2055. They got as high as 21.25. So there's definitely some juice getting pumped into the market here. Bonds down 16 ticks. You got gold up $2, silver up 24 cents, and Bitcoin having a little two-sided action today. Got just about to 60,000. We're almost at 61,000 here. We've had about a 2K intraday range in the Bitcoin futures spot as well, seeing that same sort of range. So little choppy today. I mean, the E-minis at one point today, I think they were down like 30 or 40. I mean, in the overnight session, they were a little weaker, but the low of the day, 57.26, so about 30 points from where we're sitting right now. So we've had some two-sided action. The NASDAQ was up 130-ish at one point, sold off in a couple seconds, to be down 100. So it's definitely been a little bit of volatility
A ride.
price action, but you know, if you woke up right now, you would think nothing happened.
Yeah, absolutely.
Yeah.
Yeah, I haven't. Let's see. Have I done anything today?
6B. Shout out Katie.
6B. Yeah, a little sell off in the sterling. So I did cover that this morning.
I did as well.
Nice. Yes. Other than that, got my trade idea going. I took this rally in NVIDIA to just extend that short 130 call one more week. So I have just like the teeniest of 130 call calendars.
Okay.
So
very nice.
Just figured I'd keep chipping away at that cost basis from that original trade.
Would you like to join us in some pain in MCL? You just shorted. We had our Westwater Wednesday yesterday, and we talked through kind of the pumps that you typically see into like Middle East geopolitical events, and they typically are not very. They're very short-lived.
Are you doing just the outright, or are you using the futures options?
I just did the outright MCL.
I'm in at 72. Short at
Both
72.
of us.
Short at 72.
Short
So we're
at
out
72.
$130.
1/10 the size of the major.
Yes.
$900 in buying power.
You want.
Okay, I might nibble.
If you want.
Okay.
No peer pressure here.
Yeah,
This is a safe space.
No peer pressure, but definitely join us right now.
I don't have any energy exposure at the moment, so
There you go.
might be something to do. Actually, this is the first time in a while, I think, that I don't have any futures options positions on. Wow. So in the chat, if y'all are looking at anything, give us a shout.
Love it.
Love it.
Should
Give us
we
some trade ideas?
Yeah, let's do it. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. This video is front and center. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Cherry Picks newsletters link at the top of the chat.
Nice.
As I almost always do. So go get your free Cherry Picks as well. All right. Kicking it off here with Microsoft. You might have heard of it. It is trading at 417.
Might have heard of it.
Where did that one come from?
I'm not sure. Lack of food, lack of baked goods. Microsoft trading at 417. I was looking to place a bullish trade here. It's kind of expensive to do a diagonal spread in here going to November and selling October because earnings are coming up in the October 25th cycle. So I looked at the expected move in the October monthly, 15 days out, and the upper tier of the expected move is at 430. So I sold that option, and then I went to November, and I bought the 430. Reducing basis here by a pretty good amount, 20-25%. But the nice thing about this trade is if it doesn't work out in the near term, if Microsoft doesn't rally up to 425-ish or 430, I can roll from the October 18th monthly to the next weekly cycle and pick up a substantial amount of credit. Right now, the difference in value between the 15-day and the 22-day, just 1 week later, is about $200 on the same strike, a little bit more than that. So what that tells me is with my current basis of 781, which is what I was filled at, I could actually convert this into a diagonal spread. I could end up selling the 440 or the 445 or the 450. Like I can make this a pretty wide diagonal spread and still reduce basis pretty dramatically here. So that's the plan. If it doesn't rally, if it chops around here, I'll move that short option, the 15-day, into the earnings cycle and turn it into a diagonal spread most likely. So yeah, just taking a little upside shot here. Got filled at 781. The max profit risk graph here is pushed to the expiration of the 15-day cycle. So if you get the perfect pin at 430, you could make $400 or more, but looking to take like $150, $200 out of this thing.
I'll bite.
Cool.
Trading it $8 right now. Just gonna work it for a little bit. Beautiful. Microsoft.
Maybe you've heard of it. I'm just on one today. I don't know what to say.
Well, it's because we have Fry the Coop. It's a good
Good
one.
one,
It's
yeah.
a good lunch. It's a good lunch. The mac and cheese.
Yeah. I was
worth the
telling Katie
calories.
this. If it, I don't subscribe to the mac and cheese that's not sharp cheddar. If it's like creamy and it's got like I don't know. I don't know how else to describe it. Like it's got to have a sharp cheddar taste.
Yeah,
It's got to have a little
Or
tang.
melt. Yeah.
Yeah. I get
That's
you.
why Kraft mac and cheese, I make it without the butter, only milk. And if you've never done that, it is top tier. It's the sharpest mac and cheese you can get on the market.
See,
just hold the butter, only milk.
Interesting. I've graduated from Kraft to like Annie's if I'm gonna do like a boxed mac and cheese, or
same idea.
Goodles. They've kind of got like a, I don't know, they've got fancy packaging. I'm a visual, person, so.
I mean, don't get me wrong. I'm very healthy. Like I go to Whole Foods and I get all organic stuff.
Naughty.
But
I'm telling.
There are boxes of 99-cent ramen in my pantry. There's Kraft mac and cheese. So it's like you gotta have the dumbbell effect.
Yeah.
Healthy and then just absolute
80-20.
Yeah.
It's all about the 80-20. I feel that.
Sorry for the S word slip.
Ooh,
That's a demerit.
Sorry, kids show.
All right, what do we got?
All right, Nick, what do you got?
Mine's not as spicy as I normally like to go. It's just an AMD strangle. I mean, implied volatility rank 67.
Okay.
It's been pumped up a little bit. You had a nice little rally here. We're kind of in the middle of where it's been trading. This has been like kind of the spot that it's bounced, around from, right around 165. I'm just doing the November 140, 190 strangle. I did this at $6.88, a big old credit on that relative to the buying power that's being used. It's only $1,600-ish in buying power. Puts you at about a 1 standard deviation. There's about a 70% pop here. If you look at the options, they're both at the time of this trade about $25 out of the money. The stock's actually about $1 lower from here, so it hasn't moved all that much. But they're both about $25 out of the money, the 140 and the 190. And you could see the call is trading for $1 more. So there is some pretty decent call skew here. If you remember, we were looking at BABA yesterday. BABA, the call skew there is like 2 or 3x what the put value is. So if you're looking for some short premium, that's another one that you can consider. Use a little bit more buying power. But here, I just figure this one, like one of the most liquid underlyings that we trade, has high implied volatility, has some decent price swings here, super liquid. It's just kind of it's become a sort of core type underlying that I usually have a position on, and I don't have one on now. It does have earnings coming up sometime, I think in October, end of October. Projected to be end of October, so that is something to think about. I mean, obviously, if you're sizing this appropriately, you can hold through earnings, but ideally, I'm out in the next, 2 or 3 weeks before that earnings event for, $100, $200 profit would be home run here.
Like it.
Cool. Doesn't always have to be spicy.
I know, but I like to, bring some
flavor.
Kick up the heat a little bit.
I feel that. I feel that.
I don't eat the mild fry the coop sandwich, I go for hot.
Yeah, I got that. And then throw some extra on top.
Yeah.
I got it. Well, I don't think mine is going to help ramp up the heat, but who cares? So, I mean, it's no secret that the metals have been just on a tear this entire year. I've definitely gotten hurt in gold. Maybe I'm a glutton for pain, but I am re-entering the metals space, but in something that I've traded on this show before, and that is just via the SLV Silver ETF. I got filled on this put zebra, so hoping for a little bit of a pullback in SLV over the next 36 odd days. Long the 30.5 puts twice, short one of the 28.5 puts. I paid $340 for this, so that's my max loss. Of course, that's the buying power as well. It's a zebra, so it's a synthetic stock position. I think when I put this on, it was like synthetically short around 90 deltas or so. And just hoping to make $150 or so with a little bit of a pullback in here if we get it over the next 36 days.
I like it. Yeah, silver and gold have both been just wild.
Yeah.
To the upside.
Yeah.
Gold basically at highs. Had a little mini pullback earlier this morning. It looked like it was down like 15-20 at one point.
Yeah.
It's basically unched here up $2. But yeah, these things, they be strong.
Yeah, definitely. Yeah, I've some of my GC futures options have been a little rough this year because I've been trying to get on the other side of it for when we see a pullback. But this, of course, a little more bite size. The silver futures options, we used to trade them a little bit more than we do now. I think we've kind of stalled on that just due to the liquidity that tends to go in and out of there. Right now, I mean, it's not terribly wide. So if you wanted like that added 23-hour access, if you have a 9-to-5 job and you can't look at your platform or whatever your reasoning might be, I would just say be thoughtful about undefined risk in there, just because silver is actually more volatile than gold historically as well. A little more chop to it.
I did the 3230 put zebra in the November monthly cycle for 480.
Okay. Yeah.
So just a little more expensive, but same idea.
Yeah. There you go. Cup of 2 tree trades.
Lovely.
Beautiful.
Just lovely.
Just lovely.
All right, popping over to the YouTube chat now. Bluff Battalion, would you hedge a one coin Bitcoin position, nice, with Bitcoin options or use MicroStrategy? MicroStrategy seems somewhat tighter spreads and higher premium. It's tough. It's tough to say. I mean, the Bitcoin futures are 5 coins notional.
Micros are 10th.
Yeah. So it's, I mean, you could do multiple of the micros to match it up, or you could use MSTR, but either way, it's hard to do like in separation because MicroStrategy is definitely a higher gamma trade. Like if Bitcoin rips to the upside, MicroStrategy could explode to the upside. I might wait for the rips and then sell those rips in terms of short premium, because these products also, once they rip, the IV is going to explode and the call skew is likely going to explode too. So you can go really far out of the money and sell pretty juicy options. I might do that rather than just like hedging at all times.
Yeah. If capital is an issue, because that's going to be a pretty capital intensive position. Like if you're just trying to hedge like 30% or something like that, I might just do 3 of the micro Bitcoin contracts at whatever level you're trying to hedge and put that on. Just because MicroStrategy, and I pulled up IBIT here, you can, IBIT, bless you.
Thank you.
Bless you.
Wow. Didn't even know.
Maybe I'm like allergic to working in this room.
Yes.
That's true.
Maybe I gotta go
You're
home for the
allergic
rest of
to
the day.
us.
No.
Just this room.
Just this room.
I was just gonna say the MicroStrategy buying power requirement is pretty hefty here. I guess it's about the same as 2 or 3 of the micro Bitcoin contracts. If you wanted to get like the notionally equivalent hedge on IBIT, you just would size it up equal to 1 Bitcoin 30K. So we'll call it, 2,000 shares, just to use a round number, 1,500 or whatever, would put you at, 0. That would put you at nothing.
Okay. Sound logic.
Is there a way to trade the tut spread on Tasty with micros or smalls? The 10-year, 2-year, I want to get back in after this pullback. The 2-year and the 10-year are tradable.
Yeah.
The ZT and the ZN.
You can do that, or you do the rate products, the 2YY
Oh, yeah.
and the 10Y. So those are both, $1 ticks. So you can size that up pretty decently. They only use like $300 or $400 in buying power.
Yeah, if you're running into a products aren't able to be traded issue, maybe you don't have futures enabled. Which you can do on your accounts tab.
Yes.
On the website. Yeah.
Yeah. My.tastytrade.com. /manage.
Mm-hmm.
Which, by the way, there's some cool stuff going on the web platform. We should do a show on the
Back testing.
Back testing.
Yeah.
Yeah.
And plotting 2 different products against each other. Something
Multiple.
I had no idea.
Yeah. I felt smart showing that to you.
Good. I felt stupid asking.
I didn't mean to make you feel stupid.
No, you did not. It's just my ignorance is bliss lifestyle.
It's just that they're iterating so fast we can't keep up.
Exactly. That's
There's
right.
so much new stuff.
5/20/5/10 put ratio in SPY in November.
520, 510.
Sure.
What's the buying power on
decent. It? $5,000. It's expensive.
Yeah, a little rich for me, but.
But yeah, I mean, you're getting a decent credit for a 10-point wide spread. I think it's fine.
I mean, if you're playing that, like, move it and do it for
scratch.
Yeah, you know,
if you're playing the real downside move, go to like the 495.
Or keep the short strike that, like, if that's like your spot, just widen out the long spread as much as possible. Do like the 510, 535. And do it for like a 10-cent credit or something like that.
Yeah.
Because it's going to be hard to get paid on a $10 wide spread there. You're basically just selling the puts.
Yeah. But yeah, I don't mind it either way.
Yeah.
Okay.
Natty Gas put vertical 26245.
Let's see. At 27 ticks. Where is natural gas? Oh, yeah. What was it? 260, 245?
Yeah. So $260 max profit, max loss is $1240, but your buying power is about $600 for now. You're getting good buying power relief because of span margin, but just realize that your risk is $1,200 here.
Yes.
Yeah.
Yeah. Thomas walked us off that ledge yesterday. Not ledge, but because he had that research on 5% up moves in Natty Gas kind of being
The threshold?
the time to get a little bit of short delta. And we had that, like, what, a week ago or a couple days ago, something
Yeah, there was
like
a couple trading sessions ago, I think.
Yeah. But he said this one is a little different because you have, like, winter seasonality to it.
Mm-hmm.
So it's not like he wouldn't recommend that.
I see.
So.
Okay, yeah. I mean, and I think, like, historically, still kind of on the low end of the range,
Mm-hmm.
I believe.
Yes.
Yeah, I mean, yeah. Forgot about in 2022 when natural gas was going not so bananas.
Mm-hmm.
Nuts so bananas.
Not so bananas.
Yeah, we'll see where it ends up at the end of the year.
Speaking of where things ended up, who from the Tasty side won the Guess the Market competition?
Nobody. We're all losers.
We were
except
all, like-
for Mike at 5,337.
Was the
for
closest?
each quarter.
Yeah.
He's the closest as long as we stay above that because he was the highest.
Yeah.
I think he's the highest through the end of the year.
Really? I would have
Yeah.
thought like Dr. Jim or somebody would have been
No.
out bullying him.
No. No.
Nobody outbills me.
No. Jim is a price influences sentiment kind of guy.
I see.
End of year last year is kind of like, everybody was like, oh, the crash is coming, blah, blah, blah. So, like, Jim's is in line. He's not like
Okay.
he's a Super Bowl winner every day we go up every day.
Yeah, yeah.
He's a homer, a public, as Tom would say.
Yes,
Like,
yes.
Yes.
It's like,
Tom's guess is very public.
oh,
Very public. Same, in line with everybody. You're pretty up there. You're at like 52, I think, or like 51.
yeah, I forgot what we had exactly, but I mean, I knew, hitting those types of targets has never been my strong suit. So,
I mean, the up to 25% so far this year, or whatever the number is, 23 is well outside of the standard deviation.
Yeah.
But I think us three are the highest of the tasties.
Yeah. Well, I will say, so we've been working on some great stuff, content for, or I should say the brokerage firm has been working on some content. And I've been helping them in terms of some of the platform navigation. So I did have to put on like a teeny tiny small bullish SPY position. So when we're down, 10% next week, you'll have me to thank. I am the martyr.
That was the kiss of death.
Yes, I'm the kiss of death. So prepare for some bloodshed next week. I don't know. We'll see.
I don't believe it.
Yeah, you're probably right. But it would be very like on brand if I did like a small bullish trade just to help out with content recording, and then the market just dumped.
And then everybody sees that and they were like, when was the SPY ever at 570?
Yeah, exactly.
Funny.
All right, who is next?
Manny, short of Tesla, October 11th, 235, 200 put spread. Got in when the stock was at 257 for a $4 credit. With the recent drop, would you hold or add a call spread at 270-300? I think it's wide enough to where you could add a call spread at 270-300.
Yeah.
There's still a decent premium there.
This is a synthetic naked put.
Yeah.
You got a 40 cent, 50 cent put defining the risk.
Mm-hmm. But yeah, if you really wanted to, you could roll it out for like a scratch at this point. But yeah, I don't mind adding the call spread.
235, right?
Yeah, 235, 200.
So he wants to roll it to the monthly or the...
Yeah, if you roll it to the monthly, you are, you can do it for a scratch.
Mm-hmm.
I kind of like the idea of just throwing the call spread on.
Yeah.
Because if you have the call spread on,
which one did he want? The
270-300.
270-300.
So the 270-300 would add another $2 in premium, which would bring you to $6 in premium, which means your break even would be at 229.
Yeah.
And even if you get down there, if your put goes in the money a little bit, your spread is so wide that it doesn't matter. You can still roll out for a scratch if you're at like 230. So 8 days left. Any kind of rally is going to be fine for you, even with the call spread on. So I kind of like that adjustment.
Yeah, I think you sell the call spread. It would have been nice to do it yesterday, but I get it.
Yeah.
Yesterday we had that. It was down like $13 or $14, and then it rallied back to being only down like $6 or something by the close.
Yep.
That would have been a good time to consider it. But I get that you want to hold the directional risk. Doesn't change all that much.
Right.
You're talking about like selling it now for $2 and change versus yesterday for $2.80.
Right.
You're talking about 50, 60 cents. That's why we don't try to time everything perfectly, because the relative difference isn't all that.
Yeah, as long as you're staying, small, of course.
Yeah.
In terms of how many contracts and stuff you're trading.
Yes.
Yeah. You're still out of the money though, so you're okay for now.
Yes.
We're all caught up.
Yeah.
It's a quiet group.
That's it?
It's I mean, there's like a good amount of people watching, but they're just a quiet bunch today.
I know. That's what happens when you get the couple days of just kind of chop nothingness.
Yeah.
Nothing's like jumping off the screen
page
anymore. Yeah.
Mm-hmm.
Yeah.
I feel that.
A little bit of pullback in the China names. If you look at like Baba or Baidu is down like $5 or $6 today.
Mm-hmm.
PDD, they still all have super high implied volatility. So they are interesting trades on the board right now is kind of how I look at them. I did a little crab trade in Baba on the upside for Johnny trades. I have this leftover put diagonal in this account that I got just absolutely killed on over the last, couple sessions here. But if you don't have something on, definitely an interesting underlying.
For sure.
What adjustment would you make on your put zebra if SLV trades up? Would you roll the short put up? Is it better to have more or less time on the zebra, and how much? Why not sell an at the money put?
What was the question? Sorry.
It's a lot.
What adjustment would you make on the put zebra if SLV goes up?
I mean, I honestly really wouldn't. I spent $350 and it's a directional shot. The point of these types of trades is that they don't really have any maintenance to them. If I had paid more for that trade, maybe there would be something I would do to kind of offset it. Like you could do like a short put spread or something like that. Like if you wanted to go with like another defined risk trade to offset it somehow. But yeah, I tend to just kind of put these ones on, cross my fingers, and
You're entering at highs. That's like
right.
That's that's the trade.
Exactly.
Like you're short at highs. It's there isn't a ton more to do for it.
Yeah. To that point though, I mean, saying why not sell the at the money put? So if you did, you could.
Yeah.
Like I guess in theory, it's cheap enough, at least for my account size, to be able to do that.
Yeah.
But I wouldn't necessarily want to buy a put zebra, and then if it continues to rally, and then you've got like a short put that's kind of above where the zebra is, it just gets a little muddy.
You're doing it into weakness of your position. You're selling into strength right now.
Yeah.
Silver's at highs, and then if it goes higher, and then you sell the put, now you're selling.
Right.
You're getting long delta into higher prices when you just got short delta into lower prices.
Exactly.
So you're like flip-flopping around. With a delta play like this, with a directional play, you could theoretically sell a put against it on entry. Yeah. Like, you go to the 36-day for your synthetic long or short stock position, and then you go into like a weekly or the 15-day. I just pulled up the October monthly here, and you sell a put against it. It'll be a covered position, but again, it's just kind of a marginal, 30 cents. If you go to the 28 strike, 20 cents if you go to 27 and a half.
Right.
Doesn't make sense for this.
Yeah, you want to be in and out of this trade.
Exactly.
Like if you sell the put and silver moves $1 like you're trying to play for,
right?
Now you're stuck in it because you got this put that's at the money that you're losing, 60, 70 cents on the put, and you're making $1 on the delta. And the 30 cents is like, okay, I'm not taking that.
Yeah.
So you'd rather just kind of take the directional shot.
Yep.
Yeah, if this was a higher IV stock, you could certainly sell an out of the money put, even in the same cycle. You could do a covered zebra in that sense.
Even in your Microsoft, but I don't know, like an NVIDIA.
Yeah.
Kind of
Like it just doesn't make sense here because there's no premium out of the money. You're banking on realized volatility to exceed implied volatility with this strategy. But also, when it comes to time frames, this strategy is a defined risk stock rental strategy. So the shorter the time frame is, the less costly the zebra is. You still get 100 deltas.
Right.
So if you're trying to time it for like a 1 week move, then you could use the 1 week zebra and just have a much lower debit cost, but not a lot of time on your side. If you're the reason why we go further out in something like SLV is because IV is low. Like IV ranks at 80%, but the implied volatility is still at 30. If you're dealing with a product like TLT that just has super low IV all the time, like you can go far out in time and get a stock rental zebra position on for really cheap relative to the notional value of the product. So IV definitely plays a role on time frame, but you can make it cheaper by going shorter term if you want to. And you'll be more protected from a big move against you because you don't have a lot of debit risk on that. So it's really subjective, but in this particular case, we leave it as just a zebra because there's no premium to sell.
Yes, indeedy. I also just realized that I did this in the weekly.
I was going to ask you that because I didn't notice when you were talking about it.
That was a fat finger mistake. I think it's because that's right around the election and also my birthday.
Oh.
I don't like
when's your birthday?
I will not share that information on air. No, I'm just messing, but that was a fat finger mistake. So to your point, Mikey, and like probably what you did is you went to the 15th monthly.
Yeah.
Yeah. So my bad. It was the sugar. It caused,
It's baked goods.
high.
What are you gonna do? Baked goods.
I was impaired.
Everybody has those. So everybody goes through that. I mean,
Yeah.
Part of, sometimes you misclick something.
Yeah.
And if it was very concerning, you probably can close the position for basically a scratch, right? Like hasn't moved all that much. So, you don't have to be tied to it if you don't want to. You could close it, it costs you a couple bucks in slippage and commissions and whatever, but it's no big deal. And you move to whatever you want if it is that big of an issue. But, it's fine.
This is fine. I mean, maybe given everything that is going to be happening that week, maybe we'll see a little more action. And so I'll kind of have more, knowing what's going to go on. Not that going out to obviously the monthly where there's typically more liquidity isn't the right thing to do most of the time. So, but yeah, not worth it for me to bump it out by 7 days.
Fair. Dan has a BMY October 50, 52.5 in the money call spread. Dividend on the 4th, 60 cents. This option could be at risk of assignment, but this is a max profit trade, so we just take this off.
Oh, it's a long call spread.
If it's a long call vertical, then yes.
Yeah.
If it's a short call vertical, you are going to be assigned on that short at 50, most likely. So you got to roll it out in time for a debit or just close the position.
52.5.
Yeah.
There you go.
Yeah. So if it's a long call vertical, it's max profit. We close it. If it's a short call vertical, you got to close it to avoid assignment risk. Because at 50, if it's a short call at 50, it will be assigned.
When's the dividend?
Tomorrow.
Got it.
Yeah. I mean, and it's a 60-cent dividend. So even if you get assigned on this, you would be 30 cents less profitable than you are right now.
Mm-hmm.
So, you have 20 cents or so to make through the next 15 days, but you have 30 or 40 cents of risk if you do get assigned on it, because you'll have to pay that dividend, which is 60 cents.
Right.
You only have 20 or 30 cents more to make on this trade.
Yeah, exactly.
I'm agreeing.
You're such an agreeable person. Never once combative.
No.
Or stubborn. I have
Do
flaws.
I feel some sarcasm in the air?
Maybe a tiny bit. I mean, we all are. I think Mikey's probably the most agreeable between the three of us.
I can do both.
Get you somebody that can do both.
Yeah, I can be agreeable and I can be violently stubborn.
Yeah, I see the stubbornness. His trading sometimes is very violently stubborn.
That's true. That's true.
What are you going to do? Mr. Bajra, how do you defend a short put and when? Do you, for example, wait for a short put to get to 30 deltas and then turn it into a strangle? I just put a link at the bottom of the YouTube chat to a segment I did a couple years ago, short put management. And it talks about rolling it out and down.
Mm-hmm.
I'm not personally going to turn into a strangle. I think if you're selling a put undefined risk, you should be willing to take the shares, and you don't need to turn it into a neutral. Like if I'm getting tested on a short put and I liked the stock before, I definitely like the stock better now. And even if the short put goes in the money, it's just a covered call risk profile.
Yeah.
There's still extrinsic value. So in theory, you could just roll that short put, same strike forever and ever and ever. And as long as eventually the stock rises above it, you'll be fine. If you want to defend it, you can buy back the short put when it gets tested or when it's about to go in the money. Buy it back, move it out a month or two, and roll it down for a similar value. So if you buy it back for $500 and you go out a month or two and move it further down, make sure the new option is worth $500 or more in that example.
Mm-hmm.
That's just moving your risk down and doing it for a small credit. You're not giving up your premium that you've collected to that point. But yeah, I'm not going to turn a short put into a strangle personally, because I couldn't imagine the mental state I would be in if I sold a put, had it go get tested, throw on a short call, have it completely reverse, and now I'm taking upside risk.
We've done that 1,000 times.
Exactly.
Yeah.
We've done that 1,000 times.
Yeah.
It's too much pain. You
Yeah.
can only take so much pain.
I
But yeah, that's just me.
Yeah.
Like if I'm selling a put undefined risk, I can do it I'm doing it in a stock that I can afford the shares, and I'm just rolling it perpetually. I'm not changing from my mental assumption to begin with.
Yeah.
There's my stubbornness. But I think that's just a bet. Like, I don't know. if I'm starting with a short put, I'm not getting neutral on the way down.
Yeah.
If that makes sense.
Yeah. Like I have on a Boeing short 145 put, 15 days to expiration. So to the point of the question about like rolling when you're at 30 delta, my 145 put is at 30 deltas right now in the October monthly. It's a scratch position. But if you did like feel so inclined to give yourself more time to like really be right on that, you could roll out and down to the 140, even the 135, and still pick up a small credit on my like when I collected 250 up front.
Yeah.
So it's reiterating what you're saying. If like you did want to have like a delta level in which to manage that, but I tend to agree with you that like you do it in something you can kind of withstand for the most part, and just continue to chip away and pick up more credit.
And if you have a short put and you turn into a strangle, if you would have just started with a strangle, you would have collected way more on the call than you're going to on the downside on the way down. So
yeah, I think the only time obviously that I can think of in recent memory, and it's not even that recent anymore, but is like Peloton, right, where we sold that put into earnings, and then it just...
I wasn't involved.
I know. Well, Mikey's avoiding eye contact with me, so I have to look at somebody. And that was like something where I think you and I kind of just saw the writing on the wall. We tried to defend it for a little while, but like...
Yeah. It got too big.
Too big.
It got to a point where it was too big.
Yeah.
But it goes back to what you were saying of just like sizing on entry and being able to take some directional exposure at a certain point. If AMD were to go to 100 tomorrow, it would stink for my position, but it wouldn't be too big for me to hold. And so, that's kind of, I would want to have that exposure at 100. So, you kind of have to look at it like that.
Yeah, for sure.
what do we think of Meta here?
God, it's up
all-time highs.
Yeah.
Oculus for life.
Zuck is cool now.
Zuck's cool. He's got the chains out. He's probably going to be at the UFC.
Now.
He's probably going to be front row at the UFC card. He's got the for real frills with the chains out. Oh, he's bussing. Yeah, he is bussing.
He's got the bussing cut.
He's bussing.
That's what it's called. I thought it was called like the broccoli.
Yeah, it's the same thing.
Oh, okay.
Bussing broccoli.
Oh my God.
Imagine going into a place and be like, I'll have the bussing broccoli, please.
We are turning into our parents.
I know.
It's really sad.
I know.
How do you do, fellow
kids?
How do you do, fellow kids?
What do we think about it here? I mean, I don't know. I don't really. I used to love to short the Zuck.
You can't.
Yeah, I can't.
Scared.
Can't do it. I'm too scared.
I have some short delta. I had an iron condor, but
yeah,
I have a call spread that's right out the money where, it was 50 points out of the money when I put it on. I was like, there's no way it's gotten here, and here we are.
Do you think in the same way that, some of these other big names have been splitting recently, do you think this is primed for a split anytime soon? Or not?
I don't know.
I mean, the thing about this one is obviously, like, it's a big tech name.
Mm-hmm.
It's liquid. They don't necessarily, like, need to do that, but it just seems like that's been so... normalized recently. Like, oh, it's getting a little too rich. We want people to be able to participate. Split the stock.
Yeah.
Make it a $57 stock.
I think they would probably do I think 100 is a sweet spot. Like, I think that
like a 5-to-1 split?
1,000,
yeah.
you mean?
No, $100 stock price to split to 100. So like here they would do
5-to-1 instead of 10-to-1.
Netflix would do a 7-to-1 or a 6-to-1 or whatever, and get it like kind of by that $100 mark. I think that's kind of the sweet spot. You look at like an SMCI or something that's now trading at $40 or $50. CMG is at like $40 or $50. They're dead. You can't do anything with them.
Yeah.
So
I'll probably wait till earnings and do something like an Iron Condor or something like that. Or maybe a double calendar, like something that just plays the earnings event in a defined risk way.
Earnings right before Halloween.
Ooh, spooky.
Ooh, we got to come up with something fun to wear.
Aren't we in LA for Halloween? Or are we in Dallas for Halloween?
I mean, it's a Thursday, right?
Yeah.
So
Dallas is November 2nd. So the actual Halloween is like a Thursday.
So we'll be on the show together.
Yeah. So
I think
I'm gonna dress up.
Is it a Thursday? I thought it was a Friday.
It's one of them. Either way, we're dressing up.
Thursday, October 31st.
Do that.
So,
Okay.
all right, brainstorming. I've got some ideas.
Okay, I'm excited to hear that.
The eye waggle.
Well, Tracy and I were talking about it, and you know Tracy is the queen
Yes.
of Halloween.
Yes.
So, yes.
BMI, would you exercise the 15, take a chance? I would not. You have a definer's tray that's worth a couple $100s. If you exercise the option, you now have thousands of dollars of risk, and anything can happen.
What expiration were we in? No, it was October. Yeah, I mean, in your exercise, like you're gonna give up 20 cents here, like you're doing it to make 40 cents.
Yeah.
Potentially.
Mm-hmm. Yeah, I wouldn't mess with it.
Nice trade. Pat yourself on the back. Buy yourself a nice dinner.
Yeah.
What I would do.
Nice steak dinner. Nice tomahawk steak dinner.
Yeah.
Yeah.
Been researching.
Remember that? Remember that?
Chimichurri for steak.
Happy birthday, Stunna.
Happy birthday, Stunna.
Been researching and selling one-day put spreads in SPX, 10 or 15 points wide, 9 to 11 delta, 1 to 3 contracts, pure theta play, close in the AM. Sure.
Like doing them the day before.
Mm-hmm.
Yeah, I mean, we've gone generally straight up for quite.
But even on a move like this, as long as the move isn't too crazy, like you're still getting that theta decay pretty quickly in the morning.
Mm-hmm.
Yeah.
So, yeah, I like it.
Yeah.
Just got to stay small. Because one day you're going to wake up and the market's be down 100. So,
yes.
Just got to stay small.
Eat like a bird, like an elephant.
Show.
Like Will Levis,
oh, he's been getting mean to hell.
Yeah.
Who?
The quarterback for the Titans.
Oh.
He had this like ridiculous face, and
Oh.
I don't know. It's just this is the world we live in. Everything. becomes a
Nothing,
meme.
you know, everything is televised now.
It is. Everything moves very fast, too.
It's true. It's true.
Would you ever defend a short put by shorting the underlying if it's at a strike? If it's at your strike and looks like it's going to keep going down? Personally, no.
Might as well just close the position.
Yeah, like I would rather roll down and out and just move my intrinsic value risk lower than suddenly become short on a product that I was long. Like you can do that, but now if you get whipsawed and the market reverses, now you're taking undefined risk on the upside where you did not have it before. So I don't like flipping my assumption. I like sticking with my assumption until Nick yells at me, and then I question it.
Oh, that's cute.
Yeah, but no, I really
checking
like
each
if I'm
other.
selling put and I want to reduce my delta in intrinsic value risk, I'll just roll it down and out, and eventually I'm just gonna stick with that strike and just roll that strike forward.
Yeah, I think sometimes it gets overcomplicated in like the thought process. Like, you know, if you're now at the money and now you want to short 100 shares of stock, and it's a $200 stock or $100 stock, and you want to throw, you know, that much capital at it because your put is tested, like you're no longer bullish. You should just close the put and move on and trade something else with that capital. Like you don't have to like chase a position just because you like put it on. Like every position, if something changes and if your thought about the position or your thought about the stock or whatever changes, just close the position. You don't have to battle a position back, you know, because of pride, so to speak. You know, like just take the position off and go on to something else.
Yeah, for sure.
Don't short the stock and then watch the stock go up $20 the next day and now you're out $2,000 when you wanted to be bullish and but you didn't want to be bullish at this point, so now you shorted the stock and now the stock's higher and now you're like, so you can't. Sometimes you miss.
Yeah, for sure.
What products does Tasty offer for currency trading? Any sample currency trade ideas for small accounts? There's a bunch of products that are available. Futures, micros, but for Forex too, tastyfx.com. check them out.
Yeah.
Sleek, very sleek interface.
Yeah, and they also, Pete and Frank just started an early morning show kind of talking about Forex. So if you haven't watched that yet, you can get that on replay as well, where they're kind of talking through exactly that, like what are the opportunities they're seeing, how large or small are they staying within their assumptions. But on that TastyFX website as well, they also jot down a bunch of articles. So you can kind of dive into that a little more and maybe see if any of it piques your interest.
Yeah.
Maybe
TastyFX.com. I put a link in the YouTube chat.
Maybe one day
We'll see. You know, the world is Sosnoff's oyster.
That's true.
Is the old saying, I believe. So, yeah, it's great to kind of have another tasty brand in the ecosystem.
Meta short put 567 October 11th, 567 and a half October 11th for 555. It's okay. It's just a lot of buying power for the profit potential, but it's a quick trade for sure.
Yeah.
Yep. All right, should we wrap it up?
Yeah, I got chicken waiting.
We're caught up. We're gonna wrap up. We're gonna go eat.
Cool.
All right, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie, Mike at Trader Mikey B, Nick at Trader Nikki Bat. Don't forget to sign up for our events at tastylive.com/events. We have a couple more to round out the rest of 2024. We're going to start planning 2025, I believe, today. So more to come there in the near future. But in the meantime, between time, good luck, good trading, go football, go chicken.
Yay, football.
Go football, go
Yay,
chicken.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year, there's a couple other math people who just got a pizza oven, and so they're bringing everyone over, and we're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Rational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Pumpkin. Oh, just circles are great.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
We built tastytrade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. tastytrade.
We are back. It's Thursday, October 3rd, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, thank God we're outside of the age to be drafted.
As far as everything going on across the world, you're saying, I'm assuming?
Just, the reports of Joe Biden saying that we're going to strike Iranian nuclear facilities, it's kind of in that sweet spot where as someone with chronic back problems and ankle surgery, and over the age of 35 now, I'm just really not your guy to go die in the Strait of Hormuz.
Yeah, I am. You know what? I remember when I used to have that kind of fear. I am actually, yeah, you're right. I am less fearful of that. At least for myself, anyway. I do have one kid that could potentially be drawn into something like that. We'll send him off somewhere somehow or another. No, I'm just kidding.
Well, let's hope those are just reports today, because the reports that are coming out of the White House for the third day in a row are proving to be really influential over these markets. Joe Biden apparently let slip of the tongue, or not, that the U.S. is having discussions about striking Iranian oil facilities with Israel, because Israel has to respond to the missile barrage from Monday. And that sets the stage for another pop higher here in crude oil prices, more weakness in the bond market. Stocks have been coming off the board as the day has gone on. We do have unrelated, Jamal, the Bank of England finally telling the world that they are done holding out and will start cutting rates and aggressively. A huge down day for the pound, the worst since July 23. It's an interesting Thursday ahead of tomorrow's jobs report.
Don't you think it's a little weird, though, that bonds are down on all of that news? I mean, if that's really, all the news and that's fear, and don't you think it's a little weird that bonds are down?
I see the read-through as they were not predicting a long-term problem here, right? If we're predicting this being a real issue, like a real war was coming, bonds would be bad. But this is more about the fact that the tensions have escalated to a point where supply chain disruption, in concert with the port closures, probably means we've got to reprice inflation expectations for the rest of this year to a higher degree than what we thought they were. And that also means that we're going to get fewer rate cuts up front, perhaps from the Fed, where just 2 weeks ago, the market was favoring a 50 basis point cut. And now that's come in where now we're back to favoring 25 for November.
Yeah, I just, Chris, I'm such a cynic now. Because obviously, I mean, these are real issues. I'm not saying that they're not. It's just to the extent of how much they're affecting the market. I just can't tell. I mean, again, like I would expect bonds to be higher if there was real fear out there. When we're talking about the supply chain issue, I mean, one of my things that I always look to for that is the Baltic Dry Index. I've talked about it plenty of times before. And honestly, I haven't seen much movement in that. As a matter of fact, if there's any movement, it's been to the downside, meaning that rates aren't going up as of yet. So, I think as much as these things are really important, especially with regard to everyday life in our world, I haven't really seen it infiltrate in the market much yet, outside of what's going on with oil. Obviously, that's been one of the biggest barometers of what's going on in the Middle East right now, and I think that's obviously something to be reckoned with. So But that's kind of the way I've been viewing it. I really, I'm still trying to figure out everything overall. And I do just think I missed a dip here.
Jamal, let's talk about this jobs report. Is it taking a backseat to all the geopolitics? This has been a wild week. This has been a really, we've had one of the biggest seed funding rounds for venture capitalists ever. We've seen this stuff pop off in the Middle East. Obviously, we have a jobs report coming around the corner. We're now just a month out from the election. Sometimes, nothing happens for a long time, and then sometimes it all happens at once. The September U.S. jobs preview for tomorrow, it looking like it could be a decent one. Now, on the left-hand side, this comes from the Atlanta Fed. It's the break-even pace for jobs growth over the next year. Assuming we want to keep the unemployment rate where it is right now at 4.2%, the economy needs to add 112,000 jobs per month, all else being equal. So on the right-hand side, let's look at the actual forecast for tomorrow. We're expecting 140,000 jobs. That'd be a little bit lower than what we had last month of 142K, but it's above the replacement rate, if you will, right? And so that gives us an unemployment rate that stays on hold, which begins to take some of that pressure off of the SOM rule that's been triggered. By my math, this would mean that the SOM rule drops to 0.54% from 0.57, still above that threshold where a recession could be coming, but lesser degree, and that's not typically what happens. In all the instances, you see acceleration when the unemployment rate starts to go up. I think one of the important contexts that we have to think about the jobs market here today, Jamal, not only was ADP better than expected, the jobless claims continues to come in at exceedingly low levels right now. And you know what? Never before have we seen recession start when jobless claims are this low and the unemployment rate is this low. By all stretches, a report that's good, I think, is a report that no one should be afraid of. And, heck, signs that we have more workers making more money probably is good for corporate earnings. So any weakness on stocks, we know that playbook. Fade that move.
Yeah, we know that playbook very well. This is, number one of two that we get before the next report from the Fed signaling whether we change rates and how big those are. So this one's an important one, right? I mean, this is one where we're going to have to really pay attention to how things are moving along as far as the way that we are employing across the U.S. But you're right. For the most part, it's taken a back seat this week. And it's been kind of surprising, if you will. I guess we'll see what actually ends up happening tomorrow. Still about a 63-point move expected in equity markets, which is a little over 1%, but it's surprisingly taken a back seat. And it's still important. I mean, last I checked, this is actually one of the bigger metrics. It's more important than inflation now. So I've been sort of, I've kind of pulled some cards off the table and waiting, expecting some type of move out of this. And this gives us a chance to put on some more trades outside of some of the other stuff we've had, but I guess we'll see.
Jamal, as we turn to these charts on this Thursday, we see that stocks have an eye on the crescent, the Fertile Crescent over in the Middle East. 57.32 right now on the S&P 500. It's a loss of just about 0.5% here on the day's session, down back into that 1-month moving average, as it were. Volatility has started to creep up, 34.9 IVR. As cash VIX has moved to the upside. We've seen moves above 20 this week. We find ourselves back there once again, 20.47. Across the futures curve, volatility continues to creep higher as well. 83 cents higher in the front month, 60 cents higher in the second month. Jamal, we know this is going to be a month, or at least we know, we can't say for certain, but you and I have theorized, right? Given the election and how there is this kink in volatility that rises in the second half of October, if you're going to be fading this vol, it feels like it's might be a little bit difficult to fade on a short-term basis. You really need to be looking at this opportunity to set up those longer duration trades, because the vol, once you get through the next few weeks, probably isn't going to last. Do you find yourself changing your habits here now that volatility is higher? Position sizing, distance for stop losses, strategies that you're employing now as the market begins to enter a new type of environment and volatility regime?
No, to be honest with you, I really haven't traded too much equity vol, I would say. I mean, a lot of it is stuff that we've talked about on the last couple of sessions, and we're going to talk about again today. It's mostly been bigger macro trades, whether it's dollar, bonds, gold. I really hadn't. I put on a couple of equity stuff today, but even that, I mean, most of the trades that I put on today were based off of the Chinese vol movement that we've seen more recently. It really hasn't been much equity stuff, to be honest with you. This 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 VIX is interesting because it's showing, obviously this is sort of a proxy for equity vol, right? But you haven't really seen it too much in a lot of the different names. If anything, you've seen it a little bit in the indexes, a little bit in the SPYs and the Qs, those who trade those ETFs. And of course, ES and NQ, but you really haven't seen it as much in the individual names, which is what I usually skew more towards trading. So I haven't traded many of those. I've largely tried to, and I've looked at trading some of those bigger, sort of ETF index proxies. I've looked at trading those, but outside of that, I haven't. I've kind of been waiting on this number, I guess is really what I'm getting at. I've kind of been waiting on this jobs number to sort of clear out of the way one way or the other, whether it's going to increase vol or bring vol in. Because essentially after this number, we're basically at earnings, right? And so, and I don't really like to trade earnings that much. So
yeah,
it's really been, I've kind of been limited to trading a lot of those, like I said, those big macro themes, dollar, bonds, gold, et cetera.
Yeah, you mentioned that once you get through this, it really becomes about earnings. The next CPI report, October 10th, so it is a week out from now. I don't think the market cares all that much. We can look at the volatility structure here. We can go to the trade tab and look at just the raw IVs on the right-hand side of the column. Go out to the 10th. What do we see here? I mean, Jamal, the jump from day to day, 8 points, about another 9 points. Here's 4 points. Here's 8 points. I don't know. It seems like the market doesn't really care all that much about CPI, which makes a great deal of sense because the Fed's told us it's not their primary concern now. The balance of risks is
Chris, I'm telling
balanced.
you.
How the turn's stable.
Things have been strange ever since we got that 50 basis point cut. I'm telling you, the market's been a little weird. It really has.
Well, we're looking out then to this jobs report tomorrow. The levels obviously today are what matters most. We are at the line in the sand, so if you've been waiting to get long deltas, this is a pretty easy place to do it. I mean, what's the worst thing that happens? You close below the September 3rd high at 57.33.5. You're down below the 1 month moving average toward the end of the day. That's it. You take 5 points off if it looks like we're sliding through there. I've got my long positions on, but this is why I put them on with such long duration, because October can be messy. Presidential election years, first half of October tends to be messy. And so might need to ride it out for a little bit, which is perfectly fine. I have my risk levels and I'm willing to ride it out. Nonetheless, though, the pullback here, Jamal, if this is about geopolitics, if this is about war, like in April, we saw this ratchet up, but ultimately it was a move to fade. The question is, when do we start to fade it?
Question is, when do we start to fade?
Yes.
Vol, you're saying, when do we start to fade vol?
Yes.
If it wasn't for, again, the number tomorrow, I could see a scenario where we've overlooked this jobs report to the point where we just get a big 2% move. And so that's my biggest fear. This sounds so terrible saying it on air. I'm fine fading geopolitical risk. I'm not fine fading a jobs report that we're discounting that eventually ends up being a big move. So I'd rather wait on the other side tomorrow.
Understood. NASDAQ here today, while it is a down day, it is technically another inside day. We didn't push through yesterday's high. We haven't pushed through yesterday's low. Yesterday was also an inside day, so it just goes to show how the market, despite the uptick in volatility, really price action-wise, hasn't done much of anything significant yet. It's just more or less de-risking as some of these news headlines come out. I don't think President Biden may have had this intention of doing this to the market, but heck, 5% higher and 5% move higher in oil. I guess if we've been, selling put spreads the last few weeks because of that positioning rebuild, you're grateful for comments like that, even though your equity position may have been stung a little bit on the long delta side there. At least the short put spreads in oil are still working. Jamal, 1.08% lower in the Russell, starting to get back to a place where the condors that you and I have enjoyed so much this year are becoming a little bit more appealing. Not quite yet. We're not at the midway mark. That would be closer towards 21.60 76, but that's 15 points. And this opens up a new world of possibility where, just to mark this off on the chart, let's just go view here. Yellow, yellow, yellow. Okay, we're going to remove some of these lines so this is less confusing. This is the zone, right? Wrapped right around between the 618 and the 38.2, basically at the midpoint of the 6-month high low in the Russell. And with a 37 IBR, we've previously explored here why that is a little deceiving, because if you were to look at raw Russell volatility, which is a 24 right now, and compare that to, let's say, in the middle of July when it was sitting at a 24, and IWM.IBR would tell us a 24 vol, raw volatility in the Russell back in the middle of July would have given you an IBR closer to 60, 70, 80 perhaps here on July 16th. So this level of volatility in the Russell is actually quite appealing now that we're getting back to the midpoint of a recent range to look to put back on the condor.
I agree with that. It actually is. You know, I know all everything's affected obviously by the jobs report and by obviously geopolitical issues, but this one is kind of danced to its own tune at times, and this is probably the one I feel that you could trade that iron condor within that range and sort of feel okay. It is actually at that level. You're right. I mean, and the strikes still seem to be the same. I mean, that just below the 2100 or 2050 in this case, and that 2350. This is one trade I would actually be good putting on, I would say.
Jamal, looking at this right now, get about a 59% probability of profit going out 43 days, 1975, 2025 on the put spread side. On the call spread side, that would be 2350, 2400. Selling the 2025 and 2350 guts 50 points wide on either side. It's about 2.5 to 1 risk to reward. I quite frankly like it. I like bringing things that are directionally neutral into the portfolio right now. So let's try to get this going. It fits the criteria, right? The whole reason why this wasn't put back on after we removed it, I believe it was early last week or the week prior, is because we started to get to expiration 1, and then 2, we weren't at the or close to the midpoint of the recent trading range. So the risk was maybe we were breaking out. Now that we've settled back in a little bit more and the vol has expanded to levels commensurate with other times this year in recent months that it's been effective to put this exact trade on with the same exact strikes, there's no reason not to try to reach into that well once more. Let's not fix what's not broken. We'll take another swing.
Take another swing. And actually, I'm doing the same one, except I'm doing short the 2050, long the 2000 put spread.
There we go. Hopefully we get filled today ahead of CPI and, more importantly, not CPI next week. If it takes us a week to get filled on this, I might need to adjust my order. But hopefully it gets filled so I can have this in place for non-farm payrolls tomorrow. Other than that, all quiet on the Western front, although that seems like a bad omen to suggest on a day when the war drums beat.
I do. You read the tea leaves on a lot of this stuff more than I do. What worries you about tomorrow's number? I mean, what would be really bad? What would be really
a weak
good?
report?
And I don't mean just the number itself. I mean the perception of the number, right? Like if unemployment's, I should say, are you worried about the fact? And it's weird to say worried, but are you worried about the fact that unemployment is actually doing really well and we're not seeing as many layoffs as anticipated? Is that something we should be sort of worried about with regard to like how we're going to cut rates?
I am not worried whatsoever that more people have jobs. I think that is a made up concern. Legitimately, I've had this, oh, well, then the Fed's not going to cut rates because the economy's doing well. That's really a problem. The economy's doing well, right? If your whole thesis for being long equities and if your whole company's, like the whole ethos is we can only succeed if interest rates are low, you probably don't have a good company, right? So the people that are saying, oh, well, then the market's economy's screwed if rates don't go to zero again or don't start tracking back there. Well, that says a lot more about the type of businesses that we're running, right? That they're not being run well. You shouldn't need low rates to persist. There were companies that did well in the 1970s and 80s and 90s and 2000s prior to the global financial crisis in a world with 3.5%, 4%, 5%, even higher percent rates. So no, I don't think it's a problem that we have more jobs coming in. And if it means rates are staying higher for longer because the economy is doing stronger, I think that's historically consistent with an equity market that runs higher. So Um, those are people who are just looking for a reason to be bearish, Jamal. They're saying it's sunny and they're talking about skin cancer.
Yeah.
You know,
Doesn't make sense. It's the world we live in.
bonds are telling a story. You know, the whole market is just people with different perspectives and different time frames. So everyone ultimately is right at some point in time. Hopefully, you just have your position on when you're ultimately proven correct. In this case, not happening in not happening in bonds right now. This is part and parcel, perhaps, to the reflation story. We've since the Fed meeting, it's been noted that if the Fed is reflating, with China reflating, then long bonds probably don't work in the short term, and that is certainly proving out here. So holding on to those positions, painful, definitely painful here. Oil prices spiking, definitely not helping either, because we can go through and look at market measures of inflation, and we can see that those are moving up. 5-year break-even rates, 7-year break-even rates, 10-year break-even rates, all up across the curve right now. And so inflation expectations filter through to the long end. Higher yields result, lower bond prices. As it were, Jamal, this is something that perhaps if we have a good jobs report, we see some of those rate cut odds squeezed out a little bit more, in part when we go to the SR3 contract. And let's skip back out to December expiry here in Z4. We could see that the odds of that 50 basis point rate cut in November, cumulatively 75 basis points to the end of the year, that's come down materially over the past week. And so a further reduction in these rate cut odds alongside this persistent move higher in oil prices, it's not exactly a bullish mix for bonds in the short term. The technicals look ugly to me. I think that we should be looking for a further expansion in volatility before trying to call a low. Swing lows near 113.5 perhaps should be eyed, but if we can get further vol expansion, then it becomes more prudent to sell puts, but not here, not now, not while we're seeing a breakdown of the recent uptrend.
Yeah, still the same position on here, long the call spread. And again, this is a little bewildering given a lot of the geopolitical stuff. I mean, and you might sometimes look at that and say, well, you know, clearly the U.S. is not affected. But I mean, I would venture to say in a geopolitical situation like this, where you got gold running, and we know gold's been running for months, but still gold is running, and you see what's going on with oil. That's obvious. A little surprised that to see bonds sort of being faded here, but not at all bothered by the position that I have. I will say it sucks though. We can't move this yet. I was looking at for whatever different reason we can't move this to December yet, which is obviously the H contract, and doesn't seem to be trading. So we still got to. This would have been the day that I would have moved it, but yeah, it's proving to be a little difficult at the time being.
Jamal, in April,
113 call.
Yeah, please, right? That's just too much to
really
ask.
the problem.
I thought this was America. On April 3rd, Israel killed an Iranian commander in Beirut, if I recall correctly. I have that highlighted here in the box on the left side of the ZN continuous contract, because there's this stretch that you have between the killing of that commander and not only the Iranian missile barrage on Israel on April 12th, but also the Israeli response on the Ayatollah's birthday on April 19th. Bonds faded lower during that time, right? It was during this period that the market actually wasn't picking up treasuries as a safe haven, even though stocks were coming down. We were seeing that oil prices surging to the upside proved to be the more important factor for bonds. So this, to me, is the big story here. And after you get through April 19th, you then kind of peter out for a few days, and then bonds are ultimately able to bottom. Bonds bottomed on the other side of the tensions, which counterintuitive, and we don't have a lot of great pools of data to look at similar situations, because how often have Israel and Iran directly attacked each other? Once, here in April. So we're making guesses, right? And the best guess we have is what we see here. So I would say that as long as the oil tensions remain there, bonds aren't necessarily proven to be safe haven, because we're not really worried about World War III. We're more worried about the impact on oil prices in the short term and supply issues that could feed through into the inflation loop. Now, that could change, of course, but right now, if it's following the April playbook, bonds, this is not necessarily a good thing for bonds, even though geopolitics on paper should be something that creates safe haven demand.
Yeah, and that's obviously showing itself to be true. But again, you know, It's not too bothersome because the reason we put this on is how we feel about what's going on in the U.S. and what's going on with
Yes.
all the issues here with job reports and what's going on with potential rate cuts. So that's really the ultimate impetus for this position.
Jamal, we haven't talked about the yield spread in a while. So before we go to bonds here, let's talk about that spread. Twos, tens, we've seen further moves out of inversion territory. The 210 spread now is, and of course that just popped off my screen, and it's now trading at, I have 14 basis points right now here, if that's accurate. Maybe it's not accurate. Yeah, I have 14. Yeah, I have 14 basis
I'm just
points
going
here.
off of what I see from the V contracts between the two.
Okay, I'm looking at the two continuous. So there's probably a little.
For sure.
Regardless, either way though, we've moved out of the inversion territory. How much further does this have to run? Historically speaking, the spread between the twos and tens sits closer to about 110 basis points. Now that we've got out of inversion territory, should we just be putting on trades looking to ride this back to the historical reversion point?
Yeah, I guess so. To be totally honest, if you had to pick between the two, it's probably time, right? I know we've been hesitant at times because it's like you just park money there, but now is probably the time. Good point.
Does this tell you anything about how you want to position moving forward? Is this a recession indicator to you? Does this inform your portfolio allocation at all?
I would say one thing at a time. I mean, sure, we've seen a lot of stuff that suggests that once you come out of inversion territory, we've seen a recession. We've seen it in the past. But, everything is different. I mean, when it started happening in 2007, nobody expected 2008 to turn into what it did. Nobody knew, right? So I would put it on because, again, it's coming out of recession. It's coming out of recession. It's coming out of inversion, and that is probably likely to continue. I wouldn't put it on because I expect a recession to come. I would put it on because for the first reason I said.
Yeah, the first reason is probably better right now. Listen, recession is probably not here. Obviously, the third quarter is over. We're still going to get some data over the next few weeks about the growth situation. There we go. Waiting for this to pop up here on the screen. Right now, as it were, the Atlanta Fed jobs report, the U.S. Federal Reserve's New York branch nowcast report. My way with words right now is really all over the place. 2.5% for the Atlanta Fed for the third quarter. That's in real terms, so adjusted for inflation. That's obviously nowhere near recession territory. The key factor for a lot of these assets, what happens after the Fed cuts, is the economy in recession or not? If the answer is no for bonds, it could be a slow sledding uphill. The cuts should see bond prices ultimately rally. And if we're priced for perfection right now, Jamal, that means you're closer to the floor in bonds than you are to the ceiling. Unless you get the dreaded reacceleration of inflation scenario, and let's say that the economy slows down because we can't buy or sell any goods because all of our major ports are closed. That's happening right now. So there is a window here, Jamal. I will say that there is a bit of a nightmare trade going on for bonds where you have oil prices spiking, ports closed in the U.S. This is a supply chain inflation trade coming back. Every day that ports are closed, we lose about $3.5 to $4.5 billion worth of business here in the United States, which means over the course of a few weeks, you're talking about lobbing off significant chunks of GDP. So supply chain issues with a significant pullback in GDP, that's stagflationary. So bonds are telling a story here that we should start listening to. If it's oil, if it's the ports, once the port closures end, once those strikes end, I imagine that bonds are going to see some relief. That's one of the catalysts that we can't ignore here in the next few days. If you're trading this on the short side to look for acceleration lower, that strike is going to be a significant catalyst to help resolve some of the pain, in my opinion.
Yeah, and it's obviously going to eventually, like you said, it's really going to hit our markets at some point in time, in one way, shape, or form. It just depends on how long it goes on. I imagine it shouldn't go on for long. I know they said they're not going to step in the way and end this thing, but I don't know. These outside of the 1970s, these things have a way of eventually kind of resolving themselves. Surprisingly, it didn't resolve it ahead of time, but I expect it to be resolved soon, especially in election year. Especially.
Guy's got to get back to his
election month. Shit, it's almost here.
It's election. God, thank God we don't have another year of the election with this kind of coverage.
I know, right?
Jeez,
I will
like
say it's not as crazy though, at least as of yet. Knock on wood. It's not as crazy as it was 4 years ago, right? I mean, 4 years ago it started in August.
One of the candidates was shot at twice. What are you talking
I'm talking about the election itself, not so much any of the stuff outside of it. I'm just saying.
One of the candidates almost croaked, and we had to replace him with a younger person, just for the sake of reducing our risk of having.
It just tells you where we are and the zeitgeist of life. I mean, I don't know. You're right. I'm not gonna get into it. Forget it.
I guess it hasn't been a crazy year.
I am trying to get long tens and short twos on. By the way.
Crazy, not crazy. Probably good for gold. That's all that really matters here. Gold prices, they've been consolidating.
Short twos, $700 in buying power. I'm interested in the trade now.
See, this is what we do. We talk about these things, and then the mind wanders, and you go, oh, well, we're going to see a further expansion of that yield curve. Jamal, can I sell you on a symmetrical triangle after a breakout here in gold prices?
I'm waiting
2680
for
right now
before I get long again, or 2615 or somewhere thereabouts.
Why?
Well, like I said, we've seen that a lot this year, right? We've seen it's held in, even though it's pulled back. It's probably pulled back slowly, but I'd just rather wait for the pullback than geez. I mean, where is it going to go, Chris? Is it going to really go to 2,800 from here? I mean, is it going to keep going?
Mm-hmm.
I'm waiting for a pullback. I'm trying to be prudent. I've told you, I'm a changed man from what I used to be once upon a time. You are just like where I used to be. It's understandable. You're a little younger than me. It's the way it was. Like, Jesus, this thing is going and it's on. I feel like there's going to be a pullback. And so I hope I'm wrong for your sake. I hope I'm wrong.
I need to make an adjustment here, honestly, because long the 2650, short the 2700 calls here, it sets you in a situation where we're effectively sitting at max profit. So the question is, how do we structure this moving forward? Volatility is high, and there's a good deal of call skew here. But at the end of the day, we are looking for a move up to $2,900 an ounce longer term.
See, I guess partly too, just like historical bias has screwed me up because, yeah, that's a great trade, 2650, 2700. You're basically at max loss, and then you're like, okay, well, I think it's still going, so I take that off, and I just roll further upside, right? And that's when the fade happens. It always seems to happen, and I've always gotten caught up in that. And so I'm just waiting on the fade to happen without having a position in it, and then get back in. And if I'm wrong, it's to your benefit. You're going to look great.
Looking good, looking bad. As long as we make money, who cares how we look, right?
And if you're going 2,800, 2,900, why would you only go Nova? I'd go further out, honestly. But it depends on what's the price difference between that? Just curious, as we're sitting here looking at 2,800, 2,900, and Nova.
15 bucks.
15 bucks. And what is it further out? This gives you an idea of skew in every given month, right? This is an interesting exercise.
You know that scene in Breaking Bad where Walter White's in the back of the car before they execute Hank and he's screaming in the back of the window? I can just feel Tom yelling like, "What are you doing? Buying out of the money gold calls." I'm not even getting.
Was that $3,500 a month difference? Was that real? You said it was $15. And no.
Yeah, we got to get rid of these first. So let's see here.
Okay.
Let's go.
Okay. Never mind.
Where'd you go? Okay, so let's see. The calls are 2750, 1270. Okay,
so,
and then we're going up.
About the same, 1500.
Yeah.
Yeah,
48 minus 27, 19. Is it worth paying for? Let's see. Let's just get rid of you, and then let's get rid of you.
2,800.
It might be worth it just because you're increasing your time to expiry by about 60%, and the risk that you're scaling up isn't. This isn't my roll week. My roll week is next week, so I still have some time to make this decision. But we are into the teeth of where I'm. Max profit is max profit, so holding on to it much longer doesn't make any sense, regardless, even if there is still time to expiry. I still feel very optimistic about this, only because the technicals look good and it aligns with the fundamental, setup and system that I have. Silver
What
is
ultimately
also
slows
breaking
gold
out.
down? See, these are the things that are hard to. I mean, I'm not sure myself, but those are the things that are hard to see, right? When you're in the midst of the trade. But ultimately, I just wonder what slows it down.
So part of the long-standing belief I have for why gold is behaving the way that it is that it's part of a reaction to what happened in the wake of Russia's invasion of Ukraine, when the United States and Europe put all these sanctions through the chip system and the SWIFT system, so that Russian banks don't have access to effectively the global financial system. Now there are alternatives. China has alternative. Russia has its own alternatives, but there's just not enough participation there. And so I think what's been going on is countries saw that the dollar system was weaponized, for lack of a better phrase, to punish an actor that fell out of line with Western ideals. And so central banks have been moving away from Western currencies as part of their reserves. It's not necessarily the dollar, right? You can see it more in the euro. You can see it more in the pound, where that use among central bank reserves have actually fallen over the past few years. The dollar still maintains a significant role and actually has increased. But what's filled the gap? People aren't going out there and buying renminbi. They're not going out there and buying Russian rubles either. They're going out there and buying hard assets. They're buying silver and gold right now. And so is that going to change? We were talking about putting the genie back in the bottle of deglobalization. I don't think that changes anytime soon. It took how many decades to get us from World War II up into the Russian sanctions point? Just ending the war and undoing the sanctions isn't going to make other central banks say, oh, you know what, this isn't a risk we should consider. They learned their lesson. No, they're going to continue to diversify from Western currencies. And I think metals have a significant place. So I see a long-term tailwind now that's been building and building and building. And I would have to see something tangible to get me off that pedestal.
Yeah, I've just been thinking about it, more recently about, obviously it's been a strong run, and we haven't seen gold move like this, or silver, in several years. And then they kind of lied dormant for a little bit of while too. So just wonder what the next move is and what ends up making it, sort of get back to what we saw in the recent years.
Silver breaking out here beautifully, I might add. This was a long-term consolidation up around very familiar levels, and now we started to make that move to the upside. Jamal, $43 sounds nice. I think we should go there. What's $43 between friends for silver? Sounds pretty good. Inverse head and shoulders pattern that's breaking out right now. Left shoulder, head, right shoulder. We have our long-term decline. No matter how you slice it, you're going to see that we do have let's just better to show than tell, right? There's that breaking out. There's this breaking out. Heck, we even have this potentially here now starting to consolidate into the next breakout higher. Either way, metals look pretty good. At least silver and gold do. Copper today, quite alarming if you are a bull. So a really nasty candle down 2.17%. China seems to be losing momentum. Golden Week is coming to an end, so perhaps people are getting ready to stop their gambling from their various locales. FXI down 2.4% in today's session, Jamal. Copper perhaps is an interesting tell that we're not seeing a significant run higher with these stimulus vibes. Are you having anything to do with this right now? Because it's a 96.1 IVR. It's exceptionally high.
Yeah, no, I still have no position on in here. I do have China positions on that I just put on more recently in a lot of Chinese equity names to sell some vol. I wanted to, when you have the type of moves that we saw more recently with a lot of the China stuff, it's like you got to give it a little bit of time to breathe and then eventually make moves. With this, no copper position. I've stayed away for the most part, and I think I probably will for a little bit. But I am following it, and it's interesting to see the metal struggling now compared to what we're seeing in gold and silver still.
Yesterday, we made the position adjustment of taking off the short put spread that was put on. I want to thank the individual on Reddit for helping pay the electricity bills this month. From now on, if we've learned an important lesson, shorting something or going long something because you saw it on TV and it didn't shine brightly is not a actionable investing thesis. But if you see people out there justifying trades in commodities for those reasons, like, oh, I saw oil spilled at the gas station the other day and I didn't like how it smelled, so I decided to get short gasoline. Do yourself a favor and just be their counterparty. You don't find free money on the street that often, Jamal, but if it's there, don't be the economist, right? The economist says that's not free money on the street. The market would have, we would have arbed that away. Somebody would have already picked it up. That can't exist. No, you be the person who picks it up. Okay. I'm now in the condor. Okay. I think that this is a fantastic place to have switched from. When you're at the lower part of a range that's beginning to break out, you can sell puts down here in a high volatility environment. Because people are looking at the medals at the Olympics. But now that that's all done and well, and the individual is out of his trade, so I suppose that's not a fair rationale to be in it any longer ourselves, let's talk about where we find ourselves in the high-low range of where we've been over the past several months. And when we go and trigger that helpful 50% mark for our Fibonacci retracement tool, that's exactly where we kissed today, ever so briefly before bouncing. We are peering below the 1 week moving average as well, so perhaps upside momentum has been breached. It's a 96.1 IVR. So I'm now in the Iron Condor off of the short put spread. When we go over here, it's 53 days to expiration, making two bets effectively. One, that when we run up, we're not going to run up through the highs that we had in May, but moreover, we're not going to break through the lows that we had pre-Chinese stimulus announcement. So we're not exactly going to the range lows here. That way we can get a little bit more juice in the trade. If we were to break through the pre-Chinese stimulus announcement lows, that would be the danger Will Robinson price action that no bull would want to see, no range trader would want to see either, in which case I would turn aggressively bearish. And if copper is crashing like that, you probably have really bad news for the global growth story. The Chinese stimulus efforts didn't convince anyone. Game over. But we got to take advantage of the vol wallets here. Let's not get too far ahead of ourselves. Midpoint of the range, 96.1 IVR. There have to be ways to take advantage of that right now.
Yeah, I mean, this is definitely one of the higher things on the board right now, and I don't blame you for taking the Iron Condor. And looks like pretty good strikes too, which is based off of obviously what we've seen in the chart here.
Hopefully it works out. If we get a dip back down below 4.3, getting close to those Chinese stimulus lows, I might take off the Condor or add on a layer of another short put spread. Copper is not the biggest product, but it moves a lot overnight, which is great. And it is at a center. It's basically a centerpiece for the recent story about what's going on in China. Jamal, as we make our way to the last 15 minutes here, Futures Power Hour, stocks staging a little bit of a recovery. S&P up to 5741, NASDAQ 19,959. Both still in the red, but they are beginning to bump up. And crypto turning the corner here over the course of the day. Bitcoin is now up by 0.62%. Some risk coming back in. One reason why risk may be coming back in is because oil is slipping off of its war footing, which was up by 5% a few minutes ago. And I mean that literally, because we were looking at a 5% gain here during Futures Power Hour. We're now only up 4%. I suppose that means there's a headline that may have come out indicating that World War III is not coming, and you and I don't need to worry about drowning in our own lungs in a mustard gas attack in the Homs Desert, I suppose, in Syria, thankfully. But oil right now, it's 60 cents off the highs. Jamal, it's a 114.9 IVR. Forget copper being attractive. What are we doing here?
It's been, for me, I can't remember if you put this. Oh, I thought we were talking. I put on an Iron Condor the other day, and I adjusted my put strike more recently. So I had the 61, 63, 80, 82 Iron Condor, and I just rolled down my put spread earlier today. I am now short the 66, 64 put spread, and I'm still short the 80, 82 call spread. And I'm just trying to find a way to take advantage of this fall because this is definitely probably the highest IVR we've seen in oil this year. And it's not going to stay there forever. Eventually, it's going to calm down. And so, again, I rolled the put spread up because I just figured, I'll take being short the 66, 64. I mean, say for a little bit of time there, we hadn't seen oil down at those levels. And that was actually the same area where I was interested in getting long oil via MCL. So why not? So that's the play for now. But so far, this has been my worst trade of the week. Not specifically this trade, just getting rid of my MCL. I was long a couple of contracts of that. And I got rid of it at like 70 and change. I mean, up money, of course, but could have held on a little bit longer.
Yeah, one of my bigger mistakes this week, I was talking about it with Westwater this morning. I still have on the short put spread in CLZ4, but I had that Iron Condor on in CLX4. And when we got into 71, I decided to take it off. Obviously, hindsight being 2020, if I held it today still, we would have moved back to the exact midpoint of the range when it was put on. And it would have been a great place to take it off and then roll into the next leg out. Because guess what? This is the high that we have from April. This is the low that we have from September. Can you find a higher high or a lower low over the past 52 weeks? No. We talk about the Russell. Oh, this is the midpoint of the 3-month range. Or, gold, or some other commodity being in the midpoint of a 6-month range. Copper, for example, right? It's at the midpoint of a 6-month range. Oil is now at the midpoint of a year-long range. Almost in the same way that technical analysis, it becomes more reliable, so to speak, the greater the time frame. A head and shoulders pattern on a 1-second chart carries very little weight, whereas on a weekly time frame, you begin to take it a little bit more seriously. Being at the midpoint of the year-long range is a lot more compelling than being at the midpoint of a 3-month range. So if putting something on like an Iron Condor in the Russell is prudent, something like that in copper is prudent, then the glove fits to do it in crude oil as well right now. It's the only thing that I think you should be doing right now, because this is all geopolitically driven. If there's a further spike around geopolitics, we can absolutely look at just selling some call spreads. But at these levels right here, given the volatility, this is the tasty trader's delight.
Yeah.
You couldn't have asked for a better trade setup as far as I'm concerned, which is why we're putting it on right now.
Yeah, no, that's the tasty trader delight for sure. Selling some upside in a name that's been moving to the upside and seemingly over a little standard deviation move. So why not sell some? It's definitely a tasty trader's dream.
Tasty trader's dream. We can go out here. Let's size up the 25. That's only 5 delta apart. 83 and 86. Okay. Right. 57% probability of profit. We can go $3 wide on either side. Let's do it.
Tasty trade delight. Tasty trade delight.
We could be playing the breakout, but breakouts in oil and geopolitics are a fraught endeavor, as far as I'm concerned. Right? We've seen, unless this becomes something more substantial, where significant oil supply is taken offline, then the volatility is probably going to fade. But let's just work through that math real quick. In August, we heard that Libya would be seeing their 1 million barrels per day taken offline. And you have a trek higher from 72 to 77.5 in crude oil prices in the span of a few days before the market digests it. So we'll call it a $5.50 move based on the theory that 1 million barrels per day is taken off. Iran produces right now around 3.3 million barrels per day, a hair underneath that. They've also promised that they're going to hit back at Qatari and Saudi oil facilities if their own oil facilities are hit by Israel and the United States. So benchmarking it probably 3 to 10 on the worst case scenario, million barrels per day of oil taken out of the global oil supply if this does escalate here. So if 1 million barrels is worth $5, give or take, 3 million barrels should be worth $15, and we could start to scale that up moving forward, where if you take off 10 million barrels, maybe we're talking about like oil above 100 or 110, and you're talking about the Straits of Hormuz being closed, which is that 2-mile wide band out in the Middle East where far too much of the world's oil so goes through every single day. I think it's like 20%. So there's also we say like they're escalating to de-escalate, but there's also that side of me that says if this is going to pop off, Rosh Hashanah is going on right now. Shana Tova to everyone who celebrates. We could see that there is Yom Kippur coming up around the corner. This could really pop off in the next week or two. I think that if this is going to start to spiral, some of these out of the money short dated calls are a really smart thing for equity bulls to have in their back pocket. And I know it's just buying them naked, but for the $85 call, right? We're talking about 14 days out, effectively clearing out the yearly highs. Let's just say we go back to the yearly high. It's 95 cents. Having that in your pocket here is a 13, we're talking about 20 delta. Buying the 20 delta to keep it in your pocket for worst case scenario. If you're a long bond bull, there would be a ton of convexity that comes in here. And I get it that IBR is already 114. But just the math of how the oil market could respond if one thing leads to another, like a Guns of August type of situation, August 1918, where one actor shoots the wrong person and then, a German frigate takes harbor in Istanbul. That's how the Ottoman Empire got looped into World War I. Total mistake. These things can happen. So part of me wants to buy some out of the money oil calls as well, just as a hedge, so to speak.
Yeah, man, it's a precarious time with everything that's going on over there. And regardless of whether you're getting, long for the potential event or even just for protection, it's something to think about. Because this thing, especially the oil, it's whatever happens, it's going to happen overnight somehow.
We're already back up 4.5%. So these swings are violent. They are sticking around. They are not going anywhere. Speaking of not going anywhere, the Bank of England is definitely going somewhere with their new turn of phrase, because we see the pound here today off by 1.03%. It was the single largest loss that we've seen in the British pound going back to July of 23, prior to the head of lettuce outlasting Liz Truss as prime minister. 131 here, though, it's a significant breakdown of the pound. Vol is now 53.9. So if you've been looking to fade this by selling call spreads, good on you. This has been a fantastic trade. In any event, it seems like it's a broader part of the dollar bottoming out here, Jamal. The carry trade's back in the yen, as we know. I've been articulating that for a few days now, and quite frankly, I thought the rating was on the wall back in August when the BOJ started issuing all those apologies for the market volatility that they may have caused. But DXY, there is your signal. A dollar bottom may be coming together. We're looking at the yen here, 0068.81. I don't think we got filled. Did we get filled on this? Yes, we did. We have our 0064 puts, 92 days to expiration.
We should have did that damn thing when you talked about it last week. We definitely should have. I was looking at this today. It's like, damn. I mean, I was looking at buying the 0068, I believe. I'm pretty sure that put. And I think you were looking at 0066, if I remember correctly.
I went deeper. I got a request from someone saying you got to do it the Madman overtime style, buy the deep out of the money put for the end of the year. And he's right. Like, why aren't we doing that? The carry trade's back. The new Japanese prime minister. This is why this was such a roller coaster. Okay. Last week, straw polls, round one of the voting. This woman wins, who says, this woman wins, that says, we shouldn't let the BOJ hike anymore. They've done too much. And so the yen dunks. And then the gentleman who ultimately does win, Ashiba, says the BOJs can do whatever they want. I'm not going to interfere. The yen rallies. Last night, he says that the BOJ should not hike anymore. So the leading political figure of the country is now saying the BOJ, you can't do your job. You don't have any independence. First off, no independence for a central bank, bad for the currency, first and foremost. I'm not saying Japan's losing their central bank independence, but the fact that the politicians are so willing to speak out against it. He's been in office for 48 hours, and some of his first public remarks are against Japanese rate hikes. Yeah, the BOJ isn't hiking anytime soon. Okay. If we are having reflation from the Fed, reflation from China, and a BOJ that's scared of its own shadow now, this thing is let's go back onto the roller coaster ride. We're going to have to lever this thing back up, and we're going to see how much pain the BOJ can tolerate. So, yeah, I think this is a new part of the story, Jamal. 0064 is back in play, at least as far as I'm concerned.
Aside from this, though, I mean, how about the dollar, right? Like you said, you're talking about this bottoming out process. It's barely been 4 days in a row. We've seen continued dollar strength, which has been great because, like I said, I've been long dollar. Actually, I took the position off today because I was up 60%. And again, I mean, I try to do everything tasty style in this account. And so I was going to close it at 50. I kind of fell asleep at the wheel yesterday, wasn't paying much attention, and was up 60%. Time to close the position. But it's been you know, a long ride here in the last couple of days. It really had this sort of, you know, we looked at it, right? We were looking at kind of the dollar, like you said, kind of being bought overnight, even though it was still somewhat on lows, but it finally looked like it took a real bounce here. And it looks like it might have more room to go. So I'm not going to fade it just yet, but nice move by the dollar.
Euro basically at support in a 2-month range, Jamal. We've been playing with an iron condor here in the euro, which is now finally working a little bit better. There's only 36 days to expiration, and the trade has just gotten back to break even.
Yep.
Because in part the trade was put on middle of September, right near the recent lows. So in either event now, just kind of hoping for prices to sit here or fade a little bit more. But if we do turn here, all of a sudden you have a double top in play in the euro, where if it's 112.5 against a 110.5, 200 points to the downside brings you about to 108.5. And directionally, it looks like that we can start selling call spreads a little bit more aggressively, perhaps against the 1 month moving average. Maybe we'll call it 111, 111.5, and begin to roll those down as we see the expanded vol and a directional move. Either way, though, the dollar looks like it's in a better position. If it's higher yields or not, the BOE is telling us aggressive rate cuts are now coming, and they were the last holdout. And when you get a 1% move in a currency, that tells you that something momentous has happened. That is a significant move for the currency markets on a single day. Calendar, tomorrow. Why is the BOE turning so aggressively dovish? Is it because their economy's in shambles? Maybe the construction PMI tomorrow morning will tell us about that. If you're holding the pound, it is the event risk to watch for overnight. Of course, if you're holding any financial assets, you're going to want to watch that jobs report tomorrow morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time. If you're looking for a preview of it, just go back to the first slides that will be in this deck under the spotlight section. It has the break even for the jobs market overall from the Atlanta Fed, as well as the forecast, consensus forecast from Bloomberg. Otherwise, we have a speech from one of the top Fed officials in the morning, right after the jobs report. So they're going to let us what we should be thinking and feeling about what they're doing moving forward very quickly. And then we'll have a Canadian PMI to round out the session. As it were, at the end of every one of these shows, we do a brief bit of education. Head to tastylive.com, top banner, learn beginner futures to find this coursework put together by the fine folks on the Tasty Live research team. Today, we're talking market participants, which you can read about here. There are producers, there are speculators, and as traders, we're facilitating liquidity needs between both. We talk about these positioning and these traders' habits with the COT report every single week and flag when there are opportunities. Like a few weeks ago, Jamal, when oil was trading below 68, and we said, hey, this is the least net long the market's been since December 2011. You should get some long crude delta. How's that played out? We'll watch those market participants for their behavior, and we'll see how we can apply them to our trading here on Futures Power Hour. But learn more, tastylive.com, top banner, learn beginner futures. Click the link here on the bottom of the slide. It takes you there directly. But don't bother reading right now, Jamal. You have to listen to Dr. Jim Schultz with From Theory to Practice. People need to then listen to you on Engineering the Trade. We still have a full afternoon of programming here on Tasty Live, so good luck to everyone. We'll see you later, right, folks?
You were right, Chris, and you were out.
Isn't it weird when you end awkward? I do it all the time. I'm like, ugh, that was weird.
How much does it cost you guys to do simultaneous hair flips? Years of practice.
Braden. Big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday edition, the post-water park edition of what it is that we are trying to do. Man, I appreciate you guys. Thank you guys so much for being here. It is only because of you all that we are able to do what we do. So thank you guys so much for all the support on the shows that we have, throughout the day and the live events and just all the things that we're doing, man. Thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube if it's live, if it's real time. If it is Thursday, October 3rd, maybe? I don't know. 3rd, give or take a couple of days. Right around Thursday, October 3rd, 2 o'clock Eastern time, you'll be able to communicate with your brethren that are also watching the show live in real time. And most importantly, you control all of my trades and all of my comments and all of my stories and jokes in real time. It is a good time had by most. But we are back. We had a great time at the water park, as my kids always do. They were very sad to leave. Lots of crying, lots of whining, lots of tears. But it was a really, really good time. I had a chance to kind of recharge just a little bit. And I'll tell you what, man, you go to the water park on a Monday, Tuesday, Wednesday, in the end of September, early October, when everybody else is in school, man, this is when the homeschoolers shine. We were basically the only people there. So it was absolutely amazing, but it feels so good to be back because it just felt so not right to not have a show with you, especially while the world was apparently falling apart and then being rebuilt and then falling apart again and then being rebuilt again. And this all comes on the precipice of, guys, tomorrow morning at 8:30 a.m., This isn't any old NFP number. This isn't some little rinky-dink economic print that doesn't matter. This isn't some little, rinky-dink, payrolls number that's not going to have an impact on, the financial markets and your personal financial well-being. No. This is the most important NFP print of our lifetimes. We'll never have a more important NFP print than the one that's coming on down the chutes tomorrow morning at 8:30 Eastern time. So I would use this time to say goodbye to the people you need to say goodbye to, say I love you to the people you need to say I love you to, and get all of your affairs in order because there is still a little bit of time. But let's go ahead. Let's pop in here. Speaking of a little bit of time, man, what's going on in the old market? All right, E-mini S&P is down 16 on the day. And so got a little red on the screen. Got the risk-free instrument, also known as the NASDAQ Futures, extraordinarily high-risk product, down 39. Got the boomers down 244. And then you've got the Russell 2000 futures index down 20 on the day. And so a good amount of red on the screen. Got volatility futures up 68 cents. And then we've got the spot volatility, the cash index, as they say. I got the old VIX up $1.35 at 2025. So, man, I leave town for a few days, and y'all just take the VIX from, 17 to 20 in just 72 hours. Well done on your parts. Well done indeed. And so you've got market down, volatility up. That makes sense. And so what we're going to do today is, we need to comb the streets and take a look at what's going on in the portfolio, because we've obviously left it, kind of on the side of the road there for a few days. So let's take a look and see what's going on. Obviously, we're going to talk about our 111 trade, which is kind of the, it's the hero. It is the, the protagonist of the whole portfolio. And then we'll go through whatever else is going on there in the portfolio. And of course, I'm going to get to y'all's questions. I'm going to get to y'all's questions on the day, see where you guys are at, see how you guys are faring out there in the ether. I see organic farming in the house. I see Kimberly in the house. I see Clarence in the house. Grumpy Mike, Brandon H, Sergio's in the house. Man, look at you guys. I see Rob Banks. I see Paul's in the house, and I appreciate you guys so much. All right, so let's go ahead and, let's just go top down. I want to do the 111 because it's been so much fun and it's been so interesting to do something different, to do something new. And, everything about this trade was new. We got in at 21 instead of getting out at 21. That's obviously quite new. And then the strategy itself, the 111 nature of it, is not something we've done before. And so it's been really, really interesting to kind of, watch this thing kind of unfold, over the days, and now I guess over the weeks. We've had the trade on now for a couple of weeks. But let's go ahead and do MCL first because it's right there. We'll go top down. We'll keep it simple, keep it kind of buttoned up, and then we'll get to MES. That'll be next. That's on deck right now. So MCL, you got oil up $3 today. And so, whatever story needs to be attached to this price move, this could be, maybe it's a supply issue, maybe it's Middle Eastern tensions. It could be a million different things. But right now you have oil up $3 on the day, up to 72.75. That's a pretty big move. That's a sizable little move there on the day. Now we are sitting on a 65.71 strangle. And we're in November with 43 days to go. Looking at this trade, I'm like, all right, we should probably do a little something. We should probably make some kind of adjustment to the risk on the trade. And it seems to me, so we have a strangle on. When you have a strangle on, your go-to adjustments, kind of your 1-2 punch when it comes to, making some type of adjustment on the position, kind of managing the risk. It's going to be A, rolling out, or B, rolling the untested side. Those are going to be the two things that you would typically do. Now, if you've seen the show before, that sometimes I'm a little bit, how do they say, patient? I'm a little bit, how might they say, disobedient when it comes to the Tom Sosnoff approved adjustment protocols, where I'm kind of like, okay, we could do X, or maybe, again, we're just talking here, nobody's signing on the dotted line. We could consider doing Y. We could consider doing this other option that might involve doing a whole lot of nothing and exercising a wee bit of patience. A lot of times I do that. Right here, you could make the case that makes sense. I don't necessarily love that move, though, simply because, we've gone a little bit beyond the 71 strike. And not to mention, you're looking at an IV rank of 116 in oil. So this isn't your grandmother's oil market. Right, this isn't your great uncle's, oil trade. This is some 2024 oil right here, with oil at $70 a barrel, which is basically where it's been for the last, 30 to 40 years. And so when we look at this strategy, I'm like, man, I think we just roll the put up. We find a strike to kind of cozy up against, and we reduce our risk a little bit, bring in some more credit, and kind of improve the break even. So let's go in here. We go into the trade page. I'm not going to roll it out again because I'm already in a cycle with 43 days to go. I don't really want to push this guy out to, I'd have to push it out to December with 74 days to go. That's a whole different contract. Now we're trading the January contract, it looks like. I kind of want to stay in this December contract cycle, November expiration cycle. And what I mean by that, of course, is, the expiration is November, which you see right here. But the contract cycle is Z, which is right there, which is going to be December, which is right up over here. And so if you're brand new to the show, or you're brand new to trading, or you're, maybe new to futures options, this is one of the things you always kind of have to have your eye on in terms of, you have the expiration cycle, but which contract is that expiration cycle actually tied to? It will tell you, it will show you right there in the quote itself, in the ticker symbol, but you just have to, have to be kind of aware of what's going on. So all right, so let's go ahead. Let's go into November with 43 days to go, and I think we're just gonna keep this really, really simple. We got the 65 put. I mean, you still have $1.40 in credit there in the 65 put, which is a pretty significant amount of credit. But I'm like, all right, we've got the 71 call, which you see right here. All right, so this is my call strike. I would rather not roll this guy all the way up to a straddle. We could potentially. I'm not going to go inverted. We're not nearly at that point yet. But I'm like, all right, what type of adjustment do I want to make here? Generally speaking, again, if you've seen the show before, you know this is the case. If you haven't seen the show before, this will be the first time that you're hearing this about me and the way that I approach the markets and the way that I like to trade and the way that I like to make my adjustments. I really, 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 really place a premium on the distance, the real estate between the short strikes on any neutral strategy. So this would be like a strangle. This would be like an iron condor. Those are going to be the two most popular ones that you see us use here on the network. There's a tremendous amount of value that is found in keeping that distance as wide as you possibly can. Now, sometimes you can't keep it as wide as you possibly can, like right now being the case. It's like, yeah, I could stay at the 65 strike, and I think that's fine. I don't think there's necessarily anything wrong with that per se. But I'm like, all right, we've already gotten a couple points outside of the 71 call. Let's go ahead and roll that put up. So I've kind of let go of the idea of maintaining the width that I currently have. But that being said, I'm like, all right, let's kind of inch forward. Let's just kind of gradually make this adjustment to maintain some kind of distance between the short strikes, because that distance is so valuable. It's basically, St. Pete Beach, beachfront property, which isn't quite what it was as of, a week or maybe 10 days ago. And so let's go ahead and let's roll up the 65 put. I'm kind of thinking, man, let's just roll this thing up to like a 69. Because if I roll this guy up to a 69, I'm not even looking at deltas. I'm not even looking at directional risk. We're just doing this caveman style. This is like some 2014 stuff. We're just going from the 65 to the 69. It looks like I can pick up about $1.20 in credit, so that will kind of work to improve my break-even point, specifically to the upside, because that's the way that the stock and the way that oil is going right now. And it will still leave me just a wee little bit of distance between my short strikes at 69 and 71. So let's go ahead, let's roll up my 65 strike. I'll buy back my 65. I'll sell out at 69. Yeah, I get $1.26 for this. And the nice thing about oil, or at least MCL I should say, is the multiplier is the same as what you have with equity options. It's going to be, $1 per penny in terms of the actual economic total on the maximum profit, 366. What? That doesn't make any sense. Hold on a second. So let's go ahead and, it might be because I still have the call in. Yeah, it's weird. I don't know. Yeah, futures options. Sometimes making the leap, making the jump from, looking at a trade bar with equity options to looking at a trade bar and futures options, it's not a one-for-one mapping. It's just clearly happening to me right now live on the show. Like, there's no takebacks. Like, this is actually happening. We can't go back in time. But when we look at this, it's like, we've already learned that like deltas do some things that are a little bit different, and some other things do some things that are a little bit different. Like right now, looking at max profits, I'm like, my max profit is 366. I don't know about that. But the $1.25 credit, I do feel pretty good about that. So let's go with that. Let's hang our hat on something here that has a wee bit of familiarity to it. And let's do this, because I want to get to some other things. And of course, I want to get to y'all, man. It's been a few days, and we got to get back in the saddle. So let's go ahead. We're buying back 65. We're selling out 69. We're going to have a new strangle on. It's going to feel like the same old strangle we've had on in a lot of ways, but it'll be all right. So we go down to $1.23. All right, so we got filled at $1.23. So what I'm going to do now, just to kind of tie this off with a bow, let me go into my chains here, and this will help. Okay, yeah, so here we go. So now this is kind of what I really wanted to see. And so forget about what the trade bar showed a second ago, because it doesn't really matter. All that really matters are the chains, right? All that really matters is, are you listening to Rooster? Are you listening to Wood? Are you listening to I Stay Away? Like, those are obviously going to be your 1, 2, 3. There's just no debate over that. But once we get beyond that point, now what are you looking at from a P&L standpoint? Like, what are you looking at from a mark standpoint? Yeah, we're down a couple $100. That makes sense. because this trade hasn't really worked. It makes sense. We've made some adjustments. We've kind of gone through some different things. It makes sense to be down on the position. So that's what we're up against right now. We need oil down a couple bucks, and that would be super nice. All right, so that's MCL. Let's go into MES. Man, I'm not going to get through all these. There's no way. We're almost halfway through the show, guys. It's so fast. You have no idea how fast it is, and it's way faster when you've been out for a few days and you're back in the mix. It's like, man, got myself on 1.75x, and this is just my normal setting. But if we go into MES, so this is our 111 trade. So let's talk about this for a couple of minutes, and this may be the only thing that we can do today, and then we'll get to y'all and your questions and see where you guys are at. But look at this. So you've got MES down 18 today, still hanging around where it was when we started the show. But if you look at, this is interesting, in for a credit, out for a credit, that can sometimes happen on ratio spreads. So that's not super surprising, but it can happen sometimes, especially if you, well, actually, no. I mean, this is kind of what we would be banking on. This is kind of what we would be going for by holding the MES closer to expiration, which is exactly what we're doing with the 111 trade, because of the spirit and the goal and the intention of the trade, was to not manage this guy early because I didn't collect very much on entry. It was to hold the trade potentially for a very long time into expiration week and not tell Tom about any of this in terms of what's happening right here and right now. But if we look at MES, so I put this on right before vacation. So this would be the Friday of last week or whatever. We had an opportunity to basically, we were in a similar spot to where we are now, but I think MES was higher than it was, than it is right now, I should say. So I decided, I was like, I'm not going to take off the put, because if you guys remember, let me go ahead and delete this. If you look at what I've had my eye on since we put this trade on, is I'm like, all right, how am I going to manage this? What am I looking for? Like, what is my objective here? The first one that made a lot of sense to me, and it still does, is can I take off my 55.75 put, which is essentially all the risk in the trade? Can I take this guy off for less than I put the trade on for? So I put the trade on for $7.85. The 55.75 put is currently marking at $16. Now, remember, on Friday of last week, right before I was out for a few days, it was marking at like $11 or maybe $10.50 or something like that. And so it was a situation where I was kind of back and forth. I kind of wrestled with the idea of, man, what if we just take this guy off and just have a $3, I should say 3-point debit on this MES 111? Like, that's not too bad. Like 3 points for a 75-point wide vertical. So we were able to kind of take a lot of risk off the table in the overall sense of the trade. I was like, all right, it's interesting, it's a possibility, but I decided not to do it. I decided let's just leg this guy out, let's just keep it going. And I'm kind of glad that I did, only because now we get to learn so much more together. Like, even if this thing gets completely clobbered, even if we get absolutely just lambasted on this strategy, it's okay. It's a test pancake, right? It's okay. It was meant to be a guinea pig the entire time. And so right now, I'm not going to take off the put, obviously, now, because I would be out like 8.5 or 9 points on taking off that put. That doesn't really make a lot of sense. So right now, I'm just going to do nothing. Right? I'm not going to look to roll it, because I don't want to roll it out in time. Like, I could probably roll this whole strategy for a credit, I would imagine. Like, there's no way I can't roll this for a credit. Let's see if we can do it, just to kind of prove to you guys this has to be a credit. Maybe you can't roll the, hold on. Here we go. So, okay. So let's see here. If I go to roll the extra put, that's going to be a significant credit. So if I roll this guy out, now I got to be careful that I don't roll it out too far, and I'm dealing with, again, you've got futures options, and you've got, different contracts that they're tracking to and things like that. So I want to make sure I'm not doing that. But just look, if I rolled October 31st, let me just hang on there for a second. I could pick up a $32, 32-point credit, right? The multiplier with MES is $5. But I pick up 32 points if I kick out the put from where it is now to Halloween, to October 31st, 28 days. Okay. Now look at the spread. It's probably going to be something, probably not as much, but maybe a little bit of a debit. Yeah. Okay. So we're paying $1.35 in points to roll that guy out. And that makes sense. When you think about long vertical spreads, it very oftentimes costs money to roll those out, especially when that vertical spread is not quite working, which right now this one is not really working in the sense that we would typically, kind of interpret the word working, which would be, working. It's not really doing that. And so if you look at this, net, I mean, I'm picking up, man, what am I picking up there? I'm picking up, I don't know, 36 points right? 38 on the extra short put, and then you give up 2 on the vertical spread, you're plus 36. It's like, man, that's like 5x of what I picked up on trade entry. And so that's interesting. That's a possibility, but that completely goes against what I'm trying to do here. Like, I'm not looking to reset the clock. I was looking to get closer to expiration. I'm looking to take this thing closer to the finish line because that's when the potential of the vertical spread is just so much greater. That's when the potential of what you can bring in on that vertical spread is just so increased over what it would have been, if you still had, 3 weeks, 4 weeks, 5 weeks left in the strategy or whatever. So right now, and this also, by the way, kind of highlights why my eye is on this extra put. Like, when can I take off all this risk? That would just be so nice because then I'll just have a vertical spread on that paid for itself. I don't have to worry about it. And now we're close to expiration. So I get the best of all worlds at that point. Like, I've got, strategy that paid for itself and I can keep it on all the way to expiration, which is when it's going to potentially be worth the most amount of money. That's what I want. That's kind of the goal of the strategy, at least right now. And so that's kind of what I'm looking at here for MES. At least the 111. The strangle, it's just a boring run-of-the-mill Betty Crocker strangle. There's nothing super special about that guy. We're not going to do anything with that right now. Still 43 days to go. But the 111, I'm not going to do anything, but there's a little bit of commentary related to what has happened, kind of what's happening next. And then, of course, tomorrow with the most important FP print of our lifetimes, this is likely going to change significantly one way or another. So, all right, so let's go into, man, let me see where you guys are at. Man, look at you guys. I see you guys in the chat. Man, I see Harold hopping in late. I see Anka hopping in late. Look at my underachievers today. Usually my overachievers have now become underachievers. Man, markets move and things change. That's all I can say about that. But look at you guys. Paul's in the house. Says good afternoon to all. What's going on there, Paul? I appreciate you, my friend. Thank you for being here. You are a staple of the show, and I just appreciate you, my friend. Rob Banks says, good day, Dr. J. What's going on there, Rob Banks? Man, I appreciate you so much. Thank you for being here. I appreciate you, Rob. I don't remember you popping in the chat before. It doesn't mean that you haven't. That just means I don't remember it. And so, man, if I can ever help you in any way, man, pop it in the chat, whatever you want to do. Drop it in the chat. Hit me an email, shoot me on an email. Hit me up on social media if you want to. And, man, I'll help you in any way that I possibly can. Oh, Harold, look at Harold on the top of the chat and the bottom of the chat. Man, Harold's a super overachiever. And I kind of threw you under the bus there, Harold, but no, you're looking good. It says, how was the trip? Is your home still a home? Are you watching baseball? That's a lot of questions. The trip was amazing. The kids had a really, really great time. And, it was one of those deals where, I've got Penelope, I've got Eli, and I've got Amelia. Penelope's 9, almost 10. Eli is 7, and Amelia is 4.5. And so of the three, I mean, Amelia is the most adventurous by far, but she's only 4.5, so she can't do as much in terms of like you have to be so tall to do whatever. Eli is getting pretty adventurous too. He didn't always used to be that way, but Penelope is the most reserved. Penelope, she really has to warm up to certain things, and she's like, I'm not doing that. I'm not doing that. I'm not doing that. Well, they've got the bigger slides there, which are super fun. And so I'm on the bigger slides with Eli because he's not quite at the height requirement yet, but they let it slide, which is pretty cool. I mean, he's only off by like 11 or 12 inches. It's not a big deal. And so anyway, so I'm doing the slides with Eli, and it's super fun. And I'm trying to warm Penelope up to it, but she's kind of resistant. I mean, she's doing a bunch of other stuff and having a ton of fun. But then like the last day, so yesterday, she like midway through the day, she's like, I'm gonna do one of the big slides. I said, that's amazing. So I go up there with her, we do the big slide, and of course everybody knows what happens next. Dad, it was the greatest thing I've ever done in my life. I never want to stop doing this. Like, it's unbelievable. So we had to go up there and do it 8, 10, 15 more times, which is great. I mean, I was having a lot of fun and all that kind of stuff, but it makes it more sad for her because then it's like, the trip's almost over. I should have done this at the beginning and all that kind of stuff. So anyway, that was kind of hard, but it was good. And so, and then, is your home still home? Yes. Very thankful. The Lord protected us, man. And he's protected so many people, obviously, throughout this situation. And we're just very thankful that our home is totally okay. We a couple palm trees down in the front yard, and like a couple fence things came down, but not like panels. Like, it just was not a big deal. And so very thankful, very, very thankful that we were able to dodge most of it. And are you watching baseball? No, man, baseball season ended about a week and a half ago. So I'm not even sure why you would still be watching baseball at this point, because, we finished 500, 81, right on the nose. Baseball season is over, my friend. But Kimberly's in the house, says NDX incoming pullback with some numbers. man, let's go. I don't know. Incoming pullback. There's already been a bunch of pullbacks. This would be a pullback on the pullback. And so, which would be a rally, I think. But I appreciate you there, Kimberly. Thank you for being here. Thank you for sharing your trade ideas with us. We appreciate that very much. Let's see. Sergio says, hey, Dr. Jim, I hope you and your family are well, man. We're doing great. We're doing super great. I appreciate you for being here, my friend. Clarence in the house. Welcome back, Dr. J. What's going on there, Clarence? I appreciate you, my friend. Thank you for being here. Oh, and by the way, I'm super excited to be in Chicago on Monday. And so Monday is an interesting day because obviously I've got the Skinny with Tom and Tony. I've got my show at 2 o'clock. The show you're watching right now, actually. I have to figure out the timing of it with like traffic going down to the Tampa airport and stuff like that. But most likely I'm going to be able to do the show, but I think I'm going to have to end like 5 or 10 minutes early. And you guys are going to have to hold me to that because if I go all the way to like full time and then even if everything is ready to go, it takes me a couple of minutes to like shut it down. I have like post show duties, those kinds of things. Like I'm not going to be on the road until 3. And then it's a little bit dicey because my flight leaves at 4:45. And that's a little tight. I mean, it takes me, 25 minutes with no traffic to get to the Tampa airport. 3 o'clock might have a little traffic, so we might have to end the show like 10 minutes early maybe, just to give me a wee little bit more time. But I'll be in Chicago on Monday night, and then Tuesday we'll do the show from Chicago, and then Wednesday I'm doing Live Bash, and then of course I'll do today's assignment with Errol from Chicago as well. And then I'm headed back here Wednesday night because Thursday is my 15-year anniversary with Autumn. So I'm super excited. It's going to be amazing. I'm going to let her get the extra large guacamole on Thursday. It's going to be amazing. She's excited. I can assure you of that. So Kimberly says, when I say that 19663 is the top, I mean that anything above that number is froth and will come down. Love myself a good little froth. And so appreciate you there, Kimberly. It's 19663. Talking about the NASDAQ? Because right now it's 19.9. Okay, interesting. Oh, you're saying anything above? So right now it's froth. Okay, yeah, it could be. It absolutely could be. I mean, according to the internet, man, like the end is. I mean, we're past the point of no return. We're past the expiration date. Like we're not coming back from this. Like the apocalypse is underway, and this is gonna be the end. Grumpy Mike says, "Wow, Jim is back. Water park. I thought you were at Starbucks. Man, we did all of it. No, we did all of it. We did the Starbucks at the water park. Man, we supersetted the two together." It's like a set of like concentric circles. One was inside the other, so it was perfect. We did Starbucks at the water park, and it was great. Brandon H in the house. Hey, Dr. Jim, happy Thursday, man. What's going on? Do you ever do any zero DTE strategies in your daily life? Man, I love you, dude. Man, I love you too, man. Like I like the bromance. I feel it. It's strong between you and me. You've been watching the show for a long time. I remember you, Brandon H, being in the chat like from a couple of years ago at least. So I appreciate you, man. And the bromance it's flourishing. Glad you got some water park action. Yes, it was amazing. It was such a good time. And I call them zero DTE, but it's because of the timing of the show, right? Like, we come on at 2 o'clock Eastern, 1 o'clock Central, 2 hours to go before, the market closes. I'm not going to do a zero DTE at that time. I know that for some people, there are some popular like Iron Condor and Iron Fly strategies for like the final hour and the final 30 minutes. And, you got some Shooter McGavins on the internets, doing the final 5 minutes, like selling Iron Condors or sell straddles or whatever they're doing. I'm like, all right, that's probably, beyond, the scope of what I want to do. But I do like to partake in some 1 DTE. So I'll put a trade, like I'm not going to do it today. I probably should though. For NFP, I mean, we're back. I mean, man, we got to do something. Yeah, so I'll even show you, Brandon H, which you've been watching the show. But we'll go ahead, man. Let's go in SPX. I mean, I'll smell any smoke in the studio. I'll smell any ash. I'll smell any flames. I mean, you don't want to smell flames. Or maybe they got a little something to them. Man, it's been a minute since, we've gone ahead and eviscerated a stack of cash. So let's go in here to SPX. The problem is I don't even know, which way is the market going to go? I mean, do you guys know? Because I don't know. I mean, you got it down. It's like, everything is like, I don't know. Everything is gloom and doom. I mean, the doomers are just, man, they're all over the internet. I think we're going higher tomorrow. I think everybody's kind of assuming it's going to be lower. So I think we're going higher tomorrow, which means, of course, you should play it lower. But I don't know, Brandon H. What if we did, again, we're just, it's just a very informal conversation. What if I do a 57.15? Actually, we'll do 57.25, 57.50, 57.75. Can I get out for under $4? $2.95. Man, they're just giving these away. Look at this thing, man. $3 for a 25-point wide SPX 0 DTE bar. It's a 1 DTE butterfly, but it's basically a 0 DTE. And what if I widen it out just a titch, though? What if I do a 20, 50, 80? Is that going to be like 450? Yeah, 445. You know, we're a little bit rusty on these. Not that we were ever any good when we weren't rusty, but I don't know if I want to go 445, although having the wider wings is so nice because you just have, it's just so much easier to manage. It's tough. I'm gonna be a little responsible today. So I know Grumpy Mike, Wild Jim's back, not quite yet, but tune in tomorrow because we'll probably be closer to that. I think for right now we're gonna be a wee little bit responsible, and we're gonna do a 57.25, 57.50, 57.75. We're right on the top side of the expected move. I'm playing NFP to the upside, which basically assures the apocalypse will be coming tomorrow. So I would get your affairs in order today. I would make that difficult phone call. I would hug your children tonight before you put them down and sing them a song. I would do all those things because it looks like we are indeed foreshadowing the end of the end. And so $3.10 on the debit, $3.15. It's like, whatever at this point. I think we'd do it, Brandon H. So this is what I do for 0 DT. This is my version of it. Fill the 315 immediately. By the way, I might add, and so I'm not sure exactly what that means, but yeah, we are in, and we're doing it, and that is that. So that's about it there, Brandon H. But I appreciate you, my friend. Organic Farming says Water Park for the win. Yes, got a fun little spot here in. It's right outside of Orlando. It's in Winter Park, which is very near Orlando. I mean, in Florida, they've kind of put all the things together. Like it's all in the same area, like your Disneys, your Legolands, your Universals. We go to this little spot called the Grove, which is really awesome. They do a really nice job there. I mean, they kind of nickel and dime you on like, laundry detergent and like those kinds of things. But hey, it's like, they got to make some money. Like I understand. And so, but it's nice. I mean, the rooms are always nice and the amenities are fine other than the fact that, you got to bring your own laundry soap. You got to bring your own dish soap. You got to bring your own, dish towels. You got to bring your own, regular towels. You gotta bring your own like TVs and stuff, but other than that, it's fine. I mean, it's pretty good. And so, but the water parks are great. Like the pools and the slides and stuff is really, really awesome. Now, if you have like older kids, or even like 8, 9, 10 that are like super mega pint adventurous, it's probably not gonna be enough for you. Like they're gonna be they might get kind of bored. Like it's not gonna have the crazy things that like a Legoland or a Disney might have. And so just be aware of that. But if you're ever, if you're visiting Florida, or for my fellow Floridians that might live here, it's a fun little spot. It's definitely a fun little spot. And so let's see. Paul Heyman's in the house. How was Volcano Bay with Anton? Man, I don't know anything about Volcano Bay. Volcano Bay, I should say. I don't know anything about that, but I'm sure Anton's crushing it. Grumpy Mike says he's never been to a water park. Water is scary, man. You're missing out. I'm telling you, man, you are absolutely missing out. Brandon H, riding the wave. That's right. Rob Banks says, I'm selling puts on XOP. There you go. XOP's got to be just crushing it. Speaking of crushing it. Wow, $4 today. Man, this is the time to sell calls, right? I don't know. Is it? I go into the chart here, man. Look at this. Let's do it's a 1-day chart. Yeah. I mean, you're looking at XOP. Wow, this thing was up to, back in April, it was up to 162. And I thought 140 was high. I think I'm mixing this. I'm mixing up XOP with XOM. XOM. Let me go into XOM. Yeah. Let's do XOM, which is ExxonMobil, of course. Yeah, 120. I was like, ExxonMobil is around 100 or so. So when I saw 140, I was like, wow, this thing's up to 140. I was thinking of XOM, but it's actually XOP. I'll tell you what, there that came in for Rob Banks. Yeah. Here's the beautiful thing about selling puts, which I'm going to talk about at Live Bash next week, talking about how selling puts is my favorite strategy. This is basically a knockoff of our Where's Bet tour. Tom wants to digitalize. He's looking for digitalization. He's looking for something where you're able to watch watch this thing again. Whereas the where's bat is like, it's a one and done. It's a musket, right? You shoot it, it's over, it's done. And then that's going to be that. And so I am actually talking about short puts next week for Live Bash. And then I'll do it again, of course, in Phoenix when we're there in December. And I'll tell you what there, Rob Banks. I mean, it's, the great thing about the short put is you don't have to be directionally correct. Yeah, sure, it helps if the market rallies, like you're going to get paid really quickly. You take it off, it's great, everybody's happy, you move on, and no one gets hurt. But even if the market goes down or the market goes nowhere, the strategy is still so effective because A, you obviously have the built-in buffer with the out-of-the-money distance and the out-of-the-money ness between where the stock price is and wherever your strike price is that you select. But you also have, just kind of time working for you. You have, volatility contraction working for you. You have a ton of adjustment opportunities that are available, at your disposal. And so it's just a lot of things that you can do. And so I like it, Rob Banks, whether it be an XOP, XOM. I mean, yeah, man, I think you'll be fine with a short put. Let's see, organic farming. They can be a lot of fun. Just don't forget your sunscreen. Yes, we wear tons of sunscreen. Although I'm kind of a non-sunscreen guy for just a tiny little bit. I want to get the sun rays on my body for like 10 or 15 minutes. I actually think it's really good for you. I don't want to overdo it. I'm not looking to go crazy. I'm not looking to like burn and then tan from that and all that garbage. But it's like, man, 10, 15 minutes, just get you a little vitamin D. Get you a little vitamin, D plus, which is better than vitamin D, I think. And so, yeah, but we definitely, we cake it on there, organic farming, 100%. And so let's see, Brandon H. Water Park would create a grumpier Mike. I'm not sure that's possible. He's kind of maxed it out, I think. Sergio says, glad to hear you had a great time with the family. Yes, thank you, my friend. I appreciate you. We had a really, really great time. And yes, the kids had a great time. Wife even had a good time. I even had a good time. It was pretty much a clean sweep. And so let's see. Kimberly's giving us some VIX numbers. And then she says, there it is. Oh, apparently did the VIX number already come in for you? Wow, that'd be great. And then Alexander says, are you also max bidding the NQ? I'm not sure if you're asking me or Kimberly, but I'm certainly not. So Kimberly might be. But David C. says, happy Thursday. Man, I appreciate you there, David C. Thank you so much. And so, Kimberly says XLP 140.90. Where's this thing again? Okay, so we're about $1 off from where Kimberly's pullback she's looking for. Enjoy the micro lull before the advance. There you go, some XOP stats. The reverse XOP. Reverse XOP? Is that a thing? Is that like a risk reversal, but just with XOP? Interesting. 170.73 for all you who are shorts. But watch out, because before you know it, the elevator ride is heading up. Isn't it supposed to be stairs up, elevator down? Or does it depend on the stock? It probably should depend on the stock. That would make sense. And so let's see. Oh, and then Kimberly says 170 will happen next month or sooner. Right. So it could be anytime, actually, for it to happen. Which makes sense, Kimberly. I agree with you 100%. It could be anytime. So Dave S. Let's see. Where's Dave S. I missed him. There he is. Dave S. There is barely any volume in MCL. So wouldn't this be much harder to trade than a stock like MRO, which is Marathon, or other gas and oil companies? Man, that's a good question. I don't typically look at volume metrics of like MCL. Yeah, like you see there's 111,000 contracts traded today. If you look at the big dog, CL, it's probably a lot more than that. Oh, only 403,000. See, that's interesting. That's really interesting. So CL and even MCL, I mean, we just did it a couple minutes ago. But CL, very liquid. Like, you're not going to have really any problems getting fills in CL. Now, the options I'm talking about the actual outright. It's very, very liquid. Not a problem at all getting fills. Now, the actual options on the futures, I'm not exactly sure. And from the standpoint of, which is, I guess that's what we should be focused on, because that's what we did in MCL. But whenever I think of MCL, so focusing strictly on options on futures now, I don't typically have a difficult time getting filled in there. Now, MRO, yes, we could look at, liquidity stars and, you've got what is MCL? So MCL is 4 stars, or CL is 4 stars. MCL, is it just going to be CML? Okay, so MCL is only 2 stars. Right, but that's with the futures options, the liquidity stars. I think you need more information, because if you go to like NQ, that also has 2 stars, right? The NQ outrights are incredibly liquid. So that's not really a fair representation of the actual liquidity. Now, MRO, man, it's been a while. So MRO only has 2 stars. It's a $28 stock. Yes, it has 3 million shares traded today, which is right up here, which is the number I'm looking at. And if I go into the options, let me take a look and see what the markets look like. So you have earnings coming up on November 6th. And let's see. Yeah, see, this does not look that liquid to me. I mean, I'm looking at this, and I know that the stars, well, it was only 2 stars, but, you go into MRO, you've got the 28, you're at a $28 stock. You're 28 strike, right? You're looking at 9-10 cent wide markets. That's a pretty wide market, honestly. That market's got a little width to it. And so it's like, man, I would expect this to be a lot more narrow at $28. Like if I go into like, I don't know, man, like Bank of America, they got to be around 28, 38, same thing. So if you look at Bank of America, which is a higher price stock, so you would expect the spreads to be wider. If I go into November and you look at the, the at the money strike, which here you've got a $39 stock, I've got a 39 strike. You're 2 cents wide on both sides. So that's a liquid market. Now, again, we could be comparing, just, whatever to whatever. And it's like, we're already at 2 stars on MCL. So comparing a 2-star to a 4-star is not really a fair comparison. And I think that that's absolutely, a valid point. And so maybe MRO is a little bit more liquid than an MCL. But I don't typically have too many issues with MCL there, Dave. So I think you might be all right. And so Anka, Dr. Jim is back. Joined late. Yes, you will have 1 demerit on your account, but you can earn it back tomorrow if you get in early. And so let's see. Harold says you don't get the notifications. I got the ding this morning. Mason says live ads. Maybe before the show. And then Anka, let's see. I got the ding just fine. Not always on the show though, unless it's one of my favorites. I appreciate you, Anka. Look at you. I appreciate you, Anka. Now you're going to give me a crab that I can't do that with 30 seconds left in the show. That's right. And this time I actually can't hide behind the bell. But Anka says, and we're going to do one soon. I promise we are. I promise. I got Live Bash coming up. I got to get that out of the way. But between Live Bash and Phoenix, I got the crash course too. I'm recording the crash course this weekend. And so I got a lot of things coming on down the chutes in like the next 96 hours. But Anka says, I will try the Amazon crab trade again. There you go. You do it. You step out ahead into the fray ahead of us. Think of a call diagonal, October, November, 180, 190, plus a short call spread in October, 190, 200. This will cost about $8.30. October is before earnings, so you can adjust. There you go. And then Marky says, hey, bro, what's going on there, Marky? Anka, we're going to do it. We are going to do it. You have my word. We are absolutely going to do it. It's just I'm in a personal fast market right now. And so it's really difficult for me to do that right now. Like, obviously I can't do it now because the show's over. But even like tomorrow or even like next week, it's probably a little bit too early. I got to get through Live Bash. Let me get through Live Bash. And the crab trade is top of my list. We're going to make sure we get some of those done and kind of learn about those as we learn about these 1-1-1s. But I appreciate you guys. I got to run. I got to go. I got to get you guys to Jamal. But I appreciate you guys so much. Thank you guys for being here. It feels good to be back. I'm so thankful and humbled that so many of you guys watch the show. Not only my show, but all the shows on the network. So thank you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
%90 goes to S&P index funds.
You got to double your
10% straight to
Is 20th Century Advice driving your 21st century portfolio? Tasty Live has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other Tasty Live personalities will cover strategies that'll help you integrate futures and options in your portfolio. Sign up at tastylive.com/events and see where we're headed next.
What's going on, everybody? I maintain that this has been a strange market and things appear to be getting a little bit more unsettling. Obviously, we're seeing what's going on with oil and equity markets down a little bit as we see a little of the overseas actions creeping into our markets a little bit. And now you have, dollar, bonds, both down. A little uncertain about the Fed's rate path. We'll talk about what's going on there. NVIDIA, looking good, it would seem. Lots of interest in their chips, and they're partnering up with Accenture. We'll talk about that. And then finally, Amazon, well, they seem to be preparing for a very busy holiday season. Maybe you should be too. We'll talk about those three things and more. We'll take a look at the general risk that's coming ahead for tomorrow's non-farm payroll report and just analyze what we're seeing in equity markets. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Last night, I was watching baseball. It's an exciting time of year. For those who like sports, again, you got so many different, you got college football, you got NFL, you got baseball playoffs kicking off. You got the NBA starting up a little bit soon. You got NHL already doing preseason games. It is that time of the year, folks. I feel like it's, you could debate on what's more exciting this time of the year or around May, where there's all kinds of stuff going on, right? There's still NBA, it's playoffs, it's NHL playoffs. It's, there's usually some type of fight going on in the beginning of May, like boxing or something like that. Horse races are happening. That's another very exciting time. I maintain this one is equally as exciting. And last night I was watching the game between the Mets and Milwaukee, and it would seem as though that game was wrapped up. It seemed as though the Mets had them locked up, and then all of a sudden, guy from Milwaukee hits a home run out of nowhere, completely changed the game, completely changed that game. And that series, what's funny? They used to do, in those series, it used to be like a 1-game wild card. Now it's like a 3-game series. More games, more better, right? And of course, there's more betting. It's almost like they're really intertwined. But that one last night, Milwaukee was down, I think. And it was like what was it? It was, I think 3-3 game. And the Milwaukee was plus 1.5 on the points. And the over-under was 7.5. And I almost took the points and the over. And I literally had it queued up. It was plus 264. I almost put 100 down on it. Before I could even do it, bam, dude was hit a home run. It's 5-3. Well, now it's ruined, right? Nothing you can do now. 5-3, and they're bringing in their closer. Game's a wrap. You don't want to do anything there. What do you want to do? You want to hit the under at 9.5? Yeah, sure, but it wasn't even 9.5. I think it was like 8.5. I didn't want to do anything. I hate when that happens. You know what I mean? It's like, you missed something. You feel like that all the time when you miss trades. Speaking of trades, let's pull up the slides here and talk about what's going on in today's market. I got to tell you, I'm a little bit weirded out by the dollar being down and bonds both being down. Now, I should say, I'm sorry, by dollar rallying and bonds being down. It's a little bit weird to me. Now, I will say it gave me the opportunity to get out of my dollar trade, which I've been long the dollar for the last couple of weeks, as those of you know, for no other reason than the fact that dollar was on yearly lows. Why not? Why not try it? And that's been a good trade for me. It actually worked out really well. Close that out. We'll wait for another trade. On the one hand, you could look at, and again, I've been long the dollar by being long a euro put spread, so essentially short delta the euro, right? And on the other hand, you could be like, okay, maybe it's time to flip that trade and get long delta the euro. Not yet, and not in front of this number. I maintain it's been a strange market ever since 3 weeks ago. a little over 3 weeks ago when we changed rates. And, well, was that two? I mean, I'm sorry, maybe that was 2 weeks ago. What's the calendar? Oh, you know what? Why am I doing that? Let me look at the calendar. I'm losing track of days and times. Oh my God, where are we? I don't even know. Whenever the 18th was, right? Feels like the market has been sort of treading water, save for Tuesday. What we had a 2% down day in Nasdaq and 1 and change in S&P. Seems like the market has been trying to figure out what's next. When you look at bonds, gold, oil, et cetera, dollar, I mean, the gold has been the one constant here. Everything else really doesn't seem to make sense. And then you throw in this geopolitical stuff into the mix, and everything is all over the place. But I would say that, again, if we're not expecting many more rate cuts, or big ones anyway, you would expect dollar to move up. You would expect bonds to fade. But nevertheless, I don't think that's the environment we're in. I mean, the question is whether we're getting 25 or 50 basis point rate cut, not whether we're getting a rate cut at all. We are probably getting one. As a matter of fact, I got a chart for you later in the show that talks more about the rate cuts and shows the path we're on. And you're going to be really surprised by it, especially considering what it would look like a few months back. So we'll talk about more of that when we get there. But NVIDIA is apparently seeing high demand for their AI Blackwell chip, and they're also expanding their partnership with Accenture. They're training a lot of different people to use the scenario, they use their AI chips, and along with it's another thing that they're starting to do, right? They're starting to partner with more people. They already have partnerships with Amazon. They already have partnerships with a bunch of other different companies, and now they're adding Accenture to the mix and then upping that partnership. Point being is that the AI story doesn't seem to be going anywhere, folks. As a matter of fact, you might as well buckle in because it's here to stay. I will say it makes for a great trading vehicle, that NVIDIA. It really does. I mean, it seems to be that there's a floor in the stock at this point. Around a strong floor is 100. The teens, 115 to 118, also seems to be a floor in the stock as well. Just saying. I mean, just look at the trading action over the last several months, and you'll see what I'm talking about. It doesn't seem to be. It seems to have a ceiling for the time being. Somewhere around 125 to 127 has been the ceiling. It hasn't been able to hold anything above that, right? We haven't seen it hold 130s in a while. And I guess I'm just looking for different levels to sort of get in and play it and get out. When you seem to get to the one like in the 1 teens or whatever, I mean, I guess that's weird to say, but the 1 teens, seems like you can play to the upside. And it seems when it gets upwards of 127 to 128, you can kind of fade it until that doesn't work anymore. But that's kind of what I've been looking to do. And trying to find vol selling scenarios based off of that. Now, right now, I don't want to sell it because I just don't like to sell earnings in a name. But I guess really what I'm waiting for is the market to give me some type of sign. I mean, market down 18 on a day like this heading into a jobs report is really not a sign for me. I need more than that. And so I'm really kind of waiting on the other side of this jobs report to do a couple of things. Either A, get long because we've dropped pretty big, or B, nothing, because I don't think I'm going to fade the market anymore to the upside. I was short for the better part of 3 weeks, and I really couldn't get anything out of it. And I was able to sort of take some stuff off the table on Tuesday. And now I'm just, I did put a couple of positions on that I'll also talk about when we get to the platform too. But as of right now, I'm a little confused by this market. I really haven't been able to quite figure out. And as a result, it's caused me not to trade in the normal way I probably would. Finally, Amazon hiring 250,000 workers. This is the second year in a row that they've done it for seasonal workers, which means they expect a busy holiday season, and I guess that means you should too. Why does that mean? Well, you can tie that back to the economy. I guess they're expecting the economy to remain strong. And I guess there's really no reason it should be. We'll get an idea tomorrow when we hear this jobs report, but economy still seems to be fairly strong. And as a result, they're figuring, hey, we're just going to treat this like any other year. They're not slowing down hiring. So that's one of the barometers of jobs. The first barometer, I guess you can kind of pay attention to. They're not slowing down holiday hiring. And so that means they expect the economy to be strong. People to, spend, consumer spending still going to be up. When you think about GDP, I guess that's a pretty good thing, huh? I guess so. Leftovers. Americans are still opting for hotels when they travel. Let's move to the next slide. I was just looking at, going out of town soon, was just looking at whether to stay at a hotel or Airbnb. that's pretty much it when it comes to this list. Some of these other people, I don't know. But yeah, I mean, it's, a lot of times I would prefer maybe at Airbnb, but then sometimes you just don't see the right one. The pictures don't do it justice, or you don't know exactly the location. So you're like, I'm out. Like, for example, I was looking at one, and it was it was a room, but it was, it's like a room inside of a place. And, you have your own bathroom and all that. But, like, why? Like, no, I don't want to do that. I want to have my own place, bro. Not going to happen. This is the share of vacationers who booked the following accommodation types in the past 12 months. 52% hotels. Makes sense. Most people are geared towards hotels. You got your hotel points and all that, and so you want to keep that intact. And so it's like, kind of makes sense, right? Vacation apartment or house. Now, I mean, essentially, I'm guessing that's Airbnb. And that share has gone up a lot over the last several years, right? People, I think depending on the type of Airbnb, sometimes you'll choose to stay in one. I remember during the pandemic, 2020, we drove down to Florida, the Panhandle, and we got an unbelievably cheap Airbnb, really nice space, from a family of 5. It was like really big spot. Those just don't seem to be as easy to come by anymore as they used to be. You know what I mean? Like I said, I looked at one, staying in one recently, and I'm like, I passed on it. I couldn't do it. I mean, I don't want to stay in like somebody else's place in the side room. No thanks. Camping site, 16%. Not the kid, but I understand if some people want to do it, especially if you have an RV. You want to stay in a camping site, in your RV and solo. That's cool. Not me, though. Not going to do it. Cruise ship, I guess, is an option. I don't know. This one seems a little weird. A package holiday. So like sort of a group setting thing, I guess, I mean, where you're all bunched together. I'm going to do that for when is this? For spring break with a group of families. Huge place. We're going to all stay together. Should be fun, right? What could go wrong? So again, you could stay in your own RV along the side of the road somewhere as opposed to just a camping site, I guess. When I think of camping site, I think half the time people are staying in RVs or something, but you can stay in an RV if you own one. No thanks, though. And then finally, none of the above. I mean, some people just choose to stay with friends, I guess, and which is a whole different other animal. 14%, a little smaller. Me, I guess, is mostly hotels. Let's move to the next slide. So just looking at a little bit of the performances on the year, GLD, gold has been crushing it this year. It's been the number one asset. I mean, when you compare a lot of these other ones, I don't have diamonds on here, but they are not as high as SPYs or Qs or IWM. And this has been the first year in a while where you could see SPYs and Qs and IWM doing fairly well. I mean, this has been a really good year. I know a lot of people might not think so, but when you look at this, I don't know that I've ever, I think even in 2010, I can't remember if I saw a year like this where S&P 500, tech stocks, small caps, and something like gold is doing this well. Kind of strange. It really is. And it gets back to this correlation between bonds and gold. Again, we've seen a correlation across many years where long-term bonds and gold are doing well. And that's just not the case this year, believe it or not, even in a year where we're starting to raise rates. Go figure. Let's move to the next slide. So this is the metric we always look at of volatility. VIX minus historical vol, as they say, the vol risk premium, VRP, gives you an idea of how much you can harvest between implied vol and historical vol. And right now, it's shooting up, mostly because VIX is higher. I mean, even look at today, right? When you look at the front month VIX futures, 21 and change. When you look at actual VIX, where is actual VIX? Over 20. Right, and a lot of it has to do with heading into tomorrow, but some of it is election premium as well. So, truth is I really haven't seen many equity names that I want to sell. I'll show you the ones that I did. You're going to be a little flabbergasted, but I really haven't seen many equity names I want to sell, mostly because a lot of them have earnings coming up, and I don't like to sell earnings vol. But besides the fact, VIX is well above historical vol right now, as it should be, because there's a little bit of angst going on out there. Let's move to the next slide. 10 years minus 2 years. Of course, this thing is out of inversion territory. No sign of a recession yet. I mean, the consumer seems fine. 2/3 of consumer spending is GDP, and GDP seems to be good. Dollar's not really a hindrance like it was 2 years ago. bonds have been lying in the weeds, still waiting on them to move to the upside. Again, we're having a weak day here, but everything seems to be fairly good. We'll find out more tomorrow when it comes to the jobs report, but 22 basis points as of right now. That tends are trading over twos once again. That's pretty normal. I think on average, we usually see this thing upwards of 100 basis points. I was talking to Chris Vecchio today on Futures Power Hour about the idea of if it's time to get long tens and short twos. I actually think it might be. It might be. I tried to put on a trade earlier. I really wanted to get it at around 200 basis points. Maybe that's when I'll look again. I'll actually I can't set an alert, but I think I want to get in around 200 basis points to see if this thing will not get upwards of 75 basis points, and that would be a good area to get out. So I might do it. I think I might. Let's move to the next slide. Okay, so here's where things get a little interesting. As you can see, this is April 26th of this year. You can see where we were. This is the SOFR futures forward curve. This is essentially a backdoor way of looking at the effective rate on the Fed funds rate, right? So you take 100 minus the number, wherever the future is, then you get your effective rate, right? So we looked at this in April, and we were trying to guess when we were going to get a Fed cut, right? We were wondering if it was going to be sometime around September, November. It would seem at the time we felt like September would be the first cut. Little did we know, we were right. But September, another cut potentially in November. We were thinking, we didn't know. We didn't know what the size of the cuts were going to be. We didn't know when it was going to happen, but we were guesstimating and looking at this curve that September would be the time we would get it, and we did. And then there's November, December. As you can see, I have a big black line here drawn basically to where we are now, and I'll show you on the next slide. But this is, you can see we're basically expected to be the same effective rate for several consecutive months, which we were, and first cut in September. Now, let's move to the next slide. Just keep a remember on that, guys. Remember that. As you can see, it was right. This curve looks completely different now, right? Because rates were being held for at the same level for several months, and it were. We finally got the cut in September. As you can see, that's the case. Effective rate has changed, 4.74% now. October, obviously, there's no meeting. Of course, the purple are the Fed meetings. You can see November expected another cut, probably 50 basis points, at least as of right now. We'll see what ends up happening, but 4.27 effective rate expected, which would imply a 50 basis point cut, and then another 25 basis point cut potentially in December. And I guess you could say, I don't know. We'll see what January beholds. That's another Fed meeting. Nothing in Feb, and then March, 3.58%. We could effectively be at that rate come March. So, yeah, we're in a rate cutting cycle at this point. Will it hold, though, after that for some time through 2025 and 2026 is the real question, it would seem. As you can see, when you go all the way out to December 2026, it starts to be stagnant, kind of hold a little bit. We'll see what we end up getting. But looks like these futures can be right. Who knew? When you look back at April, it was forecasting a cut in September and November and December, and we might be on track for exactly that. Let's move to the last slide here. So we don't have any earnings. Doesn't really matter because the most important thing we got going on tomorrow is September non-farm payroll report, Friday, tomorrow morning, 7:30 a.m. Eastern, 8:30 Central. About a half hour after that, I will be on with Tom and Tony for This Week in Stocks to discuss everything that's happened this week. If you can say anything that's happened this week. I mean, outside of the geopolitical stuff, there really hasn't been much in equity markets, I would say. The FOMC meeting minutes from the previous meeting that we had in September will be coming out on Wednesday next week. Be there for that. And then we got another inflation report, CPI. September CPI report will be coming out on Thursday, October 10th. And then followed by that, PPI on Friday. Number of S&P 500 stocks above the 50-day moving average is 353. We lost 24 soldiers, folks. Shout out to them. Let's move to the platform. Dave S. Hey, Jamal. I hope all is well. What is your favorite strategy to trade, and in what do you trade this strategy? It's a good question. I can't say I have a favorite strategy that I employ all the time. It really depends. And this is something that I talk to people about who are, whether you're new to trading, whether you've been in it a while or not, it really depends on the environment you're in. You really have to analyze the environment. For those, I know there's a lot of people who figure, well, Jamal's probably favorite trading strategy is buying calendar call spreads. Yeah, it was at one point in time, because there was a lot of tech names that I was trading about a year and a half ago, and a lot of them had bid upside, and they were still moving higher. So what I would do is I would sell upside in one expiration, near-term expiration, and then I'd go further out and get long the same upside area. I don't think that works as well now because upside's not quite as bid at the moment anyways. It has been skewed to the upside at times, but not quite as much right now, I don't think, and so I don't trade that. Right now, I would say I don't necessarily have, I'm trying to look. Let's look across my positions. I don't necessarily have a favorite strategy. I approach everything as I look at the implied vol. I look, I look at the implied vol in it. Jeez, how am I doing this? Why? I look at the implied vol rank in something, and I decide how can I take advantage of this trade? How can I take advantage of this vol? Or maybe I'll just look at, I'll just have an idea for a position that I want to put on and say, this is how I want to do it. Like the Euro trade that I had on more recently, right? I was long a put spread in here, and it had nothing to do with the IVR. It had everything to do with the fact that the Euro was up here at these highs, and the dollar was down here near the lows that we've seen for most of the year. And I wanted to get long the dollar, and because I couldn't get long Dixie, I know Dixie and Euro trade exactly opposite, so I said, well, I'm going to get long the dollar, and I wanted it to be a situation that was going to take advantage of a long, like a big velocity move to the downside, which is essentially what we got, right? You look at these big moves over the last couple of days. That's what I wanted to do, and I knew the best way to do that was to get long the put spread. So it just really depends on what the implied vol rank is in something, sometimes, most times, or how I want to trade it and how I expect it to move, right? That's really what it boils down to. I don't necessarily have a specific one trade. So to that end, like today what I've done is right now, 125 IVR in oil. CL is a pretty big contract. I don't want to, this is normally why I would trade a strangle, by the way. When you have something over 90, 100 vol, best times to trade the strangle, in my opinion. I would trade the strangle in here, but this is, strangle in here is not cheap, right? If you just look at the strangle right there that I'm pricing up, 64.5, 83, $5,000. I didn't want to take up that much buying power. So instead, the next best thing for a strangle is to do the iron condor, right? And cap off your risk. I just rolled this put spread up. I was short the 63, 61. For those of you who follow my trades, you already know this. I was short the 63, 61. I rolled this up to the 66, 64, so I can still have $2 wide. And I figured since this has moved up, the price in oil has moved up, I was down here. Well, now I'm up here. And again, I'm fine being short the 66, considering that's a low that we haven't seen too often in oil. So that's the play there. What else have I done today? I closed out the Euro trade. I got long MES contracts, MNQ contracts, and I just did this trade a little bit earlier today against short upside. So this is almost like a covered call. I sold $10 wide upside call spread in SPY, 585, 595. We haven't been close to that level in a while. It's not to say we can't get there. And then I did the same thing in Qs. I sold the 500 and 510 call spread in here. So essentially, I kind of, again, it's not exact, right? It's not exact dollar delta wise or even, any kind of delta wise. But I figured I wanted to have some long exposure on while we're down here. I got long MES and MNQ, and I'm short these upside call spreads in there. But the bigger thing that I did today is I decided to, it's been a couple of days. That was earlier the week and last week that we've had all this Chinese vol explosion and names. And so I decided I wanted to, look at these crazy moves, man. I think this was an earnings boom down here. And then, of course, we've had the run in the Chinese names, given all the stimulus that has happened. I decided it was time to sell some vol in these. So I'm selling the strangles. And again, because vol is kind of high, I know this is not necessarily as high as I said I would like to, but Baba and Baidu are over a 90 plus IVR. This is not quite as high, but I sold the 180, 125 in here in PDD. 180 is way up there. 125 is here, middle of the road. I'll take it. Baidu, similar deal. Sold the 95, 130. Again, I got a little closer on the upside because I figured, I mean, hell, it could be more upside coming, but I'll take my chances. 95, 130. Feel good about that. Sold the strangle in there. And then Baba was the last one. These all run about 1,500 to $2,000, I think, in buying power. I know it's a little rich for some of you, but I had capital to spare. Decided to do it. 97.5, 130. Let's take a look at those. 97 and now. This one is actually on the high side. I need to be careful on this one. 130 is way up, so we'll see how it plays out. But look, this is extraordinarily high vol. And after a big move, a lot of times, I used to be scared of that. I remember a senior trader that when I worked at a trading firm, used to always do that. After a big move, vol would explode, and he'd sell vol in these names like this, like strangles. And I'm like, dude, this thing is totally going to come crashing back down. But we don't know, right? We don't know. And so the vol is high. And even if it does come crashing back down, you would imagine if as long as it doesn't blow through this strike, this should come in as well. Keep that in mind. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See you later. Welcome to the most dangerous show on the tastylive Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
%90 goes to S&P index funds.
You got a double
10% straight to
Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options in your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Hello, everybody. Tim Knight here, and for the first time in 14 days, we don't have China blasting higher. I'd said yesterday I thought that we were going to get a repeat of what we saw in May, which was a diminishment after a big short squeeze. And one day does not a trend break, but I like what I see so far. A lot of red. The FXI is down 2.34% right now. And yeah, so China's stopped its endless ascent. So that'll be a focus on a chart or two. Let's just jump right in and see what's cooking out there. Here's the spider, a little bit red. Tomorrow's the relatively big day, I guess. Jobs reports coming out an hour before the opening bell. I don't see what shock could possibly be in there, but everyone's just sort of waiting for that. We've been range bound for over 2 weeks now. It's really boring. But as I said yesterday, a failure of the horizontal and the midline of the channel would get things cooking. So we will see. FXI, as I mentioned, is down happily. We went exploding higher in one of the sharpest rallies in history. And for the moment, it is taking a breather at least. You can see that the on FX side, the volume went absolutely berserk, hundreds and hundreds of percent above normal. And we are above today's open, but it is net down for the day. And some individual stocks in that universe, they all look the same, which is past 2 or 3 weeks just zipping higher, and today taking a pregnant pause. Here's Alibaba, and even with the bigger picture, you can see what a tremendous change there's been. Alibaba's lost about 60% of its value from its peak, but it was a lot worse before this massive rally. PDD is up a fraction of a percent. There's no real clean line here. I've just put it to yesterday's high, but I suppose the toughest trend, the toughest barrier would be probably that trend line, I would say. And we're just about there. What I just did is this blue line is anchored to this bottom here and to this low here. And it looks like it broke it, tried to muster its way higher, then plunged. And then we went absolutely blasting higher. So by happenstance, yesterday's high exactly matches the trend line. Ooh, magic. That's pretty cool. So it's anchored down here, but it still lands right to the penny at yesterday's high. So hopefully that'll be it, because I actually, today, I already had JD and what was the other one? Yumsy puts. But today I got back into PDT, and I feel a little better now. That trend line is pretty cool. Xpeng is another Chinese stock that's had a big move, relatively high volume. And Billy, this one went zipping higher as well. Billy, I don't know what they do, but yeah, it's just a chart to me. And of course, as I mentioned yesterday, the instrument which has gained a tremendous amount of interest and activity is Yang, which is the triple bearish, which is up almost 7%. Pretty spiffy. The entire history of this, the volume used to be literally like a few hundred shares from time to time, and now it's in the hundreds of millions. This thing's become from nothing that nobody looked at to one of the hottest instruments out there. Long slide, of course, that's the nature of any leveraged ETF. It will tend to degrade unless there's a really, really steady trend. So this just been melting away, and then just got hammered with the recent melt up in Chinese equities. So in short order, in the span of just a few weeks, this went from $9 and change to like $2 and change. But it's getting some welcome relief right now, as I say, up almost 7%. Yesterday's volume, almost 160 million shares. Wowie kazowie. Just a handful of interesting charts here. I was just thumbing through today. Just don't have too much to do with each other, except that the patterns are interesting. Here's Vale, V-A-L-E, which has a quite clean symmetric triangle that it failed beneath, and it's pushed back up to, and now it's stalled out at that level. So that seems like it's prone to fall away from that broken triangle. Here's your old friend CC, which I bailed on a week or so ago. I decided, so thinly traded, I just got impatient with it. I'm sure I'm going to regret that decision. Most really great patterns that I get impatient with ultimately turn out really well. I'm going to show you one in a moment that I'd forgotten about. But yeah, I think this pattern is just absolutely fantastic. But I'm an impatient little person. UPS, pretty interesting. It's not as fantastic as CC. The pattern's not as wide, but it's a pretty powerful top, I would say. The one I was mentioning that I didn't stick with, which turned out great, was one you and I have looked at probably 5 or 6 different times, Himana. And this is the one where we had this long ascending channel, and it broke down here. And I pointed out to you in mid-July. I was kind of hung up on this thing in mid-July because what had happened was that it had fallen a lot, then had rallied. And at the time, This horizontal was actually way up here at the price gap, but it didn't quite make it. It ran out of steam before it completely sealed the gap. So in any case, that we talked about mid-July, and I forgot the whole thing, and I was thumbing through big gainers and losers this week, and this was one of the losers. And you can see here that gap closure, the attempt at the gap closure, preceded this fantastic plunge. So last time we talked about this was hanging around for $400. It's $160 lower than that now, and getting within at least the zip code of this channel. I think it'll probably fall more, but that channel I think would be a pretty potent level of support. Going through some of my favorite short setups right now. These aren't necessarily down today. These are just my favorite patterns right now, and we'll go through these swiftly. You've seen most of these, and in each case, I try to put a dashed red line. Sometimes there's two, but pay attention to the lower one. A dashed red line where I think a very conservative stop loss would be. So this is AMD. Then we have ARM holdings, like so. I'll try to remember to mouse over these as we're going through them. I mentioned JD.com. So this is down today, 1/3%. Nothing dramatic, but I think they got plenty of extra potential, because if it goes up that fast, that far, going the other direction is just as easy. I got back into Eli Lilly today. I went ahead and pulled the trigger on this, but and let's be consistent. Let me change this to red, like so. Change this to blue just to mix it up. But yeah, this is the price gap on that one. Lumen, you've seen this many times because I am crazy about this pattern. It's a very big pattern, as you can see, just sweeping, and it plunged like crazy. And I've got to believe the AI mania is the reason for this thing to have exploded higher. And since I have the luxury of a little extra time, I'll just say, those of you who follow me on Twitter, so I sent out a little simple graphic that I made, and either I'm missing something really core, or there's something incredibly obvious that nobody's talking about. What it is that NVIDIA participated in the fundraising, as they often do, for OpenAI. OpenAI just announced this week the largest fundraise in the history of the world. And their valuation now is approaching $160 billion. They lose billions a year, but that's their ostensible valuation, $160 billion. So here's the chain as I see it. NVIDIA and Microsoft put billions and billions of dollars of investment into OpenAI. OpenAI turns around and pays out billions and millions of dollars to buy NVIDIA chips and rent out Microsoft server space. And then Microsoft and NVIDIA talk about how amazing their sales are these days. I think a couple of Tuesdays ago, Jensen Huang was talking about how demand was so strong, and today there was an interview widely disseminated in which I think the word he used was that the demand for their Maxwell chips was insane. I think that was the word. Well, it kind of makes sense, because you just handed a huge wad of money to the company that turned around and bought products from you. So it's kind of a virtuous cycle, if we want to be kind about it. So that's what I see. It seems to be kind of self-dealing, kind of back and forth. So Lumen is at the periphery of this, but they've benefited from this whole AI zaniness going on. XME, nothing to do with AI, this one. This is the metals and mining ETF. This is down about 1%. And here's YUMC. This is one of the better ones. This is down about 3 1/3% today. We talked about this yesterday. And so that's a nice, a beautiful gap close on this one. Just terrific gap close for YUMC. A few more. Amazon, we know this one well. And I was getting a little worried about this because this was a little hammer pattern earlier. It seems to be fading away. The trend break here seems to be meaningful. Cleveland Cliffs, getting some welcome red on this. I guess the strength recently was because of the banning Chinese steel or something. There was some administrative actions against Chinese steel, and that probably benefited Cleveland Cliffs, which I stupidly thought had something to do with energy, and that was wrong. Sometimes I just don't know what these companies do. They're just a chart to me, but this is a steel company. So, duh. General Motors, GM, sloppy pattern, but I think it's fundamentally broken down. So I'm hanging on to that one. Here's Alphabet, big old top on that. There's our dashed line on that one. Nike having another good down day. This is hammered out a very big right triangle top. And so I've tightened up the stop very substantially on this one to yesterday's high, because yesterday was the big tumble on that one. Shopify, we talked about this yesterday, down 1.5%, and did a beautiful job turning away from both this broken trend line and this horizontal, which is not dashed, and I'm way too hung up to allow that. So let's fix that. Okay, so we're turning away from that. And the last one of these 14 different symbols that I like on the short side. Schlumberger having a strong day because oil is going crazy. Crude oil is up 5.34% on the futures market, but Schlumberger is still mashed up against a massive overhead supply that I don't think will sustain. Got a couple or three more for you. We usually look at Tesla just because it's such an interesting chart. And I've got to say the resistance did a dynamite job with this. We talk about it so often, you know what I'm going to say, but it's this quartet of resistance levels here, the trend line and the 3 Fibonacci's. We sneaked a little bit above it, a little bit above it, but then it got smacked down on Tuesday and yesterday and today. So we basically have undone all these gains because resistance was there. It continues to hold absolutely beautifully. And it'll be very interesting to see between now and the end of next week what Tesla does in light of the robotaxi announcement. NVIDIA, which I was just picking on, continues to just hammer within that triangle, tighter and tighter and tighter. And one day it is going to break, one day very soon, like within a very short amount of time. The apex of this is coming right up in a matter of days. So this is going to break out one way or the other. It cannot just flatline at the apex. So that's cool. Last chart of all, this is the equally weighted S&P 500 divided by the S&P we all know and love. And what it represents is how broad is the movement in the market. Put in it another way, the tippity top right here, which was in April of 2015, was the broadest, most even distribution of strength in the market. That's when things were best participating overall. It has been breaking out ever since, and these are really cool patterns. This looks like an individual stock, but it's not. It's the conglomeration of 500 equally weighted stocks divided by 500 market cap based stocks. And still, it creates this really cool pattern. And what's happened recently is that we've been blasting toward resistance. We're going to use that term here too. And I believe it's going to turn down sharply. What that means is that the strength is going to shrink rapidly. Oh my God, I'm doing this. Shrink rapidly to a much smaller number of stocks. So no more broad-based rally. Okay, well, that's it for me. We'll close out the week tomorrow. And thanks for coming by. Bye-bye.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye, bye to Ben Bernanke. Cry your eyes out, past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call. Let's take a look at what's going on with the market. Even the S&P's hanging steady, down 20. I guess I consider this a red day, but I really thought with volatility up 93 cents and then pumping volatility into products like oil. Look at this IV rank of 125. Your quote to me was they don't get much higher than this on a daily basis. I'll give you that too. Up $3.78, by the way. They don't usually move 5-6% a day either. But you do have the NASDAQ down 64. You do have the Russell down 19. Bonds are down 25. I mean, I think I got an email today from my buddy. IWM, smaller market cap stocks would be helped by interest rates going lower. We had interest rates going lower. IWM's done nothing but go lower.
Interest rates went higher today.
Bonds go low interest. Yeah. I mean, meaning the opposite. You know what I mean? Like it would help. Bonds have been going lower, not higher. When you lower interest rates, you know, so we got a little bit of a kind of buy the rumor, sell the news here in the market. I hope it happens in oil also.
I traded the most oil
option contracts that I have traded in a year
Quite some time. Oh.
today, and I didn't make any money. But I am locked and loaded for tomorrow. I'm sorry, but
To cry? Would it locked and loaded to do what?
no, I don't think I'm going to cry. I'm actually putting stuff on, I think, at really good prices. Maybe I'm not. I mean, I could be, listen, I have no idea. But I do know that.
Well, the markets are fair and true. They are what they are with the time you do them. But volatility, like you said, 125% IV rank in oil just means that compared to yesterday's premium, it's another 25% higher than that, meaning that this would be 100. IV rank would be 100 if the rank was exactly the same from yesterday. It's another 25.
Yeah, it ticks in real time. I mean, for people that don't know, we tick IV rank in real time on Tasty. So it's 126.2 right now. I started selling premium in there today when the IV rank was 115.7. And I haven't lost that much.
You did both sides too, right? You did calls and puts.
I did calls and puts.
And you did some spreads.
I can tell you exactly what I did. I sold the 66 puts and I sold the 82 and 84 calls, which is a little bit short, leaning a couple deltas short there. And then I also sold the 75-77 put spread. I'm sorry, call spread, 75-77 call spread a bunch of times. And I did that call spread.
These are all trades you do in November, right?
I did them in November, and I did that call spread for my average price is probably in the low 60s. I'm going to say
65 right now.
It's 65 right now. And my average price, according to the software, like 62 and a half, which isn't bad for me. I started at 58. 62 and a half. So I'm pretty much
$650 or $625, not 62 cents.
Yeah, $625 per spread. They can go to $2. They can go to 2,000.
That's correct. 2,000.
But it's November. It's 43 days away. It's the perfect timing. You couldn't ask for a better time for crude oil to have a volatility explosion if you wanted 45 days to expiration.
I did my podcast around 10:30, and I happen to use oil too, and I thought I was doing it perfect with IV rank up 112.
Yeah, I was going to say that I did 115.
Yeah, thought I was like, okay. Yeah. I mean,
yeah, no. Listen, it's never going to work. I didn't think it was going to work today.
Oh, I was quite confident that it was. I was.
You were.
Yes.
You're very cocky.
Top ticked it. Very.
No,
very
I was. I'm worried about the directional piece.
And I thought it would go lower too, and it's up by another 40 cents or so.
Yeah, I did it when crude oil was up 270.
Mm-hmm.
I started when crude oil was up 270.
It was just under 3. It's up 376.
Yep. Anyway, so I'm looking at the D's future when I was doing it. So it was up, 270, and now it's up 360. But yeah, whatever.
You're moving oil.
It's a huge move. Anyway, I'm locked and loaded.
Don't email me and tell me why. I can read the headlines too. I got it. I understand.
Oh, there's no question that Israel is going to retaliate. There's no question that they're going to retaliate on at where it hurts the most.
Sure.
Question is, what has been priced in, and we'll see.
You got to give it to them when they want it, right? I mean, it's harder to do when they don't want it.
Yep. Let's see what happens.
I'm talking about volatility, nothing else.
No, I know. I mean, that's what I did in K-Web yesterday, and it worked. Let's see what happens here. No question.
K-Web you actually did near the end of the day, too, which, you take out the day's movement there, too.
But anyway, so I'm all done with that.
Awesome.
All right, what's next?
that
talked about the implied volatility of crude oil. I can't talk about it anymore because I need it to crash and burn tomorrow.
Well, let's talk about the buckers, the ones that are going higher that would help volatility go lower. You got Meta up $9 and change. Of course, you're going to have oil-related stocks higher today. XOP up $4, a big move. NVIDIA up $3 and change. Taiwan Semiconductor up $3.50. Sneaky little $3.50 a rally. Crowd, I haven't mentioned that name in quite some time, up $3. And some of the Chinese stocks, Palo Alto Networks up $2.39. Some of the Chinese ones are lower. I'm sorry, is what I meant to say. Give me 1 second here. I get right to it. Tesla down $9 and change. Baidu down $5 and change. Apple down $2.70 and change. Baba down $2 and change. So you've had some pretty broad-based selling all the way across the board here. NASDAQ was down 100 before we got off the show. Now NASDAQ's down 60.
The weird thing about today is that the SMH is up $1.50. You know, I mean, the AI stocks, the semiconductor stocks are super strong. The tech stocks are relatively strong. You know, I mean, all things considered, and that's weird when volatility is pumped. I mean, the VIX is up $1.70 today, but the VIX futures, you know, they've been crazy strong all day. And you mentioned it before; they're up, a little, almost 5%. Almost 5% today in the VIX futures. So 5% move. That's what hurt my P&L today. 5% move in the VIX.
You know, skew is up again, 161.5. It was trying to sell off a little bit, coming back. I'm actually encouraged that skew is rallying for volatility to contract a little bit. Does that make sense?
Yeah, sure.
Okay.
I am too. A lot of protection being bought. I mean, all in all, these are the days I don't like because the because there's too many stocks that are up and yet volatility is going up. I don't like it. Sam, I do not like it. Anyway, that's kind of my take from today. I mean, we didn't do anything crazy trading. Maybe crude oil a little bit. First time we've gone in kind of over our skis in crude oil in, I would say, a couple of years. But we haven't seen 125 IB ranks, so that's why we've done it. No earnings plays. No weekly plays. If you are interested,
you were making a statement. I didn't know you were making.
No earnings plays. But if you are interested in the 0 or 1 DTE trade, because we do talk about this from time to time. Okay, I told you last week that the 1 day implied volatility in the VIX 1 day got down to 860. 880, 860.
About it, yeah.
It's 1955 today, up $5. Is there a number tomorrow? Is unemployment tomorrow?
Oh yeah, you would think so.
Yeah, I mean, there's some big number tomorrow.
On payroll and unemployment.
Unemployment. Okay, that's what I thought.
First Friday of the month, every first Friday of the month.
Yep. So when you look at the SPX 1 day, and I think this is the interesting thing to talk about for tomorrow, the SPX 1 day, what do you think it is for tomorrow morning?
I was just putting it up there, so now I would cheat if I told you. I would have said 40 something. I see it 65.
65 is a big number.
I would have said 40 something. That would have been my guess. But when you looked at it, I was going to put up on the screen, so I looked. So yeah, 62 and change or something like that.
Yeah,
might lower it a little bit.
Yeah, it actually did just lower. It's moving. It's jumping all around. 56, maybe just updated for some reason. 56, but that's still a huge move.
Yep.
And the VIX 1 day is at 19 and change. I don't like selling 1 day premium.
1 day 19 and change equates to a 56 point move, basically a 1% move in the SPX. It's perfectly right at 55.
Yeah, it's exactly what it is. Yeah. And so that's what we talked about yesterday.
I'm just checking the math. I'm just.
I mean, that's what we talked about yesterday. We showed the VIX 1 day moves. We showed all the math behind it, and then you can see right here at 1955. At 19, it's going to come up to 55 or 56, 57, whatever it is. It's close enough. Would you trade it?
I would rather trade it today than trade it yesterday, but now it's an unemployment number, right? So you're going to get a big move. So probably something with defined risk if I was going to do something, or maybe a iron fly if I was going with that type of thing. Not necessarily same strike iron fly, just a tighter one, a more premium one.
SPX 1 day, based on our research, if you went to the 16 delta put, let's just go probably 550-ish. If you went to the 16 delta call, where are we here? Come on, calls. 16 deltas, 15 at 5. Ooh, wow. 15 delta call, $5. 15 delta put, $5.70, $5.80. They just upticked it. Would a Mr. Batista make that trade?
Oof. It's a tough one.
It's a tough one, Johnny.
Mm-hmm.
Would you trade if
Well, you know what? If I had your money in my pocket, and I'm talking about the $40 from playing golf, I probably would make it because you're playing with house money.
I just did it? I just did the 15 delta 1
5605, 5755, which is not what I told you to do. Just so when you hate this trade tomorrow, remember it was not the trade I asked you to do. Remember that.
I'm sticking to my mechanics. And my mechanics say that if the VIX one day is anywhere close to 20, I'm going to have to trade it. And I went, let's see, 5605, 5755. So I went 65 points out of the money on the call side. And I went 85 points out of the money on the put side. That's for a one day collecting $9.90.
Yep.
So that gives me a cush of 75 points on the upside and basically 95 points on the downside.
2 times expected move. Almost 2 times.
Anyway, that's what I did.
Mhm.
Put your money where your mouth is.
Yeah,
That's the nature of this. That's the nature of what we do.
Yep.
So I did that.
Are you gonna be so mad tomorrow?
Ooh, I'm going to be mad. Yeah. I just hope it works for a little bit. All right. What else you got?
That's it. We've been sitting pretty steady. Volume's not horrible on the E-mini S&Ps. 1.21.
I know. I thought it'd be better.
You thought it'd be better today?
I did going into a big number tomorrow. I made 65 trades. Wasn't as busy, but had a bunch of stuff going on today. I mean, I'm a little mad that vol popped up so much. Now I know why vol popped up so much because A, you've got the number coming out, and B, you scared the children with crude oil. But we'll see. The Chinese stocks all of a sudden got weak, so why can't crude oil get weak?
Yeah, why not?
I really want to sell more. I really want to sell more spreads in crude oil, 75, 77. I'm anxious here.
In crude oil, 75.
That's what I've been selling all day. Hasn't changed. Mid price is still 66.
66 now. Market's getting a little bit wider now.
Yeah, I know.
They're like 3-4 cents. They were like 2 cents.
I know.
Now you got 5-cent wide market on the 75s.
I mean, that's a relatively wide market for a $2 wide call spread in November. Is
59.71.
Yeah.
Yeah, that's pretty wide. 60.70 with mid price 65. Yeah, that's pretty wide. Yeah, it was tighter earlier.
Crappy ass market makers. The hell they think they're doing, widening out the markets on us. The good kids
do that.
Good kids do not like that. Nasdaq down 37 points. How the hell is the Nasdaq?
Only.
No, I know. How's the Nasdaq down 37 freaking points? Bastards.
The strongest of the group.
No, I know. I know. This market owes me some money. Better give it back to me tomorrow. It better.
Your spread, 9.45. You got a 45-cent profit right now.
What?
Your spread is 9.45.
Oh, my SPX spread?
Yeah.
Yeah, because they just rallied.
You got a 45-cent profit. You don't make 45 cents like that on national TV very often. Not that quick.
I wouldn't consider this national TV. Okay. I'll tell you what I'm going to do, just because I'm a nice guy. I'll put in a 940.
You're going to put a 940 bid in so you make 50 cents.
No. 930.
Oh, you are such a gonif. Really. Happy New Year to nobody. Unbelievable.
I don't even want to buy it back.
And
So
don't.
if they sell it to me, I'll take the money, but I don't even want it.
Take the money and run like a thief in the night.
It'll be $2 better tomorrow morning. So we'll see. Now they're still pumping juice in, and I'm looking at all these positions, so nothing's coming in.
No, nothing coming in.
Yeah, looking at my quote page here just to see if there's.
Real Ivy rank 128 now. Continues to go higher.
Yeah, it's crazy.
Mhm.
Yeah, it's up 3. Oof, I don't want to. I'm putting black tape over crude oil right here because
Keeps writing in SPX Moon tomorrow.
moon. You mean like
Moon.
a moon? Oh my God.
You know what the moon is, don't you?
Yeah, this is typical. These are what do we call these people? These are
SPX tomorrow, 5750, back to highs. Money printer go brum, brum, brum.
These are boomer babies. 5750, by the way, is 8 points out. Oh, SPX.
SPX.
Of 60.
I'm sorry. SPX. I said SPX.
Yeah. These are boomer babies. They don't know anything different. Okay, this is all they know. Buy every dip.
Tom's really good at losing money. We need an inverse Tom ETF. It's in the makings. Small exchange. Be careful. You might be careful what you ask for. You might get it.
Inverse Tom ETF? Yeah, I'd love that. I would love that. All right, looking at all the stocks on my watch list today to see if there's anything that kind of jumps off the back half of the screen.
Okay. What you got?
I don't have a position in Palantir, but I was looking at it. PLTR, it's up to 39. It's a new high. I believe that's a new high in there.
Yeah.
Palantir.
Sure. Mm-hmm.
Yeah.
Heavy rank 26. It has earnings coming November 7th.
If you're looking for something cheap that if you haven't already bought it,
you're looking to buy this at $39?
No, but not Palantir. I'm looking to sell premium there. I'm not looking to buy it or sell it.
Oh.
If you are looking for something that you think, if you're looking for a cheap play relative to everything else, you might want to take a look at Boeing. I don't think it's traded under 150 yet.
Boeing. I made a couple dollars in Boeing not too long ago, and I took my money and ran like a thief in the night. Boeing 102 IV rank, meaning that volatility is as high as it has recently been. 150 and change. The low today was 150.57. It's 3 cents off of that low. Earning coming October 23rd. Oh, you went up to 940. You are so predictable. Honest to God, you are so predictable. It's going to be in my book. Don't worry, ladies and gentlemen. I got it for you. You are so predictable.
I just wanted to make a winning trade. I didn't have a lot of winning trades today, so I had to make a winning trade. I needed it. My ego just needed like.
I know. You're going home. Weekend's coming. It's Friday tomorrow. I got it.
Yeah.
You're the best. It's $965 mid price right now.
Sold.
You should be scalping this thing. You could sell at $965.
Sold. All right, let's see what else. What else do we got here? Good
job out of you.
Good job. Hey, while you're sitting there.
Who wants a reverse ETF now, huh? Big shots?
Yeah, right. Who wants a reverse ETF now?
Right, huh? You'd be down money.
So I mentioned Boeing. I mentioned Palantir is too little bit out of the norm. Nothing else that jumps off my screen at me. I got to tell you.
Don't worry. We don't need you to find things to jump off our screen. We can always ask our viewers, Sadnov, what happens tomorrow?
What?
Fast market.
Oh, fast market, sure.
Sure.
I didn't know what you.
It's a Friday. We do fast market. Usually around this time, I say, don't worry, we don't need your trades. We got their trades. We got fast market. Please submit your trades to fast market. You can do it to tastylive.com/fast market. You can even put a fake name in there. Don't worry about a thing. We just want your trades.
Don't you worry about a thing.
$9.85 mid price on your spread now.
I don't believe you.
I'm not lying to you.
$9.85. Why would the spread go up?
$9.80 now. Yeah.
Oh, wow, that's weird. That's why I'm a good trader.
You're amazing. You skated.
Yeah.
You're so good.
All right, let's see what else I got to do here before the close because I want to.
Oh my God, how does Daddy do it? Don't spend it all in one place. Oh, they're starting to pick on you now. This is all from the YouTube chat, Sadnov. That's all I'm looking at.
Don't worry, we're shutting down that YouTube chat probably.
They get too boisterous, we just shut them down, right?
Yeah. We put them in we put them in the penalty box. We'd give them a timeout. Shut down the YouTube.
That's fair.
You know what we should do to the YouTube chat one day is just put them all on video. Then they'll all shut up. And not the anonymous.
Talk a lot less, that's for sure.
Talk a lot less.
That's for sure.
When the anonymity goes away, that's what happens.
Speaking about people who speak a lot less, not these two. Not them at all. Wait a minute, who is that? Is that my buddy Antone and Chris? You're my buddy too, Chris.
Well, good afternoon, gentlemen. I mean, look at this volatility. We're just pumping up for tomorrow.
Hold on, are you guys dressed alike? What's going on there? What the hell?
It makes sense, gentlemen. We have non-farm payrolls and we have unemployment tomorrow. All those fundamental data matter so much when we're going into a Friday like this. VIX one-day trading almost 20, and I don't know about you, but I am getting pumped for tomorrow's price action.
He's playing Chris for Halloween, isn't he?
This is
He's doing Chris.
You guys are messing with us,
For
right?
Halloween, I love it. I love it.
You guys are just look at this little look at these guys. You're going all Hollywood on us. I like this.
Well, I'll give you some background.
Yeah,
Chris
you have a doppelganger now. Did you know he was your doppelganger?
Chris told me he's not going on. So I thought, wow, this is my moment to shine. I'll be able to have all the attention. And then at the last minute, he's like, oh, just kidding. I finished my stuff. So I had to kind of out Chris him, if you will.
I love it.
Wow.
Great.
So Chris, your posse's not around today, and this is the best you come up with, huh, Anton, for the close. I like it.
Well, one of the conditions was like, yeah, you got to dress like me, and he said that's perfect. I just got my outfit back from the dry cleaner, so.
I like it, Anton. That's a good look for you. Seriously, that's a rugged, like Anton in the Woods type look.
So when I lived in Chicago, this is all I would wear in the wintertime. Even if it was like 10 below, it would be a thin sweater with a nice vest.
When you say you're in Chicago, you make it look like you visited here. You grew up here.
You've only been gone for a year.
Yeah.
I mean, you know.
Yeah.
Your
I get
entire
more
life,
friends
you mean?
this way.
Sure.
You know, you were raised in the cold. I mean, I'm sure as a kid, I can only imagine how annoying you were. So your parents probably just put you outside and like, you know, for like hours.
Be honest, Anton. You told me about when you were in high school and you would get to go to the principal's office every once in a while because you were annoying.
Yeah, well, it was more so the teachers paid me to not talk for the day.
I can see that. I can see that. You didn't know how to shuffle your cards.
We used to call it the quiet game in my house. My kids fell for it for about a year before they realized it was a scam. All right, Vecchio. S&Ps, I just had a freaking monster rally here. We're about to close. NASDAQ's about to close up on the day. I don't get it. ES is only down 8. To the moon, Alice. Yeah? No?
As Puppet Chris said, you got a lot of unemployment, non-farm payroll coming out too.
Yes,
So give us your synopsis.
Chris, do you want to take this away?
Well, yeah, so you know, this recently this has been happening frequently. You know, they squeeze them on the close like this. I don't really think it means anything. I mean, we've had it a couple ways this week where I think Monday, yeah, it was Monday they squeezed them, but that was the end of the quarter. Tuesday they kind of sold them off. I mean, maybe this is the reverse that I don't really know how the end of day price action works. If it's like one day they squeeze them, the next day they give it back, and it's kind of like a cycle. I don't see this as anything other than.
I agree with you. I think that, Chris, I think this is very classic. You know, the day traders, most of the day traders, scalpers set up for kind of a lower close going into based on what volatility was doing all day today. And I think they just covered. That's it.
Yeah. I appreciate you calling Anton Chris to keep the bit going.
Well, I was trying to switch the conversation over to you.
No one wants to hear from me. Oh, well, yeah, just look, World War III probably, happening, it looks like, but who cares? Non-farm payrolls tomorrow. The market's been pinned this week. I don't think any of this really matters. We're waiting for some sign that the volatility is going to come down, but vol keeps marching higher and stocks aren't really taking a hit. That's resilient. Makes me happier.
Very good, guys.
All right, boys, we're turning it over to you.
Enjoy yourselves, Chris's. We'll be back in 90 seconds.
Run with it.
Overtime next. Peace.
Take your swim
will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We're on the brink of World War III. Stocks still managed to stage a late-day rally into the close. Non-farm payroll tomorrow, so what is there to worry about after all? It is Thursday. It's October 3rd, 2024. This is Overtime. I'm your host, Chris Vecchio in New York. Anton Kulikov joining us from Las Vegas, perhaps? No Spivak or Radigan here on this Thursday. It's an abridged version of Overtime, of course. On Thursdays, we have the prediction trade at the bottom of this hour. Today's guest there will be Alan Lichtman, the professor from American University, whose fabled 13 keys have predicted every White House race since 1984. So be sure to join us after Overtime for the prediction trade. But if you're joining us on YouTube, tell us what you're trading. Join us, of course, on tastylive.com. You can watch us on the platform as well. We can go directly to the charts. Anton, S&P 500 picks itself up off the lows here. It's a 57.49.5 market right now, or rather 57.54 market right now, down by a measly 0.1% on this hallowed non-farm payrolls eve. The NASDAQ squeaks itself back into positive territory, very minor gain of 0.01% right now. Otherwise, the NASDAQ is your only green chart on the day. For the equity indexes, the Russell and the Dow Jones are also both lower. Much to our chagrin, bonds are taking it on the chin today with oil prices lurching higher by what now? 5.25%. Energy is absolutely on fire. Another hurricane perhaps making its way through the Gulf. We're seeing that the Middle East looks like tensions are ratcheting up. President Biden today let a slip of the tongue, Anton, saying that the U.S. and Israel could be hitting Iranian oil facilities. That's interesting. Gold, silver continue to do their dance as they make their way to the upside. The yen carry trade's back in vogue, and the BOE joins the accord of central banks cutting rates. The pound gets smoked for its worst loss since July 23. But Anton, we have limited time here. Let's talk about what we're expecting going into tomorrow. Tell me, what did you think of today's price action when we look to those main equity indexes themselves?
Yeah, so price action today was really, really turbulent, I think. And I'm not, and I mean that intentionally, right? It's kind of like if you imagine yourself flying in a plane, right? You don't really change direction. You don't really like change your course. You don't really turn around or go a different way intra-flight, but there's a lot of shakiness in between, and it's uncomfortable. And that's exactly what it was like today. If you look at the E-mini S&Ps, we're looking at an open of 57.44. At our high, quickly rallied to a high of 57.70, and then sold off. Basically 30 points. No, 35 points. Then rallied another, 30 handles approximately. Then sold off 30 handles. Then rallied 20, then sold off 10, and then rallied about 15 into the close. So overall, S&P's down 10. But that doesn't capture the magnitude of the volatility intraday. And I think that with the VIX one day, if you look at the VIX one day, that kind of tells you the expectation of price for tomorrow, expectation for price volatility tomorrow. You look at a reading right now of 1910. That is pretty elevated. That's similar to, the type of expectation we had on September 17th. And if you look on September 17th,
Fed.
That was the Fed. That's right.
Yeah.
And so you're looking essentially at an expectation tomorrow that is akin to these type of days we expect to see on a Fed announcement or FOMC day, which is not a typical Friday. Fridays tend to be quieter, and Fridays also tend to not be priced to be as volatile. This is the opposite. And this price action today, I think, maybe was a precursor to what we may see tomorrow. The interesting thing alongside of volatility is that the actually really compounding on that argument, right? Tomorrow's, if you look at the E-mini S&P options, October 4th, we're looking at an expected move of 52 points. That's a lot for a Friday. Again, that's similar to a FOMC day, and arguably we've had FOMC days lower than this. So yeah, I think the low volatility environment's definitely gone. Yesterday we were talking about on Futures Power Hour how it was already eroding that lower volatility environment as we had the VIX climb up. VIX, 30-day VIX up another $1.50. They're sitting at 20.44. VIX futures, interesting here, are trading 21.05. That contango that we saw just a few weeks ago has completely eroded. We're now basically sitting at an even volatility curve, which means that, it doesn't mean anything directionally, but for volatility, it means that this is essentially the potentially the starting point of a volatility expansion, or not. If it's not, then we may hang out here for a little bit. Otherwise, in terms of direction, this is what we were talking about yesterday. It's a tough market to pick direction-wise because there seems to be a lot of variables at play. And when there are a lot of variables at play, volatility goes up. that's what we're seeing. But additionally, it makes it harder to stay kind of on autopilot, if you will, kind of like what we're doing in Q1, right? We kind of put those long call spreads on the ES, we watch them go to max profit in a week, and then we do it again, and we have another max profit, and then we do it again.
Why can't it
and
go
we have
back
another
to
max
doing that?
profit.
It was so easy.
But this is not the same.
No,
You're seeing a lot of need for management, rolling, and again, it just makes it a tougher trading environment. So the cure, of course, stays smaller than you normally would and go out further duration as well.
Anton, stocks really didn't have a significant breakdown. We're still holding the 1 month moving average here in ESZ4. There has been a range that's been more or less carved out on lower term time frames this week, ever since we started trading this month. Effectively, we'll call it 57.25 up to about 57.75. Tomorrow's move around non-farm payrolls, we're looking for percent, which makes sense. It's a little bit more elevated than what you'd expect to see around around CPI actually going out to next week. CPI's had less weight than jobs, and we've already seen today jobless claims came in again near relative lows. The ISM services comes in a little bit stronger than expected. Likewise, we perhaps have an ADP report that came in better than expected earlier this week, just yesterday. So the jobs report tomorrow, we're only expecting 140K. It could be biased higher. If this is another market where we see a sell-off on a good jobs headline because the rate cuts aren't coming, that has been a tried and true market to fade any weakness in stocks at the end of the session, right? Wait 15 or 30 minutes, get long, ride it into the close. If we dropped into 57.20 or 57.30 tomorrow, I think for a scalp intraday, it would certainly be worth taking a look at a long against the weekly lows and trying to pick ourselves up off the floor there. But a good set of economic data tomorrow morning could likewise pose more problems for the bond market, which has been a real SOB here for both of us recently. It's an accumulation of factors. If it's the Fed shift and reflating the economy, if it's the longshoreman strike, if it's what's happening with China or perhaps oil directly because of Middle Eastern tensions centering around Israel and Iran, there has been a push higher in market measures of inflation expectations in recent sessions. And as a result, perhaps we're seeing that feed through into higher yields at the long end of the curve. Anton, you and I have been aficionados evangelizing long bond trades for many months now. The past 2 weeks has been an exercise in self-flagellation to a certain extent. The way that you and I have been structuring this is to not go through the typical tasty methodology of 45 and 21 out, but rather treat the 45 days as the out cycle to roll out to the next duration. We're not quite at 45 days yet, but do you see any reason to, say, abandon ship on your point of view right now? Do you think it's still prudent to do that roll at 45 days? Or with the volatility having evolved the way that it has, the technical breakdown and momentum shifting, would you rather just take your chips off the table for the time being?
Yeah, I think you got to look, at least in the short term, rolling out some of these positions that, maybe you're typically used to having on 30 days, 45 days. The reason I keep mentioning that is because it is the best way to get it to retain your exposure if you have a certain bias without giving up the it's a good way to reduce the risk of your exposure without giving up the bias that you have in the position. This is a better way to say it, right? So you still remain long if you want to remain long, but instead of taking the risk based on what the market's expecting this month, which is a lot of turbulence, you basically give yourself this month plus another month. And it'll help soften the blows of anything that may happen this month that may be adverse to your portfolio. Now, what's the best case scenario? Well, the best case scenario is the market continues to go in your favor, and you don't make as much as you would have if you had your positions in the same expiration. But the worst case scenario is no longer that bad, because worst case scenario, you leave your positions the same way they are, market goes against you, you take a huge loss. But if you decide to roll out, you're basically smoothing out your P&L in a market that's already going to be more volatile. So here's the thing what people misunderstand sometimes. Volatility doesn't only mean that prices move more, right? Doesn't mean it does mean that, but it doesn't just mean that. From a portfolio risk management perspective, higher volatility is akin to higher prices, notionally speaking. So in other words, if you have an S&P contract on, let's say, okay, and you're used to an expected move of 20 points a day, okay, let's say for the multiplier is 50, right, that's $1,000 of portfolio volatility per day. Well, let's say all of a sudden now volatility's doubled, okay, and that's not too unrealistic, right? VIX is maybe gone up 30%, 45%, but same principle. Let's say for simple math, it's doubled. Now all of a sudden, expected moves 20 points, or sorry, 40 points. Your dollar notional at risk, fluctuation-wise, is $2,000. Same contract size, nothing's changed, but on a realistic risk perspective, you doubled your risk, you didn't do anything. Volatility just increased. So if you want to retain a smooth portfolio, your default reaction should be to roll forward, because what rolling forward does, it actually combats some of that vol expansion in your portfolio on a dollar for dollar basis. So you roll out, let's say the expected move still now 40 points in the S&P, but you rolled out to December. Well, now because your options are less sensitive to those moves, now you've reduced your risk back into line with what you've already had it, right? So that's the tools we use as traders. And the nice thing is these positions are mark to market. Volatility comes out, just roll them back to the near term expiration again. It doesn't have to be a cycle long trade that you have on, like, oh, I guess I'm going to hold this till December. No, it could be a temporary measure that you use to soften the blows, kind of like the stabilizers on the cruise ship. You can turn them on and off whenever you want.
Remarkably, despite this uptick in yields over the past 2 weeks, we've seen gold prices hold their ground. Today, they're up by 0.25%, silver up by 1.32. China seems to be losing some steam in their equity market re-pump, if you will. Copper is off by 2.23%, while FXI was down a few percent today itself. In any event, Anton, gold here, consolidation, just want to point this out, triangle, I'm still long, no reason to change anything yet. But we see a symmetrical triangle here after a breakout in an uptrend that has yet to reach its target. Gold looks like it may have some more room to the upside, although, like with oil, there is significant geopolitical risk here afoot. We could see that on April 12th, April 19th, when we did have the Iranian attack against Israel and then the response. Ultimately, gold prices, they lost some of their luster for a few weeks once we benchmarked the risk and realized this was on a path to de-escalation. We can't dismiss the fact that that's possible here as well, that if we do get an attack that ultimately, or a response that ultimately leads to de-escalation, I'm still trying to figure out that math in my head, how killing more people leads to killing fewer in this particular context. I think that you have to stay long and look at the technicals here and see metals that look like they are breaking out and want to break out. Silver is with one of its top 10 closes of the year in terms of overall price level, almost an 80 IBR right now. So much of this feels like it's tied, though, to that crude story, Anton, which we got a 128.5 IBR. This is sitting right in the middle of its recent trading range. We can actually go over to the Z4 contract where the strikes are a little bit more prudent, but halfway between the high that we had in April and the low that we had in September, that's effectively 73 bucks, we'll call it. How do you not put on an iron condor here? How are you not selling vol immediately right now in this market? What's the play?
You gotta stay mechanical. I feel like a broken record, but again, it's like if that continues to make money, I don't see a reason to stop being the broken record. You know, sometimes we're so funny people, right? We get bored of our own rhetoric when it works, and then we decide to be like, oh, it almost feels like I'm bored. I want more market action. It's almost like you're asking for losses in order to readjust in order to have to readjust your strategy because it's too getting boring, right? Sometimes that's how I feel. But no, again, broken record. If it works, don't fix it. It's like, listen, this is okay. This is a little bit a different scenario. If you put on your, crude strangle iron condor or whatever recently, maybe you're feeling some heat right now, which does make sense. But again, this is why we stick to longer duration trades in crude. And the reason is because we usually, when you look at 30-day, 60-day picture for crude, you tend to basically pin the price that you're at right now. So again, even with this move, if you have no positions on, it's a great time to do it. Yeah, yesterday was great. Today is even better. Volatility rank above 100 now. I mean, you can't really get much more than that. And if you look at raw volatility, I mean, you're sitting at a 60 implied, a 60 excuse me, 60 percentage. Oh my gosh, rewind. The 60 IVX reading in the 15-day cycle, and it drops a little bit in the further out you go, just because there's that little backwardation volatility. You know, in the 30-day cycle, you're looking at a percentile. I'm not a percentile. It's a different number too. The percent IVX, the percentage of 50, call it, right? Which is very elevated for crude. Crude tends to sit around 35. So so the IV rank does really, it is being a very reflective of that additional premium, and especially in the short term. I mean, the numbers get into this in the high 50s, and all that to say is, listen, this is a huge move, but unless crude continues to make $3 to $4 moves every day, that vol has to come in. So again, and that's how volatility works. Unless crude continues to make $3 moves, $4 moves every day, you're going to see vol come down. So the question is, how do you want to play? Do you want to sell put spreads, sell call spreads, or be neutral? In other words, take a directional stance or be neutral. I like to be neutral because I haven't had any better of a strategy for crude as I did just shutting my eyes, selling the, iron and condor, whatever you want to go $3, why $4, why whatever, and just waiting 2.5 weeks, 3 weeks, and then just see where you're at. And especially when volatility rank gets over 100, I really think that's the only thing you could do. I mean, I guess you could try to pick a side directionally, but it almost seems counterproductive if it's still a 50-50 shot. But now with the options, I mean, look at this. You go out to, let's just say, I'll even go to the 14 days because it's in the X cycle, right? I mean, you go out to the 68 put, and then you go out to the, let's say, the 82 call, right? So you're going basically $9, so I'll call it $8 on the call side and, $6 on the put side. And I just picked random strikes. You doesn't have to do it that way. You're getting $2 in credit. Those deltas are basically close to 20. There's a lot of call skew, obviously, so the call delta is going to be larger. You're getting $2, and that's basically giving you almost like 90% of the range that you've seen in the last 3 months. So it's like, to me, it doesn't make sense to pick a directional, to play directionally. That's what I'm trying to say.
Yeah, that I'm with you completely. The mistake I made in trading oil this week was lifting the previous iron condor that I had on there, because if I had just waited until today, it would have been right at the center point of the strikes. But we live and learn. New position is put on for me as well. So have the short put spread put on still from a few weeks back from early September. Also, likewise, have now this iron condor on here in crude. Positioning or otherwise, Anton, you're with me on Futures Power Hour. We've been talking for a few weeks about how oil positioning was just so darn thin. And it made sense to have some long deltas, just from the perspective that if things turn the corner, there's ample room for people to rush in and drive prices higher. This may be part of the positioning rebuild. It could all be speculative, but just some quick of the back of the envelope math here. The reaction function at the end of August for the closure of the Libyan production basically gave you a $5.50 move in crude over the span of 2.5 days, when we were worried that 1 million barrels per day would be taken offline. Iran is about 3.3 million barrels per day. They have said that they are willing to strike back at Saudi and Qatari facilities. And so figure if if Israel and the U.S. strike Iran, then Iran is going to move to take other oil facilities offline. I don't know if we're going to lose 3 million barrels per day, but you could start having the conversation where you really need to think about, what does a few million barrels per day in oil production offline look like? Maybe that's been reflected in price here. Maybe that's the risk that's being priced in right now. The odds of having some of those barrels per day taken offline is increased. But if we were to actually make that jump, and there are strikes against facilities where they're not just temporarily closed, but now there's significant infrastructure damage. If Libya was worth $5.50, what's Iran and Saudi Arabia worth? What's the closure of the Strait of Hormuz worth? Is it worth more than $80 a barrel? Probably. I would think so. I think one of the more interesting aspects of the oil market right now is that even though volatility is really pumped up, you can go out to 74 days. there is still a good amount of upside here. Like we can go out and buy the $80 call for $3. We can go out to 85 and buy it for $2.12. That's 74 days out. We could play for a more near-term thing too. We can go out 25 days and buy the 90, 80 cents. It's just keep something in the back of your pocket for this exorbitant tail risk. Right now, obviously, the play is to do the condors, but in the back of my head, if there is an escalation here, it becomes exceptionally difficult to put the toothpaste back in the tube at this point in time, at least for the oil market in the short term. And we could see a further expansion to the upside, which if it does happen, listen, you got to fade it. Russia invaded Ukraine. That didn't really mean anything long term. So we'd have to fade this too. But in the short term, Anton, it could be very painful. Anton, let's talk sector performance here today before we wind down this overtime and we hop over to the prediction tree to talk with Alan Lichtman and his 13 keys for the presidential election. In terms of top performers today, Anton, it was the oil and gas sector, which I don't think surprises anyone on a day when crude and natural gas are moving up by 4 or 5% each. XOP is up by 3.29, OIH 2.19, XLE 1.76, and IYE 1.74. Otherwise, semiconductors, SMH, they are your best non-energy sector performer here on this Thursday. They clock a gain of 0.9% here at the end of the session. Tech up by 0.41. Banking, the lone standout, otherwise up by about 0.2%. Wasn't good elsewhere. Lots of red on the screen. Anton, most sectors were down today. Do you find any read-through on the performance of something like SMH, for example? I know that you're more of a quant, numbers guy. If it has high vol, you're going to trade it. But when you see something like SMH in the semiconductor stocks that were the leadership in the market for the first half of the year struggling to retake their June highs, is that a warning sign for you, or do you just not care at all?
Yeah, no, it's not. I can't confidently say that there's anything that I could use as a tell right now. I mean, I know we're not talking about bonds that much today, but we have a minute left, so I guess I'll input it here. This is the perfect example. It's like the bonds were the single most confident trade that we had this year, and it was probably the worst performing on average. I will say there was a moment, depending on how you rolled, you could have made out pretty decently, but compared to like equities or something else, I mean, it just wasn't the best trade, or at least for I think this is a fair way to say it. By no means did it meet expectations, and it was the trade that we were most confident in. So it's like whenever you have something that and we were talking about it too. It's like we were talking to just like, well, what's the downside? I had to come up with a devil's advocate argument for you one time, and I asked you one too. It's like we kind of tried to discuss what could be the other side. And lo and behold, it's like, that's actually what happens. And it's like, so again, the reason I say that to bring that up is because if there is a tell, if there is something that you find confidence in terms of price action, in terms of setups, in terms of even the fundamentals, I mean, I will be the first one to tell you, you're going to be surprised more often than not in terms of what actually happens with that expectation. So I don't read into anything except for volatility at this point, because that seems to be the most accurate predictor in terms of my trading. But again, that's just me personally, and other people may have something that works for them. But for me, I'm strictly a vol guy.
Well, it's a 51.6 IVR in SMH. Last time we were around these levels in August, it was prudent to put on an iron condor here. Rough ride at the start of September, but ultimately rode it out. Put another one back on. We're at the midpoint of the July high, August low range. It's not it's pretty darn close to the midpoint of the high-low range of the past 6 months as well. Maybe it works, maybe it doesn't. We're going into earnings season, though, and so we're going to have to ride out a little bit more vol. We have non-farm payrolls tomorrow, of course. That's 8:30 a.m. Eastern, 7:30 a.m. Central Time, which we're going to have to talk about later because overtime is now out of time for this Thursday, October 3rd, 2024. We're taking a brief 90-second break here on Tasty Live. After this, it's time for the prediction trade with Alan Lichtman, professor from American University, whose 13 keys have accurately predicted the results of the presidential election every time since 1984. Be sure to join that conversation up next on Tasty Live. Thank you, Anton, for subbing in for my two fellow goons, Radigan and Spivak. We'll be sure to have you again next time. They're out. See you on the other side, folks.
running snow leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at tastylive.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter
snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table, hash mark. Facebook is disabled.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at tastylive.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at tastylive.
This is the Prediction Trade. I'm your host, Chris Vecchio, joined by my co-host, Jeff Joseph. We're here for the next 30 minutes as we walk through everything and anything that you can bet on in the world of, well, betting, Jeff. Last week, we had a great guest, Robert Cahaley from the Trafalgar Group. Want to thank our audience for making it the most watched episode of the Prediction Trade ever. This week, assuming we can work out a few little hijinks here, we may have on Alan Lichtman, the former professor at American University, whose 13 keys have successfully predicted the outcomes of the presidential elections since 1984. We can uncross those streams. We should have listened to the guys from Ghostbusters, Jeff. Never cross the streams. But we did, and so we will get that fixed. In any event, Jeff, we can walk through this momentous day for betting markets before we get to the actual politics of it all. CFTC and a judge has a ruling for Kalshi.
Yeah, that was a big moment. We've been following this for a while and talking about it on prior episodes. This is something that a number of platforms have been working on for a long time, pushing back at the CFTC. Obviously, Predictit, which has been around for a long time, is existing under exemptive relief offered through the CFTC that allows them to make markets on election outcomes. And then Kalshi entered the scene. Kalshi is an online platform that has prediction markets, but was excluded from doing political or election outcome markets. So they do things like TSA counts and temperatures and weather-related music drops, record sales, and just doing prediction markets on non-political events. But they've been pushing for a long time, particularly with the general election upon us, to have these markets. And it's been a tug of war. We've been following it in Luckbox magazine and our weekly newsletter as well. And a couple days ago, we had a really good outcome for those of you who like free markets and the ability to be able to hedge your risk or to speculate on a variety of different things other than the securities markets. That's a big win. And you're going to see a lot more prediction markets coming from this point forward. It literally took Kalshi, Kalshi, less than an hour to have their prediction markets up on the House and Senate races immediately following the district court appellate ruling that allowed them to enter those markets. So you're going to be seeing more of these markets show up, and that's what we do. We, as you said at the onset, we talk about if you can bet on it, you can bet we're going to talk about it on the prediction trade. We've been doing that here for 4 years now. So it was a big moment, and Kalshi now has a House and Senate market. They have the Republicans leading in who's going to win the Senate. They have the Democrats leading in who's going to win the House market. They're putting up a Trump v. Harris market right now, and I'd expect to see that coming online very soon. It's also probably not a bad idea to look at some of the other markets. I noticed something today that would be a surprise. If you go over, Chris, pull up the poly market for the general election for Trump v. Harris, you're going to see something we haven't seen in a number of days, and that is a dead heat. Or at least that was the case a couple hours ago. Obviously, these are moving markets, but there you go. I just saw this for the first time. Harris had been up by 1 or 2 cents for the past several weeks. Obviously, I'm predicted. She has a wider margin. She's up over Trump by about 6 or 7 cents. But this is the first time Poly market, by far the most liquid of all the prediction markets, it's estimated that over $1 billion has been wagered just in this market, Trump v. Harris. Of course, that's a blockchain-enabled market, and U.S. citizens are precluded from betting directly on this market, but many are bypassing it using different vehicles, and it's become because of its liquidity, it's become the kind of standard of prediction markets for benchmarking purposes. And today I noticed we pulled up to a dead heat for the first time.
We have pulled into a dead heat. When we take a look at the betting markets, there's actually quite the divergence from what we're seeing elsewhere in the national polls. We've also seen a divergence from even Nate Silver's odds in recent sessions. We're hoping to talk about that with today's guest. Unfortunately, it does appear that we're not going to be able to have on Dr. Lichtman for today's show. We will reschedule with him and iron out those details at a future date. But let's talk about where Silver stands with things. 49.4% for Harris, 46% for Trump. Over the past week, this is a race that's been shifting for the poll aggregates by 0.6 points in favor of Dems. Net over the past month, it is an even race. But Jeff, there is one state that matters more than most. We've heard this from previous guests on the prediction train. If it was Rachel Bitecofer or Robert Cahaly, that state is Pennsylvania. And right now, Polymarket has Pennsylvania listed to basically 52-48 in terms of Republican versus Democrat. In this case, obviously, that would be Trump versus Harris here. But that is a split from where the polls stand. According to Nate Silver's model, Pennsylvania is polling 48.8% in favor of Harris to 47.5% for Trump. That is a change of 0.2% in favor of Trump over the past week, although it is a shift of 0.1% in favor of Harris over the past month. So, Jeff, we're seeing a split race here. This is obviously the most important state in the union right now, or excuse me, Commonwealth in the union right now. I wouldn't want to offend my friendly Pennsylvania neighbors. Jeff, what's the play here right now? Is it betting on the Pennsylvania election winner, or is it more about betting on the electoral outcomes where it doesn't matter who wins, it's going to be close either way?
Well, I think Cahaly gave us a whole new perspective last week, and that show is still available to watch on YouTube over on the tastylive trending channel on YouTube. You can pull up the Robert Cahaly interview that we did last week. When we asked him the question, is Pennsylvania really the keystone state? Is it going to be the ultimate arbiter of this election? Do you have to win Pennsylvania to win? He added some nuance that we hadn't spoken to before, and that is his response was specifically Harris cannot win without Pennsylvania, and that Trump cannot win without North Carolina. It threw it was kind of an interesting take on things, and it resulted in several hundred comments on that show on the YouTube channel as a result of it, because it did give a new perspective to the race. So I think there's a lot to be said to that. The Pennsylvania polling is so tight, there's really no wager to be had here. It's one of the reasons we were really interested in speaking with Alan Lichtman, and of course we're going to reschedule him. We interviewed him in Luckbox Magazine about 4 years ago, and that's how we reached out to him this time around to get him on. And what's so interesting, because there's a debate going on, and let's talk about that.
Yes.
Nate Silver and Alan Lichtman have been going at it back and forth in a very public feud on Twitter. Lichtman, of course, I've spoken to him before. We've had him in our publication in the past. He has a track record to be extraordinarily proud of. As you said, there's only one election that he didn't call the outcome, and that's because of Supreme Court intervention. So it's almost a perfect record. And he also back-tested his model going all the way back to the 1800s. And he and Silver are feuding. So Lichtman has 13 keys, and maybe we can even, at least show those or talk about those. He has 13 keys that the way it works is basically if you're the incumbent party and 5 or less of those keys go against you, you're going to win. That's how his model has worked. And And Silver said, oh, and you're bringing it up here, right here. And here's his keys: party mandate, contents, incumbency, third party. And they're all very well described. And that's what we were going to ask the professor to do, was to go through each one of these keys. And we'll have him do it next week, perhaps.
And we're not going to show the entire, or, we're not going full open kimono here, Jeff. We're going to save this for when he's actually on.
Of course, right. And we're going to have him go through each one of these and tell us where he lands and how he got there as well. But Nate Silver, on the other hand, is saying, you're using some discretionary judgment. I'm in the business of being quantitative. You're a little bit more qualitative. A moment ago, before we started this segment, I was doing some searching around and saw that Newsweek just did a story today that said, who's more reliable, Alan Lichtman and his 13 keys or Nate Silver? Let's ask ChatGPT, which is, which is a whole other thing. But they came to the conclusion that perhaps Silver, because it's based on quantitative aspects, is more reliable. I think it's a ridiculous debate. To Alan Lichtman's credit, he reached out a couple days and kind of set an olive branch out there saying, what are we feuding about? We look at the world differently. And I think there's a point there. And you, as an active options trader, me as a active prediction market trader, I think we can agree on one thing, and that is the use of Lichtman's 13 keys, which is a really qualitative assessment in some cases. Sometimes it's a binary determination, like whether or not the party's incumbent or not. But other times it's a little qualitative. Is there a major geopolitical conflict going on? And sometimes he has to make a qualitative discretionary judgment there. But to me, the difference between polling and the 13 keys of Lichtman is very similar to the difference between fundamental analysis and technical analysis. And I know that there's videos all over YouTube where people are arguing which is better, but experienced traders are ultimately going to rely on a combination of both or have their preferences. So as an active prediction market trader, I think Lichtman's manner to capture sentiment and the mood of the voter, and you can't ignore the accuracy it's had over the last 50, 60 years, is something that cannot be discarded. At the same time, I think his model is vulnerable because it doesn't take into, if presidential outcomes were determined by the popular vote, I'd be all in on Lichtman's model. But because of the Electoral College, there's some nuance here that I don't think, if this vote comes down to Erie County, Pennsylvania, Lichtman's 13 keys aren't going to mean as much as the polling in that county. And quite frankly, it may come down to Erie County or Buck County, Pennsylvania. Those are two counties that are swing counties, and this entire election might come down to those two. And it's hard to say how 13 keys are going to be that important in capturing that sentiment. Nevertheless, I'm a fan of his work. And when you're a prediction market trader, just like when you're an equities trader, you look at a lot of different information, and I see it as being exceptionally helpful. What do you think about that comparison?
I think it makes a great deal of sense. I mean, Nate Silver's a numbers guy. He's when you're a quantitative person, you're just acting mechanically within the confines of your system. Obviously, human bias can go into the actual underlying algorithm of what the system puts out. But at the end of the day, you're not really there to color commentate. You're just there to call a spade a spade. So if you plug in numbers and the black box spits out XYZ, you then just run with XYZ. That's how you avoid actually making the mistakes that are tethered to your human biases. You export that analysis elsewhere. That's one of the reasons why I was so interested in this conversation with Dr. Lichtman today, because it feels like some of the keys maybe could be turned the other way. And does that mean that Harris has reduced odds of winning? I don't know, but either way, she may only have 8 of the 13 keys. It's not a blowout, and that means it's probably going to be a close race either way. Now, this to me is the bet, right? The bet here, the trade here is it's going to be a close race. The GOP is going to win by 215 electoral votes. The Democrats are going to win by 215 electoral votes. Really, there are people who think there's a 6% chance of a 215 point. Well, let's go through this realistically. If we have a race, the probabilities as it stands right now, if we were to look to the betting market, one of the great things that Polymarket does is give you implied odds for overall outcomes, you're talking about within 20 points if these ranges were to hold. It could mean that Harris, if she wins Pennsylvania, you're going to see her win perhaps by 16 electoral votes. If Trump wins Pennsylvania and holds on to North Carolina, he could win by somewhere between 8 and 20 electoral votes, depending upon how Arizona and Nevada shake out. But the point is that these big tail type of outcomes where one party has an 80, 90, 100 electoral vote victory, that just seems highly unlikely right now. So when I think about the margins of victory right now in some of the races, where did that just go? And that's why, we're doing this live, Jeff. We make the sausage here on air. I see the belly right now, the GOP by 15 to 34 out to the Dems 15 by 34, 11, 16, 19, 23, 30% chance for a tight race. Right. This seems like this is undervalued right now. This may be the value play, betting that it's going to be a tight race and you're not going to see one party win by margins that either Biden beat Trump in 2020 or that Obama beat Romney or McCain beat in either 2008 or 2012.
Well, as you may recall, last week we looked at, and you can pull up this same market on Predicted. Let's take a look at the Electoral College market at predicted.org. And it sets the similar tranches on the electoral account in the same manner that Polymarket does. And you might remember last week I told you that I had placed that wager, that barbell approach, basically, where I took the 15 to 34 tranche GOP win, and I think I paid 8 cents for that. And then I took the 15 to 34 GOP win, which at that point I paid 12 cents for that. So 20 cents invested for a $1 payout. So that's still a 5-to-1 payout if either of those two options prevail. And it is a barbell because basically you're saying I'm giving up the middle, a tighter race, I'm giving up the extremities. But if Pennsylvania with its 19 votes or if North Carolina with its 16 electoral votes become the swing, that's likely the tranche they'll end up in. So I think that those looking for higher odds and higher payouts, it's not going to be in the 50-50 Trump v. Harris straight up vote. It's going to be identifying a group of these tranches, ideally 2 or 3, invest, like you said, up to 30 cents, get a 3-to-1 payout on the outcome. And that's right now the best deal on the table. There's another deal on the table that I'd like to put in front of our listeners. If you pull up predicted.org, if you can, let's take a look at one of the markets that's the Biden resign market. So I maxed out on the 88-cent no. I don't know why everybody else does. This is as close as I can see to an extremely high probability outcome at this point. Well, it's hard to say what Biden's thinking about at this point because we don't see a lot of them, but he's certainly thinking of his legacy, as he should be, and resigning with only a couple months left in his term just doesn't appear to be in the cards. So at 88 cents, you can buy a no that he's not going to resign. I guess it's up to 89 cents now. That's a 10% return over the next 2 months. Seems like a layup to me. So that's one of the trades I'd like to put in front of our watchers while it's still available. I imagine that thing's going to find itself at 96, 97 in no time and start squeezing out the remaining margin on that trade. But that's as close to a gimme as I've seen in a while.
Jeff, this is one of the more interesting markets from my point of view. I don't know what is compelling people to bet on Joe Biden resigning. There's been no indication that he's going to resign. Right. It wouldn't help Kamala at this point in time. Now, granted, this is during his first term, and so technically that continues on to January. But if Kamala were to win, would he resign to make her the first female president of the United States prior to her own inauguration? I suppose there's a shot at that because she's going to be president anyway, and she's already vice president.
I think that would almost Trump wins, that'd be taking the victory away from her in essence, though.
Right. It seems very, very unlikely. And then if Trump wins, is he going to step down? No. I think, quite frankly, there's a conversation to be had about Biden potentially sticking around to maybe pardon some people, including his own son, Hunter. I mean, he is a father at the end of the day, and that needs to be on the table as consideration here. There are some of these discrepancies or inconsistencies perhaps in other markets right now. Will Harris be the 47th president of the United States? There's an embedded bet here that Biden's resigning because technically she could lose the election and then also become the 47th president, which, there's part of me that it would be kind of funny insofar as Trump's had a lot of 47th president of the United States merchandise printed already. And so having to rebrand his POTUS 48 in such short time would be ironic. And you could hear the litany of complaints already coming, how they cheated him out of being the 47th president. Either way, though, Jeff, we did have those difficulties with getting Dr. Alan Lichtman on today. So we had a little bit of a late start here on the prediction trade. We're going to get him rebooked. We're going to have him talk about the election. We have a great slate of guests coming up in the future. However, more Democrats, more Republicans, more bettors who are interested in finding a way to make a buck. If you can trade it, we're going to bet on it. And you can bet that we're going to talk about it here on the prediction trade, Jeff. So for my friend and co-host Jeff Joseph, I've been Chris Vecchio. Good luck to everyone out there. Remember, trust your math, believe in your system, and remember, catch us next time on the prediction trade.
Stock markets take a breather after yesterday's literal fireworks as Iran strikes Israel and the markets panic. But we are once again facing a busy macroeconomic calendar with data on the hopper tomorrow and, of course, on Friday that might bring us back to volatility. I'm Ilya Spivak, head of Global Macro here at tastylive, and this is Macro Money. We're going to unpack all of that here. We spent yesterday in the wake of Iran's attack talking about how that might extend into the release of the ISM report, which comes to us tomorrow. Today, we're going to take a look further afield and see how all of this fits with what is probably the biggest piece of event risk for the week, September's U.S. jobs report. So as ever, the question for us, not so much the academics of the situation, whether this or that definition of jobs growth or the unemployment rate or this or that is real or not real or well-founded or not well-founded. As ever, our question is about the market's reaction function. That is to say, if we were to get good or bad data, would stocks like or not like it? And so with that, let's consider where we stand and just do a bit of inventory about what's actually occurring here. So we know that the markets concluded in early July when the Fed began to signal that it's ready to cut rates, that they felt the Fed was behind the curve. And this much is readily on display when we take a look here at where the July top is in the S&P. We can see very clearly here that what happens is into that July top, you are looking at a building of Fed rate cut expectations for 2025. That's the yellow area that you see there, even as the outlook for this year, for 2024, in the gray there, is holding static. Now, Why is this occurring, and why is it that when the Fed actually starts to talk about needing to cut, which occurs right here as Fed Chair Powell testifies in Congress to this effect, why is it that this is a downturn, and why is it that going in here, all these rate cuts are building out? You can see the overall tally of cuts is growing from here, where it bottoms at negative 76 basis points. It nearly doubles to the start of July, where this actually occurs. So why is that? Well, look at the way that economic data was performing. And we can see that from mid-April and into early July, where the Fed makes its announcement and very clearly bottom takes this, which we'll get to in just a sec. In just a second here, the Fed says right around here that it's prepared to go. Notice what U.S. economic data is doing in this period. This is a Citigroup index that measures its performance relative to expectations. It's deteriorating, and as of early May, it's actually tending to undershoot relative to baseline forecasts. So the message that the markets are receiving is that the economy is doing less well than expected. So not surprisingly here, the markets say, well, until this point, the Fed is reluctant to cut. It's worried that deflation isn't happening fast enough. So the markets say, well, that means more cuts next year because you're going to realize that you're late, because the economic data is already deteriorating. So when the Fed actually makes this statement here and gets the conversation going and focused on rate cuts being not just some future thing, but imminent, at that stage, the markets go, well, you've finally found the weakness we've been looking at for 3 months, and ostensibly you've recognized something that is so ominous that you've been compelled to act. And that's not good news for growth. And so what you see here is stocks come off as things get more dovish. Now, fast forward, and what you find is that some of those fears about the strength of the U.S. economy and the motivations then for the Fed to do what it was doing at that stage, that's turned out much more well supported. We just looked at this a moment ago. Notice since July, there's been some anchoring in the way that data has performed relative to forecasts. And then late August into September, the data actually starts to get on the mend. So much so that now it's actually crossed back over the zero line, suggesting that for the first time in 5 months, U.S. economic data is tending, or has now a tendency, to beat forecasts as opposed to undershoot them. This is a very different sort of environment. Now, notice here, if the markets were going to be concerned that the Fed is scrambling because they've already missed the window, this is not that narrative. This is a narrative of a U.S. economy that's looking stronger than anticipated. We see this in the latest batch of PMI numbers from S&P Global. Notice here, we've been basically holding at the high from May on this composite index. And of course, as ever, this is done in the logic of PMIs. So above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what you find here is that you had a jump in U.S. economic growth back in May. That's here. And then for the subsequent 4 months, September included, you've held those levels. And that's because the service sector, the largest part of the economy, has shown up more robust and offset weakness in the manufacturing side. Just earlier this week, you began to start seeing the ISM version of the same kind of PMI data. This is from the Institute of Supply Management. So far, we've had the manufacturing numbers out. Here is the forecast for the service sector numbers due tomorrow. Now, we can see here the manufacturing side was a little bit lighter than expected, ever so slightly, 47.2 versus ultimately the consensus forecast at 47.5. But this is holding generally steady, and as we discussed on the show yesterday, the internals of this report actually looked quite positive. We saw the first decline in prices in a year, or this year. The last time we saw a decline in the price index was December of last year. We saw welcome signs in lengthening delivery times, in falling inventories, in the production index almost coming back to growth, in new orders falling at a slower rate. All of that seemingly suggesting that the under the surface dynamics below this number are generally starting to look a little bit better, even though at the surface you're basically holding steady. But weakness in manufacturing need not be a problem for the overall story here, at least from the Fed's perspective, because of course they're judging this at a very high macroeconomic economy-wide level, because as we just saw here, we had the deteriorating manufacturing from S&P Global. It was much more dramatic than what we're seeing here, where things are basically steady. But as long as services is going to be strong enough, the overall growth rate holds up. Services, of course, accounts for between 70 and 80% of the economy. So when we look for what's likely to happen here with the service sector index, as long as we get somewhere within the realm of expectations, much as we did with the manufacturing side, we again get a story of an economy that's steady. And again, looking back here, this is what steady means. Steady at solid levels. It would be much the same sort of conclusion here were you to land, give or take, as anticipated. At the same time, the Atlanta Fed's closely watched GDP forecast, although it's ticked a bit lower to 2.5%, still well above where consensus expectations are, and still looking at reasonably strong numbers. So we're still looking here at a situation where, despite the fact that we've downticked from 3 to 2.5%, if this is going to be right, then we will have grown 2.5% in the third quarter after a 3% gain, stronger than expected, in the second. That's not bad news. That's good news. That's relatively healthy. And of course, the markets have reasoned that we are going, against this backdrop, to be adding stimulus on top of an economy that is not doing poorly. And of course, what that means is that we are, in essence, looking at a situation where if the economy were shy of demand and the stimulus, that is rate cuts from the Fed, if that were to be something that was looking to counteract some sort of weakness, then we'd be looking at a story of relative positivity and a story of inflation coming up from low levels. That is not what the markets are saying. They're saying what these rate cuts that the Fed has now initiated going to do is stoke reflation and give us once again something that might limit the Fed's appetite for rate cuts. And you find this very clearly here in what we've seen over the course of September as the Fed really started to signal that the move in last month's policy announcement will be to do the jumbo 50 basis point cut, which of course they ultimately delivered on. We see gold higher. We see the spread between the 10 and 2-year yield, the slope of the yield curve, steepen because long rates rise, even as the markets position themselves for a more aggressive Fed, because this is being viewed as reflationary. The expectation is, well, this will make for a need to have higher rates in the future. We see that the 5-year, the 10-year break-even rates here are at the highest that we've seen them since back in June. So all of this seemingly speaks to higher inflationary pressure. And then, of course, we posit that alongside now expectations that the Fed is going to cut by a further 50 basis points this year, once in November, once in December, ostensibly, and then another 115 basis points are baked in for next year. That's about 4 cuts and a 50-50 shot at a fifth, and ask ourselves, well, if the economy is doing strong, if we are looking at the markets endorsing that and saying, well, this will be reflationary then, given how much easing the Fed is now expected to do, if we were to get data suggesting that indeed there is a disconnect, well, then the amount of easing that the markets expect might be diluted. For Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things are likely to go therefrom. I am on every Wednesday with Victor Jones for The Price of Truth. That includes today, certainly, so come check us out. Back on with Chris for Futures Power Hour on Fridays, on with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting on the platform formerly known as Twitter, at Ilya Spivak. Thanks very much for joining. See you soon.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Hello, everybody, and welcome back to Bad Taste. We're getting started early today, and joined with me today is my regular co-host from Bad Trader, Luis. Thank you so much for joining me today, dude. How are you doing?
Awesome, Julia. Thank you for having me here. Excited. A lot to talk to about. Especially excited for tomorrow since we have the non-farm payroll report. It's going to be a big day for the S&P, so yeah, I don't know what's going to bring, but yeah, definitely very excited for tomorrow.
Yeah, I'm excited for tomorrow as well. We've had kind of a rough October so far. I guess September came a bit late. But yeah, it's been a really interesting day, actually. We have some stats that we're going to hop into in a second. but a decent amount of the stocks in the S&P were down today, almost like 80%, like 78% of the stocks in the S&P were actually down today. And the movers who were down or up big. It was actually really interesting to see which sectors got affected the most. I wish I had a greener day. I personally didn't. I know you went, when we were streaming earlier today, you were kind of all over the place. Where'd you wind up?
Yep. I ended up the day green. I ended up taking some more shorts on the Nasdaq, just scalping it a little bit. So that really worked. I'm glad that I actually exited like half an hour before the market closed, because I don't know if it was short covering or what, but a little bit of a rally at the end. Seems like that's what we've been getting lately, at least for the past several days. Just the last 10, 15 minutes, a little bit more of a buying, but or maybe short covering, who knows? But Miami has ended up still well. So only 3 red positions: Uber, CarMax. I actually entered CarMax short, Julia, based on JP Morgan's yesterday October ideas report. That's the only stock that are actually underweight for the month of October. So yeah, CarMax and DraftKings also on the red today. But the rest, they actually ended up pretty good.
Well, I'm happy to hear about that. Yeah, CarMax was definitely an interesting one. So that's KMX, right, for the ticker?
Yes,
I believe
KMX.
so. KMX for the ticker. Yes, everything automotive has been a really interesting point of conversation. Yeah, not one that I've traded very much. It's a little volatility for me, to be honest. So I'm kind of staying away from any of those Teslas, any of those Carvanas. I know that's another one that you tend to take a look at. So pretty, good. I'm glad that we got out. That's good.
Yeah, no, Carvana, I've been suffering a little bit with Carvana because it just hit again today, 52-week high. And CarMax, even though they're almost in the same business, that's a short idea from JP Morgan. Their price target is 65. And I'm short Carvana and I'm short CarMax, both only in shares. So never been in CarMax or traded CarMax, but I'm excited to see what happens there and see whether JP Morgan's only short idea for this month actually can work out.
Talk about like digging yourself out of the grave, man. Oh my God. Just since 2024, year to date, it's up 261%. Dude, talk about digging yourself out of the grave. Also, Mindpower, what's up? Thank you for joining us. Mindpower, I know you missed some of the trivia questions earlier today, but we have a couple that we're bringing back. So hopefully you'll get to hang out for that. That should be fun. But yeah, no, Carvana, man, dude, what a beast. This has to be, and the other thing too is like, it's not a really volatile run up either. Like there's definitely some, like I'd say dips, but compared to like some other names, compared to even like the market itself and how choppy sort of, that growth has been, or comparing to I guess like to like NVIDIA, which is up kind of like a comparable amount on the year. Oh man, that's really interesting. I think so. What's your stance sort of on Carvana, sort of like long term, I suppose, or are you more doing short term plays on this one with these swings? That would make sense, to be honest.
Yeah, I'm actually with Carvana. Well, you see the price on 2022, even at the start of 2023, almost went totally bankrupt. They were able to manage themselves out of it. Lately, they've been getting a lot of praise from Wall Street. A lot of banks, even JP Morgan, even also Bank of America, they're actually bullish. They expect a really good earnings report for November. I don't know, maybe, Julia, if it's the used car prices on cars that are actually also falling. Maybe also the port strike I've seen that it's taking a hit, for example, in race. You and I discussed it earlier in the morning. Tesla as well, while dropping, they came below from their deliveries that they were expecting. But overall, Carvana, I'm trying to basically just short a little bit the move to the upward. Overbought on the, me, I like to watch a little bit of RSI, those metrics on that side. But seems like people are rushing into buying more used cars rather than new cars. Just look at Stellantis. Stellantis dropped on Tuesday.
That was definitely an interesting one. I think from Monday, right?
Yeah, from Monday, and also I think they dropped also on Wednesday, quite heavily because their year outlook actually came in way lower than expected because nobody's going to the dealerships to buy new cars. Car prices are just exaggerated right now. I think for this quarter, basically the discounts on new cars are actually the biggest they've been for I don't know how many years. So that's why Carvana is definitely benefiting from there. But yeah, just to see they're in the similar business as CarMax. So now I'm in both of those stocks short.
That's been, yeah, really interesting. Stellantis is one that kind of surprised me. This is one I really don't pay attention to. And yeah, Carvana, yeah, this one, I'm like crazy digging yourself out of the grave like that. But I find it interesting across the automotive sector just because it feels like this automotive sector, right, got particularly hit during the pandemic. We saw for like used car prices being worth more than their new, like sticker price, basically. That's not right. And that happened, yeah, just because again, automotive companies or cars rather, I should say, have so many different components from all over the world. They can be very highly susceptible to even minor flubs in different supply chains. Now with the port strikes, that could make this even more interesting. Yes. It's again, like a highly susceptible industry among others. And yeah, this has just been really, really wild to see. Especially, so I don't pay a lot of attention to Carvana. Let's see if I can zoom out on this a little bit. But what I thought was funny is that it's not even halfway, or maybe it's just about halfway to its peak in August of 21. I had no idea this thing tumbled as hard as it did. I don't watch this one particularly closely, but that's talk about a fall from grace. And then recovering from the Peloton curve is unheard of.
No, yeah, I know. It seems like right now they're actually overly bullish in Carvana. I did not follow it until just recently.
Yeah.
I know that Chuku was buying Carvana around $25 per share last year. Mm-hmm. He actually sold all of his shares in November, and that's when I actually started noticing Carvana. After that, just right now, the first time I think I actually entered this year, and I entered 10 days ago on Carvana.
Oh, I'm gonna keep an eye on this one now. I haven't my God, just this. This is a poopty scoop if I've ever seen one. Lone, it's also awesome to see you. Thank you for joining us again. Yeah, I was going to say, I think that PayPal is kind of making a recovery from the Peloton curve as well, but not nearly to the same extent as Carvana. It's look at this. So for PayPal and then Carvana, almost near identical pattern for the 3 years is so wild to me. Peloton, I don't think is anywhere near recovering. This is the iconic Peloton curve. So yeah, I'm glad that, it's interesting to watch from a distance. I hope it goes well. I hope everything goes well, dabbling with CarMax and Carvana. And yeah, it's not something I'm paying particular attention to. But you know what I am watching today was the S&P today, man. We had some interesting movers across the market. I know that things were really moving when we were talking earlier today. Energy, everything energy kind of had a pretty good day. VST, so this is another one of our sleeper builds. Sleeper, yeah, this is a pretty quiet riot, I guess we'll say. Something that's just exploded in growth, especially in 2024 that people don't really talk about as much, is one of our sleeper builds. So this one it was one of the best movers in the S&P when we were streaming. It's still evidently in the top 5 on the close, up almost 6% today. Looking pretty good. As well as
when we have a 300% return, Vista, it's actually outpacing NVIDIA, 300% return over the past year. Year to date, 236%.
Yeah, actually, I think this might be, I have to double check. I look at these stats every maybe couple of weeks, but I think percentage wise, it might be one of the best performers of the S&P just from sheer growth in the past year. So VST, VLO, Valero, we've talked about this one before on the show. This is not one that I personally trade, though. It's another energy company that's having a pretty good day today. MPC, Palantir as well, having a good day. CEG, this one I think has been especially interesting to watch now that there's been a bit of a revival in nuclear. 3 Mile Island coming back. So this one, been watching, I think this news broke last Monday. I think is either this Monday or last Monday, one of those Mondays. So that's been, I think, really interesting to watch. Energy has been a very, just overall, some of the strongest performers in the S&P have been energy companies. When I say strong, I'm just purely talking about a cumulative percent change. And it's been, energy companies today. Southwest Airlines evidently had a good day as well. NVIDIA. So fun fact, I'll show this heat map a little bit later, but it's a heat map of the components of the S&P. And most tech companies were actually down today. The majority of tech companies in the S&P were actually down. But because NVIDIA, AMD, and some of these chip companies had such a strong day, it actually brought the entire sector up, which is kind of funny. So NVIDIA up 3%, finally having a little bit of a rally after getting beaten up the last couple of days. Let's take a look at that. Man, look at that side. That's got to be a technical analysis pattern, right? That looks very technically.
Let me see, because I'm sorry, I'm not seeing the screen.
Oh, you're not seeing the screen?
But No, but I have it here on my phone, so I'm definitely looking here.
Like a diminishing sine wave is how I would describe it.
Yeah, now I
Flower
see.
Power, thank you for joining us. Awesome to see you. From Mario, thank you for joining us. Do you think it's time to take a defensive stance given the global situation? Hey, are you doing? Mario, that's a good question. I think that's a good question. I think I'm certainly bullish gold. I think that's like the strongest directional stance that I'm kind of taking right now because there's been kind of prolonged uncertainty around currencies. I'm feeling a bit of uncertainty around like the banking sector, especially with interest rates changing as they have or as they're going to be over the next year or two. There's also been increased liquidity requirements, I believe, for banks, which is now up to, I think, like 20%. So I think with uncertainties around geopolitics, currency, and for me personally, banking, I'm bullish gold regardless of how U.S. election goes and how politics develops across the globe. So yeah, seems business as usual. I think bullish gold is kind of my only stance at the moment. But Luis, what do you think? Are you taking a more defensive approach? Or are you taking a more? I know for October you're bearish. We talked about this earlier.
Yeah, especially for October on the election year, tends to be since 1950 a really bad year for equities. And the report we showed today from Tom Lee, Fundstrat, that showed that whenever the market actually is up more than 20% for the first 3 quarters, actually tend to have an average drop for the month of October of around 3%. That tends to actually be eliminated on November. That tends to be a bullish month whenever we have a plus 20% gain, which we closed on Monday 20.8% for the S&P. Overall, with gold, I agree with you, Julia. I think I'm bullish. There hasn't been any slowdown in central banks' purchase for gold. Overall, if you see it, it's been pulling back just a little bit, $30, $40 on gold. I've been watching gold futures and just trying to break the $2,700 mark on gold there. So I definitely agree with you. And with tomorrow's report, if it comes lower than expected, that might actually signal that the Fed might actually have started to be aggressive with the rate cuts more than they were actually signaling. So that can be even more bullish for gold. And I don't know if you saw, but Costco also started selling platinum bars. Last year they started selling gold bars, and they've been a total hit. And Costco as well jumping into the commodities.
Man, that's so funny to me. And they I think for the gold bars, remind me if I'm wrong, but they sold out of gold bars upon launch pretty much. So funny. But bullish gold, maybe bullish Costco even. I don't know. I know that they have recently gotten a downgrade. Am I correct in that?
Yes, they got downgraded just last week. Walmart has been upgraded. And their earnings, I think we discussed them here also on Bad Taste when the day they reported. They missed on revenue, but they beat on earnings.
Interesting. Well, I don't know, man. Costco has been another quiet gainer. So I think in the last year, so 252 trading days, it's up about 55%. But so to be fair, that's a lot, especially for more of I believe it's a consumer cyclical or consumer defensive. So that's a lot for generally low volatility sector of companies. But then in addition to that, it's just been a pretty low volatility rise, which gives it actually one of the highest Sharpe ratios in the S&P, which is something that I tend to look at with a grain of salt. But I think that just kind of you can even see it in the chart how smooth this has been. So I don't know. Anything can happen. Anything can change. But for Costco, it's a cult, man. Do you go to Costco? I don't think do you have
No,
one?
I actually don't. Yeah, we have a Costco here in Guadalajara. I think they're about to open the second one. But lines are so big. I don't know if it's also the same in the US. They actually here in Guadalajara, in the Costco we have, they limited the amount of pastries you could actually buy. I think that one per person, like cakes and all that stuff, because people were actually buying 20, 30 cakes at once and resell them outside. And Costco applied that only here in Mexico. So yeah, people here love Costco. So I avoid to go there because lines are insane.
I can imagine, yeah. Costco is absolutely a cult. It's one that I'm really, really close to joining, to be fair. Lone just left Costco. There you go. It's Costco customers are real preppers. Honestly, you kind of have to be to buy in the quantities that Costco offers. Because it's like, you don't just get Advil. You get like a 5-gallon drum of Advil and it's like $8 or something. Like that's, but I mean, I've actually, I use certain Costco products. My brother has a membership and he's kind of reeled me in. So I've been really impressed, honestly, with their offerings. And they seem like they've gotten even more, I don't know, notoriety in the past couple of years, which has been kind of cool. But that being said, looking back at the market real quick, just before we hop off, yeah, Oxy had a good day. Marathon had a good day. Both Marathon Oil Corp, MRO, and then MPC Marathon Petroleum both had good days as well. Let's look to the downside real quick. Constellation, isn't that an energy company actually?
Isn't it the beverage energy Constellation? Let's see,
Constellation Brands. What do y'all do, Constellation Brands? Oh, beer, wine, and spirits.
Beer,
Never mind. On a day like today, how could someone who sells beer have a rough day? Oh, geez. Okay, well,
I think they own like Corona beer.
A what? A Corona?
Yeah, they own Corona. Yes.
Oh, dude, I could use on a day, yeah, on a week like this week, I could use a lot of Corona tequila as well, but especially with beer. So yeah, as it turns out, Constellation had kind of a rough day today. Tesla's the one that that obviously like a lot of people are watching, down 3.6%, as well as Moderna, which has been pretty consistently beaten up this year. Warner Brothers, again, having a rough day. Best Buy, yeah, certain retailers are in here. Take-Two Entertainment, or Interactive, I guess. Take-Two Interactive, Carnival Cruise. Yeah, I think like Tesla's the most interesting mover to the downside, at least for me. And we'll kind of,
Amazon as well for me, Julia.
What'd you say?
Amazon, you gotta check Amazon. It's the 7th straight day that closes in the red.
Yeah, Amazon sold off today too, actually. That was, so I keep saying I'll show the heat map. We will show the heat map in a little bit. But consumer discretionary and consumer defensive both had kind of rough days today. And Amazon, yeah, was a little beat up, down 1.5%. Look at that. But otherwise, yeah, I'll just kind of go through my positions and then we'll hop into some slides. Let's see. My positions are not really happy today, unfortunately. I have my XOP trade on. That's nearing like 51% for an iron condor, which isn't great. Honestly, I'd be taking more of like a long-term bullish stance given developments in the Middle East on pretty much everything oil, everything energy. So I might honestly like close out the call side and maybe recenter the put side a little bit to collect a bit more. So XOP, I mean, IV rank of like 74. I do like everything I'm in right now is pretty much ETFs. I mean, just look at that candle, dude. Holy crap. Look at the last couple, like, bro. So today was a rough day for my XOP trade. My SPY and my NASDAQ positions are kind of business as usual. My Russell position finally decided to be bullish on the Russell. It's failed me. It's let me down in this fine October.
Bullish in October in the Russell, Julia?
I was bullish in September. It worked.
Well, September actually works, but the Russell tends to be the worst performer out of the indexes in October when it's an election year. Average drop 2.4%.
That's like how's any okay? You know, I don't know. I've been bullish on
Goldman Sachs.
What? Go ahead.
Goldman Sachs also yesterday reported bullish on S&P 500 and bearish on the Russell 2000. They expected 10% drop. They actually announced it yesterday for the month of October and being bullish after the elections on small caps. So that's another reason for me personally to be a little bit bearish, even though I don't have any position on the Russell.
I think like statistically, and you know, obviously we take historical data with a grain of salt, but like that makes a lot more sense, I think, to be bearish on the Russell. It's like compared to the other two indices, just like generally underperformed. I mean, like year to date, it's up like 8%. Which, to be fair, is like that's a pretty standard amount for a market index to be up. But that being said, SPY and the NASDAQ I mean, SPY's up 20% in year to date, not even the last year to date. So they've had pretty exceptional amounts of growth. I've been kind of rooting for small caps or smaller cap stocks for a while now, but I can understand why during maybe these during the election year, people might want to kind of stay with the more like larger cap, a little bit maybe more established companies that sort of like track where the market cap is in the US. So I can understand that. So that's hurting. This might be time to 1-2 switcheroo on that. Bullish gold, so I've put spread on in there. Pretty much flat on the day, but overall it's doing quite well. We got our Beto shares. We're in this together. Luis and I took this trade at the same time. So whatever we make in dividends is probably going to cancel out the losses, hopefully, that this thing has been undergoing. Cryptocurrencies have been selling off quite a bit. Bitcoin's at 61. So from Lone, Take-Two needs to hurry up with GTA 6. Hell will freeze over before we get GTA 6, but that's okay. Left because he's kind of involved with AI driving robotaxi thing with the company since 2012. Interesting to say the least. That is interesting. The chief IO, I assume that's information officer. I feel like Buffett knew oil was going because of tensions. Yeah, that's fair. The Oracle, after all. I wonder how Live Nation will do it with all this negative entertainment news. Live Nation, because they had that DOJ probe, didn't they, a while back? I think it was the DOJ, right?
Yeah, something like that. They also got hacked, no?
They did also have a massive data breach. So back in May of 2024, Justice Department sues Live Nation for monopolizing markets across the live concert industry. I personally have paid ridiculous prices through Ticketmaster for face value on tickets, the extra fees that come with it. Kind of insane. I don't know. There's Live Nation.
At least it's better in the US than in Mexico. In Mexico, you get robbed, I think, maybe even twice as more than the US. I purchased in the US tickets and in Mexico here, and they're more expensive.
In Mexico?
Yes.
With the fees?
With the fees. And there were some concerts that they got canceled, and the Ticketmaster did not want to actually give back the money, and the Mexican government made them give the money back to the users who actually bought tickets, because it wasn't the customer's fault that the concert was canceled. So they tend to do those type of things here in Mexico, which totally suck. And I personally don't like to purchase from Ticketmaster in Mexico, but that's like the safest one you have here.
Not a fan. It's annoying. Any hoomst, I know we have a whole bunch of slides that we want to get through. We have a whole bunch of stuff to talk about, so let's go ahead and hop into that. Costco was lots of fun. Grumpy Mike is also just coming back from Costco. Thank you for joining us. Roti's chicken for dinner tonight. Sounds very nice. But let's take a look. So we have an update that I wanted to talk about. We have another couple updates that are going to be coming out in the next few weeks, but one that I think is exceptionally cool, so I wanted to share with you guys. We got some news, and we also have trivia questions from earlier today. So if you participated in trivia and or remember the answers, then we gotta be quiet and work on the honor system. So first things first, we do have an app. We made some sick updates, one of which I'm going to talk about. I think it's really cool. And if you want to go find it, we would love to have you. It's in the App Store and the Google Play Store. We got points and badges in stream and chat. And now a stock screener, which I think is really cool. So we're going to talk about it. And then additionally, if you want to come throw your answers in chat for trivia, or if you just kind of want to hang out and chat with people, you can find us on the Tasty Live YouTube channel at Tasty Live Show. And as well, Luis does a really awesome job managing Bad Traders Twitter. So if you want to come find us, we're at Bad Trader app on X, formerly known as Twitter. So we got all this stuff. I wanted to talk about the stock screener. I think it's really, really cool. So we added a stock screener. If you go download the latest version of Bad Trader, you can find it over on the trade page. There's a little button at the bottom that says screener. You can actually filter, right now it's just symbols in the S&P, but we're looking to expand it. But you can filter symbols in the S&P by fields such as per share price range, percent up or down over a specific time frame. That's something like I find especially interesting. So if it's up or down 20% or more over the past 1 week, 1 year, I think the more extreme movers are really interesting. So that's something that I personally like to take a look at. We also have other filters that you can add, such as sector. So you can say like tech, consumer cyclical, energy, healthcare, industrials. You can filter by market cap, so mega, large, mid, small, micro. You can filter by price to book ratio, price to earnings ratio. So if you're in the more, I'd say fundamental analysis, that's something you can filter by as well. And if you want to check it out, we'd love to know what you think. So again, you can find us on the App Store and the Google Play Store. The screener is located on the trade page. And we'd love to know what you think. So feel free to shout us out with your thoughts if you do like to use the screener. Maybe someday in the future, options metrics will also come into here, such as by IV rank, whether or not something has earnings, for example, are things that I'd personally find pretty useful. But this is our V1. And that's all I got. Yeah.
With this stock screener, Julia, I have already used it, found it to be amazing. I really like to use screeners, personally myself, that more into the fundamental stuff. And with that and the earnings and the calendar that the app has, amazing. Some people were not actually aware of the calendar of the also economic events. So you can also check it out there. But I've used the screener, and personally, I think it's amazing. So if you like to also watch more fundamental things for stocks, you should come and try it out.
Hell yeah. I love the calendar. That is still one of my favorite features, which is basically an events calendar. You can access it through the trade page. There's a couple different like icons that you should be able to see, and one of those is market events. And you can basically like see a full calendar of like when different companies are reporting earnings, when they're paying out dividends, and also when macro events are. So if there's like an FOMC announcement, PPI, CPI, any of those macro events, you can actually view it in a calendar, which I think is really cool. Then you can also see the results of the earnings if that's something that you track. But for just kind of keeping track of binary events, I find the format really easy to use. And I am in love with the stock screener. This is more fundamentals / stock trading oriented, but maybe someday options metrics are going to come in here too, which is kind of cool. So we got the stock screener. Again, you can find it on the App Store and the Google Play Store. Would love to know what you think. And then finally, I've been talking about this whole segment, but yeah, so the S&P today found some really interesting movers in here, actually. So 77% of the stocks in the S&P were down, which is like kind of a lot, actually. It is one day, after all, but when most of the index is down that much, I find it pretty interesting. So fun fact, only 32% of tech stocks were actually down, but because especially chip stocks had such a strong day, actually like the whole tech sector and the S&P was like, if you market cap weighted, it was actually green. So that was pretty interesting to me. It just kind of goes to show you how strong of a rally we really saw in like the semi space and the chip space, with NVIDIA sort of leading the pack on that front. 90% of healthcare stocks were down. Eli Lilly having a rough day today, y'all. And then 82% of consumer cyclical stocks were down, with Amazon kind of getting thrown into that. I believe Walmart was also down. Walmart, Target, like all the biggies. Walmart was unchanged. Target was down a little bit. Best Buy was one that we looked at, although I believe that's consumer discretionary.
So mixed back today for the market.
Cyclical. We're down. And then 100% of energy stocks were up. That being said, it's not the biggest sector in the whole wide world, so it's not the biggest collection of companies, but energy, again, had a very strong day today, one of the best performing sectors in the S&P. So, Luis, I know that you have some news that you want to talk about. Do you want to get into it?
Yes, for sure.
Let's do it. Here you go.
Well, for tomorrow, like I said, Julia, at the beginning, it's going to be, if not, I think the biggest and most important day for the week, excluding, I thought it was going to be Tuesday, but seems like the market recovered quite a little bit also, especially on Wednesday from Tuesday side events that happened. But tomorrow, according to also FactSet, Kalshi, Goldman Sachs, and UBS, a little bit of a mixed bag as well of what do they expect for the jobs report. Wall Street is expecting 148,000 jobs who have been created for the month of September. Personally, I'm looking any number below it, maybe even keep adding to my short that I have on the MES. I ended up just with one contract. I had 3 at the beginning of the day, and also with the Nasdaq, ended up just with one, lighting up the position because according to Bank of America Global Research, they expect an implied volatility of around 1.2% for tomorrow. So definitely a big day, and it's also the second highest between now and the U.S. election for November 6th. That's even double, 2.5% implied volatility for that day. So big day tomorrow, mixed bag. It seems like also Bank of America is expecting 150,000. So let's see what happens tomorrow. I'm definitely going to be watching it early in the morning.
For sure, yeah. No, really interesting. See if things get shaken up, I guess, even more than they already have been this week. From Mario, did you notice how much ITA and XAR have appreciated lately? During times of war, they tend to rise sharply. Okay, so whenever I look at the defense sector, I usually look at like Lockheed Martin or like Boeing or like Raytheon. I've never looked at these ETFs, so which I'm kind of surprised by. One is an aerospace and defense ETF, and then the other one is, let me just double check, is an aerospace and defense ETF. I think the other one is just an aerospace ETF, but ITA is the ticker for one of them. Aerospace and defense ETF. So they're both aerospace and defense ETFs. So I actually didn't know that the ETFs were particularly liquid, which is kind of interesting. This is something I maybe want to keep an eye on because, yeah, like I said, usually when I trade anything defense, it's like Boeing, Raytheon, Lockheed Martin are like the big ones. And from what I can tell, it's really, some of these are not super liquid, But for maybe like long-term buy and hold, which is not exactly my bread and butter, that would be kind of an interesting move. It looks like ITA is a little bit more liquid of the tickers that you mentioned. But that being said, with options in here might be a little bit tricky. I've also noticed that the IV index on some of these is a little bit low, but the IV rank is high. But I think for just kind of like tracking the sector long term, these are really interesting assets. So thanks for shouting those out. Never looked at defense ETFs or aerospace ETFs. Super cool.
Me neither. I've never seen it before, and ATS seems like it's definitely a sleeper.
I mean, these days, yeah, it's a sleeper. Like
More or less.
in the last
More or less.
Oh man, yeah, no, these are kind of a sleeper. So interesting, and thank you for the shout out. I'm adding this to the watch list. They'll be on my mind. So and yes, thank you for this jobs forecast for tomorrow. Certainly one to watch. Let's go on to the next.
And well, will the bull run continue, Julia? Here are actually some good news for the bulls. It's a little bit also a mixed bag for October. It tends to be a negative month, especially when there's election. But now, after the S&P actually increased more than 20% for the first 9 months of the year, 3 quarters, since 1950, actually the S&P tends to actually rise on average for the fourth quarter around 2.1%. This is data from Dow Jones and FactSet. So it seems like it's going to be a good quarter if history repeats itself. This quarter that just ended, the third quarter, it's actually the ninth best quarter since 1950. Regarding a higher of a 20% increase for the market. So, yeah, like you said, just year to date, 20% increase, just crazy. Big bull market we're in right now, and you and I discussed it earlier. You got to be careful, especially if you're contrarian, like I tend to do sometimes. Got to be careful with the position sizing because you cannot rule the bulls right now because they're very powerful.
Oh, for sure, yeah. We talked about that actually earlier today about being careful with contrarian plays because statistically they're right pretty infrequently. The market just trends so bullish. Obviously, this is not true for like all stocks, right, or all sectors necessarily. But when we look at like the broad market index, like statistically, it's just like so overwhelmingly bullish. And bears are right such a small percentage of the time that we talked a lot about like the importance of sizing, about how like if there's going to be some kind of contrarian play on especially like a broad market index like the S&P, sizing and making it maybe a little smaller than usual is like kind of important. But yeah, really interesting stats. Thanks so much for putting that together. Let's get on to the next one.
Yeah, and the last one for the news, the Max 7. You and I were also discussing seeing how the Max 7 actually were around 34% of the S&P 500, how the market cap weighted versus the RSP, which is just the equal weighted index, which lately has actually performed pretty well, the RSP, the equal weighted index. But the Max 7, for the first time since November of 2022, actually, since the last quarter, actually we're below the S&P. Right now, the Max 7 lagged the S&P by 0.2% this past quarter, especially since the July, when the Nasdaq actually reached all-time highs, because the S&P closed on Monday at all-time high. The Nasdaq hasn't closed above its all-time high. The S&P was up 5.5% this third quarter, and right now the Max 7 represents 31.9% of the S&P, below from their peak of 34%. It still is huge numbers for those 7 stocks, but with today's movement, especially since yesterday for Tesla, Amazon as well, and Google, which lately has been issued some DOJ issues as well lately, seems like everything is lying again still on NVIDIA. But let's see what happens with this Max 7. But my point here is that the overall, even though the Max 7 lagged this third quarter, the rest of 493 other companies of the S&P started to catch up. And this is mainly because some analysts expect that earnings per share will start to finally catch up for the first quarter of 2025 and actually surpass the Max 7 earnings per share in terms of growth. So that's good news for the other rest 493 companies on the S&P.
Yeah, and like that being said, it seems like that there's just like a handful of the Mag 7, like certainly not all of them that have just been, I mean, absolutely popping off. So in the last 6 months, SPY is up 9.3%, which is like, that's how much it usually returns in a year. That being said, Microsoft is actually down in the past 6 months, down by about 1%. Google is up about 7%, so it's actually underperforming the S&P, just looking again at that 6-month range, which is, pretty recently. And then Tesla's up 43% in 6 months. That's like insane. And you're like, oh, that's kind of an outlier. JK, Nvidia's up 38% in 6 months. And you're like, that's kind of crazy. Oh, JK, Apple's up 33%. Like, it's crazy. And then Meta is up a humble 15%. So it's been kind of all over the place. It definitely still seems like there's certain, like, I'd say a decent amount of like concentration in a handful of companies. But it's helpful. It's like a little promising to know that like some of these other companies are catching up. So that's nice. Yeah. And really interesting stats. Thank you so much for putting all these slides together. We're going to hop into some trivia. So this is from earlier today. So if you were playing earlier today, we're going by the honor system. You got to keep quiet. If you don't remember, you can shout out your own answers. But I wanted to pick one from me and one from Luis, my 2 favorite questions. So this one was fun. What is the best-selling item at McDonald's? And then Luis, the rest of the question, if you want to go for it.
Yep. What is the best-selling item at McDonald's?
And then if you can name like the weight that it sells of this item per year. Well, we're not giving out points now, but you'll get brownie points. So chat, what do we think? What's the best-selling item at McDonald's? If you played earlier today and you remember the answer, just maybe if you can come up with something that makes us laugh, that sounds great.
There were some really good answers in the morning.
We got some very good guesses, yeah. McDeal.
Yeah. It got me curious, and I also saw how much they sell of this item per day, and I also know the answer, which is totally crazy.
It's insane, yeah.
I don't know if you come to Mexico, to Guadalajara. I think you haven't, but there's not many McDonald's. They have actually closed. Seems like Mexicans actually prefer tacos because they're way cheaper than a hamburger, and I think personally that they're even more delicious than a hamburger.
Well,
than
probably
a
better
McDonald's
for you too,
hamburger.
right?
Well, depends which taco do you have.
That's
If
also
it's
very
like a
fair, yeah.
chorizo. Yeah, but they've been closing, so it's very rare to see a McDonald's or a Burger King. They've started to actually open like Popeyes and chicken-related fast food chains. But yes, actually talking about McDonald's, I wanted myself an egg McMuffin. It's actually will be
so fun.
Really
Also,
tasty.
okay, in chat, if you played earlier today and you remember the answer, you can just make up a new McDonald's item that would be the best-selling item that McDonald's could offer. If you could make a McDonald's item, what would it be?
I would make an item.
I don't think the McSalad would do very well, but
I really like the apple tart.
oh, you could do like a McTaco. Compete with Taco Bell.
Never been to Taco Bell.
If you made a breakfast taco, actually that would, because everyone loves McDonald's breakfast, like universally loved, especially like the hash browns. If you made a McDonald's taco, like a breakfast taco, could you imagine?
It's very common to have breakfast tacos here. Birria tacos, barbacoa tacos. Julia, they're amazing.
Burrito tacos are truly amazing. They're so good. I got to be like little tips, to be honest, to get one because they're just so loaded up. In our secret menu, the McD secret menu, chocolate shake with peanut butter chunks. That sounds amazing. We have some other guests from Grumpy Mike. We got Shamrock Shake, which is maybe the pumpkin spice latte of McDonald's, which is awesome. We got chicken nuggets. It's still nuggets from Dan Sand. Keep the side of hot and cold on the side. Yeah, I like that. Hash browns from Steve. Okay, everybody, give your guesses. I think a lot of people have already played. The guess that I gave earlier today was McNuggets, because that's my go-to. But apparently, Luis, do you want to reveal the answer?
Yes. Apparently, it's actually French fries with 3.3 billion pounds sold a year. And I saw they sell around 9 million pounds every single day.
3.3 billion pounds of fries. That's so many fries. That's a lot of fries. And they're really good.
Yeah, they're delicious.
That's so many fries. Christian got French fries. Good job. Yeah, no, it's French fries is what we were looking for. I also thought it was nuggets. I thought by at least by weight, oh yeah, no, it's fries. Everybody loves McDonald's fries. I love McDonald's fries. I think the McDonald's breakfast taco, though, I think that's a great idea. They should take it.
Yeah, for sure.
That's our best guess. Good job, everybody. Good job staying honest for bad traders who played earlier today. And now I'll second the fries. There you go, Kimberly. Very nice. Now, this is my favorite question. One of our viewers suggested categories was famous scientists. Basically, if you do really well at bad trader trivia, you get to pick one of the categories. And farming, organic farming, I don't know if they're here, picked famous scientists. And this was my favorite question from that category. So here we go. So this photo from the 1927 Solvay Conference is known as the most intelligent photo ever taken, because 17 of the 29 attendees ultimately won a Nobel Prize. I want you to name 3 of the Nobel Prize recipients that are pictured in this photo, and I gave you hints. I'm looking for 3 names, famous scientists. I think at least probably 2 of them are gimmies, but I gave you hints over here. So these are some of the people that are pictured in the bottom. Each person that's pictured has a little hint associated with it. So if you can name 3 of the scientists, then that's what we're looking for here.
At least I was happy that I was able to get 2 of them, the 2 that are a little bit of a gimme.
You actually got
The
3.
rest-
You said the right person. You didn't know the middle 2, but you got 3
Yeah.
of them. How many ingredients
Thank
are
you
these
for the
McDonald's fries? Grumpy Mike, that's a dangerous question. Dr.
I
Doolittle.
prefer, honestly, Five Guys fries.
Five Guys, no, they're not my favorite. I like Shake Shack fries.
Oh, no, I had actually Shake Shack on Sunday. I like the milkshake, but the fries, I really like because Five Guys are fried with peanut oil, so they're really good. I wish we had a Five Guys here in Mexico.
Oh, guys, I don't think you want to know what's inside of McDonald's fries. Do I want to ruin it? Do I want to ruin the love? Snap, crackle, pop.
No.
I like that. Grumpy Mike. George Washington, Thomas Jefferson, Theodore Roosevelt. From Diesel Dork, we got Marie Curie, Albert Einstein, and for the first 2, yep, you got that. Steve says Einstein.
Yes.
Oh my God. Potatoes, vegetable oil, which is canola oil, corn oil, soybean oil, hydrogenated soybean oil, natural beef flavor, dextrose, sodium acetate, sodium acetate pyrophosphate, salt, hydrolyzed wheat, and hydrolyzed milk. Not as bad. I thought it'd be a lot longer, to be honest. Hungry Chat's back. That's right, guys. Okay, everybody, we're just about out of time, so go ahead, give your answers. We're looking for 3 scientists from this photo. Luis, do you want to give new answers since you maybe know at least 3 of them?
Well, I'll stick with the 3 of them that I said initially. Juliet, the Marie Curie,
Yep.
Albert Einstein. Well, you said boar. I was mistakenly the name of the animal.
Yep.
Plunk as well, and I forgot the middle one with the cat.
Nope, you got it. So Marie Curie won a Nobel Prize in physics and chemistry, the only one to win 1 in each field, actually, for their work in radioactivity. This is Albert Einstein with a picture of a black hole. This is Erwin Schrödinger, so Schrödinger's cat. Christian got it. The Niels Bohr is the hint that we were looking for. And then Max Planck is the last person in this lineup of 5. If you've ever been interested in this photo, if you're into science at all, this is, a loaded photo. Like some of the, most amazing physicists, most well-known physicists, maybe ever. We got Picard, who's a mathematician, Schrödinger, Wolfgang Pauli, Werner Heisenberg from the Heisenberg uncertainty principle. We got Bragg, we got Dirac, we got de Broglie, we got Max Born, we got Niels Bohr, we got Max Planck as well, Marie Curie, Albert Einstein, and some other names. So you guys did a really good job. We're just about out of time. Thank you for participating in our trivia. Luis, is there anything you want to mention right before we go?
No, Julia, just we're going to be on the lookout for tomorrow's non-farm payrolls report. It's going to be an exciting day. Thank you for having me here, and that's it for me.
Mine as well. Looks like Flower Power got 2 of them. Really good job. Good job, everybody, for participating. We're going to catch you guys next Tuesday. Luis, thank you again for joining me, and thank you, everybody, for joining me over in chat. It was awesome to see everybody here. Good luck trading. Have a good weekend, and peace.
Are you tired of one-size-fits-all financial services? tastytrade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on tastytrade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock